हाँ जी दोस्तों, क्या हाल है। आई होप यू आर ऑल डूइंग रियली वेल, wherein we are going to revise each and every chapter. So you can find that playlist chapter wise and watch whichever chapter you are not comfortable watching. Okay, whichever chapter you are not comfortable with, you watch that playlist and you'll be able to get your comfort. Okay, guys, are we ready to start this revision? Are we quickly ready to start this revision? Can you hear me? Are you able to hear me so that I'll start the revision? Tell me very quickly. Come on. Yes, sir. Okay, perfect, guys. All right. All right, guys. So today we are going to start a very brand new chapter, which is prospectus and allotment of securities. This is going to be 100% English revision for any student who understands Hindi. In my channel, you can find rapid revision that is again in Hindi. But for this is exclusively for you students for whom English is more comfortable, and this is going to be in 100% English. Okay, guys. So let's begin prospectus and allotment of securities. This chapter starts from section number 23 and goes on till section number 42. Okay, so let's begin, sir. What is section number 23? Section number 23 talks about two things. What is public offer and what is private placement? What is public offer and what is private placement? So section number 23 talks about two things. You might find some internet issues in between, but be a little considerate. You might find some internet issues in between. Okay, that should be okay. Wait for it and I'll be back. Okay, now listen to me very carefully, guys. Sir, what is section number 26? Section number 23. Section number 23 talks about public offer and private placement. Sir, what is public offer? What is private placement? So public offer is where you go to the public at large, and private placement is what we will study in section number 42. So basically, if you're a public company, how can you raise money, sir? If you're a public company, you can go for public offer also or a private placement also. That is public offer as in through prospectus to public. But however, in case of a private company, you cannot make public offer. You can only make private placement. You can only do private placement. Now the question is, what is public offer, sir? Sir, public offer means IPO, FPO, OFS. Everything will be considered as public offer. Initial public offer, further public offer, and offer for security. All these things will be considered as public offer. Sir, this is the point. The only point that you have to understand here is public company can make public offer also, private placement also. But private companies can only make private placement. They cannot make public offer. After that, coming to the next point, security, sir. What is the definition of security? So basically, security, you have to ensure that you remember this. Securities includes bonds, debentures, shares, and units of mutual funds, units of collective investment schemes, and a lot of other things. But one thing is not included in security, and that is security shall not includes a unit of unit linked insurance policy. So unit linked insurance policy, the units of ULIP will not be considered as a security. This might come in your exam as an MCQ. After that, guys, what is the definition of prospectus? Prospectus means basically any documents described or issued as a prospectus. If I give you a piece of paper and I say this is prospectus, then according to law, this is prospectus. And it includes red herring prospectus, shelf prospectus, or any other notice circular inviting offers. From any notice based on which you are asking offer, that will be considered as a prospectus. So prospectus is a very vast definition. Anything that you call as prospectus will be considered as prospectus. After this, that, guys, coming to the next section, which is section number 24. Section number 24 is a very simple thing. It says that if you are a listed company, or if you are in the process of listing, if you are a listed company or in the process of listing, then for laws relating to issue of securities or transfer of securities or non-payment of dividend, if there are laws to be made relating to that, you will have to go and follow SEBI. You will have to go and follow SEBI. You will have to go and follow whom? You have to go and follow SEBI. Are you with me? Are you with me, sir? You will have to go and follow SEBI in case where there are issues relating to issue of shares or transfer of securities or non-payment of dividend. In that case, you will have to go and follow SEBI. You will be regulated by SEBI. Sir, not an important section. Now coming to the next section, which is not even that important but relatively easy, sir. Sir, what is section number 25? Section number 25 says, it talks about deemed prospectus. Sir, what is the provision? It says that if a company allots any shares with a view that, with an intent that such shares will be offered for sale to public. If a company allots any shares with a view that such shares will be offered for sale to the public, then the document through which such offer for sale is made, that document will be deemed to be a prospectus. The document will be deemed to be a prospectus. So a document through which offer for sale is made. will be considered as a deemed prospectus. So what did I say? Where the company allots the shares with a view that such shares will be offered for sale to public at large, then the document through which such offer for sale is made will also be deemed to be a prospectus. Now, sir, there is a point that with a view to offer for sale such shares to public. With a view, the company has to be of a view that it is going to be offered for sale to public. Then how do you prove that view, sir? So law takes two presumptions. Law says in two scenarios, we are going to presume that the intent was to make offer for sale. Sir, what is that two scenario? If you look at that, the two scenario is that number one, the offer for sale is made within 6 months from allotment. As soon as the company made allotment, the OFS was made within 6 months. That is clue number one. And clue number two is that whenever the offer for sale was made, the whole consideration has not been paid. So when the company gave you an allotment and you made the offer for sale, when you made the offer for sale, you had not given the full consideration, in which case what will happen? In which case it will be presumed that the intent was to make that offer for sale. There was no other intent. There will be a presumption, but that presumption will be unless the contrary is proved. Okay. Now, sir, what will happen if this is a prospectus? So you said, sir, this OFS document will be considered as a prospectus. How will it affect? Sir, the effect will be, sir, section number 26 will apply. What is 26? Matters to be stated in a prospectus. Section 34 will apply. What is 34? Criminal liability. Section 35 will also apply. What is section 35? 35 is civil liability. So all these three sections will apply. And sir, the person named in the OFS, whatever person is named in the OFS will be deemed to be directors of the company. They will be deemed to be the directors of the company. So basically, these are the things that is going to happen. Now, after that, listen to me very carefully. So now, once you have decided that the document through which offer for sale is made will be deemed to be a prospectus, now what you have to do, sir, whatever is to be stated as per section 26, that you will have to definitely state in the prospectus. But apart from that, you will have to state two additional matters. You will have to state what is the net amount of consideration received. What is the net amount of consideration received? And number two, what is the time and place at which the contract for allotment of securities may be inspected? Number one, what is the net amount of consideration received? And number two, what is the time and place at which contract for allotment of said securities may be inspected? So number one, net amount of consideration. Listen to me very carefully. If you do not listen to me, you are not going to be able to remember it. You are not going to be able to remember it. Please listen to it very carefully. What did I say? I said that, sir, the net amount of consideration received, and number two, time and place for which the contract for allotment of the said securities may be inspected. So time and place you will have to give. And the last one, sir, please listen to me. Who will sign this deemed prospectus? In case of a company, it will be signed by at least 2 directors. And in case of a firm where there are partners, it has to be signed by at least half of the partners. At least half of the partners means what? If there are 10 partners, out of those 10 partners, at least 6 of them will have to sign. No, sir. At least half means out of 10 partners, 5 at least will have to sign. Even if 5 people sign, it is fine. Okay. Remember that at least half of them have to sign. And this is the concept of deemed prospectus. Sir, what is deemed prospectus? Which by naturally might not be called as prospectus, but because of the deeming provision, we are calling it as a prospectus. After that, guys, listen to me very carefully. What are the matters to be stated in a prospectus? Sir, what are the matters that you are going to write in your prospectus? Listen to me very carefully. Sir, number one, your prospectus should be dated and your prospectus should be signed. It should be dated and signed. There should be a date in the top right corner and there should be a signature. So the question is, who will sign such prospectus? The answer is, it has to be signed by all the directors of the company. Not at least half. It has to be signed by all the directors of the company. It has to be dated and signed by all the directors of the company. Sir, what is the relevance of the date? Why do we have to put a date to the prospectus? Because the date of the prospectus will be the deemed date of publication. It will be deemed to be the date of publication. Whatever date you have mentioned in the prospectus, that date will be deemed date of the publication of the prospectus. Are you with me? Guys, are you with me? Can you hear me? Yes, sir. Okay. Sir, can you hear me? Yes. Kindly keep participating. Sir, please tell Raja in English. Okay. Raja, in English. Listen to me very carefully, guys. Please listen to me very carefully. Sir, keep participating along with me and keep speaking along with me. Sir, the prospectus has to be dated and signed. The date will be the deemed date of the prospectus, the deemed date of the publication, and signed will be signed by all the directors. All the directors have to sign it. Apart from that, sir, what will you write in the prospectus? So I said in the prospectus, you will state all the information and the reports, financial reports, as prescribed by SEBI in consultation with CG. So all the reports and information that's prescribed by SEBI in consultation with CG, but as long as SEBI does not prescribe it, whatever SEBI regulations are already made, those regulations will apply. So you have to give every report that SEBI speaks in consultation with CG, but till the time SEBI gives its report, you will have to do what? You will have to comply with SEBI regulations. More importantly, you will have to write two things. Number one, a declaration that all the compliances are done. You have complied with this act completely, that declaration you will have to give, and a statement that nothing is contrary to this act, that nothing in this act is contrary. You'll have to give a statement that all the compliances, declaration that compliance is done, and a statement that nothing is contrary. So these are the things that you have to follow about a prospectus. But now listen to me very carefully. This subsection 1 will not apply in two cases. Number one, where the issue is to existing member or debenture holder, or where the issue is uniform with the shares or debentures previously issued and are currently quoted in the stock exchange. So what am I doing, sir? If I have already issued one share and that same shares I'm issuing again to my existing members, then in that case, I don't need to comply with subsection 1. And number 2, if I have already issued that class of shares and that shares are also listed on a stock exchange and now I'm issuing it to new people, also then I don't have to give any sort of declaration. It is not, in that case, provision 1 is not applicable. After that, sir, listen to me very carefully. Sir, why do you have to give a date? Because that date is deemed to be the date of the publication. After that, sir, what will you do? Once your prospectus is ready, you will have to file that prospectus with the ROC. It has to be filed with the ROC. And once you file it with the ROC, the validity will start. And that validity will be for 90 days from the date of delivery. The date you deliver it to the ROC, that is when validity will be starting, and it will be valid for 90 days. Sir, now what about expert? What if there is an expert statement in the prospectus? Guys, this is a revision and not a regular class. Let me tell you, if you want classes, the classes are separately there in English also. 100% English, recorded, not dubbed. It is original English. You have to take that classes, but this is revision. You have to focus on revision, sir. What if your prospectus includes an expert statement? If there is an expert statement, what will you do about it? Guys, listen to me very carefully, sir. If your prospectus includes expert statement, listen to me very carefully. In that case, you have to ensure that the expert is not engaged in the promotion, formation, or management of the company. Number 2, the expert has given his written consent, and such written consent is not withdrawn by the expert, and a statement to that effect, a statement that the expert has given his written consent and not withdrawn such consent, will be written in the prospectus. So I said 3 things. Number 1, the expert is not engaged in the promotion, formation, management of the company. Number 2, the expert has given his written consent and such written consent is not withdrawn. And number 3, a statement to that effect is included in the prospectus. If all these 3 conditions are satisfied, you can comfortably include an expert statement also in the prospectus. This was your section number 26. Now coming to the section number 27. Sir, they have been asking a lot of questions around this section. What is this section 27? Very easy. So you had issued the prospectus. Now in that prospectus, you had written some terms and everything. Now, if you want to vary those terms, or if you want to vary the objects that you mentioned in the prospectus, so any variation that you have to do in the prospectus after allotment, you're doing it after allotment, then in that case, what you have to do, sir? In that case, 4 conditions are to be complied with. Number 1, pass a special resolution. Number 2, give a details of such resolution in the newspaper and website. Which newspapers are 2 newspaper, English language and vernacular language. Vernacular language as in local language. Of which area, sir? Wherever your RO is situated. So you will always give advertisement in 2 newspaper, English and vernacular. Vernacular will always be in the language where your registered office is situated. The third one being, you have to also give resolution details in the website. You will have to give justification as to why you are making changes. Number 3, sir, you are changing your objects, right? But you cannot use that money. You cannot use that money for dealing in equity shares of listed company. You cannot trade in equity shares of listed company. And number 4, all the dissenting shareholders, the ones who refused, the ones who were not happy with the variation, will be given an exit offer. Who will give them the exit offer, sir? Sir, the promoters or the shareholders of the company. And what will be the price of the offer? That will be as per SEBI regulation. That will be as per SEBI regulation. So basically 4 conditions. Pass a special resolution. Publish the details in the newspaper and the website. Number 3, sir, you cannot use that amount for trading in listed shares or equity shares of listed company. Number 4, the dissenting shareholder will have to give an exit offer. Are you with me? Yes, sir. So these are the 4 conditions that you have to comply with. Now listen to me very, very carefully, please, guys. Guys, listen to me very carefully. Sir, a few minor details like, sir, you remember how you had to put an advertisement in a newspaper? That will be done in a format which is called as Form PS1. Okay. Now next point, sir. What is the special resolution all about? Sir, the special resolution will be passed in a postal ballot. You know postal ballot, right? Section 110 of the Companies Act. So you will have to pass a resolution via postal ballot, and in that resolution you will have to give all the details. What details, sir? The number of the amount raised, how much is utilized, how much percentage is achieved, how much amount is yet to be utilized, what am I changing the object for? Earlier, what did I used to do? Now what I'm doing, and why am I changing my business? What is the risk involved? All these things I'll have to give I'll have to give for my special resolution. So basically, I'll have to tell a lot of details. Are you with me, guys? Are you get with me? Yes, sir. These are the 4 conditions that you have to comply with section number 27. And I told you all the details. Like you will have to furnish PS1. You'll have to give all the details. The SR has to be passed in a postal ballot. And these are the 4 points that you need to remember. If you look at the book, I think this is a book that you must have. You can visit shubhamsinghal.com and you can get this printed for what you can get it delivered colored copy for 700. If you don't want to get the colored copy, take black and white. You'll go to any shop, they'll give you black and white for 450 or 500 rupees. But I think for 700, you should get the colored copy because the question bank is also colored coded. And the most important part is for section number 27, you see 18 and 23. That means 2 questions are associated with section number 27. So basically that will help you. So not a single student should you go to the law exam without this book. This is absolutely mandatory for you. Okay, guys. Okay. Now coming to the next section, guys, section number 28. What is section number 28? The section number 28 talks about offer for sale. So how does an offer for sale happen, sir? Certain members of the company, they authorize the company to do the offer for sale on their behalf and take the money and give it to those shareholders. Now, once the offer for sale is done, the members will reimburse the company for all their expenses, whatever expenses that company has incurred. But what is offer for sale, sir? Where certain members of the company propose in consultation with the board to offer whole or part of their holding to public. Whole or part of the holding to public, then the members shall collectively authorize the company to take necessary action, and then they will reimburse to the company for all the expenditure. They'll give the reimbursement. Moreover, sir, the document by which offer for sale is made to public shall be deemed to be a prospectus. It will be deemed to be a prospectus. Are you with me? Are you with me? Yes, sir. After that, listen to me. However, there are certain exceptions. Like in case of offer for sale, what is the basic exception, sir? Listen to me and only the points that I'm telling that you need to remember. Number 1, sir, the provision of minimum subscription will not apply. You remember how minimum subscription was given in the prospectus, which used to be 90%, that is not applicable. The provision of minimum application money is not going to apply. Minimum application value is not going to apply. And number 3, the provision that board has to give report on the utilization of the money, that report is also not applicable. Because why? In offers for sale, what happens, sir? This is a member. This member wants to sell his shares through company to the public at large, right? So the company will take the money and give it to the member. So for example, the company took 50 crore. Where is it going? It is going to the member. Who is going to use it? The member is going to use it. So the company's board of director does not have to give a report on the utilization. They don't have to tell us how did they utilize the money, because they did not utilize the money. The money was utilized by that other person. Are you with me? Are you with me? Yes, sir. Now let's move to the next important section, which is section number 29. Listen to me very carefully. Please, guys, I need your 100% attention. I'll make section number 29 very easy for you. Sir, what is section number 29 all about? Listen to me. Look at the screen and that should be it. You don't have to read from the book. Look at the screen. Okay. If you want, you can write it down along with me, but look at the screen. Okay. Sir, what is section number 29 all about? It talks about dematerialization. Okay. It talks about demat. Okay. Now listen to me very carefully. Sir, one is listed company and the other one is unlisted company. Guys, for listed company, what we said, was everything has to be demat, but who will take care of you? SEBI will take care of you. We don't have to worry about it. But then for unlisted company, we divided into 2 parts. We first attacked public company and then we came on to private company. We said private companies, first what did we say? That you can have your shares in demat form or in physical form, whatever you want. But sir, with effect from 2025, for private company also, we have given a deadline and we are saying that no, boss, you cannot issue it in a demat. You cannot issue it in a physical form. The shares has to be in demat only. But for private company, it is yet to become applicable. So let's talk about public company. We are talking about UPC, which is unlisted public company. We said, sir, the unlisted public company should issue all the securities in demat form. Whatever shares they are issuing, they should issue it in demat form and also facilitate dematerialization. Facilitate dematerialization as in or do any sort of right issue, etc., if you want to do these things, then please ask your promoters, your directors, and your key managerial person to get all the shares or buyback or right issue anything. Please ask your promoter, director, key managerial person to get their shares dematerialized. Are you with me? Guys, are you with me? Can you hear me loud and clear? Can you hear me loud and clear? Yes. Yes, yes, yes. Okay. Are you sure? Okay. Sir, so this was about unlisted public company. After that, we said that if there is any member who wants to transfer his shares or apply for any upcoming shares, then he will also has to get his shares dematerialized. And for these members, we kept a deadline of 2nd October 2018. We said after 2000, give a facility for dematerialization. Sir, what is the facility for dematerialization? You will need a team of 3 people. DRS. Sir, what is D? Sir, D is depository. What is R? Sir, R is registrar to an issue. And S, sir, S is a share transfer agent. S is a share transfer agent. So these are the 3 people that we would need. These are the 3 people that we would need. Please listen to me very carefully. These are the 3 people that we would need. Now, after that, why is there so much of lag? Yeah. Okay, perfect. All right, sir. So he said there are 3 people that you need to take care of. You need to take care of depositories. You need to take care of registrar to issue and share transfer agent. Sir, you will have to give them fees. You'll have to give them annual fees, monthly fees. You'll have to give them deposit. Can anyone tell me, sir, how much security deposit has to be given? How much security deposit is to be given? Sir, whatever fees you are paying, 2 times of that fees. Whatever fees you are paying, 2 years fees, basically not 2 times, I would say 2 years fees will have to be given as a security deposit. And sir, the facility, you will have to give this facility, and then you will have to inform every shareholder that, guys, we have given you a facility, and if you want, you can go to this people and you can get your shares dematerialized. Now, if anyone has any problem with these DRS, for example, if any shareholder has any complaint, then he can go and give his grievances to IEPF authority. He can go and talk in front of IEPF authority. They can go to the IEPF authority and complain about the depository registrar or share transfer agent, and the depository registrar, the IEPF authority will take action against them. Okay. So this is the whole provision of section number 29, sir, which we understood in a scribble manner. You don't have to read these things. Whatever I told you, that is more than enough, and basically everything gets covered. Everything gets covered. Also, please understand that you will have to also obtain an ISIN number. What is ISIN number? International Security Identification Number. And that number will help you get what? That number will help you dematerialize your shares. Okay, guys. Now coming to the next section, sir. What is the next section? The next section is advertisement of the prospectus. So a very basic, not important section. Sir, what is the prospectus? So if you are giving the advertisement of the prospectus, then you will have to share certain things which are written in the memorandum. For example, name and address, that everyone knows. But apart from that, object clause, sir, your liability clause, your share capital clause, your subscribers to the memorandum, all these details you will have to give in the advertisement of the prospectus. So in the advertisement of the prospectus, it is necessary to specify the contents of MOA as regard to object, liability, authorized share capital, subscribers, number of shares, and capital structure. All these things you will have to disclose in the newspaper. Are you with me? Sir, are you with me? Yes, sir. After that, guys, what did I say? Let's move to the next 3 sections. The next 3 sections are super important and relatively very easy, sir. Next 3 sections are about the kind of prospectus. First, we are going to read. Sir, first we are going to read shelf prospectus, then we are going to read red herring prospectus, and then we are going to read about abridged prospectus. So listen to me very carefully. Sir, section 31, 32, 33. I need your 100% attention. Here we go. So section number 31 talks, guys, before we start, if you're watching the video till here, can I just request you to put a like on this video? We'll keep a very basic target of, let's say, 200 likes on this video. And I would want you to, everyone who likes this video, let me put it this way, I will pray to God that they give you, 5 marks extra in law paper. That would be my blessings for you, for everyone who likes this video. Let's keep a target of 200 likes. That's it. But what happens is these kind of videos takes a lot of efforts, and I want you to recognize that efforts. And you liking this video will give this video a significant reach. So that is why kindly make sure that you're doing that. And now let's continue. Okay, guys, listen to me very carefully. Sir, section number 31 talks about shelf prospectus. Shelf prospectus means what? Sir, shelf prospectus means, sir, a prospectus in which the securities mentioned therein can be issued in one or more issue over a certain period of time without the need for further prospectus. So I don't want to issue prospectus again and again. I'll issue a prospectus. Based on that prospectus, I'll make multiple issues over a certain period of time. That is called a shelf prospectus. And there is no need for a further prospectus. Sir, what is the provision related to shelf prospectus? Not every company can issue shelf prospectus. Only specified class of companies, only what did I say? Sir, any classes of companies as specified by the SEBI may file shelf prospectus with the ROC. So only specified companies can file shelf prospectus. Sir, when will they file? Sir, at the stage of the first offer, they'll have to give to ROC. And once they submit the prospectus, in that prospectus, they will have to mention a validity of the prospectus, and that validity will be up to 1 year, not exceeding 1 year. That validity will be up to 1 year, not exceeding 1 year. Are you with me? Yes, sir. Sir, the validity will commence from the date of opening of first offer. It will commence from the opening of the first offer, and second or subsequent offer, no further prospectus is needed. So the validity part is very important. What will be the validity? Sir, the validity will be mentioned in the prospectus, but it will be up to 1 year, and it will start from the commencing of the opening of the first offer, not from the delivery to ROC, from the opening of the first offer, and no further prospectus is required. But sir, your further prospectus is not required. But when you are going for a second or subsequent offer, you will need a different document, which is information memorandum, which will be in form PAS2. Information memorandum will be in form PAS2. So what about PAS2, sir? Sir, PAS2 basically says that whenever you are going for a second or subsequent offer, 1 month prior to that offer, you will have to give details of the CFO. What is CFO? C, sir, whether any new charges. Come on, remember along with me. You'll have to give details of CFO. 3 things. CFO. C, new charges were created or not. F, any change in the financial position of the company. And O, sir, any other changes as may be prescribed. C, F, O. So basically these are the 3 things that you need to put in the information memorandum that you are going to issue 1 month prior to the issue for every second or subsequent offer. So shelf prospectus along with the information memorandum together will be deemed as a prospectus. It will be considered as a prospectus. Together they will be considered as a prospectus. Now coming to intimation of changes, listen to me very carefully. Sir, coming to intimation of changes, listen to me very, very carefully. Are you with me? Sir, are you with me? Adarsh Srivastava says, sir, could you please little bit Hindi? Guys, you guys can't find satisfaction anywhere. There is a Hindi video. Why are you not watching Hindi video? If you understand Hindi. If you don't understand Hindi, why do you need Hindi in between? Hare. Now you tell me how much percentage Hindi should I put? How much percentage? Am I AI to you or what, others? Huh? Nalayak. Use some brain. You are in CA intermediate, not in your CA foundation exams. Come on, others. I told you this is 100% English. Sir, little in Hindi, sir. Little Hindi, sir. Little. Kunchum, tokku. So now, listen to me, guys. Sir, I said intimation of changes. Please listen to me very carefully. Sir, what is intimation of changes? So, for example, listen to me very carefully. In the application stage, that is the very initial stage, if there was a shareholder that gave me the application money and also gave me an advance, okay, but later on there were changes in the company and that changes were intimated to him. That was, you have paid the advance, but now there are changes in the company and we are intimating that changes to you. In that case, if you have given some advance and once you get to know about the changes, what you can do is you can ask for a refund. And once you ask for a refund, the company will give you a refund. Within 15 days, the company will give you a refund. If the company doesn't give within 15 days, the company will have to give you some interest also. So basically, where there is any changes in the company, where a company has received application for allotment along with advance payment, and the company will intimate any changes to the applicant, and if they decide to withdraw the application, the amount will be refunded within 15 days of such application. They will be refunded with the money. Okay, are you with me? Are you with me? Yes, guys. Sir, what is this? This is your provision. Do you understand? Hmm? Did you understand? Shelf prospectus plus information memorandum together becomes your prospectus. You have to focus on these 2 points very clearly. The validity will be up to 1 year, and apart from that, you have to give an information memorandum in form PAS2. Now coming to the second kind of prospectus, that is red herring prospectus. Guys, listen to me very carefully. What is a red herring prospectus? So red herring prospectus is basically a prospectus in which two informations are missing. Number one, the quantum of the issue and the price. The quantum of the issue and the price, those two things are missing. Now listen to me very carefully. It is not mandatory for every company to go for red herring prospectus. If you have understood this concept, only those companies which are going for 100% book built offer, 100% book built offer are going to go for red herring prospectus. No other company is going to go for red herring prospectus. Are you with me? Sir, so when you are a company who decided to go for red herring prospectus, then in that case, a company may make an offer for red herring prospectus. How? They'll have to file that red herring prospectus to ROC at least 3 days before the issue. And then what will happen? Sir, the issue will open, the issue will close, allotment will happen. Now, when the issue closes, within, sir, you will have to, upon closing of the offer, the prospectus, not the red herring prospectus, the final prospectus along with total capital raised and the closing price will have to be given to the ROC as well as the SEBI. So RHP was issued, based on that offer was opened and offer was closed. Once the offer is closed, you will have to finally submit the prospectus, which includes both the closing price also and the total capital also, and you'll have to file it with ROC and SEBI. Now guys, listen to me very carefully. Any difference between red herring prospectus and prospectus, the variations between them will have to be highlighted. The variations between them will have to be highlighted. This is your section number 32, which talks about red herring prospectus. And the last one, sir. So the last one is abridged prospectus. Sir, what is abridged prospectus? Listen to me very carefully. Sir, whenever you issue the application form, along with that application form, you will have to give an abridged prospectus. Along with every application form, there has to be an abridged prospectus, but there are 2 exceptions to it, not 3. You can cut the third one, but there are 2 exceptions to it. Number 1, where the issue application form is for an underwriting agreement, or where the shares are not offered to public. In these 2 cases, you do not need to give what? You do not need to give an abridged prospectus, but in other cases, you will have to give an abridged prospectus. Now, if anyone wants, they can request and ask for the full prospectus, but generally, abridged prospectus would be enough. And if there is a default, the company will be liable for 50,000 rupees of default. If there is a default, the company will be liable for 50,000 rupees of default. Are you with me? Sir, yes or no? Yes or no? Yes, sir. Are you sure? Are you sure? Alright guys, so this is your section number 33, which talks about abridged prospectus. After that, sir, coming to next two very important sections. Sir, I promise you that if you give me 100% attention, you have not studied these 2 sections the way I'm going to teach you now. So give me your 100% attention. Sir, what is section 34 and what is section number 35? I have simplified it to a significant extent. You just have to write down whatever is written on my screen and that should be it. You don't have to do anything else. Let's first understand what is section number 34. Section number 34 talks about criminal liability, and then section number 35, which talks about civil liability. Okay. Sir, what is section number 34? Sir, section number 34 talks about criminal liability. What is criminal liability? Section number 34 criminal liability states that if a prospectus includes a statement that is untrue or misleading. Sorry. Anything that you have written in the prospectus that is untrue or misleading, then every person who authorizes such prospectus will be liable under section 447. Every person who authorizes such prospectus will be liable under section 447. However, please understand that this section is not applicable if a person proves that, number 1, such statement or omission was immaterial, or he had reasonable ground to believe that the statement was true or the inclusion or omission was necessary. I'll explain it, don't worry. Sir, what is the first paragraph saying? Sir, the first paragraph is saying that if there is a prospectus, in that prospectus there is a statement, and that statement is basically untrue, as in it is a lie, or you are misleading with that statement. In that case, if the statement is untrue or misleading, then every person who authorizes such prospectus will be liable for fraud under section 447. Now, how can I escape this liability, sir? How can I get rid of this liability? There are 2 exceptions. If a person proves that the statement or omission was immaterial. For example, Reliance was making a report in that instead, so Mukesh Ambani's wife is Neeta Ambani. Instead of writing Neeta Ambani, he wrote Tina Ambani. Sir, it is that not that big a is it untrue? Yes, sir, it is untrue, but it is immaterial. So if you prove that the statement or omission was immaterial, no one is going to bother you. Number two, if you had reasonable ground to believe that the statement was true or the inclusion or omission was necessary. What do I mean? Sir, if when you were writing that statement, you thought it is true. If you prove that, then in that case, you can escape the liability. So two keywords, number one, immaterial, number two, necessary. True and necessary. These two keywords, if you remember, you will be able to write. Sir, what is RGTB? RGTB is reasonable ground to believe. Okay. Now coming to section number 35, sir, what is civil liability? What is civil liability? Sir, 34 was criminal liability where you have to give money, where you will go to jail and you'll pay fine. But 35 is civil liability where you will have to compensate. So what has happened, sir? If there is a person who has subscribed to the securities of the company, he has become a subscriber, acting on a statement which is included or omitted in the prospectus, which is misleading, then and has sustained loss or damage as a consequence thereof. So three conditions. Number one, you have subscribed to the securities. Number two, acting on the prospectus. And number three, there is a loss or damage that you have incurred. Then in that case, the company and every person being, I would say, DAPE. What is DAPE, sir? Sir, director, any person who authorizes, sir, promoter, and uske baad expert, and after that expert. So director, any person who authorizes, promoter or expert, all these things will be what? All these people will be liable to compensate for the losses that person has incurred. You're not only going to jail, you're not only paying fine, but also you will have to compensate the person who has incurred this losses. But guys, listen to me very carefully. If this misleading statement was with an intent to defraud, the intent was that you're going to defraud, then in that case, if the intent was to defraud, then the person will have unlimited liability, sir. Unlimited personal liability. Such person shall be personally unlimited liability to compensate. That means you will have to sell everything that you own and you will have to pay the money. But sir, is there a way I can escape this liability? Yes, sir, absolutely. There are three ways in which you can escape this liability. Number one, as a director, you have given your consent, but you withdrew the consent before the issue of prospectus. You had given consent, but you withdrew the consent before issue of prospectus. You will not be liable. Number two, sir, you are a person who were the prospectus was issued without the knowledge or consent, and as soon as I came to know about it, I gave a reasonable public notice. The prospectus was issued without my knowledge or consent, and as soon as I got to know about it, I gave a reasonable public notice. And the third one being, listen to me very carefully, sir, the statement. Listen to me very carefully. Sir, such statement was based on an expert's report. It was a true and fair representation of the expert's report. I had reasonable ground to believe that expert is competent. The expert has given written consent and such written consent was not withdrawn. In that case, I'll be liable. You didn't hear me. I'll tell again. I said, how can I save myself? If my statement is misleading, but my statement was based on an expert report, it was a true and fair representation of the expert report. Number three, listen to me very carefully. Number three, I had reasons to believe that the expert is competent. Number four, the expert had given written consent and not withdrawn it. So the mistake was technically of the expert and not mine. So I can get saved. So there are three exceptions based on which you can save yourself. This is section number 35. Sir, what is the difference between 34 and 35? 34 is criminal liability, 35 is civil liability. In criminal liability, you are going to jail, you are going to pay the fine. In civil liability, you are going to compensate also. Generally speaking, whenever you have to write an answer on section 35, 34 also gets subtracted automatically. So whenever there is a question regarding these sections, please mention both the sections. Okay. Now the second part, sir, listen to me very carefully. The provision starts by saying that when a person has subscribed to the securities of the company, guys, listen to me very carefully. Person has subscribed. That means when I say person has subscribed, you will have to be very careful when it means that you have to subscribe and not acquisition. Subscription is different, acquisition is different. Subscription is you directly subscribe from the primary market, from the IPO, but acquisition is you get it from the secondary market. This provision is only applicable if you have subscribed acting on the prospectus. You have to subscribe to the shares. That was written in a case law called Peak versus Gurney. This was asked in your exam once. It says that the remedy under section 35, that is the civil liability, will only be available in case of subscription and not in case of acquisition. Are you with me? Yes, sir. Now bringing you to the next part. Sir, what is the punishment of fraud? You said he'll be liable under section 447. What is that liability, sir? Can you tell me? Yes, I can tell you very confidently. Listen to me. Sir, what is that penalty? You have to remember it like this. The penalty is, there is a limit. The limit is 10%, 1% of the turnover or 10 lakh rupees, whichever is lower. 1% of the turnover or 10 lakh rupees, whichever is lower. If the fraud is bigger than this amount, it will be considered as a big fraud. For big fraud, what is the liability? Sir, for big fraud, the liability is jail from 6 months to 10 years and fine up to 3 times of the amount of fraud. But sir, imagine if it is a big fraud, and what if public interest is also involved? Sir, if public interest is involved, it will be jail from 3 years to 10 years and fine 6 months to 10 months, fine up to 3 times the amount of fraud. But sir, however, listen to me very carefully. If the fraud is less than the limit, then it is a small fraud, and the fine will be up to 50 lakhs, or jail will be up to 5 years, or both. If it is a big fraud, it will be jail and fine both. But if it is small fraud, it is going to be jail or fine or both. Anything is possible. Okay, guys. Now, section 36, 37, not that important. Let's come to section number 38 is also not important. It is basically penalty. 38 is penalty, 36 is penalty, 37 is penalty, not that important. Coming to section number 39. What is section number 39? So, section number 39 talks about allotment of securities. Guys, are you with me? Are you with me? Are you enjoying the revision? Tell me in the chat, are you enjoying the revision? Yes? Yeah? Okay, sir. Listen to me very carefully. Sir, what is section number 39? Sir, section number 39 and 40 are very interrelated, very easy. Listen to me very carefully. Sir, what is section number 39? Section number 39 talks about allotment. Sir, when will you, after issuing the prospectus, your issue will open and your issue will close. After that, how will you decide whether to do the allotment or not? So there are two conditions, sir. Number one, the condition is that amount stated in the prospectus as minimum subscription has been received. You have to receive minimum subscription, and so the minimum application money has been paid by check or other instrument. So you have received the minimum subscription also. How much is the minimum subscription, sir? Sir, in 11-12 standard, we must have studied that 90% is the minimum subscription. But actually, we will have to write that the minimum subscription as stated in the prospectus. That will be as per SEBI. So minimum subscription and minimum application money. Sir, what is the minimum application money? It shall not be less than 5% of the nominal value of the shares. Not less than 5% of the nominal value of the shares. If both these things are received, within 30 days, in that case, you'll do the allotment. Otherwise, you will have to go for refund. If these things are not received within 30 days. Sir, within 30 days of what? Within 30 days of the issue of prospectus. Now, sir, if you were to return, sir, you will have to refund within 15 days from the close of the issue. And if you fail to refund within 15 days, then all the directors and the officer in default will be liable for an interest of 15% per annum. The company is not liable. The directors and the officer in default are liable for the interest. So this is what will happen if your application money and your subscription is not received. You'll have to refund within 15 days. If you do not refund, you'll have to pay interest. But sir, if your allotment is successful, then you will have to file a return of allotment with the ROC in form PAS3 within 30 days. You'll have to file that return of allotment within how many days? 30 days. In that 30 days, sir, you'll give all the basic information. All the basic information as in who are the allottees, what are the name, occupation, address, all the things you will have to give in case of what? In case of your return, in your return of allotment. Are you with me? Are you with me? Tell me yes or no. So this is your provision of return of allotment, section number 39. Either you go for allotment or you go for refund. If you go for refund, you'll have to refund within 15 days, otherwise 15% per annum. If you go for allotment within 30 days, you'll have to file PAS3, which is return of allotment to the ROC. Coming to the next section, which is section number 40, which says that securities to be dealt with in the stock exchange. So basically, law says that before you issue your prospectus, you will have to make an application to one or more recognized stock exchange and obtain their permission. You'll have to make application and obtain permission. You'll have to make application to one or more and obtain permission from them. Okay. Now listen to me very carefully, guys, please. Now, once you have made the application, you'll have to mention it in your prospectus also that we have made applications to these and these stock exchange. Now, please listen to me. What about the application money, sir? Sir, whatever application money will come, that has to be kept in a separate bank account with a scheduled bank. That has to be kept with a scheduled bank. What will you do with that application money, sir? Sir, if at all you go for allotment, you'll adjust against allotment. Also, you use that money to refund, but you will have to keep it in a separate bank account. Now, guys, listen to me very carefully. Sir, what about underwriting commission? Can a company pay underwriting commission? Is a company allowed to pay underwriting commission? But before we come to that, let me close this thing. Sir, about the stock exchange. A very important question was asked in exam. Sir, if I make application just to National Stock Exchange, is it okay? Yes, sir. Sir, if I make application just to Bombay Stock Exchange, is it okay? Yes, sir. Sir, if I make application to NSE and BSE both, I make application to NSE and BSE both. In that case, sir, if you make application to both of them will have to approve. Let's say if NSE approved, but BSE said no, in that case, I cannot proceed, because if I apply to two stock exchange, I need to get approval from two stock exchange. If I apply to one, approval of one is okay. But if I apply to two stock exchange, I'll have to get approval of all of them. Now coming to the last part, sir. What is underwriting commission? Sir, a company wants to give underwriting commission. Can they issue underwriting commission? Sir, for underwriting commission, you have to remember 6 conditions. How many conditions? 6. Please by heart this along with me. What are the 6 conditions? Number 1, sir. Sir, it has to be authorized by the AOA, the underwriting commission. Number 2, sir, what will be how will you pay the money? The money will be paid out of proceeds of the issue or the profits of the company. You'll pay it from the proceeds of the issue or the profits of the company. That is the source of underwriting commission. Number 3, what will be the rate of commission, sir? Sir, in case of equity, the rate will be 5% or rate as per AOA, whichever is lower. And in case of debentures, it will be 2.5% or the rate as per AOA, whichever is lower. For equity, the rate will be 5% of the, sir, the percentage will be of the issue price and not the face value. Remember that. So of the issue price, you will have to pay this percentage, issue price and issue price to 5% or AOA, whichever is lower in case of shares, and in case of debentures, 2.5% or AOA, whichever is lower. Now point number 5, sir, you will have to disclose a certain things in the prospectus. That is the name of the underwriter, the rate of the commission, the agreement with the underwriter, all these things you will have to disclose. Point number 5, sir, listen to me very carefully. It should not be an offer which is not made to public. That is, in case of private placement, you do not get to pay underwriting commission. And the last one, sir, you'll have to file it with the ROC for registration. The underwriting agreement. When will you file it with the ROC, sir? At the time you're not listening to this. This will come in an MCQ. Sir, you will have to file along with the prospectus. When you send the prospectus, along with that, you will have to send this underwriting agreement for underwriting agreement. Are you with me? Are you with me? Are you with me, guys? Yes, sir. Sir, what is this? Sir, these are the 6 conditions that you need to take care of when you come to an underwriting agreement. Number 1, it has to be authorized by an AOA. Number 2, that the payment will be out of the proceeds of the issue or the profits of the company. Number 3, what will be the rate? The rate will be 5% of the issue price or the AOA, whichever is lower. Or in case of debentures, it will be 2.5% of the issue price and the AOA, whichever is lower. After that, coming to the 4th point, what is the disclosure? What is the disclosure? Sir, the disclosure, what will you have to disclose? You will have to disclose the fact that, listen to me very carefully, what is the name of the underwriter, what is the rate and everything. And point number 5, public. Sir, if you are making an issue to public, you cannot give underwriting commission. And last one, sir, the underwriting agreement will have to be registered with the ROC along with the prospectus. At the time of filing of the prospectus, this is your section number 40 completed. Sir, one question was asked in exam. Sir, can you give underwriter, instead of cash, you said I'll give you a flat. Can you give such kind of things? Yes, sir, underwriting commission can be in cash also, because there is no such restriction. So if you have to give in cash also, you can give in cash also, not a problem at all. Are you with me, guys? Guys, are you with me? Can you hear me loud and clear? Can you hear me loud and clear, guys? Tell me yes or no. Can you hear me loud and clear? Yes. Raja. Oh, Raja. Can you hear me loud and clear? Okay. So very beautiful revision. I'm very satisfied with the kind of coverage that we are doing. And in the next 10 minutes, we are going to finish also. In the next 10 minutes, we are going to finish also. That would be less than 1 hour, but that would be your complete revision of your private placement. I think it is going to be very helpful for you. Please make sure that you listen to these revision videos 3 times, 4 times in one go, so that you will be able to retain it better. So instead of, let's say you listen to this revision video 2 times, that would take you 2 hours. But then again, when you read on your own, you're going to spend 3.5, 4 hours to finish this small chapter. It is not worth more than 2 hours. Okay. Guys, now listen to me. Last section 41, you don't have to cover. 41, you don't have to cover. Coming to the last section, which is your section number 42, which talks about private placement. Are you with me? Sir, section number 42 talks about private placement. Very important, sir. I'll tell you the very basic concepts of private placement. So what happens in a private placement, guys? The things that I'm going to tell you is going to be a good amount of revision. So what happens is, if a company wants to do private placement, then the board of director will identify some person called as identified person. A group of person that will be called as identified person. Sir, what will the company do? Sir, the company will send them a PPOCA form. What is a PPOCA form? Private placement offer Come application form. Sir, there is a format for PPOCA form. This format is PAS4 and this form is serially numbered. This form is serially numbered. So those identified persons will get the PPOCA form. Please understand that these identified person will not have right to renounce. This PPOCA form cannot be renounced in someone else's name. Either you apply or you let it go. Now the question is, sir, to how many person can you make this offer? So law said that this offer can be made to 50% or such higher number as CG may prescribe. So CG prescribed a number of 200. So basically you can make this offer to 200%. But the limit is not so simple, sir. Focus on the 200. This 200 is in aggregate for a financial year. And this is for each kind of security, which means what? For equity, 200 is the limit. For preference share, 200 is the limit. And for debentures, 200 is the limit. And this limit is an aggregate for a financial year. So you can issue to maximum 200%. Please listen to me very carefully. Please listen to me very carefully. You can issue to maximum of these persons. After that, listen to me very carefully. Sir, when you're calculating the limit of 200, you will exclude qualified institutional buyers or you will exclude the persons who have received shares in ESOPs. These people will be what? These people will be excluded. But however, this exclusion is not applicable in case of a non-banking financial company or a housing finance company. In case of these companies, the exclusion is not applicable. So basically 200 people excludes qualified institutional buyers and ESOPs employees. But however, this exception is not applicable in case of NBFC and housing finance company. This is about the limit that I told you. Now, sir, if a company were to make a private placement, listen to me very carefully. The company will have to, first of all, pass a special resolution. Sir, for special resolution, they'll have to call a general meeting for which they'll send the notice and in which they'll attach the explanatory statement. In that explanatory statement, they have to give a lot of details as to whom are we doing this private placement, what is the issue price, what is everything. You'll have to give all the details. Okay, but you will have to definitely pass a special resolution. But guys, if the private placement is for non-convertible debenture and if the issue is within the limit of 181C, then in that case SR won't be needed, board resolution would be enough. But even if the limit exceeds 181C, then in that case, one SR should be enough in a year. In a year, one SR is enough. You don't have to pass multiple SR. We are talking about the special resolutions. So first we spoke about the number of members. Now we are talking about the special resolution, that generally special resolution is needed. But if the limit, if it is for NCD, non-convertible debenture, then the special resolution is not needed. Now guys, listen to me very carefully. Sir, again the same thing. You will receive the application money will be received. So what will happen? Sir, you issued the PPOCA form. Okay. They applied. How will they apply? They'll give you the application money. Sir, the application money, listen to me very carefully, that will be kept in a separate bank account with a scheduled bank. Separate bank account with a scheduled bank, and that money will be used only for two purposes. One would be adjustment against allotment and the other one would be refund. Now, what does the company say? Listen to me very carefully. Sir, once your issue is closed, it says that within 60 days, you go for allotment. You go for allotment within 60 days. If you are able to allot, then you file return of allotment with ROC in the form PAS3. Same form, sir, but you will have to file this within 15 days, not 30 days, 15 days. Same format, but 15 days. Why? Because private placement, so less number of members. But if you could not do the allotment within 16 days, you will have to refund within 15 days. You will have to issue the refund. But if you fail to issue the refund, sir, you will have to pay interest at the rate of 12% per annum. Not 15%, 12% per annum. Please listen to me. And this 12% of per annum will start from the 61st day itself. If you do not pay within 15 days, then interest you will have to give from the 61st day itself. These are the things that is written in your private placement. Okay. One last thing, sir, and then I'll go through the section and see if anything is left. But one last thing, you have to realize that if there is a private placement that is going on, let's call it private placement 1. Then unless this private placement is completed or unless this private placement is abandoned, unless this is done, you cannot start a new offer. You cannot give a fresh offer. No fresh offer for private placement shall be made unless the prior offer has been completed or abandoned. Are you with me? Are you with me? Yes, sir. This is about your private placement. This is about your private placement. I hope you understand. Okay. Okay. Did you understand, sir? Yes, sir. All right. So this is about your private placement. Let me see if I missed any points. I think I've covered everything mostly. Yeah. Sir, one point, please note down that. Sir, please note down that no offer shall be made to a body corporate, incorporated, or national of a country which shares land border unless his body corporate has obtained order of government order and submitted. So basically, you remember how company sends PPOCA to the identified person. Now, sir, for example, this person is an individual or a body corporate, but they are national of a country which shares land border with India. So if that person belongs to Nepal, Bhutan, Afghanistan, Pakistan, these all land, Myanmar, these are land border countries. There are 7 countries which shares land border with India. If that individual belongs to that particular national, then he will have to go to the government of India first, take approval, and then once he submits the PPOCA form, along with that, he will have to submit that approval also. Only then he gets to apply, otherwise he can't apply. Okay. So now listen to me very carefully. One point is very important. Sir, if a company makes offer to the public in contravention of this section, if an offer made under this section is not as per this section, it will be deemed to be an offer for public and part 1 will be applicable. Part 1 would be section 23 to 41. That would apply. So basically, if you are making a private placement, comply with section 42. If you fail to comply with section 42, it will be deemed to be a public offer. Sir, now the question is, how will I get the application money? You can get it via check, DD, or any other banking channel, but not by cash. Application money cannot be received in cash. So now listen to me very carefully. Sir, I told you that if one private placement is going on, you cannot start another private placement. Sir, if the first private placement is of equity and the other one is of debenture, can I do it parallelly? Can I do equity and debenture parallelly? No, sir. Irrespective of the security, you cannot do 2 private placement in one go. Only after the first one is completed or abandoned, only after that you can do this particular thing. Okay. Then what after that, sir? After receiving the application money, within 16 months, you go for allotment. If you fail to do the allotment within 15 days, you go for refund. If you fail to repay, then you'll have to pay an interest at the rate 12% per annum. Okay, you cannot make any sort of public advertisement, strictly prohibited. Sir, if you go for allotment, file a return of allotment in form PS3 within 15 days along with the details of the allottee. Okay, now sir, there are some defaults that you can see, the private penalties that you can see, and the last one, sir, you'll have to maintain a register in the form PS5, which is details of private placement. You'll have to maintain a register in PS5, that is details of private placement, and I think that is it. Okay. So there is one PS6 form that you need to remember, that if a company has dematerialized the shares, then 2 times every year. So once after the end of half year, within 60 days, you will have to file a return that will be in form PAS6. This I am talking about section number 29, dematerialization. Consider reading section 2 for PAS6, and I think this question bank, this chapter is done for you. Let's begin the revision without any further delay. We will divide this revision into 2 parts. Today we will do part 1 and the second part we will do tomorrow. So guys, share capital and debenture is a very important chapter and can come in your exam for up to 10 marks. Alright guys, share capital and debenture, let me tell you, it starts from section number 43 and goes up to section number 72. Okay, what is section number 43? So let's start first. Section number 43 talks about kinds of share capital. As you must be knowing, there are 2 kinds of share capital. One second, I cannot see your chat. I don't even know if you're active here. Yeah, I can see myself. If you could just confirm once everything is fine. Once again. Okay. It looks like everything is fine. Okay. Sir, so coming back, listen to me very carefully. Section number 43 talks about kinds of share capital. Listen to me. Sir, what are the kinds of share capital? We know that there are 2 kinds of share capital. One is equity share capital, one is preference share capital. So when you say preference share capital, what is the preference that we are talking about? When we say preference share capital, we are talking about basically 2 preferences. We are basically talking about preferences with respect to declaration of dividend, preference with respect to repayment of capital on the winding up. There are 2 preferences. Number 1, before equity shareholder, you will get dividend. And number 2, in case of winding up, before we say pay to the equity shareholder, we will repay to the preference shareholders. Are you with me? Yes, sir. This is your point number 1. Sir, what is equity share capital? Sir, equity share capital can be of 2 types. One, there is normal equity share capital with voting rights. The other one is equity share capital with differential rights, which we call as DVR, differential voting rights. The difference could be with regard to dividend also, voting also, and any difference. Like there could be any difference. For example, there is class A equity share and class B equity share. So class A has 1 share, 1 vote. Class B has 10 shares, 1 vote. This is called as differential voting rights. This is called as differential voting rights. So there are differential voting rights, equity shares. So basically that is what about equity shares. Now listen to me very carefully, guys. Sir, point number one. In capital, sir, if for example I told you in preference shares there is dividend, there is preference of two things. Number one is dividend, and number two is repayment on winding up. Correct? Repayment on winding up. My question is, sir, if I issued a share capital in which there is a preference of dividend but no preference of repayment, or there is a preference on repayment but no preference on dividend, will it be considered as preference share capital? The answer is yes, sir. Law says that even if there is one preference, it will be considered as a preference share capital. Capital shall be deemed to be preference capital even if it has either or both the rights. Either or both the rights as preference, it will be called as preference share capital. Okay, guys. Now coming to the next point, please listen to me very carefully. Sir, now the question is, can a company issue shares with differential voting rights? Can a company issue shares with differential voting rights? And if yes, what are the conditions? Sir, there are 7 conditions that you have to remember along with me. What are the 7 conditions? Sir, condition number 1, it has to be authorized by the AOA. You will remember along with me, and then we will write it roughly once. But remember along with me, 7 conditions. Sir, number 1, you have to authorize it in the article of association. Number 2, it has to be authorized by an ordinary resolution at the general meeting. You will have to pass an ordinary resolution at the general meeting. But listen to me, if you are a listed company, then you will have to pass such resolution through a postal ballot. Although ordinary resolution only, but it will be passed through postal ballot. Sir, postal ballot is something that you study in section 110. So you will pass it through a postal ballot. Number 3, sir, the voting power on these DVR shares. Voting power in this DVR share shall not be more than 74% of the total voting power. So if this is the total voting power, sir, so the DVR shareholder can have maximum 74% of voting power, not more than that. Point number 4, sir, the company shall has not defaulted in filing of financial statement and annual return. They have not defaulted in filing of financial statement and annual return for 3 immediately preceding financial year. Financial statement and annual return for 3 years, they have not defaulted. Point number 5, they have no subsisting default in what? In, sir, dividend, deposit, preference share, debentures. They have no subsisting default. Everything that is due, they have repaid. The next point is, company has not defaulted in dividend on preference shares, repayment of term loan, statutory dues of employees, and crediting amount to IPF. These are 4 new points. What is the point number 5? Point number 5 says that there is no subsisting default. Subsisting as in continuing default. Point number 6 says that company has not defaulted in these things. And provided that company may issue DVR after expiry of 5 years from the end of financial year in which default is made good, after you renew it. And last, it has not been penalized by any court or tribunal in the last 3 years under any act, RBI Act, SEBI Act, FEMA Act, any act. So basically, sir, if you read along with me and if you write along with me, there are 7 conditions. Write down carefully. So there are 3 conditions. Number 1, AOA. Number 2, you have to pass ordinary resolution. For listed company, it has to be postal ballot. And number 3, maximum 74% voting power. These are the first 3 conditions. AOA should authorize. Ordinary resolution has to be passed. And in case of listed company, who will pass that ordinary resolution? You have to pass via postal ballot. And then after that, maximum 74% of the voting power can be held by equity shares with differential voting rights. After that, listen to me very carefully. There is point number 4. What is point number 4? Point number 4 talks about financial statement and annual returns for 3 consecutive years. There should be no default in filing for the 3 consecutive years. Okay. Point number 5, sir, there is no subsisting default. You have no subsisting default in what? Sir, in deposit, in debentures, in preference shares, in dividend, nothing. There is no default at all. And number 6, there is no default in what? Some unique cases, sir, like in dividend to preference shareholder. Dividend to preference shareholder, in repayment of term loan, in repayment of term loan, in statutory dues of employees, statutory dues of employees. And then point number 4, guys, listen to me very carefully and try to by heart along with me. Statutory dues of employees and credit to IEPF. There should be no default. If you make a default, then what, sir? Sir, if you make a default, then you have to wait till the end of financial year and then for 5 more years. From the end of financial year till 5 years, you cannot issue DVR, but after that, you can issue a DVR. And so the point number 7 is that you have not been penalized by any court or tribunal in the last 3 years. In the last 3 years, you have not been penalized under any act, RBI Act, SEBI Act, FEMA Act. You have not been penalized. In these cases, if seven conditions are satisfied, you can go and issue a DVR, not a problem. Sir, are you okay? Did you understand? Perfect, sir. Okay. Now let's move to the next part, sir. Please listen to me very carefully. These are the seven conditions. Now, listen to me very carefully. Number one, sir, a company cannot convert its existing equity share capital into DVR shares or DVR into equity share. Sir, normal share cannot be converted into DVR. DVR cannot be converted into equity share. Please remember that. Okay. After that, I said, sir, please understand equity shareholder and DVR shareholder will both have the same rights. Absolutely the same rights, sir. Sir, except for the voting power, maybe, except for voting power, all the other rights will be same. Like equity shareholder will also get notice of the meeting. Differential voting right shareholder will also get notice of the meeting. These are some things that you need to remember. Okay, guys. So that is section number 43. Now coming to next section, which is section number 46. Hello, hello, hello. Sir, 44 and 45 is not there in our ICI module also, so you don't have to worry about. Although it is a very small section, but it is not there in our ICAI module. Okay. Okay. Okay, guys. Now moving to the next part, please listen to me very carefully, guys. What is section number 846? Section number 46 talks about certificates of shares, which is share certificate. So listen to me very carefully. What is share certificate? Sir, it says that shared certificate to be prima facie evidence. Whenever you get a shared certificate, it is a prima facie evidence of the title on such shares. Prima facie evidence. It is prima facie evidence. Now the question is, who shall authorize such share certificate? Sir, it will be authorized under a common seal or signed by two directors, or where the company has a CS, then a director and a CS. It will be signed by two directors, and if the company has a CS, it will be signed by a CS and a director. So basically common seal, two directors. If there is one CS, then CS plus a director. After that, guys, listen to me very carefully. If composition of board permits, sir, what if the composition of board permits? At least one of the two directors will be shall be other than MDWTD. So we said two directors will sign. One will be MDWTD, but the other one will be any person other than MDWTD. Not a big deal. You remember this much only. After that, sir, my question is, can I get a duplicate share certificate? Yes, sir, you can always get a duplicate share certificate. What happened? If your original share certificate was torn, mutilated, or destroyed, for some reason it was defaced, mutilated, or torn, then in that case you surrender the old one and you get a duplicate one. But if it is lost or it is destroyed, like you don't have it, then in that case you cannot surrender. So you'll have to prove that it is lost or destroyed and you'll get a duplicate. So if there is a shared certificate, sir, I defaced it. For example, I spilled my tea on that shared certificate. Then in that case, I can get a duplicate shared certificate. Sir, what is the format of shared certificate? Please try to understand that the format of shared certificate is SH2. Sorry, the format of shared certificate is SH1. Usually the format of shared certificate is SH1. And sir, in what form will you get the duplicate shared certificate? Sir, duplicate will also be in SH1 only, sir. The format will be same. After that, sir, the question is, when will you get a shared certificate? What is the time period? What is the time period to get a share certificate? Sir, the time period will be, listen to me very carefully, in listed company, you'll get it just within 15 days of submission. But for an unlisted company, it will be within 3 months of the completion. For an unlisted company, it will be within 3 months. Give me a minute. Give me just 1 second. Sir, 1 second. Yes, sir. Actually, there is a correction in this amendment. ICI has made a correction. For listed company, it was within 15 days, but ICI has made a correction. It will be within 45 days. So basically, for listed company, it will be 45 days. For unlisted company, it will be within 3 months. Within 3 months, please make sure you write it down to be as 3 months. This will not be 45 days. This will be within this will be within 45 days. And for unlisted, it will be within 3 months. Within this many days, you'll get the share certificate. After that, guys, you will have to maintain a register of all the original share certificates that you gave, duplicates that you gave. You'll maintain a register in SH2. Where will you keep this register, sir? Whenever there is a question on register, where will you keep it? Registered or office or any other place as where the register of members is kept. Wherever you keep the register of members, there you can keep this register of share certificate. And in whose custody will it be? It will be in the custody of company secretary or any other authorized person. Are you with me? Yes, sir. Now coming to the last point, sir, what if a company issues a duplicate certificate with an intent to defraud? If a company is doing fraud by issuing duplicate share certificate, then sir, the company will be liable for minimum 5 times of the face value of shares involved and maximum 10 times or 10 crores, whichever is higher. 10 times or 10 crores, whichever is higher. Minimum 5 times, maximum 10 times of face value or 10 crores, whichever is higher. And the officer in default will be liable under section 447. What is section 447, sir? Sir, 447 talks about fraud. 447 talks about fraud. Are you with me? Yes, sir. Yes, sir. Okay, perfect. After this, guys, listen to me very carefully, sir. In case of joint ownership, also there will be only one share certificate. You'll not get multiple share certificate. You'll just get one share certificate. Okay, okay, sir. So this is your share certificate. But you know, guys, after now in today's time, a public company or a private company, both of them are not allowed to issue share certificates. Shares are supposed to be in demat form. And in demat form, you do not issue a share certificate. Okay. After that, coming to the next section, which is your section number 47, which talks about voting rights. What is voting rights? Sir, voting rights is basically I'll keep it very simple for you. Sir, equity shareholders can vote in all the resolutions. But preference shareholder, listen to me very carefully, equity shareholder can vote in all the resolutions. Preference shareholder can vote in only those resolutions in three types of resolutions. Number one, sir, number one, which directly affects their interest. Number two, when there is a resolution relating to winding up. Or number three, a resolution for repayment or reduction of equity or preference share capital. If in any these three resolutions, if it directly affects or winding up or repayment of capital, in these three cases, they pass a resolution. In these three cases, they vote in the resolution. But apart from that, preference shareholder cannot vote. But sir, if a preference shareholder is not paid dividend for 2 or more years, if you have not paid dividend to a preference shareholder for 2 or more years, then in that case, they will vote in that resolution also. They'll vote in that resolution also. This is section number 47, which talks about voting rights. This is section number 47, which talks about voting rights. Are you with me? Are you with me? Yes, sir. Sir, voting rights is equity shareholder can vote in all the shareholder. But if preference shareholders have not been paid dividend for 2 years or more, they can vote in all the resolutions as if they are equity shareholders. Okay. Now coming to section number 48, it's a very important section. Variation of shareholder rights. Please try to understand. Okay. What is variation of shareholders right? Sir, if I had issued shares to these people and I said your one share will be equal to one vote. Now, all of a sudden, if I want to vary the rights and I want to say that, no, boss, for 5 shares, you'll get one vote. Sir, can you do this? Law says that you can do it, but only if your article or memorandum authorizes. Sir, number one, when you had issued these shares, you had not put any terms and conditions. When you had issued these shares, did you say that tomorrow I'll not make any changes? No, sir. So in case if terms and conditions of the issue does not stop you from changing it, you can change it. But you will have to take approval of the shareholders, right? So what is the process for variation, sir? Whenever there is a question on variation, there are 2 points that you need to address. One point would be how do you vary? How do you vary? Other point is what if there is resistance to such variation? What if there is resistance to such variation? What will you do in such case? Are you with me? Guys, are you with me? Yes. So, guys, how do you vary such rights? So, the variation can be done with the consent and writing of not less than three-fourth of the issued shares, consent and writing of three-fourth of the issued shares, or special resolution at a separate meeting. But variation can only be done if the provision for such variation is contained in AOA or MOA. It should be there in MOA or AOA, but in the absence of such provision, it is not prohibited by the terms of the issue. Make sure that your terms of issue do not prohibit such variation. If I want to vary from 1 share, 1 vote to 5 share, 1 vote, your terms of issue should not prohibit that variation. And number two, if possible, MOA, AOA should give you that authorization. If so, then you can go ahead and take consent or pass SR and you can make that variation. Sir, what is the difference between first and the second point? First point says that consent of not less than three-fourth of the issued share. Okay. Or SR. Sir, SR is also three-fourth. What is the difference? Sir, consent and writing of not less than three-fourth of the issued share means, hello, it means that, listen to me very carefully, consent of not less than three-fourth means that basically all the total shareholders that you have, of the total, you will take three-fourth shareholder. But in SR, sir, you will take three-fourth of only those shareholders who are present in the meeting. So, for example, it is possible that there are 100 shareholders. So, out of 100 shareholders, you will take consent of three-fourth, as in 75 shareholders. But if I talk about SR, for example, there are 30 shareholders present in the meeting. You will take three-fourth of this 30 shareholders for passing SR. So basically there is a difference, 100 shareholder and 30 shareholder. In general meeting, how many people are present? Out of that, you will pass SR. So which one is more difficult, sir? This 3/4 of total is more difficult. Okay. Understood. But listen to me very carefully. Sir, you will take consent of which class of shareholder? There is class A, class B, class C. If you are waiving the rights of class A shareholder, you will take the consent of just class A shareholder. You will not ask class B. You will not ask class C. But if variation of class A shareholder will affect the rights of class B also, then in that case, you will take approval of class B also. But for them, there is no option of SR. For class B, you will have to take consent in writing 3/4 in value. Consent in writing of 3/4 in value. So it says that if variation by one class affects the right of the other class, consent of 3/4 of such other class shall also be obtained, and provision of the section shall apply to such variation. Provision of the section shall apply to such variation. Are you with me? Guys, are you with me? Yes or no? Yes or no? Yes, sir. Now coming to the next point, sir, what if there is a resistance? What if there is a resistance? Guys, please remember this is a revision, huh? This is a revision. I'm assuming that you have understood this concepts once, at least in the class you have made some notes. Only then you will get 100% confidence. Sir, what is resistance to such variation? What is the meaning of resistance to such variation? For example, if a company asks the shareholders that can I make variation? Out of 100, sir, 80 shareholders agreed. So the variation was being made, but 20 shareholders still didn't agree. What about them, sir? Sir, they can go and make an application to the tribunal. How many people should go, sir? At least 10% of share capital. Shareholder holding not less than 10% of issued shares. At least 10% if they are holding and they did not consent, then they may apply to the tribunal for getting the variation cancelled. And now tribunal will pass an order, but until tribunal passes an order, nothing is going to happen. But when will you make such application, sir? Such application is to be made within 21 days of consent. Whenever that consent was provided, within 21 days you will go to the tribunal. And variation shall not have happen effect until it is confirmed by the tribunal. Now tribunal has to confirm. Now, before tribunal confirms, company also cannot do anything. But once the tribunal has given its decision, it is binding on both the company also and shareholding also. The decision of the tribunal will be binding on both, and the copy of such order will be filed with ROC within 30 days. The tribunal's order copy you will file with ROC within 30 days. Sir, this is your section number 47. Are you trying to understand? I'll keep it again very simple for you. Section 48, sorry, section 48. Section 48 talks about resistance. Sir, about variation. How can you vary the rights of the shareholder? Sir, if it should be authorized by MOA, AOA, or if it is not authorized by MOA, AOA, it should not be prohibited by the terms of the issue. It should not be prohibited by the terms of issue. If these two conditions are satisfied, number one, you will consent of 3/4 of the issued class, or you will pass an SR. Either this or that. After doing this, you will do the variation. Sir, SR of which shareholder? Only those relevant shareholders. Now, after that, what did I say? Sir, if variation is done by one class and it affects the right of the other class, then in that case, 3/4 of the other class, you will take approval of 3/4 of the other class also, but not SR, just 3/4 consent in writing. Now, if there is, can there be resistance to such variations, sir? Yes, sir. If at least 10% of the share of issued class are not okay, they can make an application to the tribunal within 21 days of the consent and say that please get the variation cancelled. Now it is in the court, the ball is in the tribunal's court. Tribunal can pass any order. The decision of the tribunal will be final and binding. The decision of the tribunal will be final and binding on both the people, on the shareholder also, and on the companies also. Okay, guys. Moving to the next portion. Listen to me very carefully. Sir, section 49, 50, 51. What have we studied till now? 43, which talks about basics of kinds of share capital and DVR conditions. 44, 45 is not there. 46 talks about what? Share certificates. 47 talks about voting, who can vote. And 48 talks about variation. 48 talks about variation. Now 49, 50, 51. Listen to me very carefully. 49 talks about what? Sir, 49 talks about, listen to me very carefully. Sir, whenever you are making calls, for example, there is a class A of shareholder. Whenever I am making any further calls on such shares, sir, such calls shall be made uniformly for all the shareholder. I cannot say one shareholder you will pay 5 rupees and the other shareholder you will pay 10 rupees. No, sir. It has to be on a uniform basis. Calls have to be made on made on a class on a uniform basis. What is section number 50, sir? Section number 50 is important. Hello. Can a company take calls in advance? Can a company take calls in advance? Sir, a company can take calls in advance only if it is authorized by the AOA. But please try to understand, in the money that you paid as calls in advance, you will not get any dividend. If at all you will get some interest on such calls in advance, and such advance payment will not give you any voting rights also. You will not get any voting rights, but you can take calls in advance only if it is authorized by the article of association. Otherwise, you can't take it. Okay. Now, sir, question section number 51. Sir, can you tell me dividend is paid on what? Raja, dividend is paid on, listen to me very carefully, usually on the face value of the shares. Face value. But if you write down in the article of association, dividend will be paid up on the paid up value and not face up value. Dividend will be paid up on the paid on the paid up value and not the face value. Are you with me? Yes, sir. What did I say? I said that you have to understand this point. Three sections we studied together. What are those three sections? Sir, section number 49, 50, 51. The best way to remember this is UAD. In your income tax department, you have unabsorbed depreciation, right? Similarly, UAD. Calls to be made on uniform basis. What about calls in advance, sir? You can take only if AOA authorizes. And dividend, if you write in the AOA, it can be paid on the paid up share capital and not the face value. Otherwise, it is paid on the face value. But if you write in the article of association, it can be paid on the paid up share capital also. These are three sections: 49, 50, 51. Okay. Okay, sir. Now moving to the next section 52, which is very important. Listen to me very carefully. Sir, what is 52? Securities Premium Account, SPA. So whenever your issue price exceeds face value, whatever excess you have received, sir, you will put it in the SPA account. What SPA? You'll put it in SPA. If you have excess money, you put it in SPA. What SPA, sir? Securities Premium Account. So excess money, whatever you have, you will put it in Securities Premium Account. Now the question is, sir, what is the use of SPA? What is the use of SPA? What is the use or application of securities premium account? Sir, we are just talking about accounting entries. This question is also relevant for your account. 2 years ago, the application of SPA was asked in your accounts paper and not law paper. So listen to me very carefully. What is the use of SPA? There's five uses. Sir. Number one, you can declare fully paid up bonus shares. You can issue fully paid up bonus shares. Number two, you can write off preliminary expenses of the company. Number three, you can write off expenses or commissions paid or discounts allowed on issue of shares or debentures. If you're making any fresh issue and if there are any expenses, commission, discount, that also you can write off. So you can write off preliminary expense and issue expense. Sir, providing for premium payable on redemption of redeemable preference shares or debentures. When you're redeeming debentures or preference shares, you are paying premium, then that premium can be adjusted against your SPA, and the last one can be purchase of own shares, that is buyback. So five use, sir. If you remember with me, it is bonus, buyback. You can issue bonus shares, you can buy back the shares. You can take care of the expenses. What expense, sir? Preliminary expense and for issue expense, right? And the last one, you can provide for premium on redemption. You can provide for premium on redemption. Are you with me? Yes, sir. So these are the five conditions that you have to take care of. These are the five conditions that you have to take care of. These are the five usage of SPA. Bonus, preliminary expense, issue expense, premium on redemption of preference shares or debentures, and the last one is buyback. But guys, listen to me. There are five usage, right? But if you are a company which is complying with the financials, which is making financial statement as per accounting standard under 133. If you are a company who is making financial statement as per accounting standard under 133, then instead of five use, you will get only three use. 1, 2, 3 you can do. 1, 3, 5. These use you can do. 2 and 5 you cannot. What was 2 and 5? Remember, sir. Number one, bonus shares. Yes, sir, you can issue. Sir, writing off of preliminary expense? No, that you cannot do. Sir, issue expense write-off? Yes, that you can do. But premium on redemption of preference share? No, that you cannot do. And the last one is buyback. Can you do that? Yes, sir, buyback you can do. So for a company which is making financial statement as per accounting standard, in that case, instead of five, you will have three use. The second and fourth use will not be there. PP will not be there. What is PP? Write-off of preliminary expense and premium on redemption of premium on redemption of preference shares or debentures. Are you with me? So this is the usage of SPA. This is the usage of SPA. Okay. 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 Done. Perfect. Sir, before I move forward, I would want to request you that if you are enjoying this revision, do make sure that you hit the like button, because That is how I get to know that this revisions are helping you, because we put effort to make sure that these revisions actually do help you. If it is actually helping you, take a moment to write down in the comment and let me know how is it helping you, because honestly your appreciation is my motivation, and that is my inspiration that keeps me going. So if you're genuinely liking the video, let me stop here for a minute and ask you to make sure that you like the video. Sir, once you like the video, let's take a very small target of this video, sir. We'll keep a reasonable target of, let's say, 100 students. There should be at least 100 likes in this video, and that is your responsibility. Okay, so make sure that we achieve the like target. And if you're genuinely enjoying the video, let me know in the comment, because again, as I said, your appreciation is what I need to bring more and more such revisions. To keep bringing more and more such revisions. Are you with me? Are you with me? Yes, sir. Okay. After that, guys, listen to me very carefully. Section number 53. Please, hello. So, what is section number 53? Section number 53 talks about prohibition on issue of shares at discount. Prohibition on issue of shares at discount. Okay. Prohibition on issue. Section number 53 and 54 we will read together. What is 53? Sir, 53 says that you cannot issue a shares on discount. But if you issue your shares on discount, it will be void. It will be void. That is, it will not be a valid issue. Sir, if it is void, you will have to refund the money along with the interest of 12% per annum. You'll have to refund such money along with interest of 12% per annum. And also you will have to pay a fine of up to the amount raised, or 5 lakh rupees, whichever is lower. Whatever amount you raise, or 5 lakh rupees, whichever is lower, that much fine you will have to pay. So you will have to pay a fine. So if a company shall not issue shares at discount, but if you issue it, it is void. You'll have to refund the money, you'll have to pay interest, you'll have to pay fine. But now, guys, there are three exceptions to this. Three exceptions to issue at discount. In three cases, sir, you can issue at discount. What are these three cases? Number one, sir, the number one case is if you're issuing sweat equity share under section 54. We are studying 53. 54 is about sweat equity share. If you issue sweat equity share, you can issue it as a discount. What are the other two exceptions, sir? The other two exceptions are where you are issuing shares at a discount to the creditors when debt is converted into shares to the creditors in pursuance of any statutory resolution plan or debt restructuring scheme. So basically, the other two exceptions are your debt is converting into equity, and in that conversion, you are issuing it at a discount. Who said to issue at a discount, sir? Either a statutory resolution plan, a resolution plan. Resolution plan is under insolvency bankruptcy code. So because of that, either you are issuing at a discount, or because of a debt restructuring scheme. So under these two schemes, if you are issuing at a discount because of conversion, then it is absolutely okay. But the major exception is, sir, sweat equity share. You can issue sweat equity share at a discount. Now, sir, let's move to section number 54, which talks about sweat equity share. Listen to me very carefully. Sir, what is sweat equity share? Pay your attention here. Sir, I'll give you a brief, then I'll make you read from the notes. Sir, basically, a company issues sweat equity shares to any of its directors or employees. Let me say employees. Okay. The sweat equity shares is issued to the employees in return of what? Sir, in return that you're getting some intellectual property rights, or you're getting some value additions, or you're getting some other intangible properties. You're getting some intellectual property rights, value additions, or other intangible properties. Now, because of that, you are issuing sweat equity share. Now, to issue sweat equity share, you will have to comply with certain conditions. Number one, sir, you will have to pass a resolution. You'll have to pass a special resolution. Okay. In that special resolution, you'll send the notice. In that notice, you will attach explanatory statement. In that, you'll explain all the things. To whom are we giving the equity shares? What is the price at which we are offering? What are we getting in return? Everything you will have to tell them. And if you're a listed company, then you comply with SEBI. But if you're an unlisted company, you comply with the company's rules. The company's rules that we have made. In the company's rules, we have told certain things, sir, such as, so the SR that you will pass, the SR that you will pass will be valid for 12 months. Within 12 months, you will have to issue the sweat equity share. Number two. Sir, what do you mean by employees? Listen to me very carefully. If you can scribble along with me in a rough paper, nothing better, sir. Sir, what do you mean by employees? What is scribble, sir? You don't have to write with good handwriting or good notes. You just have to keep paying attention. Sir, what is employees? Sir, employees has been defined in the rules. Employees means, sir, full-time or part-time directors of the company. Directors of the company, whether full-time or part-time. Sir, employees of the company, whether in India or outside India. And third, directors or employees of the holding company and the subsidiary company also. of the holding company and subsidiary company also, they will also be considered. So this is the definition of employee. Now, after that, what did I say? The validity of SR will be 12 months. Within 12 months, you will have to issue a sweat equity share. So there is some maximum limit of sweat equity share. How much can you issue? We will look at that limit in a while. But once sweat equity shares is issued, there will be a lock-in. What will be lock-in, sir? The lock-in will be of 3 years. It is not up to 3 years, or it is not minimum 3 years. It is just 3 years. Till 3 years, you cannot sell the sweat equity shares. After 3 years, you can sell the sweat equity shares. Okay. This is more or less the provision of sweat equity shares. Now read with me. Read with me, sir. There are 3 questions based on this, and it is an important section. So this is reference to the questions in the question bank. So you can simultaneously practice the questions from my question bank also. The questions from my question bank also, that also you can participate. Okay. 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 Yes, sir. Your class is very good and I understand it in English only, sir. Thank you so much. I'm so glad. That is the whole reason why I'm taking it in 100% English, guys. Listen to me. I said, sir, such equity shares as are issued by the company to its directors or employees, such equity shares which is issued to directors or employees at a discount or for consideration other than cash. You're either giving it for free or for a consideration other than cash in return of know-how, intellectual property rights, or value addition. I'm giving you for a discount, I'm getting value addition, intellectual property rights, or know-how. In that case, it will be considered as a sweat equity share. After that, I said, what are the conditions, sir? Pass a special resolution. In the resolution, you specify the number of shares, the current market price of the shares, consideration, if any, and to whom are you giving it. You'll give all the details. And if you're a listed company, follow the regulations. If you're not a listed company, follow the rules. Okay, this is how you will issue sweat equity shares. Now, listen to me very carefully, sir. Sir, normal equity shares and sweat equity shares. What is the difference? Sir, in normal equity shares, you take normal consideration. In sweat equity shares, either you give it at a discount or you don't take consideration other than cash. You take consideration other than cash. But apart from that, there is no difference. All the rights that equity shareholders will have, the same rights that equity shareholders will have. Let me use a word. They will stand pari passu to each other. That is at the same level, at par, they will be pari passu to each other. They'll be pari passu to each other. After that, sir, what is the meaning of employee? Now we came to the rules. What is the meaning of employee? Sir, employee means a permanent employee, either in India or outside India. What's permanent employee, sir? Someone who is in the payroll of the company. Number two, sir, a director of the company, whether whole time or part time. Employee, India, outside India. Director, whether whole time or part time. And the last one, director or employee, covered above, for the subsidiary and the holding company also. For subsidiary and holding company also, those people will be considered as employee. Sir, what is value addition? Sir, value addition basically means economic benefits derived in future. Economic benefits that will be derived in future. That is value addition. Future economic benefits is value addition. After that, sir, some important points that you need to know. Sir, what is the validity of SR? It will be 12 months. The validity will be 12 months. Sir, next question. What is the maximum issue size per year? What is the maximum issue size per year? So maximum issue size will be, listen to me very carefully. Sir, it shall be not more than 15% of the equity share capital, paid up equity share capital, or 5 crore rupees, whichever is higher. So the limit is 15% of paid up equity share capital or 5 crores, whichever is higher. But in any case, sir, it shall not exceed 25%. But in any case, it shall not exceed 25% of the paid up equity share capital. And moreover, in case of a startup, which is in the first 10 years of its incorporation, the issue size will be maximum 50% of its paid up share capital. Oh my goodness, what the hell is this limit, sir? Let me explain this limit to you. Listen to me very carefully, guys. Sir, I said 15% of paid up equity share capital or 5 crores, whichever is higher. But it can be maximum 25% of paid up equity share capital. My question is, sir, when whichever is higher is written, is maximum 15%, then how can it become 25%, sir? Why is there one more limit of maximum 25%? I'll give you an example. Sir, if my paid up share capital is, if my paid up equity share capital is 10%, 10 crore. What is the 15% of this? 1.5 crore. Or 5 crore, whichever is higher. What is higher? It is 5 crore. So law says that I can issue equity shares, sweat equity shares up to 5 crore. But boss, wait. It is 50% of the paid up equity share capital. But maximum can be how much? Maximum can be 25%. So the other limit is 2.5 crore. It cannot exceed 2.5 crore. So there are two limits. Limit one, subject to a maximum of 25%. But if it is a start company, sir, which is in the first 10 years of its business. For startup, we always give exception for 10 years. In that case, instead of 25%, it will be 50% of paid up share capital. For them, it will be 50% of paid up share capital, not equity share capital. 50% of paid up share capital. Paid up share capital. Are you with me, sir? This is the limit that you have to understand. Okay. Okay, guys. Now listen to me very carefully, sir. What is the next point? Sir, what will be the lock-in? Sir, the lock-in will be of 3 years. What will be the lock-in? The lock-in will be 3 years. It is absolutely fixed. You cannot have a lock-in of 5 years. In exam, there was a question asked that can the lock-in be up to 5 years? Students started writing, yes, yes, sir, 5 years is allowed, 3 years is minimum. No, it is fixed at 3 years. You cannot have a lock-in of 5 years. After that, sir, who will do the valuation? So if I'm giving you equity shares, I'm getting something in return. Who will do the valuation of that thing? Sir, in Companies Act, every valuation is done by the registered valuer. After that, listen to me very carefully. Sir, valuation will be done by registered valuer. And what will be the treatment? Accounting treatment. How will you do the accounting treatment, sir? Sir, when I am issuing equity share capital, I will make credit to equity share capital. But what will be the debit account, sir? What will be the debit account? Sir, the debit account will depend. If I'm getting some asset, if I'm getting some asset that can be depreciated or amortized, then I'll debit the asset in the balance sheet. But if I'm not getting any asset, then I'll debit P&L account. Then I'll debit P&L account. Sir, this is not relevant for our law, but just a simple accounting entry. What will you debit? You will debit what you are receiving. So what are you receiving? If it is an asset, send it to balance sheet. If it is not an asset, put it in the P&L. Put it in the P&L. Okay. After that, sir, you will have to maintain a register of all the sweat equity share, and that register will be maintained in form SH3. Register will be maintained in form SH3. Are you with me? Hello, hello. Are you here? Can you hear me? Sure. Understood? Understood? Yes or no, sir? Yes, sir. So now coming to the next section, section number 55. I want you to take a deep breath for those who are watching continuously. I want you to take a deep breath. See, please try to understand. First, I am explaining you the provision broadly, and then we are reading each and every point. So this is a good enough revision and more than enough for your last day revision. You don't have to revise more than this in your last day revision also. All you have to do is keep listening to this revision videos multiple times. If you're working also doing something else also, you keep listening to this revision audio and a revision video, and you'll get a lot of comfort. Are you with me? Yes, sir. Okay. Okay, sir. Let's move to the next section. Please listen to me very carefully. Sir, section number 55. What does section number 55 talk about? Section number 55. Here you go. Section 55. Sir, first take a brief context and then we will deep dive into the details. Guys, hello, sir. What is section number 55? Section number 55 talks about preference share capital. Point number one, sir. Preference share capital can only be redeemable. It cannot be irredeemable. You have to definitely redeem preference shares. Sir, what is the limit time period within which you have to redeem? Sir, it can be redeemed within 20 years also. But in some cases, it can go up to 30 years. Which cases, sir? In infrastructure companies, it can go up to 30 years also. But for infrastructure companies, there is one condition that after the end of 20 years, from the 21st year, they will have to keep 10% option for redemption. Each year, they will have to keep 10% of the preference shares for redemption, 21st year, 22nd year. That like that, they can redeem up to 30 years. But only for infrastructure companies, we have given 30 years, sir. Okay. Now, point number three, please try to understand. Whenever you are issuing a preference share, okay, and whenever you are redeeming the preference share, the question is what will be the source of money? How will you redeem the principal amount and how will you redeem the premium amount? How will you do that? So, source is a question that we will understand. And after that, the fourth and important question that we will understand is deemed redeemed concept. This is something that students face a lot of confusion with. I will explain it very nicely. But deemed redeemed, what is deemed redeemed? Okay, you will have to put efforts to understand in one go. Just that you will have to put efforts to understand in one go. Otherwise, you will not be able to understand. Okay, sir. Let's begin. Sir, what is section number 55? Listen to me very carefully. Sir, section number 55 talks about redemption of preference shares, issue and redemption. First of all, company can issue only redeemable preference share. It cannot issue irredeemable preference share. It can only issue redeemable preference share. Number two, sir, condition for issue of preference share. Sir, preference share shall be authorized by the AOA. Article of Association will authorize it. Number two, it has to be passed. You have to pass a special resolution. Number three, there should be no defaults with respect to redemption of any earlier preference share or payment of dividend on such preference share. Sir, if I have not given money for one preference share, how can I issue one more preference share? I cannot. So, article of association has to authorize pass SR, and there should be no default. Number four, such preference share is redeemable within a period not exceeding 20 years. Such preference shares is redeemable within maximum 20 years. But however, it can become 30 years in case of companies in infrastructure projects, provided that from 21st year onwards, minimum 10% will be redeemed each year at the option of the preference shareholder. So the company will have to offer at least 10% each year for redemption. So basically, these are the four conditions that you have to take care of. After that, guys, redemption of preference shares, please listen to me very carefully. Sir, redemption of preference share only be in terms on which it is issued or varied. Okay. Sir, please listen to me very carefully. Come to the third point. What is the source of redemption? How will you get the money, sir? It can be either the profits of the company available for dividend or proceeds of fresh issue. Sir, what is proceeds of fresh issue? You can issue fresh preference shares, take that money and redeem the old preference shares. Okay, so either profits of the company or proceeds of the fresh issue. The next one is only fully paid up preference shares can be redeemed, other cannot be redeemed. So what did we study first? What is the condition for issue and what is the source of redemption? So source of redemption is profit or proceeds of fresh issue. But sir, what about the premium part? What about the premium? Listen to me very carefully. Sir, what is the source? The source is profit or proceeds of fresh issue. But sir, if you are using the profits of the company to redeem preference share, in that case, you will have to create something called as CRR account. CRR will be created for how much? For the nominal value of the preference share redeemed. Nominal value. This CRR can be only used for issue of bonus shares. So you will have to create a CRR if you are using your profits for redemption. And CRR will be only up to the amount of nominal value, not the premium. And that CRR will only be used for bonus shares. Okay. Now, sir, what about the premium on redemption? If there was a preference shares of 100 crores and I'm redeeming 120 crores, where will I get that extra 20 crores from, sir? Sir, do you remember SPA? Securities premium account. There were 5 U's: bonus, right of preliminary expense, right of issue expense. Point number four, for providing for the premium on redemption of preference shares or debentures. So you can either use the profits of the company or you can use SPA. You can either use profits of the company or you can use SPA. But sir, do you remember in section 52, there was a point that if a company is making financial statement as per accounting standard, instead of 5 uses, there will be 3 uses. 2 use they cannot do. What were those 2 uses, sir? They cannot write off preliminary expense and they cannot provide for premium on redemption of preference shares. So that is the same point here, sir. Sir, for premium, you will generally use profit or SPA. For premium, you will generally use profit or SPA. But in case if the company complies with the accounting standard, then for premium redemption, you can only use profit. You cannot use your SPA. Okay, these are more or less the things that you have to understand, sir. Now, after that, what is deemed redeemed? But before deemed redeemed, let me give you a hold of the concept. What is section 55? Listen to me and do you understand these points? Number one. Okay, say okay. Number one. Sir, preference shares can only be redeemable. It cannot be irredeemable. Number two, there are 4 conditions for issue of preference share. Number one, AOA. Number two, pass special resolution. Number three, ensure that there is no default in existing preference share. And number four, the tenure can be 20 years. Sir, but for a company which is an infrastructure project, the tenure can be up to 30 years. But one condition that from 31st year onward, you will have to provide 10% of preference shares for redemption at the option of the preference shareholders. In that case, you can take up to 30 years. Point number two over. Now, coming to point number three, what will be the source of redemption, sir? Source of redemption will be the profit of the company or proceeds of fresh issue. Proceeds of fresh issue. But if you're using the profits of the company, you will have to create a CRR up to the nominal value of redemption, and that CRR can only be used for bonus shares. Point number four, what will be the source of redemption of what will be the source of the premium amount? It can be the profit or the securities premium account. But in case if a company complies with Indian accounting standard, then SPA cannot be used. You will only have to use profits of the company. Okay. And the last point, what is the concept of deemed redeemed? Listen to me very carefully. Sir, what is the concept of deemed redeemed? Hello, sir. If I had issued my preference share for 20 years and close to that, when I'm on the 19th year, I'm realizing that I cannot redeem the money. I don't have the money to pay the preference shareholders. But you also don't want to default because once you default, there will be a lot of problems. Like you cannot issue differential voting right shares, you cannot issue fresh preference shares. There will be a lot of problems. So what can I do, sir? Can I ask for extension? No, sir. In preference share, there is no option of extension. So there is one option that the company can first take approval of the preference shareholder. First take approval, consent of the preference shareholder. How much consent, sir? Let's say 75% shareholders consent. And then take approval of the tribunal. And the company will make an application to the tribunal and say what? Say that, sir, can I issue a fresh, can I issue fresh preference shares to the same preference shareholders? And once tribunal allows you to issue this fresh preference shares, older preference shares will be deemed to be redeemed. Deemed to be redeemed, as in if we will assume that what happened. For example, and I am the company, you are a preference shareholder. For example, you had given me 1 crore and I'm not able to repay that money. So I'll go to the tribunal. If tribunal gives me approval, then what will happen? Sir, the 1 crore that I'm not able to give you, what will happen with that? It will be assumed that I have given you that 1 crore back. And again, you have invested that 1 crore in my company. I have repaid it to you, so there is no default, and you have given me fresh 1 crore rupees to continue. Sir, in reality, no transaction will happen. In reality, neither will I give you 1 crore nor will you return that 1 crore because I don't have that 1 crore only. I don't have money to redeem only. So, in reality, no transaction will happen. In reality, only accounting entry will happen. Sir, in reality, you will show that this preference shares that you had issued, let's call it preference shares 1, you will assume that this is redeemed and instead of this, preference shares 2 has been issued. Although practically nothing has happened, sir, practically the same has just continued. The same has just continued. Why are you doing this? Because you don't have the money to repay, sir. And even your shareholders have given consent. But, sir, what about those preference shareholders who have not given consent? Sir, for those preference shareholders who have not given consent, the company will have to redeem this forthwith. Redeem this forthwith, as in you will have to immediately refund the money. You will have to immediately refund the money to those shareholders, to the dissenting preference shareholder who did not give their consent. Okay. Listen to me very carefully. So read with me. Where a company is not in a position to redeem the preference shares or to pay the dividend, it may, with consent of three-fourth in value of preference shareholder, you have to first convince three-fourth of preference shareholder in value. Make an application to the tribunal for approval, and thereafter issue further redeemable preference shares to the amount of unredeemed preference shares and the dividend thereon. And on such issue, unredeemed preference shares shall be deemed to have been redeemed. So read this again. Once you read this yourself once read this paragraph properly. You have understood that. Based on that understanding, please read it. Done. Done. Are done. Okay, sir. Now coming to the next point, guys. Listen to me. Lekin provided that tribunal shall order redemption forthwith of preference shares held by persons who have not consented to issue of further shares. So the people who said no, that 25% people who said no, they will get forthwith redemption. That is immediately money will be refunded to them. But for the other people, fresh issue will be made and the older issue will be deemed to be redeemed. It will be assumed as if you have redeemed that older issue. Okay, guys. Okay, sir. So this is your section number 55. We have done it very nicely. Now let's move to the next section, which is 56, 57, 58. Okay. Easy sections, not very practically important, but first of all, you understand it in the form of story, and then we will get into the details. Okay. So what is 56? 56 talks about two things. 56 talks about two things. There is something called as transfer of shares, and there is something called as transmission of shares. Try to understand, sir. Try to understand. pretty sure you must have not understood so much in any other regular classes also the way you will understand now. Sir, what is transfer of shares? Sir, transfer of shares is basically if Mr. A wants to transfer his shares to Mr. B, so they will enter into a deed. They'll enter into a deed which is called as transfer deed. So transfer deed will contain all the information of Mr. B. Okay. And both of them will sign it. Okay. Now Mr. A or Mr. B, any one of them can go to the company within 60 days. Within 60 days, they'll go to the company. That boss, we have made a transfer. You kindly record this transfer in your register of member. Now, what the company will do? In the register of member, Mr. A name will be written. That will be removed. And instead of that, Mr. B's name will be written. And after that, a share certificate will be issued to Mr. B. So this type of transfer used to happen way back, way earlier. Now there is no instrument, nothing. Now it is instant transfer through Demat account. But in older times, this is how transfer used to happen. But sir, this is what transfer. Transfer is where you are doing with your own will, right? What is transmission, sir? Transmission is something which happens because of operation of law. What do you mean? Sir, if Mr. A died, his shares will be transferred to Mr. Small A. Mr. Small A. So Mr. Small A, who is the son of Mr. A, got the shares of Mr. A because of transmission, that is death. So transmission is something which happens by operation of law. It is not manually done. It happens automatically because of law. Now there are certain things that you have to understand, sir. First of all, case number one. Sir, in transfer, when A made transfer to B of partly paid up shares, that is in 100 rupees shares, assume 60 rupees is paid and 40 rupees is unpaid. Now, if the shares becomes in the name of B, if the shares is transferred to B, B has to pay the remaining 40 rupees. Now, imagine a situation. They entered into an agreement. It is instrument deed. Okay. If B goes to the company and says, hello, I have purchased shares from Mr. A. Kindly remove the name of Mr. A and put my name, Mr. B, and transfer the shares in my name. Company will not have any problem because Mr. B himself is saying that I will pay the remaining 40 rupees. But sir, if instead of Mr. B, in this case, if Mr. A goes to the company, if Mr. A goes to the company and says, Mr. A goes to the company and says, I have sold the shares to B. You register it in the name of B and B will pay you 40 rupees. Sir, in that case, company will not register directly. Company will send a notice to Mr. B and Mr. B has to reply to that notice whether that shares has to be transferred in his name or not. So Mr. B will have to reply to that notice only when Mr. B confirms that yes, I have purchased the shares and I'll pay the remaining 40 rupees. Only in that case, company will register. Otherwise, the company will not because this is a case of partly paid up shares. In case of fully paid up shares, there is no such problem. But in partly paid up shares, there is definitely a problem. Coming back to transmission, sir. Transmission is because of operation of law. Now tell me something. Mr. A died. The shares got transferred to Mr. Small A. Now who will go to inform the company, sir? Will Mr. A go and inform? Mr. A is dead. Can he go and inform? Sir, if he goes and inform to companies, all the members in the companies will die. Because what? His soul will go or what? So Mr. A cannot go and inform. Mr. Small A will go and inform to the company that please register in my name. Now I have a question, sir. On 1st of March, Mr. A died. Mr. Small A informed the company on 15th of March. Now company will take at least 30 days, sir. Company will take at least 30 days. Company will take at least 30 days to inform. Company will at least take 30 days to change the register of member from where Mr. A's name will be removed and Mr. Small A name will be kept. So company will take 30 days. Now my question is, before it got transferred in the name of Mr. A, Mr. A sold these shares to Mr. GF, Miss GF, to Miss GF. Small A sold his shares to Miss GF. My question is before transfer, before transmission, before his name came in the register of member, can Mr. A sell his shares to anybody? So the answer that came was yes. So although in the register of member Mr. A's name is yet to come, but please understand after death of Mr. A, the son Mr. Small A has all the rights. The small Mr. A has all the rights immediately on 1st March itself. So now if he wants to transfer it, he can transfer. No one is going to stop him. Law is not going to bother him. Law is not going to bother him. Are you with me? Yes. Yes, sir. Yes. Then please come and read the keywords along with me. Okay. So what is section number 56 talk about? Section number 56 says that if there is a transfer, there has to be a proper instrument of transfer. That is, as I called as agreement. Instrument of transfer in SH4, duly stamped and dated. It has to be stamped and dated. Such instrument specifies the details of the transferee, Mr. B in my example. And such instrument has to be delivered to the company within 60 days of execution. You have to give it to the company along with the share certificate or letter of allotment. If there is no share certificate, you give the letter of allotment, but you go to the company within 60 days. So these are the three things. After that, what did I say? Listen to me very carefully. Sir, coming to transmission. What is transmission, sir? Sir, transmission happens by operation of law. And in this case, the transmission, in case of transmission, intimation of the same is to be done by the transferee. The son has to go and intimate to the company. When does transmission happen, sir? In case of death, the share goes to legal representative. Sir, in case of insolvency, the share goes to resolution professional, RP, resolution professional. In case of lunatic, in case you become mad, in that case, it will go to administrator appointed by the court. So, death, insolvency, and lunatic. Dil, dil, death, insolvency, lunatic. Dil means heart. Okay. What about partly paid up shares, sir? You remember I was talking something about partly paid up shares? Yes, sir. When an application for registration of partly paid up shares is made by the transferor alone, Mr. A alone went to the company and said, I have sold it. In that case, the company shall not register unless company has given notice in form SH5 to the transferee. Company has to inform the transferee and transferee gives no objection within 2 weeks. The transferee have to give no objection within 2 weeks. Only if the transferee says, I have no problem, you register. Only then the company will register. Otherwise, the company will not register. So how much time have we given, sir? Very interestingly, we have given 2 weeks. Okay. Hold on point number 4. Come to point number 5. Sir, what is point number 5? Sir, it says transfer of any securities of a deceased person made by his legal representative. I gave you an example that after death you are transferring the shares even if the legal representative is not a holder. Why is he not a holder, sir? Because in the register of member his name has not yet been registered. Such transfer shall be valid as if the holder, as if he was a holder at the time of execution. It will be valid as if he was a shareholder itself. So for example, Mr. Father died, Mr. Son transferred the shares. Even if his name was not there in the register of member, it will be fine because it is valid transfer, sir. It is a valid transfer. And if you make any contravention, the company and officer in default will have to pay a fine of 50,000 rupees. They'll have to pay a fine of 50,000 rupees. Are you with me, sir? Yes, sir. Now, the fourth point that I had left, sir, in the coming back to the case of transfer here, Mr. A gave his shares to B. B went to the company. Company registered such transfer and issued share certificate. The question is, B or A has to go within 60 days of execution. But how much time will company take to give us the share certificate, sir? How much time will the company take? Sir, the law said, in case if you are a subscriber to the memorandum, that is your first time shareholder, you'll get it within 2 months of incorporation. But if it is a case of allotment, like for example IPO, FPO, etc., you'll still get within 2 months of allotment. But if it is a case of transfer or transmission, you'll get it within 1 month of receipt of such deed. So whenever the company will receive this deed, whenever the company will receive this deed within receipt, 1 month they will have to give. Only in case of transfer and transmission. So generally it is 2 months, 2 months, but for transfer it is 1 month. And for debentures, it is 6 months from the date of allotment. In debentures, so it is very slow. But this is for physical share certificate. In case of demat account, everything happens immediately, sir. You don't take so much of time. Everything happens immediately. Are you with me? Yes, sir. Did you understand? Did you understand? Now I'll also cover one question which is asked in the exam, sir. It was not there in your ICI module, but I'll cover it here only so that you can solve each and every question of your question bank. My question is, sir, I'll keep it very simple for you. Sir, if Mr. A had shares of Reliance Industry, someone forged the shares of Mr. A. Who forged, sir? Let's say Mr. X forged the shares of Mr. A and then transferred it to Mr. B. Then Mr. B transferred it to Mr. C. This was a proper transfer, sir. C was a proper transfer. Mr. C paid consideration. Mr. C paid enough money. And Reliance Industry first had the name of Mr. A, He removed it, put Mr. B's name, then removed it, put Mr. C's name. Once this forgery and transfer was done, Mr. A got to know, oh shit, my shares have been transferred. Someone stole my shares. So Mr. A went to Reliance. Will Reliance have to restore his name? Will Reliance have to restore his name? The answer is yes. Yes. Sir, the court held that forgery is nullity. Like forgery is nullity. If Mr. A's shares were forged, it is not a valid signature. You cannot make such transfer. So in this case, Reliance will have to return the shares to Mr. A. Reliance will write down the name of Mr. A, and Mr. Reliance will not be liable to Mr. C. Reliance will not be liable to Mr. C. Reliance is not answerable to Mr. C. Reliance will restore the name of Mr. A. What will Mr. C do, sir? Mr. C will file a case against Mr. B. What will Mr. B do? Mr. B got cheated. So Mr. B has to chase this Mr. X. Otherwise, it is loss of Mr. B. But sir, I have a question. Sir, Mr. B said proper consideration. Mr. C purchased in good faith. Then what is the problem? If you give adequate consideration and if you purchase in good faith, then it is a valid transfer. But sir, please remember you studied in your foundation that the the rights of the transferee, the title of the transferee is as good as the title of the transferor, or the title of the buyer is as good as the title of the seller. Here, sir, the title of seller, which is Mr. B, this title is only defective. That is why Mr. C's title is also defective. You cannot pass a better title to the buyer. You can always pass the same title to the buyer, and your title is defective, and therefore you have no rights. You have to chase this person who forged it. That's why Mr. A will win, Mr. B and C will lose. Okay. Moreover, in between, if you have also issued any bonus shares, that bonus shares will also go to Mr. A. Any dividend or any bonus, that also will be restored to Mr. A. Did you understand, sir? That is a question. I have summarized that question and the answer here, but we don't have to read this because I already discussed this with you. Okay. Sir, what is section 57? We'll read it for the purpose of reading it. Sir, punishment for personation. Just understand that what is personation. If you are trying to act as if you are someone else. For example, I went to Reliance and I'm acting as if I'm Mukesh Ambani. It is personation of Mukesh Ambani. So if I'm doing personation of any person, then in that case, I'll be punishable with a jail of 1 year to 3 years and with a fine of 1 lakh to 5 lakhs. 1 year to 3 years and 1 lakh to 5 lakh. 1 year to 3 years and 1 lakh to 5 lakh. 1 year to 3 years and 1 lakh to 5 lakhs. This will be the fine. Okay. Done. What you are talking in Telugu or what? నాకు కూడా తెలుగులోని మాట్లాడడం వచ్చు కొంచెం కొంచెం తక్కువ. Listen, sir, the last section for the day and then we will end the class. The last section for the day and then we'll continue in the next class. Listen to me very carefully. Sir, section number 58 which talks about refusal to registration and appeal for refusal. Sir, simple thing. If A transferred the shares to B and A or B went to the company and said, please remove Mr. A's name and put Mr. B's name. And if the company is saying, no, I will not do it, then what can Mr. A or Mr. B do? Okay. It depends on whether this company is private company or public company. See, boss, in public company, shares are easily transferable. So you should definitely register that transfer. So in public company, if you're not doing, we can take action. But in private company, if you're not doing, we can take action, but within a limited time period. Okay. How does it work? Listen to me very carefully. Sir, if a private company refuses to register the transfer, then in that case, within 30 days of the delivery of transfer instrument, they should give a notice of refusal. They should give a notice of refusal, stating the reason for refusal as to why are they saying no. So we will give the instrument to company. Company will send us a notice of refusal within 30 days. Now, after that, after receiving the notice of refusal, if we are not satisfied, within 30 days, we will file an appeal to the tribunal. We'll file an appeal to the tribunal as to see, boss, this private company is not registering it. Within 30 days of the receipt of notice of refusal. But if they did not send the notice of refusal, then from the date you had delivered that instrument, within 60 days, you will go and file the appeal. So, for example, sir, this is the date on which instrument was delivered. So, from within this days, within 30 days, they will send notice of refusal. And whenever they send notice of refusal, within 30 days, you will file an appeal. But if they did not send notice of refusal, then within 60 days from delivery, you will file an appeal. It's the one and the same thing. Okay. This is in case of a private company. But what in case of a public company, sir? In public company also same. Sir, you will deliver the instrument and within delivery, within 30 days, they will give you notice of refusal. And after that, within 60 days, you can go and appeal. Not 30 days, 60 days. But if they did not give you a notice of refusal, then within 90 days, you can go and file an appeal. Within 90 days, you can go and file an appeal. So for a public company, the only difference is we have given you 60 days to file an appeal instead of 30 days here. Instead of 30 days in case of private company. So you will go and file an appeal with the tribunal. Then what will the tribunal do, sir? Sir, the tribunal will either accept your appeal or dismiss your appeal. If they accept your appeal, what are the orders that the tribunal will pass? Sir, the tribunal can say that it may direct the company to register the transfer or transmission, and the company will have to do it within 10 days. So the tribunal will say, hello, please register it. And the company will have to register it within 10 days. Or direct the rectification of the register and also direct the company to pay the damages. If there is any problem with the register, they can say that rectify the register and the company will also have to pay the damages. If someone had incurred losses, if someone has incurred losses, then that also you will have to bear. Sir, what is the contravention? The contravention is imprisonment 1 year to 3 years and fine 1 lakh to 5 lakhs. If the company does not comply with the provision that the tribunal said, then 1 year to 3 years and fine 1 lakh to 5 lakhs. Okay, so this is your section number 58, which talks about refusal to transfer. 59 is something which is same as what we studied. It is absolutely same. So you can read that. Tomorrow in the next class, we will start 61. Very important provision, sir. We will read alteration versus reduction. We will read buyback and we will read debentures also. Very important provisions we will cover in the next class. Super important class, sir. Very important chapter and super important class. Okay. So what are we going to do today, sir? We are going to move forward from section number 61 onwards. Section number 61 talks about the authorized share capital or power of the limited company to alter its share capital. There are 4 questions on this. Alter share capital. Sir, alter share capital here basically they are talking about authorized share capital. How do I change my authorized share capital? Number 1, sir, it should be authorized by the AOA. The power should be given in the AOA and based on that I will alter my MOA. Why, sir? Because authorized share capital is mentioned in the MOA and I'll have to pass an ordinary resolution. I'll have to pass an ordinary resolution in the general meeting. So basically, I can do such alteration by passing an ordinary resolution if it is authorized by AOA. Okay. What is alteration of authorized share capital, sir? When you talk about alteration, there are 5 things. I will make you remember it the way I did make you remember in the class. There are 5 things about alteration of authorized share capital. Increase, consolidate and divide, consolidate and divide, convert, subdivide, and cancel. What did I say, sir? Increase the authorized share capital, consolidate and divide it into shares of smaller amount. Consolidate and divide it into shares of larger amount. Sorry, consolidate and divide into shares of larger amount. Convert it into stock and reconvert it into shares. Convert into stock and then reconvert into shares of any denomination. Subdivide shares into shares of smaller amount and then cancel. Cancel any paid up share capital. Cancel any shares which has not been taken up and diminish the amount of its share capital by the shares so cancelled. Diminish the amount of share capital by the shares so cancelled. So these are the 5 things that I wanted to talk about. So number 1, increase the authorized share capital. Please remember along with me, this is revision. You just have to keep by-hearting, keep repeating and keep revising. Sir, increase the share capital, increase the authorized share capital. Those who are my class student, for these sections, you always refer to the notes that we made in the class. It will give you more comfort. Okay. After that, sir, consolidate and divide it into shares of larger amount. Convert it into stock and reconvert it into shares of any denomination. Subdivide into shares of smaller amount. Then it is fixed by the memorandum. After that, cancel any shares which has not been taken up and diminish the amount of its share capital by the shares so cancelled. But sir, this last point is important. The last point includes 2 points. Cancel the shares which has not been taken up, diminish the amount of the shares. However, please make sure such cancellation shall not be deemed to be reduction of share capital. It will not be considered as a reduction of share capital. You will not consider it to be a reduction of share capital. Are you with me? Guys, are you with me? Yes, sir. Are you with me? Rishikesh, is it live or premium? It is a live session, Raja. It is a live session. Okay. All right. Okay, perfect, sir. So moving to the next part, sir. What is section number 61 is done? Section number 61 is done. After that, we immediately study section number 66. What is section number 66? So section number 66 talks about reduction in share capital. And open the notes that we made in the class, sir, because that will give you more comfort. And for those who don't have it, you Write down looking at my screen if you want to. But sir, the notes that we made in the class, these are the notes that we made in the class. Let's come to reduction of share capital. Sir, reduction of share capital. Listen to me very carefully. Sir, when I say reduction of share capital, what is reduction? Sir, reduction of share capital basically means that you reduce the liability on the shares which is not paid up. The shares which are not paid up, you reduce the liability. Number two, you cancel any paid up share capital which is lost or not represented by available asset. Or number three, you pay off any paid up share capital which is in excess of the want of the company. These are the three cases where reduction of share capital happens. Sir, in section number 61, we were talking about alteration. Here we are talking about in 66, we are talking about reduction. That is, there is only one thing will happen. It will reduce. It will not increase. Number two, sir, in section number 61, we were talking about authorized share capital. Here we are not necessarily talking about authorized share capital. We could be talking about something else also. Now listen to me very carefully. Sir, reduction can happen for three reasons. Number one, reduce any liability on shares which is not paid up. I'll give you example for each of them, sir. So for example, I had issued shares of rupees 10, which was out of which rupees 8 was paid up and rupees 2 was not paid up. So I said rupees 2, I am waiving off. Waiving off as in I said, you don't have to pay 2 rupees. So when you do that, what happens? Your share capital reduces. It was 10 rupees earlier, now it is 8 rupees. So there is a reduction of liability on shares which is not paid up. That 2 rupees is reduced. Number two. Sir, in that example only, rupees 10 was paid up. Rupees 10 was not fully paid up, it was partly paid up. Now rupees 8 will become fully paid up shares because 2 rupees you are waiving off. Number two, sir, cancel any paid up share capital which is lost or unrepresented by available asset. Sir, I gave you example in class. Listen to me very carefully. Sir, if for example, I invested 10 lakh rupees in a company. Okay, I invested 10 lakh rupees in a company. That 10 lakh rupees is showing as paid up share capital of 10 lakh rupees. Okay. Against that, I purchased asset of 10 lakh rupees. Okay. Is it fine? Yes, sir. Now I kept on facing losses and my assets came down to 4 lakh rupees. And here I'm showing a loss of 6 lakh rupees and I'm showing paid up share capital of 4 lakh rupees. We said, no, 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 no. Don't show paid up share capital of 10 lakh rupees. Your paid up share capital is not 10 lakh rupees because it is not represented by available asset. If you are saying that you have given 10 lakh rupees to the company, where is that 10 lakh rupees? You have lost it. So if it is lost or not represented by available asset, you will reduce your share capital. You'll reduce your share capital. This is the second case, which is cancellation of any paid up share capital which is lost or unrepresented by available asset. Or pay off any paid up share capital which is in excess of the wants of the company. For example, you took 10 rupees from each shareholder. Now you just want 7 rupees. You don't want the excess 3 rupees. You will repay this excess and that will reduce your share capital. So either you reduce liability by on the shares which is not paid up or cancel or excess that you have, you refund that. In that case, it leads to reduction. I have given you example for each one of them, sir. Now, what is the procedure for reduction? It is very simple, sir. Number one, you will pass a special resolution. Shareholders' approval is must. You will have to alter your memorandum of association. Why, sir? I'll tell you why. Guys, sometimes when you reduce your paid up share capital, your authorized share capital will also change. Why, sir? Sir, if I had 1 lakh shares of 10 rupees each, okay, now I am reducing it to 1 lakh shares of rupees 8 each. So what will be the face value of each share? 8 rupees. So I have to change my authorized share capital also. It was 10 lakh shares of 10 rupees each. That also has to become 8 rupees each. So because of that, I'll have to alter my memorandum of association also. So the concept that you have to understand is on reduction of share capital, authorized share capital also gets altered. Number three, approval of tribunal is must. Look at the process. Company will go to the tribunal and say, allow us to reduce the share capital. Allow us to take the risk. What is risk? Reduction in share capital. Tribunal will send a notice to central government, ROC, creditors, and SEBI, if it is a listed company, saying that this company wants to reduce share capital. These people will have to give their representation within 3 months. They'll have to give their representation within 3 months. Now, if the tribunal is satisfied, the tribunal will have to satisfy himself. Satisfy about what, sir? What are you saying? Array, satisfy about what? That the claim of the creditors is discharged, that the creditors are not at risk, and their consent is obtained, and that the accounting treatment is as per section 133. That proper accounting will be done for this reduction in share capital. Sir, how do you know proper accounting will be done? Sir, it will be said by the company. It will be told by the company's auditor by giving a certificate. So if the tribunal is satisfied about two things, that creditors are okay and accounting treatment is okay, then it will give an order and you'll file that order with ROC, and that is when reduction in share capital happens. That is when your reduction in share capital will be effective. So it is a very simple process, sir. Number one, SR. Number two, MOA alteration. And number three, approval of tribunal. Are you with me? Number three is approval of tribunal. So tribunal, you will send a notice. Tribunal will inform to four people: central government, ROC, creditors, and SEBI. They have to give representation within 3 months. Now, after that, if tribunal is satisfied that creditors are okay, their claim will be discharged or they have given their consent. And accounting treatment will be as per accounting standard. Who will tell you that, sir? Company's auditor. Then the tribunal will give it order and a copy will be sent to ROC, and that is how reduction will actually happen. Are you with me? Are you with me? Are you with me? Guys, yes or no? Yes or no? Yes, sir. Sir, this is your section number 66, which talks about reduction of share capital. Now let's move to the next bigger section, sir. Section number 62. What is section number 62? We will read it from the notes because we have made pretty good notes. You can also use my summary book. The flow would be the same. You can also use ICA module. The flow would be the same. But 61 is done, 66 is done. Now coming to the next section, which is 62, which is further issue of share capital. Guys, revise along with me. In this case, the company is going to issue share capital under three scenarios: where you are issuing right issue, where you are giving it to employees under ESOPs, or where you are giving to any person for consideration. Sir, if you look at both these scenarios, all the three scenarios, at least you are getting some money. In right shares, you are getting some discounted but price, but you'll get some money. In ESOPs, you are getting some money. In consideration, also, you're getting something at least. But sir, after this, we will read section number 63, which is about bonus shares, where you are not getting any money. Where you are not getting any money, it is free of cost. So first, let's talk about right issue, guys. Listen to me very carefully. This is a very big section. Right issue says that company, if they want to issue right issue, they'll have to give a notice to the existing shareholder. In that notice, they'll give an offer to purchase the shares. That shareholder, you can purchase the shares of the company in proportion to the paid up share capital. How will you send this notice, sir? Registered post, speed post, courier, or any other electronic mode. And you should have proof of delivery that we have actually sent you the notice. Sir, how much time will you give? Sir, your offer will open, and at least 3 days before the opening of the offer, you will have to inform them. At least 3 days before opening of the offer. And then once the offer opens, within 15 days, you will have to, minimum 15 days, you will have to, listen to me very carefully. Once the offer opens, it has to be open for minimum 15 days and maximum 30 days. Sir, but the minimum 15 days and maximum 30 days, this minimum 15 days can be reduced in case of a private company where consent of 90% has been obtained. If 90% shareholders are saying, Array, you don't have to keep 15 days also, keep it 7 days, then you can keep a minimum number of 7 days also. But maximum will be 30 days. This cannot be extended beyond 30 days. So basically, sir, imagine you are a shareholder. I'm the company. I'll send you a notice. I'll say you have the offer, you have the right to purchase the right shares. Then I'll send you via registered post, speed post, and these things. And then I'll open it for minimum 15 days, maximum 30 days. And if you want, if you're a private company, you can reduce 15 days to less than to up to 7 days. You can reduce this. But maximum limit, listen to me very carefully. You're not paying attention. This maximum 30 cannot be increased. In exam, they'll ask you. Then they increase by 90% consent. No, sir, maximum 30 days cannot be increased. After that, guys, what can the shareholder do? Either the shareholder will go ahead and purchase, or the shareholder has the option to renounce. Renounce as in he can transfer his rights to someone else. He can transfer his rights to someone else, or he can just ignore. Sir, if there is no reply from the shareholder, it will be deemed to be rejected that they don't want the shares. And in that case, board shall dispose such shares in a manner non-disadvantageous to the company or shareholder. Now it is on the board will dispose such shares in a manner that is non-disadvantageous. So what is the opposite of advantageous? Disadvantageous. What is the opposite of disadvantageous? Non-disadvantageous. So basically they are saying in a manner which is advantageous to the company or shareholder, in a manner that should be advantageous to the company or the shareholder. Are you listening to me? Yes, sir. This is your right issue. This is your right issue, which is very important. Please understand, for right issue, no one is asking you to pass a special resolution or ordinary resolution. There is no requirement as such of passing ordinary resolution or special resolution. If you go to ICI module, they have written that some resolution is required, but if you go and read the PAIR Act, there is no requirement of any resolution. In module, they have just randomly written, but there is no resolution required for a right issue. Okay, guys. If you want to take the shares, you take it. If you don't want to take it, you don't take it. Okay, no one is forcing you. Okay, okay, sir. After that, coming to the next portion, which is ESOPs. ESOPs. Sir, what is ESOP? Listen to me very carefully, guys. What is ESOP? ESOP is employee stock option plan. You must have studied about ESOPs a little bit in your in your accounts also. Sir, in ESOPs, there are some things that you have to understand. Sir, an employee is said that today, that is the date of grant of ESOPs, so the share price is 1,000 rupees. Tomorrow the share price may go up to 5,000 rupees, but 3 years later, that is called as vesting period. After vesting period, you will have an option to purchase the shares for just 500 rupees. This 500 rupees will be called as exercise price. Granting, vesting period, date of vesting, and exercise price. And after that, you will have a lock-in, and lock-in maybe of 1 year. This could be the arrangement, right? This is called as ESOPs. In such ESOPs, you have to first pass a special resolution and then you have to comply with the rules. In ESOPs, you first have to pass a special resolution. Special resolution is a must. Now, listen to me very carefully, guys. Please, 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 please. Sir, SR is required and rules. But sir, first understand ESOPs are given to employees. Now, who are employees of the company, sir? Sir, you had already studied the definition of employees in the last lecture, wherein we discussed section number 54, which was sweat equity share. So in 54 sweat equity shares, you discuss the provision of ESOPs. Now listen to me very carefully. Sir, you will have to pass a special resolution. Who will pass and who are employees of the company, sir? Sir, listen to me very carefully. Employees means permanent employees of the company in India or outside India. Directors of the company, whether full-time or part-time, or any other employee or director of the holding company or subsidiary company. Sir, this is the same definition that we studied in the sweat equity share also. But here there are some differences in section number 62, which is about ESOP. It says that in director, you will exclude independent directors. Please do not count independent directors. You have to exclude independent directors. Independent directors can never get ESOPs. And moreover, in the definition of employees, you will exclude two people. Number one, promoter or person belonging to the promoter group. So promoter as in the founder of the company, or the people belonging to the founder group, or any directors who hold more than 10% of equity share. So if you're already holding so much of share, you cannot get ESOPs. So promoter cannot get ESOPs, director cannot get ESOPs if they hold more than 10%. But sir, this exception that we have, this exception is not applicable for a startup in the first 10 years. If you are a startup company and in the first 10 years, even if you're a promoter or even if you're a director, you can get the ESOPs. So basically, sir, ESOPs can be given to these people, but ESOPs can never be given to independent director. And ESOPs can also not be given to promoter or director holding more than 10%. But however, if you're a startup company in the first 10 years, you can give ESOPs to promoter or director. But however, Raja, listen to me very carefully, Raja. Sir, even if you are a startup in the first 10 years, you can still not give ESOPs to independent directors. Independent directors can never, ever, never, ever, never, ever, never get what? ESOPs. Are you with me? Are you with me? Are you with me? Yes, sir. Sir, will you provide? Aditya is asking, will you provide revision of all the chapters? Yes, Aditya. But for that to happen, you have to show me some love. Only if these videos are helpful for you. Only if you go to the comment section and let me know how much this video is helping you. Only if you show some likes in the video. I see, yes, boss, people are engaging. Only then I'll be motivated to provide such detailed free revision lectures. But for that, you have to reciprocate some love. The thing that I'm asking in return is your appreciation is my motivation. We'll keep a very, very aggressive target of this video, sir. We'll keep a like target of, let's say, in over a period of 2-3 months, 200 likes I want in this video. If you help me achieve that kind of likes, and that is when I'll provide you more and more content that will help you. Okay, Raja. Okay, sir. All right. Perfect, guys. Now listen to me very carefully, guys. What is rules of the ESOPs? Sir, some rules, please understand. For ESOPs, you have to pass a special resolution. Number two, sir, you have some freedom. You can decide the exercise price, you can decide the lock-in, and you can decide the vesting period. But vesting period has to be minimum 1 year at least. So you can decide the exercise price. You can decide the lock-in period. We have not even said 1 year, 2 year, no. For sweat equity share, we said a fixed lock-in period of 3 years. But here there is no lock-in period limitation. You decide. Number three, sir, when you get the when the ESOPs are granted, see, today is the day of grant, and after 3 years it will vest. So today, when the ESOPs are granted, you will not get any voting rights or dividends on that. Once you exercise the options, as in once you get the shares, that is when you get the voting rights and dividend. Until then, there is no voting rights or dividend. And more importantly, the options that you have, sir, it is not an asset. You cannot transfer it. You cannot pledge or hypothecate it. You cannot do anything with that option. It is basically useless the time you exercise such option. Okay. Now, sir, what will happen if in case if the employee dies? In case if the vesting period was 3 years. Okay. Now before that, if the employee dies, sir, in that case, it will vest immediately in the hands of legal representative. That is, the legal representative can immediately opt to purchase the shares. But if there is a permanent incapacity, it will again vest immediately, but in the hands of the employee himself and not in the hands of legal representative. In the hands of the employee himself, because he's alive now. But if he retires or if he resigns, if he's removed or if he resigns, then the option will lapse. Then the option will lapse. He will not get any benefit out of this. Sir, are you listening to me? What am I saying? I'm talking about your ESOPs. In ESOPs, if the employee dies, it will vest immediately in the hands of the legal representative. If there is a permanent incapacity, it will vest immediately in the hands of in the hands of the employee. But if there is the removal of resignation, the option will expire, the option will lapse. There is nothing that you can do about that option. Okay. After that, sir, point number C is very important. We are reading section 62(1)(c). 62(1)(c). It talks about offer to any person. As in, for example, if I am a company, sir, my company is, let's say, SS Limited, for example. Now, guys, listen to me very carefully. If I took money, hello, if I took money from, if I took a building from a builder, if I took a building from a builder and in return I gave him the shares of my company. So here, sir, am I getting any consideration? Yes, sir. Is that consideration in cash? No, sir. It is in kind. Consideration in kind, as in I'm getting some property. So in this case also, you are issuing shares for consideration. If you are issuing like this, you fall in this category and you will have to comply with three conditions. Number one, pass a special resolution. Special resolution is mandatory. For right issue, sir, there is no SR or OR. But for ESOPs, SR is required. For other issue, SR is required. Apart from that, there has to be consideration, sir. It can be in cash, it can be in kind. That's okay. But there has to be a consideration mandatory. And number three, valuation will be done by a registered valuer. As in, whatever property I'm getting, what is the valuation of that property? It will be done by a registered valuer. It will be done by a registered valuer. Are you getting my point? Are you getting my point? Yes, sir. These are the three conditions that you have to satisfy when you make offer to any other person. In the question bank, sir, 1 second, let me tell you. Go and solve question number 19 of my question bank. You will feel that how important it is. Question number 19 was about section number 61 versus 66. If you are able to understand question number 91, it is completely doable for you. And these sections that I'm teaching you has utmost importance in your exam, sir. Utmost importance. Okay. So guys, keep listening to me very carefully. Please listen to me very carefully. Sir, this is your offer to any other person. Okay. After that, guys, sir, what about conversion of debt issued to the government? Hello. What about conversion of debt issued to the government? Hello. Sir, listen to me very carefully. Sir, what about conversion of debentures issued to the government? Guys, please listen to me very carefully. Sir, there is a provision that if the government has given you some sort of loan or the government has given you some sort of debenture and you are a company, sir, the government can force you to convert this loan or debenture into shares. Why would the government do it, sir? If it government thinks that it is in public interest, government can force you to complete. Sir, to convert. Even if such conversion was not written in the agreement, but still they can force you to convert because it is in public interest. Now, sir, listen to me very carefully. In practical life, government has done this to Vodafone company. For Vodafone Limited, whatever loan they had given, they have converted it into shares. Okay, so where any loan or debt is obtained from the government may, in public interest, order for the conversion into shares. They can order that please convert into shares, even if the loan agreement does not have such option. Even if it was not written in loan agreement, still the law is giving you power to do it. Now, if the company is aggrieved, sir, they're giving this order, they're giving this order. Company is not okay with the order. So company will within 60 days of such order inform the tribunal. Company will inform the tribunal. Company will inform the tribunal within 60 days that guys, please look at this thing. Government is forcing us to convert and the terms are not good. But sir, how will government decide the terms? How will government decide the terms? Sir, the government will consider the financial position of the company, the terms and conditions of the issue, and the rate of the interest. What are the three things? The financial position of the company, the terms and conditions of the issue, and the rate of interest. After considering these three things, the government will convert themselves the debentures into the shares. Sir, this is basically a forced conversion. Listen to me very carefully. Sir, government can force you to convert the loan and debenture into equity shares, saying that it is in public interest to do so. If you are not okay with such decision, you can make an application to the tribunal within 60 days. But how will government order that, sir? Government will consider the financial position of the company, the terms and conditions of the issue, and what was the rate of interest. And based on that, government will give you an order. Now, listen to me very carefully. Sir, there will be two things that will happen automatically. Two things that will happen automatically when the government converts what the government converts. Please understand that one thing. Sorry to break the flow, but listen to me very carefully. Sir, when the government orders, when the government or when the government orders the conversion as in your loan will be converted into equity. Your loan will be converted into equity. In that case, there will be two things that will happen automatically. Number one, the authorized share capital will increase by the value of the shares issued. That is, your authorized share capital will automatically increase. And number two, your MOA stands altered. That is the memorandum of association that you have, it will stand altered. That is, your memorandum of association will change and your authorized share capital will automatically increase. How much increase, sir? By the value of the share issue. So, for example, if the Vodafone Idea company issued 1 lakh shares to the central government, then in that case, your authorized share capital will increase by 1 lakh. Okay. Now give me 1 minute. 1 minute. You revise this and then we'll move forward. I think that ends your section number 62. Revise this, then we'll move forward. Now we will move on to the next section, which is your section number 63. 63, which talks about bonus shares. Very simple, sir. Whenever you talk about bonus shares, there are 6 conditions that you have to take care of. If you're issuing bonus shares, sir, in accounts, what do we call it? Bonus is nothing but capitalization of reserves. In accounts, we say bonus is nothing but your capitalization of reserves. If you want to, what is capitalization of reserves, sir? Basically, you transfer the balance from reserves to equity share capital. So if you are doing this, you will have to comply with 6 conditions. Number 1, sir, AOA should authorize the same. It should be authorized by AOA. Number 2, bonus has to be recommended by the board and approved by the shareholders. Sir, just like dividend, it will be recommended by the board and approved by shareholders. Number 3, you have not defaulted in your deposits or debentures. There are no defaults with respect to deposits, debentures. Only then you can go and give bonus shares. There is no default with regard to statutory dues of employees. There is no default with that of statutory dues of employees. The same point was there in section number 43, DVR. And partly paid up shares have been made fully paid up. First of all, you will make fully paid up shares, and then bonus once declared cannot be withdrawn. Once you announce the bonus, once you declare the bonus, you cannot withdraw it. So if you look at these 6 conditions, once these 6 conditions are satisfied, only then you can issue the bonus share. Sir, AOA, recommended by the board, approved by the shareholder, not defaulted in deposits or debentures, no default of statutory dues of employees, and partly paid up shares have been made fully paid up, and bonus once declared cannot be withdrawn. This is mandatory, sir. Because what happens once you declare the bonus, the share price goes up. Now, if you are withdrawing it, then you are misusing this news. You are misusing this news, so basically you cannot withdraw it. But sir, I said bonus is nothing but capitalization of reserves. But remember that you cannot capitalize revaluation reserves. Revaluation reserves is the most useless thing, useful for nothing. So you cannot capitalize your revaluation reserves, cannot be used to issue bonus shares. Are you with me? Guys, are you with me? Did you understand? So that was your section number 63, which talks about bonus shares. Guys, now, after that, section number 64. Section number 64 is a very simple section, sir. It says, it's been so long that you have not connected with the ROC. You should send a notice to ROC. When, sir? In case if there is an alteration of authorized share capital under section 61. Sir, do you have to remember the section number 100%? Yes, sir. 100% yes, you have to remember the section number. Sir, so alteration of authorized share capital under section 61. Or if there is increase in authorized share capital under section 62. Sir, when did authorized share capital increase in section 62? I'll tell you. You remember government had given you debt. Do you remember that was converted into equity? And do you remember because of that your authorized share capital stands increased and your MOA stands altered? Do you remember that? Yes, sir. Sir, that is where your authorized share capital increases. You have to inform to ROC. And number 3, where there is a redemption of preference share, you have to give a notice to ROC in 30 days in form SH7. So basically, section number 64 is something which is linked to 61, 62, and 55. That if there is an increase in alteration of authorized share capital or increase in authorized share capital under 62 or redemption of preference shares, in that case, you will give to notice to ROC within in the form SH7. In the form SH7. Okay, guys, did you understand? Did you understand? Pakka, did you understand? Yes. Okay, guys. Now listen to me very carefully, sir. This is your point number 67. This is your point number 64. Now let's move to the next section, which is your section number 68. 60, sir, now what is done? 61 is, what did we do? 61. 61 is your authorized share capital. Alteration of authorized share capital. 66 is reduction of share capital. 62 is further issue of share capital. 63 is bonus. 64 is what? 64 is notice under section 61, 62 or 55. What is left, sir? I can say that what is left, sir, 67 is left and 68 onwards is left. Sir, what is section number 61? Let's read section number 61 from the notes. Sir, section number 67 talks about restriction on purchase by company or giving loans by it for purchase of shares. Restriction on purchase by company or giving of loans by it for purchase of shares. What is the meaning, sir? It means that section number 67 says that you cannot give money to your, and the question on this section was asked in your January 25 attempt, sir, for very good marks. This section was asked in your January 25 attempt for very good marks. Listen to me very carefully. It says that, sir, it basically, the basic rule is no company shall give loan guarantee or security or any financial assistance for purchase or subscription of shares of the company or its holding company. No company shall give any loan guarantee or provide security or financial assistance for purchase or subscription of shares of the company or its holding company. Okay. So basically, no public company can give these things for this company. But however, you cannot give money for purchase of your own shares. But sir, there are three exceptions. Exception 1, 2, 3. Exception number 1, if the company is a banking company and the loan is an ordinary course of business, it is okay. Banking company, ordinary course of business, absolutely okay. Point number 2. The provision, point number 2, if you are giving it as per any scheme, if you are giving it as per any scheme, then that is also okay. And point number 3, if the loan is to employees for purchase of shares of the company, this is the most important point, sir. Sir, if a company is giving loans to its employees, yeah, better. Sound कम कर ले. Yeah. If the loan is given to the employees, loans are given to the employees of the share employee. If the loan is given by a company to the employees and not to big employees, other than directors or key managerial person, for an amount not exceeding 6 months of salary or wages, with a view to enable them to purchase the fully paid up share of the company or the holding company, it is all right. बैठो नीचे बैठो बैठ जाओ ठीक. So guys, basically, so sorry about the disturbance, doesn't usually happen. Sir, I said that if you are giving loan, if the loan is given by a company to its employees, so basically what is the exception? A company can give loan to its employees. And we say, when we say employees, we don't count key managerial person, we are not saying directors. We are saying to small employees. And if the amount is less than their salary of 6 months, their salary of 6 months, and they are going to purchase fully paid up shares of whom? Of the company or the holding company, then we are okay. Look at so many conditions, sir. Usually, I cannot give the money to the employee saying buy my own company shares. But here there is a small exception. Employees other than key managerial person or director, amount less than equal to 6 months of salary, fully paid up shares they have to purchase of the company or the holding company, then it is absolutely all right. This is the point, sir. However, they will have to give the disclosure in respect of voting rights not exercised by the employees in respect of such scheme. Not an important thing. But did you understand this portion? This is very important, sir. This is your section number 67, which talks about restriction on purchase of shares by the company. Restriction on purchase by company or giving loan for it to purchase the shares. You cannot give loan to the employees. You cannot give loan to the employees. Are you with me? Okay. Okay. Now, guys, let's move to the next section, which is your buyback. Buyback of shares. Please listen to me very carefully. What is buyback of shares? Guys, what is buyback of shares? What is buyback of shares? Buyback is basically, listen to me very carefully. Sir, buyback means How will you do the buyback? I'll make you read from the notes. It is very interesting. You read from the notes. Sir, buyback is purchase of your own shares. Buyback is purchase of your own shares. Okay. There is a lot of disturbance today, but I'm sorry about that. But never mind. I'll still give you a quality revision for buyback. With undivided attention, let's focus on buyback. So section number 68 talks about buyback. Buyback. Sorry. Guys, buyback talks about source of buyback. What will be the source of buyback? The source will be free reserve, securities premium account, or proceeds of fresh issue. What will be the source of buyback? It can be free reserves, it can be securities premium account, or it can be proceeds of fresh issue also. These are three places from which we can do buyback: free reserves, security premium account, or proceeds of the fresh issue. But however, listen to me very carefully. If you are using free reserves or securities premium account, then in that case, the buyback, you will have to create a CRR. You'll have to create a CRR, that is capital redemption reserve. You'll have to create a CRR, and that will be only used for the bonus shares. How much CRR will you create? Up to the nominal value of the shares. But however, what are the three sources, sir? Free reserves can be used, securities premium account can be used. Remember section 52, 5 usage of your securities premium account. The last one was buyback. Okay. And last one is proceeds of fresh issue. But always remember, no buyback can be made out of proceeds of earlier issue of the same kind. As in, if I am issuing an equity share, using that money I cannot buy back the older equity shares. That is not allowed. You have to make fresh issue of different kind of capital. Okay, so proceeds of earlier issue of same kind cannot be used for the buyback. Now, what is the condition for buyback, sir? Sir, there are again 6 conditions that you have to remember. Number one, it has to be authorized by the AOA to do the buyback. Number two, you have to pass a special resolution. Pass a special resolution. Number three, sir, please listen to me. Special resolution will not be required if the buyback is of less than equal to 10% of the paid up equity share capital plus free reserves. If the buyback is up to 10% of paid up equity share capital plus free reserves and board resolution has been passed, then SR will not be required. Board resolution will be enough. Up to what limit, sir? 10% of paid up equity share capital plus free reserves. But beyond that, you will have to take an SR. Number three, sir, what will be the maximum amount of buyback? The maximum amount of buyback will be 25% of paid up share capital plus free reserves. 25% of paid up share capital plus free reserves will be the maximum amount of buyback. With approval or without approval, maximum 25%. But in case of the buyback is of equity share, what will be the limit? It will be 25% of paid up equity share capital. You'll not add free reserves, sir. There are three limits that we just studied, sir. Limit number one. First of all, it has to be authorized by AOA. Then you have to pass SR. But SR will not be required. Board resolution will be enough if the buyback is up to 10% of paid up equity share capital plus free reserves. Point number three, what will be the maximum buyback in a year? Sir, in a year, the maximum buyback will be 25% of paid up equity share capital plus free reserves. Paid up share capital plus free reserves. That will be the maximum amount of buyback. But if you are buying back equity, it will be 25% of paid up equity share capital. It will be 25% of paid up equity share capital. After that, guys, point number four, secured plus unsecured debenture upon paid up share capital plus free reserves will be less than equal to 2. Secured plus unsecured debenture upon paid up share capital plus free reserve should be less than equal to 2. That is, your debt equity ratio should be less than equal to 2. And only fully paid up shares can be bought back. And if you're a listed company, comply with SEBI. Unlisted company, comply with rules. So there are these things, 6 conditions that you have to satisfy: AOA, SR, no SR, maximum limit of buyback. Number 4, debt equity ratio should be less than equal to 2. Fully paid up shares can be bought back, and you have to comply with the rules. But please listen to me very carefully. Once your buyback is done, buyback shall not be made within 1 year from the closure of preceding buyback. If you have just finished your buyback, you cannot, for at least 12 months, you cannot do another buyback. After 1 year, you can do a fresh buyback. Now, guys, when you're doing a buyback, you have to pass a special resolution. For that, you have to send notice of the meeting. In that, you will attach explanatory statement. In that, you will tell them about the facts. What are the facts, sir? You'll tell them the material facts of the buyback. What kind of buyback are we doing? What is the amount that you're going to invest? Which class of shares are you buying back? And the time limit for completion of this buyback. What will be the time limit for this completion of buyback, sir? the date you pass the relevant resolution, you have to complete the buyback within 1 year. So two time limits, sir. When you pass board resolution or SR, sometimes SR is needed, sometimes SR is not needed. But whenever you pass that resolution, within 1 year you have to complete the buyback. And after that 1 year later, you cannot make a fresh buyback. You cannot make a fresh buyback. Okay. Sir, one very important point, you will have to give a declaration of solvency. Company will give a declaration of solvency to the ROC and SEBI if it is a listed company. It means that if you're an unlisted company, even an unlisted company, buyback can happen. And in that case, you will inform only to ROC. Sir, you will give a declaration of solvency in the form SH9. It is an important form number, sir. Now, what about SH9, sir? Please listen to me very carefully. Sir, this declaration of solvency has to be signed by two directors, out of which one has to be managing director. Two directors, out of which one has to be managing director. In that, they will give an affidavit. By affidavit, they will write that we have made full inquiry into the affairs of the company and we think that the company is capable of meeting all the liabilities and the company shall not be rendered insolvent in the next 1 year. That the company is capable of meeting all the liabilities and company will not be rendered insolvent in the next 1 year. This is what you'll write in the declaration of solvency. That we have made full inquiry. You don't have to worry about it. The company will not be rendered insolvent in the next 1 year, and the company will be able to meet all its liability. If these two conditions are satisfied, then you'll give declaration of solvency to the ROC, and if you're a listed company, to SEBI also. Okay. After that, what will happen, sir? Sir, once the buyback is done, whatever share certificate you have received, those will be destroyed. Or if it is in demat account, your shares will be extinguished within 7 days of the buyback. Within 7 days of the buyback, you will do this thing. And after buyback, listen to me, for at least next 6 months, sir, see, when I'm doing buyback, no, I'm showing that I'm very rich, give me back my shares and take back your money. But again, after you just completed a buyback, within 6 months, do not go and issue any fresh shares of same kind. Same kind shares cannot be issued. Fresh issue cannot be done of the same kind. But however, if you want to give bonus shares, sweat equity shares, ESOPs, these things you can do. It is not a problem because these are old commitments. Bonus, you're not getting any money. Sweat equity share is necessary for business. ESOP is old commitment, so it's okay. But right issue again, right issue you cannot do. Right issue cannot be done. Right issue cannot be done. And to give it a closure, please read the timelines. Read the timelines very carefully, guys. Board resolution or special resolution, whenever you pass, within 1 year, you have to complete the buyback. After that completion, within 7 days, you have to destroy the share certificates. Within 6 months, you cannot make a fresh issue of same kinds. And up till 1 year, you cannot do one more buyback. These are the time limits that we studied in this chapter. These are the time limits that we studied in your section number 68, which talks about your buyback. Are you clear? Is it clear for you guys? Yes or no? Is it clear? Yes. Perfect. All right, guys. This is your section number 68, which talks about buyback. What is section number 69? Sir, section number 69 says a very small thing. It says that, guys, your source is free reserves and security premium account. If you use free reserves or security premium account, you will have to create a CRR of the nominal value, and that CRR can only be used for bonus shares. It is written in where? It is written in section number 69. Are you with me? Yes, sir. After that, coming to section number 70, not a very important provision. But what is 70, sir? 70 talks about prohibition on buyback. Sir, directly, if you are doing buyback, we are okay with it. But indirectly, don't try to be very oversmart. Oversmart as in, no company shall purchase its own share via your subsidiary company or investment company. You don't go to your subsidiary company and don't ask them to purchase your holding company shares. No, sir. Don't do buyback indirectly. Or don't give money to investment company to purchase your own shares. No, sir. This is indirect purchase. You cannot do it. And moreover, if you have defaulted in deposit, debenture, preference share, dividend, term loan, if you have defaulted, then you cannot buy back for 3 years from the date of default is made good. So first you rectify your default, and after that 3 years you cannot buy back, and after that you can go for buyback. So basically, indirectly via your subsidiary company or investment company, you are prohibited to do buyback. And if you're defaulted in these things, you cannot buy back for up to 3 years. Are you with me? Yes or no, sir? Tell me yes or no. Sir, this is your prohibition on buyback. But the most important section is section number 68. If you look at this, there are so many questions that have been asked, sir. In my question bank, I have merged the different similar questions. But after merging also, there are 7 to 8 questions that have been asked from this particular section, and it is going to only increase. Okay. Did you understand? Did you understand? Yes or no? Sure. Okay. Okay, guys. Now, guys. Sir, section number 68 is done. Section number 68 is done. 69 is done. 70 is done. And we come to the last section of this whole chapter. After this, your chapter will be done. We come to the last section of this whole chapter, after which your chapter will be done. Sir, what is the last section of this chapter? I'll make you understand from the charts that I have made. I'll make you understand this last section from the charts that we have made. Listen to me very carefully, sir. Sir, one second. Sir, one second. It will get cleaned up. Yeah. Okay. Sir, this is a chart that I have made for the debentures. You can make this chart yourself also by looking at the, when I'm teaching, you will understand that it is very easy, but you have to just remember along with me. Okay, guys. Sir, first of all, debenture. What is the definition of debenture? What is the definition of debenture? Hello. Sir, what is the definition of debenture? So the definition of debenture is that debenture includes debenture stocks, debenture bonds, or any other instrument evidencing debt. Debenture trust, debenture stock, debenture bonds, or any other instrument evidencing debt, but it does not include instrument in Chapter 3 of the RBI Act, that is derivatives. Not a very important definition, sir, but you can understand from the definition that debenture includes bonds also. So whenever you say bond, section number 71, which is a debenture, will apply. After that, what are the basics, sir? Please understand that debentures can be convertible debentures also, non-convertible debentures also. And sir, listen to me very carefully. When you are issuing convertible debentures, you have to pass special resolution. When you are issuing convertible debentures, listen to me very carefully. Debentures can be convertible debentures also or non-convertible debentures also. If it is convertible debentures, you have to pass special resolution. But if it is not convertible debentures, what will you do, sir? Hold your thoughts. If it is a non-convertible debenture, that is not going to convert, then you will have to wait. But understand that debenture holders do not have any voting rights. They do not get any voting rights. After that, sir. So can there be secured debenture? Yes, sir. Always understand there can be secured debenture, there can be secured deposit also. Sir, what is the tenure of the debenture? Sir, the tenure is usually 10 years, less than 10 years. For preference shares, it was 20 years. It is 10 years. This can go up to 30 years also in case of infrastructure companies. In case of infrastructure companies, it can go up to 30 years also. Infrastructure company, infrastructure finance company, infrastructure debt fund, anything related to infrastructure, it can go up to 30 years. Now, sir, how will you create a secured debenture? Sir, for secured debenture, you have to create a charge on the property or asset of the company, associate, subsidiary, or holding. You will give, you will create a charge on your property or asset of the company, associate, subsidiary, holding. What will be the value of the charge, sir? Sir, the value should be enough to cover principal plus interest. If you have taken a debenture of 100 crore and the interest is going to be 10 crore, your value should be enough to give you your security should be enough to give you a value of 110 crore. Only then it will be considered as secured debenture. After that, sir, for debenture, you will appoint a debenture trustee. When will you appoint debenture trustee? Sir, before prospectus, very early stage. Even before you get the money, before prospectus, you will appoint the debenture trustee. Who will appoint, sir? Sir, the company will appoint debenture trustee, not the debenture holder, the companies. And then it will enter into a debenture trust deed within 60 days of allotment of debenture. So basically, this is the prospectus. Before prospectus, you will appoint a debenture trustee. After that, you will open the issue, close the issue, and then you'll do the allotment. And after allotment, within 60 days, after allotment, within 60 days, you will do what? After allotment, within 60 days, you will do what? You will enter into a debenture trustee. Or, or sir, there is one more time limit. When the issue closes, after closure, within 90 days, or within 3 months, you can enter the debenture trustees. within 60 days of the allotment or within 3 months of the closure. Guys, try to understand. See, this is revision. Please try to understand. These debenture itself takes one class in our exam oriented class. Okay, so please try to understand that either within 60 days of allotment or within 3 months from the closure of the issue, you will have to do what? You will have to take care of these things. Are you with me? Yes, sir. After that, what did I say? Sir, you will create a charge on the movable or immovable property of the company, not a problem. This is how you will create charge. So, sir, when it comes to a secured deposit now, there are 4 points, debenture now. There are 4 points that you need to remember. You will create a charge on the assets of the company, associate, subsidiary holding. Number two, the value of this asset should be sufficient to provide for the principal and interest. Number three, you will have to appoint a debenture trustee before the prospectus and enter into a debenture trust deed, a debenture trust deed within 60 days of allotment or within 3 months of the closure of the issue. And number four, sir, the charge can be on the movable or immovable assets of the company. These are the 4 points that you need to remember when it comes to secured debenture. After that, sir, you have to talk about debenture trustee, appointment of debenture trustee. How will you appoint a debenture trustee? Sir, the appointment, the name will be stated in all the documents. You need a written consent. Without consent, you should not do anything. You need a written consent of the debenture trustee. You need what? You need a written consent of the debenture trustee. Are you with me, guys? Are you with me? Yes, sir. After that, I said who will be disqualified to become a debenture trustee. This is a little complicated, sir, but relatively easy. We will try to understand. Who cannot become debenture trustee? Sir, if a person beneficially holds the shares in the company, if he is a beneficial shareholder, not the registered owner, he is the beneficial owner, he cannot become. If he is a promoter, director, key managerial person, or employee of the cash company, associate, subsidiary holding, he is an employee, director, key managerial person, or promoter. Or if he is a relative, if he is a relative of these people, relative of promoter, director, key managerial person, then in that case also he will not become a debenture trustee. So basically, if you beneficially hold the shares or you are an employee or promoter, you cannot become a debenture trustee or a relative of these people. We are talking about whom? Debenture trustees. We are talking about debenture trustee. After that, you should not be entitled to the money from the company. You should not be eligible to receive some money from the company, except for your remuneration. Remuneration you can get. Apart from that, you are not entitled to any money. Similarly, you are not indebted to anybody, company, associate, subsidiary holding, or subsidiary of holding. You are not indebted to anyone else. After that, sir, you have not furnished guarantee for the principal debts. As in, sir, listen to me very carefully. If Reliance has issued debentures to these people are debenture holder. They have given rupees 100 crore. Reliance found someone X Limited. X Limited gave guarantee that don't worry, if Reliance doesn't pay, I'll pay you the money. Now, can X Limited become a debenture trustee? No, sir. He's the one who has given the guarantee for this 100 crore. So the person who has given a guarantee is called as guarantor. He is the guarantor for the principal debt. What is the principal debt? This is the principal debt. If he is the guarantor himself, he cannot be trusted. He cannot become a debenture trustee. Debenture trustee has to be an independent position. That is why we are saying no to whom? We are saying no to everyone, sir. We are saying no to shareholders, employees or promoters. You have to receive money, you have to give money, or you have given guarantee. Everyone is disqualified. And the last one, if you have any pecuniary relationship with the company, don't read more than this. If you have any pecuniary relation with the company, sir, what is pecuniary relation? We said pecuniary relation is if the amount exceeds lower of 2% of gross turnover of the company, total income of such debenture trustee, or 50 lakh rupees, whichever is lower. If you will find the lower, if the lower came, for example, 50 lakh, and if the pecuniary relation, as in monetary relation, exceeds 50 lakh, then you are disqualified. So basically, sir, you should not have any transaction with the company, any monetary relation with the company exceeding the lower of these amount. What is lower of these? 2% of the gross turnover, total income, or 50 lakhs, whichever is lower. Come read along with me. 2% of the gross turnover, total income, or 50 lakhs, whichever is lower. If it exceeds this amount, then it is pecuniary relationship. Sir, this is your debenture trustee. Did you understand, sir? These people cannot become debenture trustee. Sir, can you remove a debenture trustee? Yes, sir. Who can remove? The debenture holders themselves, who hold 3/4 in value, can remove the debenture trustee. In your class, I had asked you to make the difference between debenture trustee and deposit trustee. Remember, debenture trustee can be removed by the debenture holders, but deposit trustee in chapter number 5 can be removed by the board of directors themselves. But here they can be removed by the debenture holder. Can he resign, sir? Yes, sir, he can resign whenever he wants to. But if he resigns when there is a casual vacancy, it has to be filled by the board. In case of any casual vacancy, it has to be filled by the board. But in case of resignation, sir, it has to be approved by majority of debenture holder. Sir, if the debenture trustee resigned, then you're bringing one new person, you will have to take approval of majority of debenture holders. Otherwise, you cannot fill this position. Okay. Are you with me? So this is appointment of debenture trustee. All right. Perfect. Sure. Perfect. Okay. Now, guys, coming to the last 2 points. Meeting of debenture redemption reserve. Important points. So this is more related to accounts, but we study it in law. You have to create a debenture redemption reserve and you have to invest or deposit such sum. Sir, how much DRR will you create? Sir, DRR will be created out of profits for dividend. Basically, free reserves. Okay. You'll use free reserves to create DRR. And in case of what will be the amount of DRR? It will be the 10% of value outstanding debenture. On sir, on 31st March, you will say what is the outstanding debenture. Of that, you will take 10% and you will create DRR. What will be the use of DRR? It will only be used for redemption of preference of debentures. So DRR is 10% usually created out of free reserves, out of profit for dividend, and it can be used for redemption only. So this is nothing but pure accounting entry, sir. Nothing to do with money. It is pure accounting entry. But on the other hand, sir, you will have to invest or deposit some money. This is about money. Here you are moving some money, actual money, not just accounting, but also moving some money. How much, sir? Sir, it says on or before 30th April of each year, you have to invest 15% or more of the debenture maturing during the year ending 31st March of the next year. Sir, what did I say? Sir, you will have to stand in a previous year. Okay, in a year. Okay, in a financial year. So before on or before 30th April, let's say financial year 25-26. So before 30th April 2025, let me use a better pen. Yeah. So this is your previous year 25-26. Now on or before 30th April 2025, you will have to invest 15% of the amount maturing in the 31st March of next year. What is 31st March of next year? So this is current year. 31st March of next year will be 31st March 2027. What is the amount maturing in this year? Sir, whatever the amount is maturing, 15% of that you will have to keep separate. And that you will have to invest in safe deposits, like you do fixed deposits or central government securities or safe deposit. And then you will use it for redemption of debenture. That money will be used for redemption of debenture. Now, what will be the minimum balance after that, sir? The minimum balance will be 15% of the amount maturing in the current financial year. What about whatever amount is maturing in the current financial year, 15% of that you will keep as a minimum balance. What did I say? Sir, invest or deposit such sum on or before 30th April each year. Invest 15% of the amount of debenture maturing during the year ending on 31st March of the next year. Investment or deposit not to fall below 15% of the amount maturing on 31st March of that year. Of that year. Sir, I had given you an illustration in class. I hope that will help you. Where will you deposit this money, sir? In scheduled bank or central government section? If you want to write this down, you can write this down. I'll keep it very simple for you. Sir, for the year 25-26, on or before 30th of April of 25, you will invest how much? 15% of amount maturing in 26-27. Where will you use this money for? Use this money for redemption. And what will be the minimum balance that you will keep? 15% of amount maturing in 25-26. Whatever amount is maturing in previous year 25-26, 15% of that you will keep as your balance. Did you understand, guys? Did you understand? Yes. So this is your debenture redemption reserve. If you note this down, I think it will be 100% clear. Okay. Now coming to the last point, sir. Sir, meeting of debenture holder. When will you call for? Who will call for the meeting of debenture holder, sir? The debenture trustee. On what scenario? If there is a request in writing by the debenture holder holding 1/10 of value. If there is a request in writing by debenture holder holding 1/10 in value. Sir, if debenture holder are asking for the meeting, you'll call for the meeting. Or if there is any event of breach or default as per debenture trustee, which may affect that interest of debenture holder. If something wrong has happened in the company and debenture trustee thinks that we should call for a meeting of debenture holder, then he will call for the meeting. So either the debenture holder has requested at least 1/10 in value, or if there is a breach or default, he will call for the meeting of the debenture holder. Sir, it is a big section, but it is a very important section. I hope this concept is clear to you. Sir, where can you find this notes? I want you to find this note. I want you to write here itself. So when I'm zooming in, you can see this is the zoomed version. This is the version. You can keep writing on your own from here itself. 100% attention. Sir, this chapter begins from section number 88 to section number 122. Today we are going to do some sections starting from section number 96 to as many as we could, maybe till 106. We will keep it short and then we will take it forward in the next session. Okay, guys. What is section number 88? Listen to me very carefully. Sorry, section number 96. Come to section number 96 straight away. What is section number 96, sir? Section number 96 talks about annual general meeting. Section number 96 talks about annual general meeting, a very important section. Sir, annual general meeting has to be conducted by every company. Every company has to take annual general meeting. When, sir? Sir, there are technically 3 time limits. One, it has to be taken each year. That is, you take the annual general meeting every year. Number 2, sir, it should be the maximum gap between 2 annual general meetings should not be more than 15 months. So between 2 meetings, the maximum gap should be 15 months. And the third one is that the first AGM has to be held within 9 months from the end of financial year. And the subsequent AGMs can be held within 6 months from the end of financial year. So basically, there are 3 time limits. AGM has to be held each year. Number 2, the gap between 2 AGM should be maximum 15 years. Number 3, the first AGM has to happen within 9 months from the closing of financial year. And the subsequent AGM should happen within 6 months from the closing of the financial year. Now, you can remove this particular line, sir. Listen to me very carefully. Sir, what if the AGM could not be held on time? So you said hold the AGM within 6 months from the close of financial year. What if I could not hold AGM at that time? Sir, if there is some special reason, then in that case, ROC may give you an extension. Or in case of special reason, ROC may give you an extension of up to 3 months, sir. Up to 3 months. You can get an extension of up to 3 months. But however, listen to me very carefully. Sir, if that extension is only for subsequent AGM, there is no extension in case of your first AGM. In case of first AGM, you will not get any extension. So basically, sir, if your company is incorporated, let's say on 1st April 2026 or 2025, when will you hold the first AGM, sir? Sir, your year will end on 31st March 2026 and the first AGM will be held within 9 months, that is 31st December 2026. What about subsequent AGM, sir? Subsequent AGM means AGM for the year 26-27 will be held by 30th September 2027. But if you could not hold it for any reason, then you may apply to ROC and ROC may give you extension of up to 3 months. But that is only for whom, sir? That is only for your subsequent AGM. It is not for your first AGM. For first AGM, you will have to conduct it by 31st December 2026. There is no extension. Now, after that, the next question is, sir, okay, we understood when to conduct AGM. Sir, but what is the time, place, what else? Sir? So the time is you can conduct AGM on any day except national holiday. Sir, you cannot conduct it on a national holiday. What is national holiday, sir? 15th, 2nd October, 15th August, 26th January. These are the only national holidays. So apart from that, you can conduct on any day. But what will be the timing, sir? Sir, the AGM which shall be called during business hours, that is 9 a.m. to 6 p.m. That is, sir, between 9 a.m. to 6 p.m. In the morning, 9 a.m. to evening 6 p.m., you will have to call for the AGM. Sir, I called for an AGM at 5:30 p.m. and it continued till 2 a.m. in the night. Is it okay? Is it okay if I call at 5:30 p.m. and I take it till 2 a.m. in the night? Is it okay? The answer is, as per law, there is no problem. As per law, there is no problem. We are only saying that the meeting has to start between 9 a.m. to 6 p.m. Now, it doesn't matter when it ends. You decide, your shareholders will decide. But for us, 9 a.m. to 6 p.m. Now, sir, what will be the place of AGM? So we said that it should be held either at the registered office or within the local limits of city, town, village where registered office is situated. Within the city, town, village itself. But listen to me very carefully. In case of an unlisted company, we said that unlisted company can hold it at any place in India. They don't have to conduct it in the registered office. They can hold it in any place in India. Only one condition. You have to take consent of all the members in advance. You can even go to Goa, but you'll have to take consent of all the members in advance. Only then you can conduct your AGM. Are you with me? Guys, are you with me? Yes, sir. You will have to take consent of all the members in advance. Like before the meeting, you have to take a consent for unlisted company. And what about government company, sir? Government company can take it in the registered office or within the city or any other place as approved by CG. CG may decide any other place. This is for government companies. But this is the provision of annual general meeting and which is very frequently asked in your exam. This is the best part of this book, sir. Your all the concepts are linked to the question bank. So you can just go to the question bank and you can check these questions and you'll be done with this section completely. But now, what did I tell you? I told you that section as per section 96, this is how you will conduct your AGM. Is that clear, sir? Yes, sir. Now, what about section 97 and 98? Sir, section 97 says that, listen to me very carefully. It says that if you could not conduct AGM because of some reason, sir, if the company is not calling for the AGM, then in that case, sir, any person may make an application to the tribunal. Any person can make an application to the tribunal. The tribunal, company is not calling for AGM. And in that case, tribunal will order the AGM. And in that case, tribunal will order the AGM. But listen to me. When tribunal orders such AGM, listen to me very carefully. When tribunal is ordering such AGM, in that order, tribunal can write that even if one member or even if one person, one proxy is present, even if one proxy is present, then quorum shall be deemed to be constituted. That is, there is no problem. It will be a valid meeting even if one person or even if one proxy is present. But this can only happen when the tribunal is giving the order. Listen to me very carefully, sir. What was the problem? AGM was not called by the company. So member made an application to the tribunal and tribunal is calling for an AGM. Similarly, sir, if EGM is not called by the company, not AGM. If EGM is not called and it is impracticable to call for an EGM, then the tribunal will order for the calling of an EGM either suo motu or on an application. And it may order that even if one person present in person or proxy, one member present in person or proxy will constitute a valid meeting. So irrespective of quorum, even if one person is coming, it will be valid. So basically 96 and 97 and 98 together, what they are saying, if the company is not able to call AGM or EGM, you inform the tribunal. The tribunal will call for the AGM or EGM. The tribunal will call for the AGM or EGM and it will be a valid AGM, EGM. And more importantly, even if one member is present, in person or in proxy, doesn't matter. Even if one member is present, he can say that it is a valid meeting. Okay, Raja. Okay, sir. Now coming to the next section, what is section number 99? So section number 99 talks about punishment for not calling AGM or tribunal's direction. So basically, if tribunal told you to call the meeting and you did not call the meeting or you did not call the AGM, in that case, the company and officer in default will be liable for a fine which may extend to 1 lakh rupees. And in case of continuing default, further 5,000 rupees per day. 1 lakh rupees fine and 5,000 rupees per day continuous default. Are you with me? 1 lakh rupees and 5,000 per day for every day of default. 5,000 is a big amount, sir. Now coming to the next section, very, very important section 100, calling of EGM. Guys, listen to me very carefully. I need your 100% attention. For those students who are my class students, you should repeat. You should read from the notes also that we made in the class. Okay. Okay, sir. Sir, section number 100, calling of an extraordinary general meeting. Listen to me very carefully. Sir, what is an extraordinary general meeting? So the meetings other than AGM are all extraordinary general meeting. Now, who can call for an EGM, sir? Sir, either the board of directors can call for an EGM or even the requisitionist can call for an AGM. Either the board of director or the requisitionist. Sir, now listen to me very carefully. When will the board of director call for an EGM? They'll call for an EGM when any time they think fit. Sir, at what time? Say 9 a.m. to 6 p.m. Sir, what place? Sir, they can call at any place in India. They have not written registered office. They said you can call the meeting at any place in India. But however, it has to be in India. You cannot go outside India. It has to be in India. But there is one exception, sir. If your company is a wholly owned subsidiary of a company incorporated outside India, if sir your company is a wholly owned subsidiary of a company incorporated outside India, then in that case, your company can take meeting outside India also. What did I say? Sir, usually you will call the EGM at any place in India. But if your company is a wholly owned subsidiary, partly owned is not allowed, wholly owned subsidiary of a company incorporated outside India, then in that case, you can conduct meeting at any place in India, sorry, any place outside India also. Sir, there is a question on this. There is a very good question on this concept.
Okay. Now, but you have to understand this is only for those companies which are subsidiary of a wholly owned company, wholly owned subsidiary of a company incorporated outside India. I think there was a question of Piramal Limited or something. You should solve that. Now, this is how the board can call for an AGM, sir. But what about other people? What if the board doesn't want to call for an AGM? What if the shareholders want to call for an EGM? How will shareholders call for an EGM, sir? Sir, for that, there is a minimum requirement. That if there is only so much of shareholder, they can call for an EGM. What is that minimum requirement, sir? Sir, board shall, at the requisition made by the shareholders, call for an EGM. How many shareholders, sir? If there is a company having share capital, then members holding at least 1/10 of the paid up share capital. 1/10 of paid up share capital. But if company is not having share capital, then at least 1/10 of the total voting power. So there should be at least 1/10 of the paid up share capital or 1/10 of voting power. Only then you can request the board to call for an EGM. How will that happen, sir? Listen to me very carefully, guys. Sir, these are the requisitionists. Listen to me very carefully. Let's scribble. Scribble as in write along with me or try to understand. Sir, this is requisitionist. Requisitionist will send a requisition to the company. Where, sir? At the registered office. Sir, the date is very important. This is the date of receipt of requisition. Date of receipt of requisition. Now, what will happen, sir? Sir, from the date of receipt of requisition, when the requisition is received, first of all, it should be a valid requisition. Valid requisition as in 1/10 of paid up share capital or 1/10 of voting power should be there. Okay. Now, guys, listen to me very carefully. What are these shareholders asking for? These shareholders want an EGM. So, law says that once you receive this requisition, within 21 days, you will have to send a notice for the general meeting. And then within 45 days, you will have to conduct a general meeting. But if you did not send the notice in 21 days, or if you did not conduct the meeting in 14 days, 45 days, then within 3 months, sir, the shareholders, the requisitionist will call for the meeting themselves. They'll call for the meetings themselves. They'll not ask you to call. They'll directly call. But sir, how will they know? How will the requisitionist get to know who are the shareholders? Sir, in that case, if the company could not call for the meeting within 45 days, then in that case, the board of director will share the details of the shareholder. Details of shareholder as in name, address, number of shares. These things you will have to share with the requisitionist. Now, requisitionist will prepare a notice of the meeting and then they will share it to all the shareholders. Sir, but what about the cost? What about the money? You'll have to pay some money for sending the notice. So that money will be reimbursed by the company. The company will reimburse such money to the to the requisitionist. And then company will deduct it from the remuneration of the board of director. It will be deducted from the remuneration of the board of director. They will deduct it from the board of director and then they'll send it to the requisitionist. Are you with me? Are you with me? Yes or no, sir? Yes or no? Did you understand? Sure. Yes, sir. All right. Perfect, guys. Okay. Now listen to me very carefully, sir. What did I say? I explained the whole process. Try to imagine. Requisitionist went to the company on that date. Company sent notice within 21 days. Company called for the meeting within 45 days. All done. If they could not, then the board of director will share the details with the requisitionist. They will send the notice to all the shareholders and they'll get the amount reimbursed and then it will be deducted from the board remuneration. But they will have to call for the meeting within 3 months. They'll have to call for the meeting within 3 months. Sir, now let's get into the details. Sir, the requisitionist will have to make a requisition. Requisition is a request in which they'll set out the matters, the signed by the requisitionist, and they'll send it to the registered office of the company. After that, sir, the board will call for the meeting within 21 days of the receipt of requisition, and the meeting has to be called within 45 days from the date of receipt of requisition. So within 21 days, you have to send the notice, and within 45 days, you have to take the meeting. But if you could not, on failure of the board, then requisitionists may themselves call within 3 months from the date of requisition. Within 3 months. However, whatever expenses were there will be reimbursed to the requisitionist by the company, and it will be deducted from the remuneration of the directors. It will be deducted from the salary of the directors. Now, guys, listen to me very carefully. Sir, now, when the requisitionists are calling the meeting, sir, what will be the date? Sir, the date of the meeting will be any day except not national holiday. But where will you call for the meeting, sir? Sir, generally EGM can be held at any place as in wherever in India you want to. But when requisitionists are calling for the meeting, they will hold it only in the registered office or in the same city town where the registered office is situated. They will not go outside of the city town when requisitionists are calling for EGM. So if someone asks you, where will you hold the EGM? Sir, ideally it can be held in any place in India. If you want to go outside India, then you should be a wholly owned subsidiary of a company incorporated outside India. But however, if the meeting is being called by a requisitionist, then in that case, it has to be held in the registered office or in the same city or town village. Now, listen to me very carefully, guys. Sir, after that, please listen to me very carefully. So the board of director will have to share the list of members, their address, and the number of shares with the requisitionist. Okay. Now, how will you send the notice, sir? So the notice will be sent by a speed post, registered post, or electronically. And accidental omission. That is, if you could not send the notice to some person due to mistake, accidentally you could not send the notice, sir, it will not invalidate the meeting. The meeting will be valid. It will not be a problem. Are you with me? Yes, sir. Now the question is, sir, when the requisitionists are asking the company that, boss, please call for an EGM. Sir, are they required to give the reasons for calling an EGM? Sir, they are not required to give the reasons. Are they required to give the reasons? No, sir, they are not required to give the reasons. This was decided in LIC versus Escorts Limited. This was decided in LIC versus Escort Limited. This is your whole section number 100, which talks about EGM. Am I clear? EGM. Am I clear, sir? Yes, sir. Now, moving to the next section, sir, section number 101, which talks about the notice of a meeting. Guys, in order to call for any meeting, you have to send the notice, right? Law says that you have to send notice of at least 21 days notice, and it has to be in writing. It has to be in writing. Sir, this 21 days are clear days. 21 clear days. What is 21 clear days, sir? Clear 21 days means, sir, you exclude the date of service of notice and the date of meeting. Sir, so for example, if I tell you that if I sent you a notice on 31st 31st August 31st August 2025, and I called for the meeting on 22nd September 2025. Sir, how will you count the number of days? Sir, you exclude 31st August. You count from 1st September. So 1, 2, 3, 4, 5, 6, you go till 21. Then you exclude 22 also, because this is the date of meeting. So you exclude the date of service and the date of meeting, and then the gap should be 21 days. So 21 clear days, no confusion. But sir, the question is, if I don't have 21 days, can I send a shorter period notice? Sir, yes, you can send a shorter period notice, but you should have a consent already. Consent of whom, sir? Sir, if it is an AGM, you need consent of 95% of members who are entitled to vote. 95% members who are entitled to vote. But in case of, sir, EGM, it depends on whether it is a company having share capital or company not having share capital. Sir, in case of company having share capital, you need majority in numbers representing not less than 95% of paid up share capital. Sir, dual limit. You see, there is dual limit. You just don't want 95% of paid up share capital. You want majority numbers also. Sir, what are you trying to do? You are trying to call for a meeting on a shorter notice. What is shorter notice? That is less than 21 days. Sir, in that case, if it is an AGM, you take consent of 95% of the members who are entitled to vote. So every voting member, 95% of the members. But here it is 95% of paid up share capital and majority in number. There is dual majority. And in case of company not having share capital, you just take 95% of voting power. A very interesting limit, sir. Sir, if these people have given their consent, you can call for a shorter period notice. Shorter period notice. You can call a meeting in a shorter period notice. But guys, listen to me very carefully. The consent has to come first, and then you send shorter period notice. But if, sir, by mistake, if I was supposed to give 21 days notice, but by mistake I gave 19 days notice. Later on, I said, shareholder, I'm sorry, Ray, sorry, is it okay? Shareholder cannot condone the delay. There is no provision for condonation of delay. You cannot say, okay, no problem. No, no, sir. What is condonation for delay? Condonation for delay is basically, uh, for example, if I ask you to submit the test today, if I ask you to submit the test today, if you could not submit it today, tomorrow you'll come to me and say, sir, sorry, this and this happened. So sorry, sir, I could not submit yesterday. Please take my test paper, sir. So I'll take it. That is condonation for delay. I forgave you for your mistake. But now, in case of shorter period notice, if the approval was not taken first, later on the delay cannot be condoned. There was an exam question on this, sir. Okay. Now listen to me very carefully, sir. To whom will you send the notice? Sir, the notice will be sent to every member, to all the through the auditor of the company, to directors of the company. So it will basically send it to mad people, member, auditor, and director. But however, in case of death of the member, you will send it to the legal representative. And if the member have become insolvent, you'll send it to his assignee. Whosoever is the assignee, you will send it to them. So member, auditor, and director. So mad people. I say mad people as in member, auditor, director. Now, guys, listen to me very carefully. Accidental omission will not invalidate proceeding. If by mistake you could not send the notice to any specific person, it will not invalidate the proceeding. The proceeding will be still very much valid. Are you with me, guys? Yes, sir. Sir, are you with me? Sure. Yes, sir. Perfect. Okay. Okay, sir. Now listen to me very carefully, guys. Please, sir. This is your sending of the notice. Now, how will you send the notice, sir? The question is, can you send the notice via an electronic mode? Can you send the notice through an electronic mode? Law says, yes, sir, it is a statutorily recognized mode. That via email, if you want to send, it is statutorily recognized. That is, it is legally allowed. It is legally allowed to send notice through a electronic mode. Then after that, please understand, when you send the notice, it can be sent as a text, attachment, or a URL. It can be a text, attachment, or a URL. The notice can be sent in the form of a text, attachment, or URL. I call it as TAU, text, attachment, or URL. After that, listen to me very carefully. So the email has to be addressed to the entitled person, and the company will allow you to change or add the email at least once in a financial year. You have to write these 4 points. You have to write these 4 points. If someone asks you, can you send a notice via email? Don't say yes. Say that yes, we can send a notice via email. It is a statutorily recognized mode. Number two, it can be sent in the format of a text, attachment, or URL. Number three, it has to be addressed to an entitled person, the person who is entitled to receive it. And number four, you will allow, the company has to allow adding the name or changing the name at least once in a financial year. If all these four conditions are satisfied, only then we will allow you to send via email. Okay, sir. Sir, a few questions. Listen to me. Sir, can an individual director call for a general meeting? Who will call for a general meeting, sir? Sir, one director cannot call. The board of directors, as in all the directors have to together decide. One director cannot decide. Is it okay, sir? Yes, sir. Sir, number two, company's obligation to send notice shall be satisfied when it transmits the email. Company cannot be held responsible for the transmission of email beyond control. For example, sir, I sent you an email, but you did not receive that email. You cannot shout at me saying, Arey, you didn't send the email. Arey, boss, I sent the email. My responsibility is only to ensure that I properly send it. Now, it is not coming to your box. That is your problem. That is not my problem. Okay. Okay, sir. Now, please understand that, sir. That is more or less. Now, coming to the next section. Section number 102, very important, very important. Please listen to me very carefully. Sir, what is section 102? We'll keep it a very short session. We are going to read anyway till section 105. So we'll keep it a short session, but listen to me along with, keep listening to me. Okay. Okay. Guys. Sir, what is section 102? Section 102 talks about explanatory statement. Explanatory statement as in, please try to understand. In your Companies Act, there are two kinds of business. One is ordinary business and one is special business. Sir, what is ordinary business? Hello. Sir, what is ordinary business and what is special business? So I'll tell you. In special business, if we talk about special business, listen to me. I'll tell you first what is ordinary business. Sir, in the AGM, when you do these four things, it is ordinary business. What four things, sir? Number one, consideration of financial statement and approval thereof. Consideration of financial statement and approval thereof. declaration of dividend, appointment of director in place of retiring director. Appointment of director in place of retiring director. And number 4, appointment and fixing remuneration of auditor. So when you are talking about remuneration, you are only talking for auditors. But for directors, we are not talking about remuneration. We are talking only about appointment of directors in place of retiring directors. So guys, 4 business, your consideration of financial statement, declaration of dividend, appointing of director in place of retiring director, and appointment and fixing remuneration thereof. All these 4 business are special business, sorry, ordinary business in an AGM. In AGM, when you do these 4 things, it is ordinary business. But apart from that, every other business is a special business. Sir, anything that you do in EGM, anything and everything, that is all special business. Why, sir? Sir, it cannot be ordinary business. The name of the meeting is extraordinary general meeting. Every business there is a special business. So ordinary businesses in AGM, when you do these 4 things, it is ordinary business. In AGM, other things are special business, and in EGM, everything is special business. I've summarized it here. You can see, sir, for AGM, these 4 things are ordinary business. Other things are special business. In EGM, there is no special ordinary business. Everything is a special business. Now, what is the point, sir? What is the point? The point is, sir, if you are sending a notice and in that there are some special business, sir, you will have to attach explanatory statement. Come on, repeat with me. What will you attach? You will attach an explanatory statement. What is the purpose of that explanatory statement, sir? In that, you will say 2 things. Number 1, sir, in that explanatory statement, number 1, you will show the nature of interest, whether financial or otherwise, of each items of director, manager, key managerial person, or relative. So, for example, if you are entering into a transaction, you have to show whether your director, key managerial person, or their relatives are interested in such transaction. You'll have to disclose their interest. And number 2, you will state any other information or fact that is relevant for decision making. So you'll give more and more details, sir. You will disclose other facts and information which is relevant for decision making. So 2 things. You will disclose your financial or other interests, yours as in your manager, director, key managerial person, or their relatives. And you will disclose any other information which is relevant for decision making. What do you mean, sir? So for example, if I want to issue a right shares, I want to issue right shares. So I have to tell you, right, that I'm issuing 1 share for 1 right share for 1 share, or 5:1. What is the ratio? I have to tell you, right? If I don't tell you that, can you make a decision? No, sir. So I have to give you all the information or facts that will help you understand the resolution and take a decision. Okay. These are the 2 things that I have to do. But listen to me very carefully. Sir, what if I did not disclose the first one? If I was to disclose the interest of my director, manager, key managerial person, but I did not disclose it. I chose to stay silent. In that case, sir, if any benefit accrues to the promoter, director, manager, key managerial person, or their relatives, if anyone is getting a benefit out of that, sir, they will hold such benefit in the trust of the company. That is, they will have to give that benefit back to the company, and they'll be liable to compensate the company to the extent of such benefit. That is, they will hold it in the trust of the company, and they'll have to give that money back to the company because that benefit is of the company, sir. I've given you a lot of examples in the class, Raja. This is a revision in our classes. We discuss this completely, that what is each and every point we discuss, right? You know that, correct? So now what I'm telling you is, in section 102, there is ordinary business, there is special business. What is ordinary business? In AGM, in AGM, when you do these 4 things, one, you consideration of financial statement, declaration of dividend, appointment of director in place of retiring director, appointment of auditor, and fixing remuneration thereof. These 4 business in an AGM is considered as ordinary business. Apart from that, everything else in AGM or everything in EGM is special business. For special business, you have to do 2 things. One, disclose your interest, financially or otherwise. And number 2, you give all the information. But if you did not disclose your interest, then if any benefit got accrued to the promoter or the director or the key managerial person, then they will hold it in the trust of the company, and they'll have to compensate it to the company. They'll have to compensate it to the company. Okay. One extra point, sir, listen to me very carefully. That one extra point is, sir, in case of special business, if there is a special business that is going on between 2 company, one company and the other company, sir, where there is a special business with other company, then, and the shareholding of your promoter, director, manager, or the key managerial person is not less than 2% of paid up share capital. Sir, if there is a transaction between B Limited and A Limited, and the promoter, director, key managerial person, etc., they are holding more than 2% of paid up share capital, more than equal to, then in that case they will have to disclose that also, sir. They shall be set out in the explanatory statement. You will have to disclose those things also. You'll have to disclose shareholding also. This is a special disclosure, sir. This is specifically saying only if the shareholding is more than equal to 2%. More than, it is not less than 2%, it means it is equal to 2% or more than 2%. In that case, this provision applies. This is your section 102. Did you understand, sir? Did you understand? Yes. Perfect. Okay, sir. Now coming to the next very, very, very important section, which is your section 103, which talks about quorum. Which rum? Quorum. Quorum, what is quorum, sir? Quorum is the minimum number of members which are required to be present in a meeting in person. In person present in a meeting for to make the meeting a valid meeting. To make the meeting a valid meeting. So what is quorum, sir? Listen to me very carefully. Sir, unless article provides for a larger number, that is quorum, articles can give you a larger number. But unless that happens, what is the quorum? In case of a public company, the quorum is up to 1000 members, 5 members personally present. More than 1000, but up to 5000 members, 15 members personally present. More than 5000 members will be 30 members personally present. So basically, quorum is in case of a public company, not more than 1000 members, then 5, 15, 30 members personally present. That is, you count those members who have actually come. You will not count those members who are proxy. Proxy will not be counted. You'll only count those members which are personally present. In case of a public company. But in private company, we said only 2 members personally present will be considered as quorum. Okay, guys, now listen to me very carefully. Guys, please listen to me very carefully. Sir, when you call for a meeting, hello, sir, listen to me very carefully. When you call for a meeting, let's say I called for the meeting at 10 o'clock, 10 a.m. in the morning. Sir, the quorum has to be checked in the within 30 minutes. After 30 minutes, you'll have to check the quorum. Sir, if the quorum is present, as in the minimum numbers of members are present, then it will be a valid meeting, no problem, sir. But sir, if the quorum is absent, then in that case, sir, usually what will happen? The meeting will be adjourned. The meeting will be adjourned. That is postponed to a next date. But sir, if the meeting was called by requisitionist, if the requisitionist has called the meeting under section 100, if it was an EGM called by the requisitionist, it will not adjourn, sir. It will get cancelled. It will get cancelled. They'll cancel it. They'll not adjourn it. But otherwise, if the quorum is not present within the 30 minutes, that is, even 5 members were not personally present, or in case of private company, if even 2 members were not personally present, you will adjourn the meeting, sir. Adjourn as in to a later date. Now, what will be the later date, sir? Sir, the later date will be same time, same place, same day, next week. Everything will be same, just that next week. So instead of today, as in Wednesday, you'll go to the next Wednesday. Same time, same place, same day, everything will be same. Date will be different. So it will be adjourned next week. Now the question is, sir, but what if you don't want to adjourn it to next week? You want to say, no, no, not next week. We'll do it after 2 months. Okay, sir, you can do that also. So basically, you can adjourn to the next week also, or to such date as the board may decide. But sir, now, will you give the notice for an adjourned meeting? Do you have to give the notice for an adjourned meeting? We said, see, boss, notice is generally sent 21 days before the meeting. So it is not possible to send the notice here, but at least before the meeting, 3 days before that, either we will inform each one of them individually, like one by one, we will inform them, all the shareholders, or we will give an ad in the newspaper that, boss, after 3 days, we have our adjourned meeting, you should come. Okay, so basically, at least 3 days before, you inform individually or through the newspaper. So what did I say, sir? Let's try to understand. Please try to understand again. What did I say? Sir, you have to check within half an hour quorum. Now, if quorum is not present within half an hour, the requisitionist meeting will stand cancelled. But however, other meetings will either be adjourned to next week or such other date as the board may decide. Board can also decide that I don't want next week, I want at a later date. But sir, however, in case of adjourned meeting, the company will give 3 days notice to the member either individually or you publish it in the newspaper, 2 newspapers, sir, always English newspaper and vernacular newspaper. Sir, what if shareholders are not present in the adjourned meeting also? Once you called for the meeting, quorum did not come. You adjourned it. In adjourned meeting also members are not present. In that case, sir, the members present will be deemed to be quorum. That is, for example, if my company had 900 members. Sir, what is the quorum for me? Quorum is 5 members. I called for the meeting, only 3 members came. So I could not conduct the meeting. I adjourned it to next day, to the next week. In adjourned meeting also, sir, only 4 members came. What was the quorum, sir? The quorum was 5, but 5 did not come. No problem, sir. Members present will be deemed to be quorum. But at least there should be one member. Huh? At least there should be 2 members. Huh? One member cannot be a quorum. There should be at least 2 members. Sir, can one member ever constitute quorum? Can one member ever constitute quorum? Yes, sir. In section 97 and 98, do you remember when tribunal calls for a meeting? Tribunal can get angry and say, hello, one person is coming. Okay, valid meeting. So tribunal can do that, but apart from that, one member cannot constitute a quorum. Are you with me? Are you with me? Yes, sir. Now listen to me very carefully, sir. When you are studying about quorum, one thing is very carefully written that members should be personally present. What do you mean by members personally present? How can they be present otherwise? Sir, when you're saying personally present means, are you saying they should not be there in video conferencing? No, 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 no. When we are saying personally present means we are saying you proxy will not be counted. What is proxy, sir? Proxy is that instead of you going to the meeting directly, you send someone else on your instead of you going directly, you send someone else on your behalf. So proxy, what is proxy, sir? If listen to me, if I am a shareholder of Reliance, okay. And if I can attend the meeting and I can vote in the meeting. If I have the right to attend in the meeting and vote in the meeting, then I have the right to appoint a proxy on my behalf who will go and attend and vote at the meeting. Proxy on my behalf who will go and attend and vote at the meeting. So basically come to section 105, which talks about proxies. Guys, any member who is entitled to attend and vote may appoint any other person to vote on his behalf. But please understand, sir, proxy will never vote in case of show of hands. In show of hands, proxy will not vote. Proxy only votes when it is a case of poll. Whenever it is a case of poll, proxy becomes very active. Even do you know that proxy can even demand for poll? Proxy can say, no, show of hands is not okay with me. You please do a poll. This can be demanded by a proxy. But listen to me, proxy has no right to speak in the meeting. He cannot speak in the meeting, but he can only vote on a poll. When there is a poll voting, he can vote on that. But sir, the question is, if I want to become a proxy, can I become a proxy? Yes, sir. For how many members can I become a proxy? Law says that you can become a proxy. Listen to me very carefully. You can become a proxy for 50 members, and their total should not exceed 10% of share capital voting rights. Sir, you can become a proxy for maximum 50 members holding maximum 10% of voting power. So if you are going as a proxy, you can become proxy for up to 50 members or up to 10% of voting power, not beyond that. But sir, what if there is one person who has 15% voting power? For example, Mukesh Ambani holds 51% of Reliance, for example. He wants to appoint a proxy. How will he appoint, sir? Because you said you can become proxy for maximum 50 members or maximum 10% of voting power. Sir, in that case, if a single member is holding more than 10, you can become proxy for that member, but then you cannot become proxy for any other member. You can become proxy only for Mukesh Ambani, not for anyone else. Okay, so please understand, you cannot have too much of power. You cannot have more than 10% voting power. So basically, up to 50 members having 10% of voting power. But in case if single member has more than 10%, you can become proxy, but you cannot become proxy to any other members. You cannot become proxy to any other members. Sir, I have a question. If Reliance has two shareholders, shareholder A, shareholder B, B doesn't want to go. B wants to appoint someone as proxy. Is it necessary that he appoints a shareholder only, or can he appoint any person as his proxy? Law says that, sir, in case of a company, you can appoint any person as your proxy. Even if he is a shareholder or not, it does not matter. You can appoint any person as a proxy. But sir, in case of a Section 8 company, only members can become proxy. Other people cannot become proxy. So if B wants to find a proxy, he will have to approach A. He cannot send some random person to the meeting of a Section 8 company. And all these things that I'm telling you will be written in the notice of the meeting, sir. You know what will be written in the notice of the meeting? Sir, when you get a notice of the meeting, number one, they will tell that you as a shareholder, you have the right to appoint a proxy who will attend on your behalf and vote on your behalf. Number two, you will write that the proxy need not be a member of the company. It is not mandatory that proxy is a member of the company. It can be any person. But Section 8 company cannot write this line, sir. Because in Section 8 company, only a member can be proxy. Are you getting my point? Guys, are you getting my point? Yes, sir. Sir, what after that? Listen to me very carefully. Sir, now there are two things. If you want to become a proxy, become a proxy, there are two things. One, you have to submit a proxy form. And number two, you can do inspection. One, you have to submit a proxy form. And number two, you can do an inspection. Sir, what do you mean by submission of proxy form? Listen to me very carefully. Sir, submission of proxy form means that you will have to sign a form called SH11. SH11? No, sir, management and administration. So you will have to take a form MGT11. In that MGT11, you will fill the details of the proxy and you will have to submit it to the company at least 48 hours before the general meeting. At least 48 hours before the general meeting. And trust me, this 48 hours timeline cannot be made 24 hours. It cannot be made 72 hours. It is fixed. You will have to submit the proxy form at least 48 hours before the general meeting, and only then your valid proxy form is valid. Now, if someone submits it before 48 hours, it is valid. If someone submits it after 48 hours, it is not a valid form. So, for example, if the meeting is on 15th October 2025, you'll have to submit at least a morning 10 a.m. You'll have to submit it by 13th October 25 morning 10 a.m. If you submit after that, it will not be valid. So now tell me, if someone wants to inspect this form, if you submitted a proxy form and I want to inspect it, can I inspect it? So law says that you can do the inspection, but you will have to send a notice for the inspection. Notice for the inspection. You will have to send a notice for the inspection, and that notice for inspection has to be sent at least 3 days before the general meeting. At least 3 days before that, you will have to inform the company that, hello, I want to inspect the inspection for, I want to inspect the proxy forms. And then when can you inspect, sir? Sir, starting 24 hours before the general meeting, 24 hours before the general meeting, till the end of general meeting, you can inspect during business hours. You can inspect during business hours. Sir, so what did I tell you? There are certain time limits that you need to remember. Here you go. Sir, this is the start of general meeting and this is the end of general meeting. Okay. Sir, 48 hours before. Okay. You have to submit form MGT 11. If you want to inspect 3 days before, you'll have to give a notice for inspection that I want to inspect. And when can you inspect? So starting from 24 hours before the general meeting till the end of general meeting, during business hours, you can go and inspect that proxy form. So this is the time limit that you have to understand. Proxy form has to be submitted 48 hours before, but if you have to inspect it, you have to send a notice 3 days before. But inspection can be done 24 hours before the start of the general meeting till the end of general meeting. Okay, so these are the time limits that you have to be absolutely careful about, and that is your section 105, which talks about proxy. Now, listen to me very carefully. When proxies attend the general meeting, you don't count them for quorum. Proxies are not counted for quorum. Only members who are personally present will be counted for the purpose of quorum. Now, to give a closure to this topic, sir, we have to also read section 115 and 116 along with 114 and 112 and 113 along with it. Look at my screen. Sir, what is 112 and 113? Sir, 112 says that representative of president or governor. Sir, in my company, central government and state government could be the shareholders. If central government is the shareholder, it is held in the name of president. If state government is the shareholder, it is held in the name of governor. Now, president and governor, they will not come to my meeting directly. So they will send a representative. Sir, that representative is considered as a member, not a proxy. He has all the rights as that of a member. So that means that he has all the rights of that of a member, means that when representative attends the general meeting, he will be counted for quorum. Proxies are not counted, but representative will be counted. Moreover, If representative wants to appoint a proxy, they can do it because representative are treated as a member. You just have to read this line. They will be deemed to be a member of the company. They will have to have a right to vote, and they can also appoint proxy. So basically, representative are as good as members, not as bad as proxy. And similarly, sir, even companies can send representative. Even companies can send representative because companies cannot come themselves. Those representative will also be treated as members. But listen to me very carefully. If I myself, Shubham Singhal, if Reliance appointed me as a representative and Adani also appointed me as a representative, then in that case, I will be counted as two members for the purpose of quorum. You didn't listen to me. Now listen to me very carefully. If I am coming to the meeting of Tata, Reliance is the shareholder, Adani is also a shareholder. Reliance appointed me as a representative. Adani also appointed me as a representative. So I'm representing two companies, Reliance and Adani. So now I will be counted as two members and not one member. So for quorum, I will be counted as two. If you have understood this clearly, now solve this question along with me, sir. Sir, A Limited is a company having 1200 members. Evaluate the quorum is present or not. So for 1200 members, the quorum is 15 members personally present. Yes or no? Yes, sir. Now let's see how many members are present. A, B, C are shareholders of A Limited, 3 members. D and E are joint shareholder. So joint shareholders will be counted as 1. Okay. F, G and H are preference shareholder. Sir, only for those decisions where preference shareholder can vote, only for those resolutions you will count preference shareholders, but otherwise you will not count. So we'll take it as no. We'll think that there is no voting for preference shareholder. Next, Y and Z are X and Y are proxies. No, sir, we don't count proxies. P is a representative president. Okay, one. G is a representative governor. Okay, one. H is a representative of body corporate. Okay, one. M is a representative of body corporate 3 and body corporate 4. Okay. 2. It will be counted as 2. So 2, 3, 4, 5, 6, 7, 8, 9. So total 9 members. Quorum is not met. Quorum is not met because your members are not present. Okay. Now next question, sir. Listen to me very carefully. Sir, you check quorum at the start of the meeting, right? Within 30 minutes. Okay. Quorum was present. Now will you check quorum throughout the meeting or just at the start? Should quorum be present throughout the meeting or just at the start? Sir, quorum should be present throughout the meeting. Throughout the meeting, quorum should be present. Just at the start is not enough. Quorum should be present throughout the meeting. Only then the meeting will be valid. If the quorum becomes absent, then all the resolutions taken after that will be invalid. The resolutions taken after that all of them will become invalid. Are you with me? Did you understand, sir? Yes, sir. Sir, this is your section number 112 and 113. Now, coming back, we will have to do 104, 106, and then I'll end the session. Sir, what is section 104? Very small section, sir. Nothing important. Chairman of a meeting. Please listen to me very carefully. How do you appoint the chairman of a meeting? So, the first thing is AOA. In AOA, you can clearly write who is the chairman. For example, in Reliance, it is clearly written that Mukesh Ambani will be the chairman of a meeting. Of general meeting. We are talking about general meeting here. But sir, if they have not written anything, then the members personally present will select by show of hands. How will they select? By show of hands. They'll select someone to be a chairman. But however, sir, in that, while you're doing that, poll may be demanded. So you are trying to vote by show of hands, but someone said, no, 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 we want to do a poll. So poll may be demanded. Now, if poll is demanded, then who will conduct the poll, sir? So, for example, by show of hands, you appointed Mr. Ram as the chairman. Okay. Now, someone demanded for the poll. Who will conduct the poll, sir? Sir, Mr. Ram will conduct the poll. Until the end of the poll, Mr. Ram will be the chairman. Now, after the poll results are out, if, for example, Mr. Sham gets appointed, Mr. Sham will be the chairman. So, basically, if poll is demanded on an election of chairman, chairman elected under subsection 1, that is, chairman elected by show of hands, will continue to be chairman until some other person is elected as chairman. And such other person shall continue for the rest of the meeting. Okay. Sir, what is the role of the chairman? Sir, the role of the chairman is to maintain decorum of the meeting. They'll ensure that there is a decorum in the meeting. And the very important role is if AOA allows, if article of association allows, then the chairman will have a second vote or casting vote. What is second vote or casting vote, sir? Second vote or casting vote means that, for example, if there is a tie, as in 5 people voted in favor, 5 people voted against such resolution. 10 people voted, 5 in favor, 5 in against. It's a tie. Now, who will bring you out of that tie? Chairman. Chairman will get a second chance. Chairman will vote again and chairman vote will be counted. He'll get a casting vote. This is your section number 104, which says that chairman will be appointed by show of hands or poll may be demanded. Okay. Now, that brings us to next section, section 106. And the last section for today. Sir, 106 talks about restriction on voting rights. There are questions on this section. Sir, you remember that equity shareholder can vote on all the resolutions and preference shareholder can vote on only those resolutions that affect them or resolutions related to winding up, etc., etc. Correct? Now the question is, sir, you said that voting. Okay, you said about voting. Now listen to me very carefully. Sir, now the question is, can you stop someone? Can you tell a member, hey, you cannot vote? Law says that yes. Sir, law says that AOA may provide for AOA. If AOA allows you this power, then you can restrict the voting right of person whose call is unpaid or where the company has exercised any right of lien. If the call is unpaid, if there is some unpaid calls in arrears, or if the company has exercised right of lien on their shares, in these two cases, if AOA allows you, then you can restrict their voting rights. You'll say that no, boss, you cannot vote until you make the full payment. But apart from that, there is no reason where you can restrict the voting right. Except for the above, a company shall not prohibit voting rights. Sir, in case of poll, members are entitled to more than one vote, need not use all its vote or cast it in the same way. It means what, sir? Sir, if I have 100 votes, I can decide to vote in favor for only 80 votes and remaining 20 votes, I may not use it. Or it may be possible that votes against can be 20 votes. I can say that 20 votes are against such resolution, for 80 are in favor. Although it is nonsense, but I get to choose, sir. Each and every vote. It is not 100 vote. It is 100 different votes. I can use it the way I want. Okay. Now, what if it is a case of joint shareholders, sir? How to joint shareholder decide? Sir, ideally speaking, joint shareholder must concur. As in they should agree with each other. But if they do not agree with each other, we will go in the order of seniority. That is the person whose name appears in the name appears first in register of member. He is a senior shareholder, and his decision will be taken. His decision will be considered. So whenever there are joint shareholders, they should agree with each other. But if they do not agree with each other, no problem. We'll take it in the order of seniority. Okay. So this was your section number 106. Now that's it for today. We will continue it in the second half. Tomorrow we are going to continue the voting process and then maybe we'll have a third session also. We'll decide that tomorrow. Okay, guys. We'll keep it very short. We'll keep it very quick so that it is very convenient for you to watch and understand.
To put your focus. Are you ready, sir? Okay. Let's begin chapter accounts of companies, section number 128 to section number 138. Very small chapter, sir. Let's say like that, let's feel like that, a very small chapter, but we will read it very comfortably, sir. This chapter talks about what? Accounts of companies. Guys, listen to me very carefully. There is a basic difference between books of accounts and financial statement. Can you tell me what is the difference? Sir, financial statement, financial statement, participate with me. Financial statement means profit and loss account, balance sheet, cash flow statement, explanatory notes, and statement of changes in equity. But what is books of accounts, sir? Sir, books of accounts is the background work that you do before preparing your financial statement. Sir, books of accounts, you don't call it cash flow statement. You write down money received and money spent, your sales and purchase, your assets and liabilities. This is what your books of accounts. Then after, so journal entry, ledger and trial balance is considered as your books of accounts. Apart from that, there are a lot of other things also, sir. Sir, do you know what is the difference between books of accounts and books or papers? Or books and papers? Sir, books of accounts is a narrow word. Books and paper is a broader word. Any sort of your deeds, documents, invoices, paper, everything, even books of accounts, all of these together is called as books and paper. So guys, let's start with the basic definitions. Sir, what is books of accounts? Books of accounts means records of sums of money received and spent, sales and purchase, assets and liabilities, and cost items. Sir, basically we don't write balance sheet, cash flow statement and P&L. We write sums received and spent, sales and purchase, and assets and liabilities. You know the definition of financial statement. Financial statement means what? Balance sheet, P&L, cash flow, statement of changes in equity, and explanatory statement. Guys, can you tell me, cash flow is not needed in case of 4 companies. What are those 4 companies? One person company, small company, dormant company, and a private company which is registered as a startup. If you're not a startup, you'll have to make cash flow statement. But if you're a startup, you will not have to make a cash flow statement. Now coming to the next part, what is books and paper? Sir, books and papers basically includes everything. Even it includes books of accounts. So books and papers means books of accounts, deeds, vouchers, writings, documents, minutes, registers. Everything will be considered as books and paper. This definition is not going to come in exam. Or it may. I'm not challenging ICI. I'm no one to say that it will not come. It may not come in exam. Okay, are you with me? It is on you whether you want to read this may as shall or not, but it may not come in the exam. Are you with me, sir? Yes. Now section number 128. Okay, section number 128. What is section 128? Books of accounts. Sir, what is 128? Books of accounts. What is 129? Financial statement. Listen to me very carefully. Basic concept, sir. Sir, every company will have to prepare books of accounts, giving a true and fair view. Giving what? True and fair view of the accounts of the company. Sir, can you tell me whether books of accounts will be as per single entry or double entry? Double entry. Cash basis or accrual basis? Accrual. So accrual basis, double entry system. Now guys, listen to me very carefully. Sir, books of accounts, where will I keep my books of accounts? So the books of accounts will be kept at the registered office of the company. Hello. Where will you keep it? Registered office. Sir, you are the shareholder of the company. I am the management of the company. Who will prepare book of account? You will prepare or I will prepare? Management as in board of director. Who will prepare? I will prepare, sir. Sir, can you see the books of accounts? It is your company. Can you come and see the books of accounts? No. You can come and see the financial statement. Books of accounts is my work. On that books of accounts, I'll build what? Financial statement. That financial statement will be yours, but books of accounts you cannot come and see. Can auditors see, sir? Of course. But sir, question is, where will I keep the books of accounts? At the registered office. Or I can keep it anywhere. No. How does it matter to you? It does not matter to you. So the board can decide to keep the books of accounts anywhere in India. In India. But for, sir, if I decide to keep it somewhere else, for example, I decided to keep in Goa. Why, sir? Goa. Okay. Why Goa, sir? What did you understand? What did you understand? So I decided to keep it in Goa. Law says you keep it in Goa, but do only one thing. You go and intimate to your ROC within 7 days. Inform AOC 5. You'll say to the ROC that, ROC, I have kept my books of accounts in Goa, and you give the detailed address of Goa. Why is a detailed address? So that ROC can go and whatever the reason why you kept books of accounts, ROC should know where did you keep the books of accounts. So sir, books of accounts may be kept at other place in India. You'll have to inform ROC within 7 days in the form AOC 5 giving the full address. Guys, are you with me? Yes, sir. After that, listen to me very carefully. Sir, can you keep the books of accounts in electronic mode? Sir, everyone keeps the books of accounts in electronic mode only. Sir, what is the electronic mode? Can you tell me what is electronic mode? The electronic mode is basically Tally. You know Tally is the software. You can keep your books of accounts in Tally. Absolutely yes, sir. But there are some things that you should take care of. Sir, read the keywords only. First of all, it should be accessible in India at all times. As in, I can access the software in India at all times. Number 2, there should be some features of the software. What features, sir? Number 1, it should be capable of recording audit trail. Sir, what do you mean by audit trail? Audit trail means when did you log in into the system, which entry did you change, what amount did you change, what narration did you change, everything will be captured. So it should be capable of recording audit trail, ensuring that audit trail cannot be disabled. For example, tell me, sir, how can I secure this classroom? By putting a camera here. But for example, imagine I put a camera here and the switch of the camera I put outside the door. So that if any thief wants to come, he can just switch off the camera and come very easily. Is it a control? No, sir. Your software should have audit trail and make sure that audit trail cannot be disabled. And the third thing is it should be capable of creating edit log. It should be capable of creating edit log. Guys, are you with me? Yes, sir. These are the 3 features of the accounting software. Sir, number 1, it should be accessible in India at all the times. Number 2, it should have a feature of accounting audit trail and maintaining edit log. Number 3, sir, it should be the books of account shall be retained completely in the original format, complete and unaltered. So when you are maintaining it in Tally, you are maintaining it in the original format. Number 4, sir, make sure that it shall not be altered. Point number 5, it should be in legible form. Legible form means what? It should be readable. Unlike your handwriting, it should be in legible format. Next one, sir. Sir, it was very personal, sir. Very personal, sir. Why are you saying like this, sir? See how beautiful my handwriting is. No, I understand you cannot read it, but I can read it at least. Guys, point number 6, listen to me very carefully. There should be a proper system. System for what? Storage, retrieval, display and printout of the data. Whatever data you have, you can store it
retrieve it, print out it, and you can display it also. There should be proper software. Next, the record shall not be disposed of unless permitted by law, and the server, the backup should be physically located on India on daily basis. So for Tally, if the server is in US, you are taking backup of that daily in India, only then you can have such a software. So you don't have to remember all these points, because in today's time, in 2025, if someone asks you whether you can keep a whether you can keep data in electronic mode, it is a foolish question, sir. But ICI may ask foolish questions. ICI may ask, right? So what do you write, sir? You write down that, listen to me, the data should be accessible at all the times. Number two, the accounting software should have the feature of audit trail. Such audit trail cannot be disabled, and there should be audit log. Number three, all the data will be kept in original and unaltered format. Number four, it should be in legible form. You should read it. Number five, the system should be capable of storage, retrieval, printout, and display of data. And number six, the backup of it will be taken on a daily basis in India. So if you write these 6 points, you'll get full marks. Okay, so these are the 6 points that you'll write down, and other points you don't need. Now my question is, sir, coming back, hello. Sir, where should I maintain the books of accounts? In register office. But sir, law says that if you want, you can maintain the books of accounts in the branch office also. Interestingly, the branch office can be in India also. The branch office can be in outside India also. For that branch, you can maintain the books of accounts in that location itself. But what do you have to do? Sir, you have to do one thing. Sir, you will have to send periodical statements. You'll have to send periodical returns to whom? To the registered office. Guys, are you with me? For example, my registered office is in Chennai and one of my branches is in Mumbai. What I'll have to do is, for that branch, books of accounts can be maintained in Mumbai. Guys, everything all right online? Okay. Anisha, well done. You're participating wonderfully. I'm proud of you. Listen to me very carefully, guys. Sir, I asked you something. Listen to me. My office is in Chennai. My branch is in Mumbai. Law says that for that Mumbai branch, you can maintain books of accounts in that branch itself. All you have to do is you have to send periodical summarized return, PSR. So tell me, what is it, PSR? Periodically summarized returns you will have to send on a periodical basis. Sir, what is that Acha, question, sir. If my branch is in India, can I maintain books in that branch? Yes, sir. If my branch is outside India, can I maintain books in that branch? Yes, sir. So if someone asks you, can you ever maintain books of accounts outside India? The answer is yes. For a branch outside India, the books of that branch can be maintained in that branch. What you have to do is you have to send periodical summarized return. Sir, a question. Sir, when in the period, when will you send that return, sir? Law says that if the branch is in India, you decide the period. But if the branch is outside India, it has to be sent quarterly. It has to be sent quarterly. For India, we have not said quarterly. If you want to send me weekly, okay, monthly, okay, quarterly, okay, semi-quarterly, okay. But for a foreign branch, you will have to send that on a quarterly basis. Guys, are you with me? Are you with me? Yes, sir. Number 3, sir. Sir, can members inspect the books of accounts? No, sir. Can directors inspect the books of accounts? Absolutely, sir. But what if the books of accounts is outside India? Acha, sir, if it is in India, how do I inspect? For example, it is kept in the registered office. This is the registered office. Director can come during the business hours and then physically inspect. But if this books of accounts is outside India, sir, in case of branch, in that case, director will request the company, I want to inspect. Company will get the books of accounts from there, a copy of books of accounts within 15 days, and after that you can come and visit the branch, the company, and you can inspect it. Guys, are you with me? If it is outside India, you ask the company will get it from outside within 15 days, and then you can come and inspect. Guys, can you send your friend to inspect? Sir, I will not come, sir. My girlfriend or boyfriend will come, sir. Is it okay? Guys, you cannot send anyone else on your behalf. You cannot give anyone power of attorney. You are the director only. You can come and inspect. Your friends or someone who has the power of attorney. Do you understand power of attorney? What is power of attorney, sir? So for example, tomorrow if I get a notice from income tax, if I get a notice from income tax, I will have to hire a senior chartered accountant to go to the department. So I will give the chartered accountant a power of attorney that you represent me in front of the income tax department. So whatever you say, I am liable for that. Okay, so power of attorney. So director cannot give power of attorney to anyone else. Guys, I'm explaining these basic concepts to you. Please understand that and move forward with me. Did you understand, sir? Yes, sir. Next point. Guys, question number, listen to me very carefully. Sir, very important question asked in exam. Sir, you are the director of my company. or you are a person in my company, can you inspect the books of accounts of the subsidiary company? My subsidiary, can you inspect the books of accounts? The answer is yes, but only if authorized by the board of director. So subsidiary company can be done only if such person is authorized by the board of director by way of board resolution. So my company will authorize you, and only if I authorize you, you can review the financial statements of the subsidiary company. Guys, are you with me? Yes, sir. Now coming to the last point, sir, listen to me very carefully. Hello. Sir, for how many years do I need to keep the books of accounts? That the books of accounts shall be preserved in good condition for the last 8 financial years. You should have books of accounts of 8 financial year. Sir, but it is, sir, only 2 years since I started my company, sir. And then you have 2 years, no? You cannot have 8 years, no? Then you have 2 years. But sir, listen to me. If any inspection is happening on me, what is happening? Inspection. CG can order that I will have to keep books of accounts for a longer period. And if CG asks me to keep books of accounts for a longer period, I will keep it for a longer period. Guys, are you with me? Sure. Yes, sir. And the last point. Who is responsible for making books of accounts? You said management? Who in the management, sir? Read. The books of accounts, who is responsible? Managing director, whole-time director in charge of finance, CFO of the company, or any other person charged with this duty, or any other person charged with this duty. But if you fail to maintain books of accounts, you'll be liable for a fine of 50,000 to 5 lakh rupees. For a fine of 50,000 to 5 lakh rupees. Guys, are you with me? Are you with me? Did you understand, sir? This is your section number 129, 128. Can you quickly take a glance? Look at your book. Very quickly glance, see, look at your book. Point number 1 says about double entry system and accrual basis. Point number 1, look at your book. Point number 1 says that you will keep it at the registered office, and if you keep it anywhere else within 7 days, AOC 5, you'll inform the ROC. Point number 2 says that if can you in that below that can you place it in electronic mode? Yes, sir. It should be accessible. It should have audit trail. Cannot edit log. After that, it should be accessible at all the times, legible form, original format, and all those things. Backup should be always there in India. After that, point number 2, sir, can you maintain the books of accounts at the branch office? Yes, sir. You will have to send. Look at your book. Look at the keywords. Periodical summarized returns for foreign where branch is outside India. You will have to send returns on a quarterly basis. Point number 3, can you inspect? Sir, if it is in India, you can inspect during business hours. If it is outside India, you will have to request the company. Company will get it within 15 days, and then you can inspect. You cannot send anyone else. After that, sir, point number 5. Point number 4. Employees will have to support you during inspection. Not an important point. Point number 5, can you, for how long will you keep the books of accounts? Last 8 years, but shorter period if the company recently incorporated. But if CG asks, you can keep for a longer period. Who is responsible, sir? MD, whole-time director in charge of finance, CFO, and any other person responsible. But if you are responsible, you will be liable for a penalty of 50,000 to 5 lakhs. Are you with me? Did you understand, sir? Yes, sir. Moving to the next section, section number 129, actively participate. In revision also, I'm going to make you revise again. So use that benefit and remember the points. Section 129 talks about financial statement. Very easy, sir. Can you tell me how do you prepare a financial statement? The financial statement should give a true and fair view of the state of affairs. It should be prepared as per section 133, which is accounting standard, and schedule 3 of the Companies Act. So you comply with 2 things, AS and schedule 3. AS and schedule 3. Sir, listen to me very carefully. Sir, your financial statement is, this section is not applicable for insurance company, banking company, electricity company, or any classes of company. Not an important point. Sir, why do we prepare financial statement? So we prepare financial statement, we get it audited by the auditors, and then we place it at the annual general meeting for the approval of the shareholder. I'll tell you a line. Ask yourself whether you understood or not. When you keep it at the annual general meeting for the approval of the shareholder, it is basically an ordinary business. Ask yourself whether you understood this or not. How many of you understood this? You have your exam in a few time. It is an ordinary business. What is section 102? Explanatory statement. It says that whenever you are sending a whenever you are sending a notice, if it has a special business, you will have to attach an explanatory statement. There are 4 ordinary business and rest of them is special business. In AGM, there are 4 ordinary business. Approval of financial statement in the AGM. Declaration of dividend in the AGM. Number 3, appointment of a director in place of those retiring. And number 4, appointment of auditor and fixing their remuneration thereof. These are ordinary business in the AGM. Apart from that, everything that you do in the AGM or anything that you do in the EGM is a special, guys, revision, not a fast track class. This is the way you should be able to recollect. Your mind already knows it. You are just going through that place again. If you're going to that place again and it is all blank, like, hey, 102 is not there in our syllabus, sir. What is this ordinary business? It's not going to be okay. Coming back, section 129, financial statement. Financial statement you have to place at the AGM. Sir, along with the financial statement, you will prepare consolidated financial statement also. Can you tell me when will I prepare consolidated financial statement? When a company has one or more subsidiary or associate. Sir, subsidiary or associate. Sir, even if I have one associate, I'll prepare consolidated financial statement. If I have one subsidiary, CFS. Sir, if I have one joint venture, will I prepare CFS? Hello? One joint venture only. No associate, no subsidiary. Will I prepare CFS? Yes. As per section 26, associate includes joint venture. So if you have a joint venture, it means you have an associate company. If you have an associate company, you will have to prepare CFS. Guys, are you with me? Yes, sir. Now when you are guys, is the speed okay? Are you with me? I also need to keep the speed up to hold your attention. If I slow down, I'll lose your attention. So keep walking faster with me. Sir, I said that CFS is to be prepared. Now along with CFS, listen to me very carefully. You will prepare a form AOC1. Very important. When you're preparing CFS, you'll have to prepare a statement. In that statement, you will give salient features of financial statement of subsidiary associate. Salient features as in revenue, expense, EBITDA, PAT. These things you'll give in a form called AOC1. This is prepared for all the subsidiaries and associate only when you're preparing CFS. Guys, are you with me? Yes, sir. Coming to the next important point, sir. Is CFS required to be prepared by all the companies? Sir, if a company has one subsidiary, one or more subsidiary or associate, it has to prepare CFS, but there is an exception. What is this exception, sir? Imagine this company, Reliance Industry. Reliance Industry has a subsidiary called Reliance Jio. Reliance Jio has a subsidiary called Reliance OTT. My question is, will Reliance prepare CFS? Yes, sir. In the CFS, who will be included? Reliance Jio also, Reliance OTT also. Question is, will Reliance Jio prepare CFS? You, in general, yes, sir, because Reliance Jio has a subsidiary, but there is an exception, sir. What is the exception? Listen to me very carefully. Number one, you are a wholly owned subsidiary or a partially owned subsidiary of some other company. You are a wholly owned subsidiary or partially owned subsidiary of other company, and you have obtained consent of all the members that you are not going to prepare CFS. We are talking about whom? We are talking about Reliance Jio. Condition number one, you are a wholly owned subsidiary or a partially owned subsidiary, and you have obtained consent of members that they do not object you not preparing CFS. Number one, members are okay. Number two, you yourself are not a listed company or not in the process of listing. You're not a listed company or not in the process of listing. And number three, your ultimate parent company. Can you tell me for Reliance Jio, which one is the ultimate parent company? Reliance Industry. It has prepared CFS and that has been filed with ROC. If these three conditions are satisfied, you don't need to prepare CFS. I want you to remember this along with me. Sir, what are the three conditions? Number one, you are a wholly owned, partially owned subsidiary company and you have obtained consent of all the members that they do not object to not preparing CFS. Number two, you're not a listed or not in the process of listing. Number three, the ultimate parent company has prepared the CFS and filed it with the ROC. Agar ye teeno, if these three conditions are satisfied, you will not prepare consolidated financial statement. Guys, are you with me? Yes, sir. After that, coming to the next point, please listen to me very carefully, guys, please. Hello. Sir. CFS, you are preparing CFS. Now coming to the more generic provision. Sir, whatever provision applies to the financial statement, same provision applies to the consolidated financial statement also. They call it mutatis mutandis. No, I didn't abuse you in Hindi. It is mutatis mutandis means as it is. They could have written as it is. But the problem is if they write as it is, you'll be very comfortable, no? You'll be happy, you'll feel easy, you'll be very comfortable. So they're like, what should I do? We should write mutandis mutandis. Or mutatis mutandis, so that way it will be more difficult for you, right? Now coming to the next point, sir, listen to me. Financial statement is to be prepared as per accounting standards, but there could be some deviation. What are deviations, sir? For example, accounting standard says you have to follow SLM method. What is SLM method? Said, but you ended up trying WDV method. What is WDV? Written down value method. So in that case, listen to me very carefully. If SLM method is required but you tried WDV method, it is deviation. In that case, you will have to write it in the financial statement, the nature of deviation. What is the deviation? Number one, what is the reason for deviation? Why did you deviate? And what is the financial effect? Sir, financial effect, how do you define? You say that, sir, if we had done SLM method, depreciation would be 1 lakh. Now we have done WDV method, so depreciation is 90,000. So financial effect is 10,000 rupees. That you will have to explain. So deviation, reason, and financial effect. So last point. Who is responsible for financial statement? Same people. MD. Repeat. Please say MD. Whole-time director in charge of finance. CFO. And any other person authorized by the board. In absence of all these above people, the board of directors shall be responsible for the financial statement. So this line was not there. In absence of, this line was not there in section 128. In absence of all of the above, all the directors will be responsible for a liability of 50 lakhs to 5 lakhs, and they can also go for jail up to 1 year, sir. Sir, for books of accounts there was no jail, but for financial statement there is jail up to 1 year, or both. That is, you can be fined also and you can be sent to jail also. Guys, are you with me? Sir, this is your point of financial statement. Let's revise the revision. Let's revise the revision. Come back to look at your book, build your photographic memory, section 129. Look at your ultimate solution book, point number 1. The financial statement should give a true and fair view and comply with accounting standard and schedule 3. Financial statement, after that come to straight point number 2. It shall be placed at the AGM. Point number 3. You'll have to prepare CFS if you have one or more subsidiary or associate company. Now, the next point is you'll have to prepare a form AOC 1, which gives salient features of the financial statement of a subsidiary and associate company. After that, there is an exception. Although if you have one or more subsidiary or associate company, you have to prepare CFS, but there is an exception. A company which satisfies 3 conditions. What is the first condition, sir? Condition number 1, it is a wholly or partly owned subsidiary and it has obtained consent in writing that they do not object. Number 2, you are not a listed company or not in the process of listing. And number 3, the ultimate holding company has filed CFS with the ROC. If these 3 conditions are satisfied, you don't need to prepare CFS. Number 4, sir, number 4, provision of financial statement, mutatis mutandis applies to CFS. Provision 5, there should not be deviation from AS. But if there is any deviation, specify the nature, reason, and the financial effect. And the last one, who is responsible, sir? MD, whole-time director in charge of finance, CFO, or any other person authorized by the board. And in the absence of all of these above people, board, all the directors will be liable. Thank you. Liable for what? 50,000 to 5 lakh rupees, or jail up to 1 year, or both. Okay, guys. Okay, sir. The section 129A. I want you to put all your energy with me. I'll tell you when will you find comfort. You'll find comfort only at the end of the marathon. When you will see that looking back in the 8 hours, the content that you have covered, this journey is going to be difficult, sir, but the destination is going to be beautiful. To enjoy that pleasure at the end, sorry, you will have to work hard. You will have to study hard. Okay, listen to me carefully, sir. Coming back, please listen to me carefully, sir. What was I saying? Section 129A, not very important. Periodical financial results. Sir, do you know listed companies? Do you know by any chance listed companies, they publish their quarterly financial results? But that is not true for unlisted company, because up till now no one asked unlisted company to prepare quarterly financial results. But there is a provision, sir. The provision is that CG may at any time ask the unlisted companies to prepare what? Periodical financial statement. The periodical could be quarterly or semi half yearly, whatever. So they could prepare quarterly financial statement. Now listen to me very carefully. CG may, for unlisted company, prescribe what? Number 1, that they prepare their financial results in the prescribed form. Number 2, obtain the approval of the board and get it audited or limited reviewed, and then file a copy with the ROC within 30 days. So basically, hello, CG has the power. If you all have unlisted companies, CG has the power. CG will ask you, oh hello, now you also prepare your periodical financial statement, get it approved by your board of director, then get it audited or limited reviewed, and then file it to the ROC within 30 days from the end of the quarter. But we have not said it yet, but we have the power. So who has the power, sir? CG, to prescribe what? That unlisted company will file the periodical financial result. Sir, listed companies are already doing it. Why? SEBI. But for unlisted company, we have not yet made this provision. We might make it in the future. Are you with me? Yes, sir. Coming to the next section, section 130 and 131. Sir, 130. If at all a question is going to come from this chapter, it is going to come from section 130 and 131. I want you to pay your 100% attention. So at the end, when I compare 130 and 131, you are capable of comparing. You are capable of comparing. So listen to me very carefully. What is section 130? What is section 131? Sir, section number 130 talks about reopening of books of accounts and recasting of financial statement. So I have made a financial statement. Now I am reopening my books of accounts and recasting. I am not doing it, sir. Some outsider is doing it. How are they doing it, sir? A company shall not reopen and not recast unless an application to court or tribunal is made by the central government, income tax authority, SEBI or other body, and the order is made by the court or tribunal to the effect that the relevant earlier accounts were prepared in a fraudulent manner or the affairs of the company is mismanaged, casting a doubt on the reliability of the financial statement. Provided that court or tribunal shall not give a notice to shall give a notice to these people and consider their representation before passing order. Now, sir, the account so revised and recasted shall be final and cannot be changed. Sir, no order for reopening or relating to a previous year earlier than 8 years shall be passed. But where CG had made an investigation, you can open it for a longer period. Did you understand anything? Same thing I'll explain again. Listen to me. Sir, what is section number 130? Hello. What is section number 130? If you did not understand, make sure you write it down. What is 130, sir? Sir, this is my financial statement. How did I prepare my financial statement? Based on books of accounts. So basically, do you know there is something called as casting? Casting is from books of accounts. From trial balance, you cast the numbers in balance sheet and P&L, and that is how you prepare financial statement. So basically, guys, listen to me very carefully. Sir, casting. So problem is there is some problem with the financial statement. Who has problem, sir? I don't have. Outsiders. Outsiders like central government, SEBI, income tax authority, other statutory bodies. These people have problem. Sir, they will cry and go to the court or tribunal. Sir, they can go to two people, either to the court or tribunal. Now, court has to be satisfied. Everyone wants to be satisfied. Sir, what does the court and tribunal want to be satisfied about? Either they should be satisfied that there is a fraud in the company, that the affairs of the company are affairs as in affairs, sir. Company affairs, business affairs are conducted in a fraudulent manner, or that there is a problem with the management of the company. Sir, tell me, if there is a company, the management of which is Vijay Mallya. Vijay Mallya is in the management. Will you trust that company? You cannot trust that company, no, sir, because the management is so bad that it casts doubt on the reliability of the financial statement. You cannot rely on the financial statement. In both these cases, sir, the court will pass an order that please reopen the books of accounts and recast the financial statement. But before passing such order, sir, court or tribunal will give request for representation to these people. Arey, why representation? These people only made application. No, sir. Any one of them made application. So for example, if CG made application, court will go to these remaining people and ask, boss, what do you have to say? Only after considering their representation, court will give the order to reopen and recast. But once that reopening and recasting is done, it will be final. There will be no going back. Sir, for how many years can you reopen and recast? Was generally you can do for 8 financial year. But complete the sentence. If you're listening, complete the sentence, Raja. If you have studied earlier, complete the sentence, please. Earlier 8 years, but who can try? Raise your hands. You don't have to speak to me, but your mind is saying something. Who is able to recollect? 8 years, but in case where CG has, now can you complete the sentence? Initiated an investigation, then you will have to check it for the longer period. Guys, are you with me? Yes, sir. Sir, this is your section number 130. Coming to the next section, 131. There are two kinds of people. One, when you're reading this chapter, you are now feeling that, oh, I have not studied it that well. That crowd could be majority. But out of that crowd, there will be only those students who are passing, who are now saying that, okay, no problem, I have not studied it now, I'll study it now. I'll do it now. I'll at least understand 30% of what sir is saying and what sir is explaining, remaining 30% in the next revision and remaining 30 in the next. But at least start the effort now. If you're worried that you're not well prepared, the time to start is now. Now as in immediately. Every section after this should be registered in your mind. And you are capable of doing that. I am capable of putting it in your mind, provided you give me your 100% attention. Without attention, I can't even teach you 2 plus 2 is 5. But with attention, 2 plus 2 I can make 5. Because you have to trust what I'm saying. How can you make 2 plus 2 5, sir? By mistake. But if I may pay mistake, I make a mistake and I ask you to trust me, you have to believe that. You just have to believe that, and you have to write it down. Sir, sometimes ICI 2 plus 2 5 is in ICI. Sometimes if 2 plus 2 you'll write 4, they'll give you 0, and then you can't even sue them. You can't even file a case because for them 2 plus 2 is 5. So whatever I'm telling, just believe me and give me your 100% attention. Everything will get registered in your mind. For example, what is 2 plus 2? See, very smart. Now so now listen to me very carefully, sir. Section 130, 131, please listen to me. Sir, section 130 is done. What was 130? Reopening and recasting of financial statement. 131 is a bigger section. Listen to me very carefully. It says about voluntary revision of financial statement and board report. Here I am talking about two things, sir. Number one, financial statement. Number two, board report. Financial statement, the one that we prepared under section 129. Board report, the one that we are going to prepare in section 134. So two things, 129 and 134. Guys, in this section, what is happening? Central government income tax authority, they don't have problem. I only have problem. So I realize that my financial statement is not as per section 129 and board report is not as per everyone 134. In that case, what I can do is I can do a voluntary revision. But for voluntary revision also I need approval of NCLT. Sir, here court will not be involved, but here NCLT will be involved. What I have to do is, first of all, I'll have to pass a beer. Pass a beer. Arey, what is BR? What is BR? Board resolution. So first step is board resolution. Then sir, after board resolution, you will make an application to the tribunal saying that tribunal, my financial statement is not as per 129 or my board report is now not as per 134. And then tribunal will review. If the tribunal thinks that yes, there is no fraud, tribunal will approve the revision and you can do the revision. But what is the problem, sir? Sir, here you are revising the financial statement. Imagine financial statement was already prepared and given to you. Now the shareholders already have the financial statement. So there is a lot more compliance here. Very small details that you have to remember. Question number 1. For how many years can I do the revision, sir? 8 years? No, sir, 8 years was in section 130. Here you can do revision only for the last 3 years. Number 2, for doing voluntary revision, the first step what I have to do is board resolution. Second, I have to take approval of court. Not court, sir. I have to take approval of tribunal. I have to prove the tribunal that either financial statement is not as per 129 or board report is not as per 134. Sir, when I go to the tribunal, I'll say, tribunal, I want to revise my financial statement. Sir, will the tribunal agree just like that? No, sir. Tribunal will ask me, for which year do you want to change? What is the change? What mistake happened? Where is the auditor? I want auditor statement. Where is the CFO? I want CFO statement. After giving all these documents to the tribunal, only then the tribunal will approve. Are you with me? Yes, sir. Once the tribunal approves, I have to change the financial statement. Again, I have to inform the shareholders also. Because shareholders, the older financial statement that you had now, that is revised now. But sir, listen to me very carefully. Full page balance financial statement. In that, only one mistake was there. Okay. I went to the tribunal. I explained the mistake. Tribunal said, okay, you rectify it. Now when I'm going to rectify, sir, I can rectify only to the extent of that mistake. I cannot think, oh, that one food expense I did not put last year, I'll put that also. No, you cannot do that. Only the mistake for which tribunal has given you approval, only that amendment you can do, and consequential correction. What word did I say, sir? Consequent. What is consequential correction, sir? If my mistake was that, if the mistake was depreciation was 100 rupees, I put depreciation 200 rupees. Now what will be the correction? I'll reduce the depreciation. But when you reduce the depreciation, fixed asset price will go up. Are debit credit, double entry. So only double entry I'll pass. Apart from that, there will be no other correction. Are you with me, sir? Yes. Now read it from here. Listen to me very carefully. Sir, if it appears to the director of the company that financial statement is not as per 129 or board report is not as per 134, they may prepare a revised financial statement in respect of 3 preceding financial year by obtaining approval of tribunal. How? In form NCLT 1. When will you make this form, sir? Within 14 days of board's decision. So board resolution, then within 14 days you will go, and then whatever order tribunal will give, that you give to ROC within 30 days. Sir, please understand this thing, sir. Whenever you are writing a flow now, that flow will always end with ROC. You go to tribunal, you go to CG, you go to anyone, a copy of that order will be sent to the ROC within 30 days. You at the end, write it down. Even if it is wrong, no one will observe. You just write at the end that you will give it to the ROC within 30 days. After that, sir, listen to me very carefully. Tribunal before giving order will take representation from CG and income tax authority. After that, sir, listen to me. Very important. Such revised financial statement or board report shall not be prepared or filed more than once in a financial year. Do you know there is an MCQ on this? That the MCQ is, if this is my financial year 26-27, if I revised financial statement of any one year, I cannot revise financial statement of any other year. But if I want to revise board report of any year, I can do that. So in 1 year, you can revise one financial statement of any year and one board report of any year. No other changes. No other changes. After that, sir, listen to me very carefully. Sir, how will you apply to NCLT? When you apply to NCLT, first of all, state the financial year in which correction is to be there. Give the details of MD, CEO, CS, directors who were responsible. Sir, where the accounts are audited, give the details of director. The tribunal will ask the auditor. The tribunal will ask the auditor, give a board resolution copy, the grounds for revision, what is the mistake, you give all these details. After that, sir, you also have to advertise the application. Sir, these steps you will not be able to remember, sir. Only you can frame a story in your head. Only when you imagine these things, you will be able to write down. At least 14 days you will give an advertisement. Sir, tribunal will give a notice to the auditor. And then tribunal will pass the order. After order, you'll call for the general meeting. And in that general meeting, you will put the revised financial statement. And once that financial statement is approved, again file it with the ROC within 30 days. Why, sir? Because you have to inform the shareholder of the revised financial statement also. No? After that, you will go to the ROC. Guys, are you with me? Sir, you are tense about one thing. How will I remember so many things, sir? Yes or no? There was a question on this section. Recently. ICI did not write these nonsense. ICI just very clearly said that you'll have to take tribunal's approval, apply in form NCLT1 within 14 days of the board resolution. If the tribunal is satisfied, tribunal will give the order and then you can do voluntary revision. That's it. And full marks. You don't have to do this advertise within 14 days. You don't have to do this. But this is actually written. If you're able to recollect, you write it down in the exam. Okay. After this, sir, how much can you alter in the financial statement? So basically, sir, first of all, you will alter the corrections, whatever is not complying, and you will do the consequential alteration. Consequential alteration is debit credit entry, and then CG can make rules. This is not needed. I hope you understood, sir. Did you understand? Guys, did you understand? This is your section 131. Hello. Take a minute, go through section 130 and 131, then I'll explain you the difference. I'm coming back. You go through that and you understand the difference. And then I'm going to tell about the difference. You should be able to relate to it. Section 130 and 131. Please go through it. Tell me, sir. Did you revise? What is the difference? What is the difference? Section number 130 and 131. What is the difference? The number one difference. Section number 130, the action is initiated by outsiders. In section number 130, the action is initiated by outsiders. In section 131, the action is initiated by the company itself, by the directors of the company. That section number 130, the application is made to court or tribunal. In section number 131, application is only made to tribunal. Court cannot interfere. In section 130, there is a case of fraud or mismanagement. In 131, there is error. Revision there 129 and 134 is not complied with. In section 130, reopening of books and recasting of financial statement was covered. In 131, financial statement and board report is covered. Are guys, are you with me? Guys, are you with me? Yes, sir. In section 130, you could open books of last 8 years. In 131, you can open books of accounts of only last 3 years. Sir, are you able to understand? Sure. Up. You're saying yes or no? He. You're saying yes or no? He said, are you able to understand? Yes, sir. But he genuinely meant yes. That is his yes. Did you understand? Did you understand? Yes, sir. Now he made infinite sign. Last time it was like this. No problem. Guys, did you understand for sure? Comfortable? Sure. Sir, this is 130 and 131. Sir, getting this kind of comfort in revision is very rare, but I hope you're getting this comfort. I am taking 10 minutes, 15 minutes extra for each chapter that we are going to revise, but I want you to be super comfortable. This is 130 and 131. Coming to the next section, sir, 132, a very big section. I want to go in flow. 132, sir, NFRA. Sir, what is NFRA? National Financial Reporting Authority. Sir, until last attempt, I used to make a joke that NFRA, ICI will never ask a question on ICI may not ask a question on NFRA because NFRA is competition of ICI. That attempt only they asked. The first time I made this joke, that attempt only they asked. Thankfully, after saying this also, I teach the provision. It is not like I don't teach it. So NFRA can be asked again, sir. Section 132 NFRA. What is the full form, sir? National. Sir, the points that I'm telling you that you have to remember. Point number 1, look at the book and try to remember. The National Financial, just keywords, okay? NFRA is constituted by the CG. Who constitutes? CG. Number 2, sir, this point you have to remember. What is the main role of NFRA? If I ask you what is the main role of NFRA, sir, listen to me very carefully. So the first role of NFRA is, I don't want you to read this language. Okay. So whatever I'm telling you, functions of NFRA, listen to what I'm saying. So the first function of NFRA is to establish high quality accounting and auditing standards. So basically NFRA will recommend accounting and auditing standard. The first step is recommend auditing and accounting standard. Then after that, sir, what will they do? Sir, they will ensure compliance with that. They'll monitor and enforce compliance with auditing and accounting standard. Sir, first step is recommend auditing and accounting standard. Second step is enforce compliance. Number 3, sir, they will maintain the quality of service, oversee the quality of service. Basically all the service that professionals are giving, whether they are giving a right amount of service or not, the quality of service, and then they will recommend steps for improvement. And the fourth one, such other functions as may be prescribed. Listen to me, see here, 4 steps. Number 1, recommend to the central government, AAS. A is twice, S is not twice. AAS, auditing and accounting standard. Recommend. Number 2, monitor compliance, enforcing compliance with auditing and accounting standard. Number 3, oversee the quality of service and suggest steps for improvement. And number 4, such other functions as may be prescribed by the board, by the CG. These are the 4 functions of the what? 4 functions of the NFRA. Keep listening to me very carefully. NFRA is constituted by CG. Now, sir, from the functions you can understand that NFRA is a competition of ICI. Sir, in NFRA, who will be there in the NFRA? There will be a chairperson, okay? And then there will be members who will be part-time and full-time. Maximum how many members? 15. Central government and members. Now listen to me very carefully. It shall be presided over by the chairperson, and listen to me very carefully. This chairperson and members, they will have to give some declaration. What declaration, sir? They will give declaration to CG regarding no conflict of interest or lack of independence. That we don't have any conflict of interest and we do not lack independence. We are very much independent, and they will not associate with any audit firm during the course of appointment and after that 2 years also. So for example, sir, what is your good name? Motilal Oswal. Tahu, okay. Motilal. Sir, Motilal. Sir, Motilal, for example, he wants to become a member of NFRA. He'll have to give a declaration that he has no conflict of interest, he does not lack independence, and that he shall not be associated with any audit firm during the tenure and 2 years after that also. Only when he gives this declaration and assurance, we will have him as a member. Otherwise, we will not have him as a member. Sir, in the NFRA, who all are there? Can you repeat? One chairperson and maximum 15 members. Could be part-time, could be full-time. Now, sir, do you know what is ex officio? Do you know what is ex officio? Ex officio is basically, if NFRA, we say that if, for example, NFRA, there are 10 chairs, 15 chairs, okay. I said in this one chair, you know who will sit? I said the owner of this academy will sit. Did I take Ram Harsha sir's name? No. I said owner of this academy. So I didn't link it to a person, I linked it to a chair. Which chair? To the owner of this academy. So whoever is sitting in that seat, which seat? The owner of this academy, that person will be sitting in this seat. When that owner will change, this seat, in this seat, new owner will come. For example, I said in the second seat, joint secretary of MCA will sit. Who will sit? Joint secretary of MCA. Did I take a name? No. I related to a designation. So whoever is the joint secretary of MCA, he will come and sit. This is called ex officio. This is called as ex officio. Now, sir, in NFRA, there are a lot of ex officio members. Like in NFRA, there are a lot of part-time members. Who are the part-time members, sir? Sir, representative of MCA, who is basically joint secretary. Sir, representative of CAG. What is CAG? Comptroller and Auditor General of India. Representative of that. Sir, RBI representative, SEBI representative. Now, look at how ICI attacked NFRA. In NFRA, you will find ICI's president, you will find ICI's accounting standard board chairperson, you will find ICI's auditing standard board chairperson. Three topmost people of ICI are going and sitting in NFRA. This is how we hijacked NFRA. And at last, sir, there are 2 experts from any other field. So basically, you're bringing a lot of person. MCA from, remember like this, from MCA, from RBI, from CAG, from SEBI, for 3 people from ICI, and 2 part-time members, 2 other members. This is how you constitute your NFRA. Sir, is there can ICI ask a question on NFRA ever? Yes, sir. ICI can. You never know. ICI can ask questions. Okay, but the next point is very important, sir. What is NFRA here for? So you are all auditors. Sir, listen to me very carefully. After, imagine this: you become a CA. You'll open a firm of yours. You'll be a CA in practice. Now, what will you do, sir? You will do audit of clients. Now, for example, one of your client is Reliance. Now, whether you are working properly in Reliance or not, that NFRA will take care of. ICI also does the same thing. NFRA will also do the same thing. So, for example, NFRA will come, ask you for your audit documentation. Or, but sir, audit documentation is my paper. No, NFRA can take your degree also. So basically, don't mess with NFRA. If they ask for audit documentation, you give them the working papers. Now, if NFRA is happy with you, okay. But if NFRA is not happy with you, NFRA can debar you. Debar as in they can say that for the next 5 years, you will not do any audit. That is the power of NFRA. NFRA can penalize you significantly. So basically, NFRA has a lot of power. Sir, NFRA has the same power as is vested in a civil court. Sir, for example, can the civil court call you to the court? Can they ask you to come to the court? Yes, sir. Similarly, NFRA can ask you to come to the court. NFRA can ask you to present all the documents. NFRA can do inspection. Whatever NFRA wants, NFRA can do. Now, NFRA will see your quality of service. If your quality of service is good, it is great. Otherwise, you are gone. Read this next point, sir. Power to investigate, very important. It might come in your exam. Listen to me very carefully. So, the NFRA shall have the power to investigate either suo motu or in reference by CG. Either they will investigate themselves or CG will ask them to investigate you. Sir, remember, NFRA is not investigating your client. NFRA is investigating you. You as in the auditor. You are being investigated. Next, provided, for example, bad example, so listen to me, sir. NFRA can investigate. Now listen to me very carefully. When NFRA starts investigation, they have written that all the other institutes will have to stop investigation. Who are they indicating, sir? ICI. That is why ICI never asks question. So when NFRA initiates investigation, all the other institute will have to stop the proceedings. The next point, NFRA shall have the same power as vested in a civil court. What powers, sir? Discovery and production of books of accounts, summoning and enforcing attendance of any person, inspection of books of accounts, or issuing commissions. These are the things that civil court can do. After that, next point, listen to me very carefully, very important. that if a professional misconduct is proved, if it is known that you have done something wrong, what will NFRA do, sir? Now in that case, NFRA will be like, can take a fine. How much fine, sir? If you are an individual, 1 lakh rupees to 5 times of your professional fees. But if you are a firm, 5 lakh, sir, very important, sir, mark this important, this penalty will come in your exam in this attempt. Listen to me very carefully, sir. Your fine will be 1 lakh rupees to 5 times of the fees. If you're a firm, 5 lakh rupees to 10 times of the fees. And more importantly, you can be debarred for a period of 10 months to 6 months to 10 years based on the discretion. It is NFRA's discretion. They can remove you either for 6 months also or for 10 years also, depending on how big the professional misconduct is. How big the professional misconduct is. Are you with me? Sir, do you know what is professional misconduct? Do you know auditors are not allowed to accept gifts from client? For example, my client is gifting me a BMW. What does it mean? I'm helping him with some fraud. So I should not be accepting gifts. But if I accepted gifts, it's a professional misconduct. And for that, I can be debarred also. Guys, are you with me? Madam, you. At the end, last bench, you're disturbing me. If you want to talk, you can talk like this. But talk in a way you don't get caught, right? For example, that sir, he's talking, but he's not disturbing so much. He's very comfortably talking. He's keeping like this. You cannot go like this and talk in the ears, right? Okay, as if I heard you. Listen, I am speaking in mic. You're not speaking in mic. You have to be louder, but that's okay. Don't speak. Listen to me, guys. Guys, where was I? No, I don't know, sir. As if we were listening to you, sir. We got lost in our own zone, sir. In my dreams. The professional misconduct. Put some effort to retain attention. Put some efforts. You will have to put that efforts. Your mind has to expand. It is your duty. You will have to put that efforts. I can only teach. You want me to dance while teaching? I can only teach. You have to put attention. So listen to me very carefully, guys. Now, NFRA has the power to do what? Power to impose fine on you and to send you to jail. Now listen to me very carefully. If you say that, no, I didn't do any professional misconduct, no problem, you can go and file an appeal. Where will you file an appeal, sir? You'll file an appeal before the appellate tribunal, someone who is above the NCLT, NCLAT, National Company Law Tribunal, National Company Law Appellate Tribunal. So you will go and appeal to the National Company Law Appellate Tribunal. Now for NFRA, sir, some basic point, it will be New Delhi and its audit will be done by CNAG and annual report will be prepared and it will be submitted to the CG. Not important, sir. The next last point is very important about NFRA. Sir, what is the last point? Hello. I told you that NFRA does investigation of the auditor. Sir, which auditor? All small auditor, big auditor, everyone or what? Sir, there are specifically 5 companies. Listen to me very carefully. It is tricky. Do you remember the 5 points? Anyone in the class who remembers even 2 points out of the 5 points? This one is not there in the syllabus only, sir. Yes, sir. So the question is yes, you answer. NFRA can do audit of certain auditors, not all the auditors. So if I am a small person, if I do audit of a small company, NFRA will not come behind me. NFRA will go behind only big auditors. How do you define big auditors, sir? Big auditors means those auditors who have big clients. Big clients. Now tell me, sir, NFRA can go behind which auditors? Tell me just 2 names, 2 points. Based on the turnover and the paid up share capital. More, you can go behind listed companies also. So basically, sir, NFRA will go behind some specific auditors whose clients are either listed company. I want you to first read from my notes and then you write along with me, scribble along with me. So the first point is, listen to me very carefully. So the first point is companies whose securities are listed on stock exchange in India or outside India. You're a listed company, both. Number 2, you're an unlisted company, public company, having paid up share capital of 500 crore or more, turnover of 1000 crore or more, outstanding loan debenture deposits of 500 crore or more. So you're big company, 500 crore paid up share capital, 1000 turnover, outstanding loan 500 crore, or this or this or this. Okay. Number 3, you are an insurance company, banking company, electricity company, or companies governed by special act. So special companies. Number 4, you're a body corporate company or person on a reference made by CG. So if CG asks you to go behind this auditor, you will go behind this auditor. I told you 4 points. I'll write down those 4 points. Number 1, NFRA can, what is the heading? See, NFRA may undertake investigation of auditors who have the following clients. Number one, listed companies, whether listed in India or listed outside India. Number two, if you're an unlisted company having paid up share capital of 500 crore or more, turnover of 1000 crore or more. Next, outstanding loan debenture deposits of 500 crores or more. In that case, you're a big company, so your auditor can be audited by NFRA. Number three, sir, you are a special company. Special company means insurance, banking, electricity, or governed by special act. Number one, sir, any other auditor which is notified by CG. So if CG asks to go behind that auditor, NFRA will go behind that auditor. But this is not it, sir. This is not it. I always make you remember this provision as 4+1. It is a matter of time before ICAI asks this in exam, and only you will notice this. Only students who get 60 plus in law, they'll be able to answer this because they have studied properly. I always make you remember as 4+1. What are the 4 points? Listed company, big company, special company, CG prescribed company. There is +1, sir. What is +1? Sir, if the auditor audits which company? Not these companies, but a body corporate which is incorporated outside India, and it is a subsidiary or associate of the above companies. I cannot explain to you. I can only revise for you. For explanation, you will have to refer the detailed course, sir. What is this, Raja? I said, if you are you getting confused? Is it okay? Sir, listen, don't lose the flow. The flow is NFRA can investigate that auditors who audits this company. Also, NFRA can investigate that auditor who audits a body corporate outside India, which is a subsidiary or associate of these companies, and not just subsidiary, sir. It is a material subsidiary. What do you mean by material subsidiary? Sir, material subsidiary means this subsidiary contributes to the 20% of net worth or 20% of consolidated income. So it is a big subsidiary. So if you are a big subsidiary of these companies, then your auditor can also be investigated by NFRA. I cannot explain you beyond this at this point of time. So read the fifth point. The fifth point is body corporate which is incorporated outside India, which is subsidiary or associate of above mentioned companies, if the income or net worth of such subsidiary or associate is more than 20% of the consolidated income or net worth. So these are the 5 companies, and auditor of these companies can be investigated by NFRA. Are you with me? Yes, sir. Now when you are among these 5 companies, whenever you appoint an auditor, within 15 days you will go to the NFRA and file NFRA 1. All the above 5 companies will have to go to NFRA and file NFRA 1 within 15 days of their appointment of auditor. Sir, do you remember section 139? Whenever you appoint an auditor, you file a form ADT 1 with ROC within 15 days. Similarly, when you appoint an auditor for these companies, they will have to file NFRA 1 with the NFRA. Are you with me, sir? Yes, sir. After that, sir, that's it. That's it. Did you understand section 132? Take a look very quickly. Take a look at section 132. Specifically focus on the point that you were not looking at. I have some students consistently sitting online from morning. I'm very proud of you. While students are coming and going back, the students who are sitting here from morning, I'm very proud of you. Can you tell me in the chat which students are here from morning and constantly looking, constantly studying since morning? Very good parts. Wonderful. So I know a few students who are basically comfortable with Hindi are also watching this marathon, because anyway you have to write the exam in English. I don't think that will help. You have to anyway write the exam in English. Okay. Very good, guys. I'm super proud of you. Super proud of you. All right, guys. Coming back, listen to me very carefully, sir. Section 133. What is section 133? Accounting standard. What is accounting standard, guys? Hello. What is accounting standard, sir? Accounting standard, listen to me very carefully. Hello. Sir, accounting standard is basically prescribed by CG. But who gives the recommendation to CG? ICI. In consultation with NFRA. So ICI will talk with NFRA, they will make an accounting standard, give the recommendation to CG, and CG will prescribe those accounting standard, and that will be applicable for us. This is section number 133. Now coming to the next section, sir, 134. Oh God, if question comes in exam from 134, you are going to be super lucky only if you remember this very minimal points that I tell you. Just remember 2 points, sir. There is something called as board report. Do you know what is board report? Can you take a guess who prepares the board report, sir? Board or shareholder? Board. Oh my God, you're so smart, sir. Board report. Board report is prepared by the board of director, and financial statement is also prepared by board of director, but it is relevant for shareholder. The board report is prepared under a section called section 134. Board report under section 134. Guys, listen to me very carefully. The 2 things that you have to remember: who will sign board report and who will sign financial statement. That's it. First of all, tell me who will sign financial statement. Sir, if you ask me who will sign the financial statement, sir, it will be signed by the chairperson of the company. If board has authorized the chairperson, chairperson will sign. Or if chairperson is not authorized, 2 directors will sign, out of which one will be managing director. Sir, do all the directors have to sign? No. Either board will authorize the chairperson or 2 directors will sign and one will be MD. But this is what financial statement. So sir, apart from that, CEO will also sign, CFO will also sign, CS will also sign. Everyone will sign. But sir, when I talk about board report, can you tell me who will sign? When I talk about board report, can you tell me who will sign? Sir, in case of board report, sir, only chairperson will sign if he is authorized by the board. If he is not authorized by the board, on his behalf 2 directors will be signed, out of which one will be MD. Sir, will the CEO, CFO, CS sign? No sir, they will not sign because they have nothing to do with the board report, but they definitely have to do something with the financial statement. So listen to me very carefully, look at the screen. The financial statement shall be approved by the board, and before it is signed by chairperson if authorized by the board, or else 2 directions, one will be MD and CEO, CF and CS, means everyone will sign before it is submitted to the auditor for the report thereon. But in case of OPC, only 1 director will sign, sir, not a problem. Coming to the next page, sir. Point number 6. Point number 6. Who will sign the board report, sir? In the board report, listen to me very carefully. Chairman will sign, and if so authorized, if not, 2 directors will sign, 1 MD. Here CEO, CFO, CS will not sign. Are you with me? So this is 1 point that you need to remember. There is a second point that you remember in this section. That's the last point. There is something called as DRS. Do you know what is DRS? Yes, sir. Dhoni review system. Dhoni review system. Sir, what is DRS? Director's responsibility statement. Sir, do you know, have you ever heard me saying that there are 6 responsibilities of a director that director will write in his board report? Sir, this is director's board report. Sir, this board report is addressed to whom? This is addressed to the shareholders, that dear shareholder, you have given us your money and we are running your company. We are feeling extremely great to tell you that in the last year we have done this, we have done this, we have done this. In that lot of things we say one thing. In that 1 paragraph we write down that what is our responsibility as a director. In that we write down 6 points. Number 1, the first point that we say is accounting standard. That our financial statements are prepared in accordance with the accounting standard, and there is no deviation as such. There is no deviation. If there is any deviation, we will tell you the reasons. Number 2, sir, accounting policies. We have consistently write down. Number 1, accounting standard. For those who want to pay more attention, write down. If you're paying attention anyway like this, listen to me very carefully. So the first was accounting standard, that we are complying with the accounting standard. Number 2, accounting policies. That the accounting policies that we have applied it consistently, and we have made judgments which is prudent. Sir, have you studied your accounting standard 1? In that, if you remember, there is a concept of accounting policy. When accounting policy word is there, 2 words come along with that. Number 1, consistently. That is policies you apply consistently each and every year. Number 2, judgments. There are judgments that is involved, and what is judgment, sir? Judgment is basically for depreciation. I have a mobile phone, I have to depreciate. I have to take a judgment whether it will stay for 3 years or 5 years. That is a judgment. So judgment should be prudent. Prudent as in a person of common man will, how will he take judgments? The first one was accounting standard. Number 2 is accounting policies. Number 2, sir, the director will say that we are taking care of the assets of the company. We are taking care of the assets of the company, and we have made sure that frauds are prevented in the company. Frauds are prevented in the company. The number 4, the books of accounts are prepared as per the going concern basis. The books of accounts are prepared in the going concern basis. Are you with me? Are you with me? Yes, sir. Next, internal financial controls. Internal financial controls. Sir, the company has adequate internal financial controls, that is operating effectively. How many of you have studied audit even once? Sir, you know that control should be adequate and operate effectively. Tell me what control should be adequate and operating effectively. So you'll say that the controls are adequate and operating effectively. Next point, sir. Sir, the last point is that you will say that we have systems in place to make compliance with law. The director will say, don't worry, shareholder, we have systems in place to comply with law, and those systems are adequate and operating effectively. We have adequate control to comply with the law, and those controls are adequate and operating effectively. These are 6 points which you will write in the DRS. So the shortcut is, the shortcut, can I say the shortcut in Hindi for those who understand? First I'll say in Hindi, then I'll say in English. Sir, ASAP, what is ASAP? Generally ASAP is as soon as possible. As soon as possible. If you take care, then your going concern can be controlled, that too legally. For example, sir, going concern is a problem. What is going concern? I don't have money to run the business. So going concern is a problem. In that case, if you take action very quickly, if ASAP you take care, then going concern can be controlled, that too legally. You don't have to do anything legal, anything illegal. How is this relevant, sir? AS, accounting standard, that your accounting standards are complied with. AP, accounting policies are consistent and judgments are prudent. Care, sir, you're taking care of the assets of the company and you are making sure that you are preventing fraud. GC, the books are prepared, the accounts are prepared on a going concern basis. Control, your internal financial control are adequate and operating effectively, usually in case of a listed company. And then last one, sir, legally you have adequate controls for compliance with law, and those controls are adequate and operating effectively. Are you with me? Guys, are you with me? Yes, sir. Please go through these 6 points in your notes. Page number 9.12. These A, B, C, D, E, F, sir, go through the keywords of them so that you remember it right now. Please go through the keywords. Done. Guys, done. Take a deep breath in with me. Ready? On the count of 3, 2, 1, go. Once again, deep breath, okay? Now when you release, after taking a deep breath, count 3 slowly and then release, okay? Ready? Very good. Perfect. Helps to freshen up, because now we are going to cover a section asked in every attempt like mad. They have asked it in one attempt for 10 marks. Two questions, 5 marks each. What is this concept, sir? Section 135, which talks about CSR, which is corporate social responsibility. Guys, are you ready? Yes, sir. Sir, what is corporate social responsibility? Listen to me very, very carefully, sir. Please, this section is broadly divided into just 10 points. Remember those 10 points. It is definitely going to give you 5 marks. So right now, in the next 10 minutes, you are going to cover 5 marks of your exam. So be ready for that and pay 100% attention. Sir, what is CSR? CSR is basically an expenditure that you have to do towards the society. Sir, can you tell me how much amount of CSR you have to do? You have to do CSR of 2% of the average net profit of the preceding 3 financial year. Sir, point number 1, you have to take average. Average as in last 3 years profit you add and you divide it by 3. While calculation, a lot of students forget to divide it by 3. If you, even after dividing it by 3, you have to then multiply by 2%. ICI is so nice that they will give you all the options. They'll ask in MCQ and then A, B, C, D, they'll give all the option. First option is last 3 years sum. Second option is sum divided by 3. Third option is sum divided by 3 into 2%. You will find your answer in the first or second option only. So basically, you have to take 2% of the average net profit of the preceding 3 years. Number 2, sir, who will do the CSR expenditure? Sir, generally the board of director is responsible. Who is responsible? Board of director. But for bigger companies, the company will have to form CSR committee. Which company has to form a CSR committee? Sir, every company not listed, every company having net worth of 500 crore or more, or turnover of 1000 crore or more, or paid up net profit of net worth of 500 crore or more, turnover of 1000 crore or more, or net profit of 5 crore or more. The net profit of 5, only 5 crore. Sometimes your mind will not fit. 500 crore, 1000 crore, 5 crore. Yes, sir, net profit of 5 crore or more. When, sir? During the immediately preceding financial year. In which case you will have to have a CSR committee in which there will be, sir, 3 or more directors, out of which 1 will be independent director. But sir, in case of private company, we don't need independent director. In those company, if you have just 2 directors, that is okay. You don't even need 3 directors. Generally, what do you need? 3 directors, out of which, guys, full attention, full attention. For more attention, you can write down. But full attention, or you just underline in your notebook or whatever you do, but full attention. Keep your hands also working and keep your notes also, keep reading the notes or keep writing. But be more active. Sir, 3 or more directors, out of which hands working towards writing. Hands working towards writing. Now 3 or more directors, out of which 1 will be an independent director. Now, sir, after that, what did I say? 3 or more directors, out of which 1 will be independent director. But in case of private company or in foreign company, even if there are 2 directors, it is okay. Now, one big question, sir. Sir, when I say net profit, this was asked in exam. Net profit, when I say, it is before tax or after tax? Net profit, it has to be after tax, right? But law says net profit is going to be before tax, which is as per section 198. Big deal, sir. Big deal. There was a question just on this one line. Now, sir, listen to me very carefully. When do you form a CSR committee? When you have net profit, net worth of 500 crore or more, turnover of 1000 crore or more, net profit of 5 crore or more. But despite this, if your CSR spend means the amount that you have to spend is less than or equal to 50 lakh rupees, then CSR committee is not needed. What is the CSR spend? It is less than or equal to 50 lakh rupees, then this provision is not needed. Now the next question is, sir, how will you form CSR why will you form CSR committee? Because CSR committee will make CSR policies and decide that where is the company going to spend and how much amount is the company going to spend. Okay, now sir, listen to me very carefully. After that, sir, what is the CSR expenditure? 2% of the average net profit of the immediately preceding 3 years. Now, sir, law says that you prefer to spend this amount in the local area. Don't go to US and give money to beggars. Someone got to know that you are doing CSR of 2 crore rupees in a year. What are you doing with that 2 crore? You're going to US, you're finding beggars and you're giving money to the beggar. We have enough beggars in India. Please help them. You give preference to the local area. CSR spend cannot be done outside India. There are some exceptions. Can anyone tell me the exception? One exception. Profits are earned outside. No exception. Sports. Sir, for sports training of national, international level player, you can spend the money outside India. This is allowed. There is a very tiny exception in that. There is a very tiny exception. We will read. But sir, net profit you will have to spend in the local area. Guys, now my question very carefully. Answer it on my screen. Sir, if I had to spend a CSR of 2 crores, and if there is a surplus spend, I mean I ended up spending 5 crores this year instead of 2 crores. What will happen to the surplus, sir? Sir, that surplus can be carried forward and set off in the next 3 financial year. For the next 3 financial year, I can set off this amount. But what if there is a deficit, sir? Deficit as in for 2 crores, I spent only 1.5 crore. Then, in that case, sir, the balance amount you will have to decide, sir, whether you have kept it for an ongoing project or whether it was a mistake. If it was a mistake, then you will have to transfer it to which fund, sir? You will have to transfer it to a Schedule 7 fund within. Are bolo? Within 6 months from the end of year. You'll have to transfer it to the Schedule 7 fund. But sir, if it is for an ongoing project, what will you do? If it is for an ongoing project, then after the end of the year, you will send it to an unspent CSR account. And within how many years you will have to spend it? You'll have to spend it within 3 years. If you fail to spend it within 3 years, then at the end of 3 years, you will have to transfer it to Schedule 7 fund. Within how many days? Within 6 months. No, sir, 3 years is already wasted. So now you do immediately within 30 days. Are you getting the concept clearly, sir? What do you do with the deficit? If it is a schedule, if it is not because of an ongoing project, you send it to Schedule 7 fund within 6 months. But if it is because of a ongoing project, then in that case, what will you do? You'll send it to unspent CSR account. Guys, are you with me? Can you hear me? Pakka, sure. Sir, this is your basic provision. Read with me carefully. Sir, if the company fails to spend, then they will have to specify the reason. And if it is for an ongoing project, they'll transfer it to a fund called unspent CSR account within 6 months from the end. If it is not related to ongoing project, then they'll transfer it to Schedule 7 fund within 6 months. Now, sir, if you spend excess, you can set it off. Set it off how much, sir? Sir, you can set off within the next 3 financial year. Sir, the excess amount can be set off in the next 3 financial year, but the board will have to pass a resolution in this effect. You're not listening to this line. You can only carry forward and set off if the board has passed a resolution to this effect. That the board has to acknowledge that we had to spend 2 crore, we spent 5 crore, the excess 3 crore we are going to set off in future. If only board passes a resolution, only then you can set off. Sir, my question is, law says excess does not include surplus. What does it mean? When I say excess does not include surplus, what does it mean? Revenue from the CSR activity. Something he said. I'll give you a small example, sir. Listen to me very carefully. Sir, for example, if in the CSR I decided to make what? A hospital. In CSR I decided to make a hospital. For hospital, what I did, sir, I bought a land. In that land, sir, the first thing I did was I established gods. Let's say, for example, with all due respect, let's say Balaji Bhagwan we established in that place. Now what happened, sir? A lot of people were going from here and there, and in front of that god I kept a donation box. Slowly I kept a small donation box. Looking at the donation, I had to increase the size. Now for this hospital, I was going to spend 4 crore rupees, sir. How much? 4 crore. But because of that Balaji god, that there was so much of donation that I got a donation of 1 crore rupees. Sir, what is this 1 crore? This 1 crore is not excess. This is surplus that I got from the CSR activity. What should I do with this 1 crore, sir? Sir, this 1 crore is not a business profit. It is not a business profit. What do I do with this 1 crore, sir? That this 1 crore has to be plowed back into the same activity. That is, you invest in that hospital only, ideally. If not, sir, if you want to keep it for an ongoing project, okay. If not, you transfer it to the Schedule 7 fund. Are you with me, sir? Okay. Now tell me, sir, I had to spend how much? 2 crore. How much was I willing to spend? 4 crore. Meanwhile, I also got a surplus of 1 crore. So what was my total expenditure? 5 crore. Now my question is, how much is the excess that I can carry forward? Option A 3 crore, option B 2 crore. Sir, anyone who wants to say 3 crore? Despite knowing it is wrong, anyone who wants to say 3 crore? Sir, why is it 3 crore? Why is it not 3 crore? Sir, This 1 crore was not the excess that I spent. I got it from the CSR. I spent it in the CSR. It is not anything excess. What is the only excess expenditure that I did? This extra 2 crore. So how much can I carry forward in set of 2 crore? So please remember, excess does not include surplus. 1 crore was surplus. 2 crore was excess. Are you with me? Guys, are you with me? This is now not becoming a marathon. This is now a regular marathon. Now this is like a regular batch marathon. So this is a regular marathon, very slow marathon. Sir, I'm giving you all the examples, but only to this effort is only to make sure that you understand, you are able to retain it in the exam. Excess will not include surplus. Excess does not include surplus. Are you with me? Yes, sir. Coming to the next point. Sir, if there is an ongoing project, then within 30 days from the end, you will transfer it to a special account called unspent CSR account. Then within 3 years, you will spend. If not, company will transfer to the funds within 30 days. Sir, what if you default in spending CSR? If there is a default, the company will be liable for a penalty of, I'll not take penalty right now. I'll skip the penalty. Acha, CSR penalty we will cover. Other penalties I'll skip. CSR penalties we will cover, sir. Company shall be liable for a penalty which is lower of 2 times of the amount to be spent or 1 crore, whichever is lower. And officer in default will be liable for 1/10 of the amount to be spent or 2 lakhs, whichever is lower. 2 times 1/10. 1 crore, 2 lakhs. Are you with me? Yes, sir. Now some definition, sir. Sir, CSR, hello. CSR activities is to be taken within India, but there are certain expenses that will not be considered as a CSR expense. Like, sir, like number 1, sponsorship. I am giving, listen to me very carefully, sir. What did I say? Number 1, sponsorship. Sir, if there is a cricket match going on, and I said, please put my banner there, big banners, and I'll sponsor this cricket match. Beta, it is marketing. It is not CSR, it is marketing. So next, contribution to political party. For example, Adani says that I want to do CSR by contributing 2 crore rupees to BJP. Contributing 2 crores to BJP. Boss, it is not a CSR, it is a contribution to political party, not a CSR. Third, I want to do expenses for my employees. For example, I said that all my employees, I'll send your kids to school for free. Although a good activity, but I know that somehow it is an indirect salary. It is an indirect salary to the employees, so it is not counted as CSR. Sir, legal. If there is some legal expenditure that I'm supposed to do. So for example, what legal expenditure? So for example, if you go for mining under the seabed, there is a law which says that after you take crude oil from the seabed, you know seabed? After you take crude oil, you have to fill that back. You cannot leave it open. You have to fill it back. Now, sir, what I did was, I filled it back, and for filling it, it took me 1 crore rupees. Now that 1 crore rupees, I'm saying it is a CSR because my work was over when I dug that hole. I don't have to fill it back. Because you have to fill it back. Law says that you have to fill it back. So you are doing it for the law. So it is not a CSR. Are you getting my point? Yes, sir. Sir, next point, please listen to me very carefully. Sir, if you're doing any expenditure outside India, it will not be considered as a CSR. F as in foreign expense. But sir, if there are some sportsmen as in, for example, Virat Kohli. If a national level or international player, if you're taking him outside India for training, in that case, it will be allowed as CSR. But other foreign expense not allowed as CSR. And the last one, sir, business. Sir, as a CSR, what I said, oh, I have to do CSR. All students, you take my book for free. Is it a CSR, sir? No, it is marketing. So again, anything that I'm doing in ordinary course of business will not be considered as a CSR. Are you with me? Guys, are you with me? Say yes or no. Yes, sir. This is what spell FB. Did you understand? Did you understand? Yes, sir. This is your spell FB as a transaction. Sir, spell FB. S, sponsorship. P, political party. You say once with me, second time you'll be able to say yourself. S, sponsorship. P, contribution to political party. E, employee benefit expense. L, legally made expenses. F, foreign expense. B, business, ordinary course of business. These expenses will not be considered as a CSR expenditure. Are you with me? Guys, tell me, are you with me? Yes, sir. Sir, what is administrative overhead? Whatever administrative overhead I have to do you know what is the maximum amount of admin overhead? In CSR, the maximum admin overhead that I can do is 5% of the CSR amount that is to be spent. Sir, the next most important question. Sir, I told you net profit is always before tax, correct? Now remember, in net profit, you'll exclude 2 things. In net profit, you will exclude 2 things. Number 1, profit earned outside India. What India is saying is, whatever you are earning in India, now, only from that you spend. If there is a branch outside India, we don't want you to spend from that profit. So net profit will not include profit from the branch which is outside India. Guys, are you with me? Number 2, net profit will not include a dividend which is received from a company which has complied with CSR. I'll repeat again. I'll not be able to explain now, but I'll repeat again. In my net profit, it will not include dividend which is received from a company which has already done which has already complied with CSR. So if you have complied with CSR and then you have given me dividend, from that dividend I don't need to do CSR again. So net profit will exclude 2 things: branch profit, dividend of a company which has already complied with the CSR. Are you with me? Guys, are you with me? Yes, sir. When I say ongoing project, understand that ongoing project is for 3 years. Ongoing project means maximum 3 years. Sir, quick question. A foreign company, do they also have to do CSR? Foreign company. Sir, foreign company means it is doing business in India. So for the Indian business, Indian profit, they have to do CSR and section 135 will apply. Guys, are you with me? Yes, sir. Sir, very quick question. I am a company, my name is Reliance. I have a CSR, I have to spend 10 crore rupees. How will I spend it, sir? Sir, either I can spend it myself by forming a trust, by forming a foundation, or I can give it to someone else also. So for example, Reliance has Reliance Foundation, Tata has Tata Foundation. These things are responsible for CSR. But if I don't want to do CSR myself, I can give it to a CSR registered entity. I can give it to a CSR registered entity. They can do it on my behalf. Sir, they will have to obtain something called as unique CSR registration number. Unique CSR registration number. Are you with me? Yes, sir. Come to rule number 7. Rule number 7. So rule number 7 says that your admin overhead cannot exceed 5% of the total CSR expense. Now, sir, CSR reporting, you have to give an annual report on CSR. When will you give the annual report on CSR, sir? Acha. Wait, sir. Next point. Impact assessment. What is impact assessment? There was a question asked on impact assessment. Jan 2025 attempt. What is impact assessment? Listen to me very carefully. Sir, it was asked recently only, sir. Why should we study, sir? Recently only they asked, no, sir. They'll not ask again, sir. You don't know, beta. What is impact assessment? Very simple, sir. You are spending so much on CSR, you will have to make sure that you are creating an impact. So you will have to do impact assessment. Who will have to do impact assessment, sir? Every company having average CSR obligation of 10 crores or more. In the last 3 years, your obligation is how much? 10 crores or more. And you have undertaken CSR expenditure, you will hire an independent agency. You will ask that independent agency to find projects in which you have invested more than 1 crore rupees. And then it's been more than 1 year since you have spent that. Hello, sir. Poor condition. Number 1, you are a company. Your last 3 years average CSR obligation was 10 crore or more. You will hire an independent agency. You will find a project in which you have invested more than 1 crore rupees, more than or equal to 1 crore, and it's been 1 year since the project is completed. Now that independent agency is going to assess the impact, and they're going to prepare a report and give it to the board of director or the CSR committee. Now, sir, the impact assessment report will be placed before the board, and it will also be given in the annual report. Now the question is, sir, this independent agency that I hired, I'll have to give them fees. Guys, what will I have to give them? What will I give them? Are you hungry? Kunchum kunchum, sir. Little bit hungry? Little bit? I'm sure you must be very tired. You're speaking for the last 4 hours. You're so aggressively, very quickly speaking, writing, talking, shouting. I'm sure you must be tired. Why would I be tired? I'm just sitting and listening to you very carefully. I had my proper food in the morning. Why should I be tired? You should be tired. Okay? And also, why would you will be tired? No, because it is not your exam. I should not be tired because it is my exam. No, I have to write my exam in the coming attempt. Now, like, you have to finish at least this chapter. Okay, and trust me, with this section this chapter gets over. After this one important section is 138, which is internal audit. But listen to me very carefully, this section is also over. Impact assessment, a company average obligation in the last 3 years more than equal to 10 crore rupees, and they have an independent agency. They have find the projects in which they have invested 1 crore rupees or more, and in that the project is completed before 1 year, you do the impact assessment. Sir, for impact assessment you pay the fees. Can that fees be considered as CSR expense? The law says yes, to an extent of higher of 2% of the total CSR amount of that year, or 50 lakhs, whichever is higher. To that extent, you can consider it to be a CSR expenditure. I'm sure you must have understood this with example in your regular class. Now you have to understand 2% of the CSR expenditure or 50 lakh rupees, whichever is higher. Are you with me? Guys, are you with me? Yes, sir. Now, coming to the last point, that's it. Finished. CSR is over. That's it. Annual report on CSR you will have to give. Sir, when will you file the annual report on CSR? Sir, annual report on CSR is to be filed along with the form AOC, which we will read in the next part. Form AOC or form AOC XBRL. See, every company shall furnish a CSR report in form CSR2 to ROC as addendum to form AOC. So it will go along with what? Form AOC4. Where will we study form AOC4, sir? How do you care? What is AOC1? You are worried about something you have not studied. What about the one that you have studied? What is AOC1? Huh? Salient features of all the subsidiary. What is AOC5? If books of accounts are not kept in the registered office and any other place, you will have to inform ROC within 7 days. Inform AOC 5. Are you with me, guys? Guys, are you with me? It's CA intermediate, sir. It's CA intermediate. It's not CA foundation. The CA intermediate results are coming close to 10% on an average. For every 100 students sitting in India, 10% people are going to pass. And this result is not state based. That Telangana 10% will pass, Tamil Nadu 10% will pass, Kerala. This is not the result. In India, 10% will pass. That 10% could be consolidated from Delhi, could be consolidated from Mumbai. That 10% could be from any place, could be from Chennai, could be from Hyderabad, could be from any place. One question that you have to consistently ask yourself, that in terms of efforts that I'm putting, the efforts that I'm putting, do I come in the top 10%? In terms of efforts, not the results. In terms of the number of hours that I'm studying, in terms of the efforts that I'm putting to retain the concepts, in terms of efforts that I'm putting to write the answers, in terms of efforts that I'm putting to write test papers, to improve on those test papers, to remember things, what are the efforts that I'm putting? The moment you put efforts that you come in top 10%, you'll pass. The moment you put efforts that you come in top 50 people, you'll get a rank. Despite outside both these two, you'll not be able to clear. You'll have an attempt. So efforts, put efforts. There was an all India rank 1 Dipanshi from Hyderabad, if you know, if at all you know, last to last attempt, Dipanshi Agrawal. She is from Hyderabad. Her one advice to everyone was, in a class you'll get distracted, put effort to come back. When you're studying alone, your mind will get distracted. Put effort, come back, restart. While studying, you will start overthinking. When you realize you're overthinking, stop, put effort, come back and start. There is not going to be a day when you're 12 hours and you're like, I didn't get distracted. I was studying very comfortably. Oh, I was so happy today that I wanted to study. These days are never going to come. Always the days are, oh, I have to study again today, shit, I have to revise that chapter again, shit. But you keep going. Because ultimately this time is going to end, you're going to become a C, and then you're going to enter the practical life with all the theory knowledge. And there again you have to put efforts for different reasons. But it is all about efforts. Coming to the last leg of this chapter, and then I'll give you a break. So section 136, 137, 138 is left. We will continue in the sequence only. But to section number 136. What is 136, sir? Very easy, not very important. Right of members to copies of audited financial statement. I'll keep it very simple for you, sir. You are the members. You can ask the company to give you financial statement. It is the company's responsibility to send you financial statement 21 days before the general meeting. You'll get the financial statement. You'll get the consolidated financial statement. You'll get the auditor's report on such financial statement. It is your right. It is your right. What is written, sir? A copy of the document shall be laid before the general meeting, FS, CFS, auditor's report and every other document, and a copy will be sent to member, debenture holder, trustee and all the other entitled persons. Guys, are you with me? Guys, are you with me? Yes, sir. After that, listen to me very carefully. Sir, when do you have to send these copies? 21 days before the notice. Sir, but if I cannot send 21 days before the meeting. Sir, can I send it 15 days? Sir, you have studied a section 101, which talks about notice of general meeting. In notice of general meeting, notice is sent 21 clear days before, but there can be a shorter period notice. How, sir? In case of AGM, if 95% members give consent. In case of EGM, depends on whether the company has share capital or not. I know you don't remember this provision, but learn from me. If the company has share capital, then majority numbers having 95% in paid up share capital. And if the company does not have share capital, then 95% of voting power. If these people agree, you can send a shorter period notice. Similarly, sir, if these people agree, you can send these documents less than 21 days before the general meeting. If you want to send it 10 days before the general meeting, you can do it. But for company having share capital, take approval of majority having 95% in numbers, 95% of paid up share capital. And in case of company not having share capital, 95% of voting power. Guys, are you with me? Are you with me? Yes, sir. After that, listen to me very carefully. Sir, in case of listed company has so many members, you cannot send the full financial statement to all the members. So what are you going to send? You are going to send, sir, you are going to send the salient features. You will say to all the members, the financial statement is kept at the registered office. Whenever you want, you can come and inspect. Whenever you want means, sir, I'll go at night 2 a.m. sir. Can I go? During business hours. But we will send you consolidated salient features. And if you request, we will send you full statement also. But we will not send full statement to everyone at the start. At the start, we will send what? A salient feature. Sir, in what form? This salient feature, sir, it will be sent in form AOC 3. But if my financial statement is prepared as per Ind AS, then it will be AOC 3A. Sir, start remembering the forms AOC 3 or AOC 3A. Are you with me, sir? Yes. Now listen to me very carefully, sir. Hello. Sir, listed companies. This is interesting for you. This will help you even after exams in your audit also. If I'm a listed company, interesting part is I will have to upload separate audited financial statement of my subsidiaries in my website. What will I have to upload? Separate audited financial statement of subsidiaries. Where will I upload? Website. Sir, separate audited. Separate audited means? Separate means standalone. Audited. So all my subsidiaries has to be audited. All my subsidiaries have to separately give the financial statement. But sir, what if my subsidiary is outside India? What if it is a foreign subsidiary? What if I don't have standalone statement? What if I have some consolidated statement? You upload consolidated. Not problem. Not a problem. Sir, what if it is not in English? What if it is a Russian language? In that case, you translate. You translate it to English. Sir, what if it is not audited? Because in US, audit is not required. Then upload unaudited. Stop crying. If you don't have standalone, upload consolidated. If you have in different language, translate it to English. If it is unaudited, get it. If it is unaudited, upload unaudited. Not a problem. But you will still have to upload it on the website. Did you understand? Yes, sir. So can you get Reliance Jio's financial statement? Reliance Jio. Can you get its financial statement? Yes, sir. Reliance Jio is a subsidiary of Reliance. Reliance is a listed company. So Reliance will have to upload separate audited financial statement of Reliance Jio. Where? On its website. Are you with me? Yes, sir. Okay, sir. That's it. Sir, can you come and inspect? Yes, sir. You can come and inspect during the business hours. Sir, business hours? Can I restrict the business hours? Sir, as per AOA, you can restrict the business hours, but it has to be minimum of 2 hours. I cannot say that from 11:58 to 12:02 in the morning you can come and inspect. Arey, 4 minutes? Are you mad or what? You will have to give at least 2 hours. Guys, are you with me? Yes, sir. Sir, second last important section. Section number 137. Smile on everyone's face. A little longer smile. A little longer. Why are you so happy? Huh? Listen to me very carefully. Okay, smile like this at the end. We'll record a video. How happy my students are. Listen to me. Guys, section number 137. What is section 137? Sir, section 137 talks about copies of financial statement to be filed with ROC. Very important, sir. Sir, I want to relate this to section 92, which I'm sure you would remember. Annual report. Annual report is to be submitted to ROC within 6 months from the AGM. Shouldn't it be 6 years? Sir, within 60 days from the AGM, you submit it to the annual report to the ROC. But if you fail to do so, you'll have to give the reasons. You'll have to give the reasons and fine and reasons. Okay. So similarly, financial statement after the AGM, listen to me. Sir, you call for the AGM. Case number 1. You call the AGM. In that AGM, financial statement is approved. Then you file it with the ROC within 30 days, not 60 days, 30 days. Why? It is ready. You just have to take it and file it. You don't have to change it. But if you called for the AGM but the financial statement was not approved, you file a provisional financial statement within 30 days, and then again when the financial statement is approved, you file the final financial statement within 30 days. What did I say? If it is not approved, file the provisional one within 30 days, and then when it is approved, find the final one within 30 days. Are you with me? Yes sir. Sir, but if you did not call the AGM on time, then in that case you file a reason that why the AGM was not called. Are you with me? Yes sir. Sir, what if it is a OPC? Acha, if the AGM was not held, then within 30 days from the due date of AGM. What is the due date of AGM? Generally 30th September. So within 30 days you will file that, sorry boss, we did not call for an AGM. This is the reason we don't have a financial statement. And if it is an OPC, within 180 days from the closure of financial statement. Are you with me, sir? Yes. Now sir, in which form will you file the financial statement? Sir, generally AOC 4, but for CFS it is going to be AOC for CFS. Sir, if it is a non-banking financial company, so generally it is going to be AOC for NBFC, but for Ind AS. But if AOC NBFC is filing CFS, then AOC for CFS NBFC Ind AS. Bakwas, don't remember these things, just remember these two forms. Can these two forms not come in exam? Yes sir, but when they do, we will figure it out there. You add NBFC, you add CFS, wherever you want to add, and you write down. But generally form is AOC 4 and AOC 4 CFS. Now sir, coming to the next important form, which is, listen to me very carefully. Sir, what if the company does not file financial statement? There will be liability on company and person responsible. Question is, who is responsible for filing financial statement? Sir, the MD, CFO and any other director in charge, or all the directors, sir? Who is responsible? MD, CFO, any other director in charge, or all the directors? Guys, are you with me? Guys, can you hear me? Say yes or no. Yes sir. Now sir, last point of this section, AOC for XBRL. What is AOC for XBRL? Sir, it is a special, what is XBRL? Extensible Business Reporting Language. Extensible Business Reporting Language. Sir, for which companies? Sir, companies listed in India or their Indian subsidiaries, or paid up share capital 5 crore or more, turnover 100 crore or more, or any other company which is preparing Ind AS will have to file AOC for XBRL. It is a different format. Sir, like you see .doc. What is .doc? Word file. .pdf, PDF file. .xls, Excel file. Similarly .xbrl, which is what? This is a format. In this format you will file AOC 4. Now sir, but this provision is not applicable for NBFC, housing financing company engaged in the business of banking or insurance sector. For this business, this provision is not applicable. Guys, are you with me? Are you listening to me? For this NBFC, housing finance engaged in the business of banking or insurance. Sir, this was asked in exam. Do you know this point was asked in exam? Sir, please solve question bank. If you have not solved the question bank while going, please take the question bank from here. For online students, I'm telling you, you get the question bank from shubhamsinghal.com. If you don't want to, you go and get a photocopy. I don't mind, but you cannot go to the exam hall without the summary notes and question bank. That these books, when I have prepared, what was I thinking? I was thinking that if I am a student, what is that material that I want to be able to attempt 100 marks? With that thought, the question bank, you will see it is India's, I think I can confidently say it is India's only book of law in which you will see that concepts and question bank is linked. You see, besides this concept, there is question number 15. It shows two things. Number one, this line is also important. So when you're reading from the summary book, your focus will stop here, and naturally your question bank is done. And in the initial few revisions, you can also go simultaneously and solve this question so that your concept becomes even stronger. So basically, please make sure that you have these books when you go for your law exams. Otherwise, it is next to impossible, because very crafted accordingly. And coming to the last section. What is the last section? What is the last section? Internal audit. What is internal audit, sir? Section 138. Sir, very simple. Internal audit. Sir, to which company does internal audit apply? Before I talk about that. Sir, who can do internal audit? CA or non-CA also can do? Sir, CA, CMA or any other profession as the board may decide. Can CS also do, sir? Sir, the board has to decide. If the board says CS will do, then CS can also do any profession that the board decides. Sir, will the internal auditor be an employee of the company or not an employee of the company? May or may not be an employee, not a problem. What is the role of internal auditor, sir? To check the internal controls and the process of the company and make sure that the financial statement is accurate. Now, sir, the question is, which company is required to do internal audit? I'll divide it into three parts. Number one, listed company. Number two, public company. Number three, private company. Number two, unlisted public company. Can you tell me which unlisted public company? Sir, I'll tell you the limits, okay? Do you know Akshay Kumar? How many of you don't know Akshay Kumar? Akshay Kumar? No, sir, he was not there in our class. Arey, celebrity, Bollywood actor, Akshay Kumar. Now listen to me very carefully, sir. Akshay Kumar has a movie called Hera Fairy. Have you ever heard this line? 21 din mein paisa double. No problem, ignore. Akshay Kumar gives a scheme that if you give him the money, let me say in 25 days. In how many days? 25 days, he'll double your money. You give him 25 crores, he'll make it 50 crores. So what I did was, sir, I went and deposited, listen to me. I went and deposited 25 crore with Akshay Kumar. I gave him 25 crore. What did he do? In next 25 days, he gave me 50 crores. Now, how much do I have? 50 crore. This 50 crores, sir, I invested in my company as a paid up share capital. Now, this 50 crore is my money. Sir, do you know what is the ideal debt equity ratio? 2:1. So, for every 1 rupee that I'm investing, I can take a loan of 2 rupees. So, I invested 50 crores. How much loan can I take? 100. So, from banks, I borrowed 100 crores, sir. Now, my 50 crores that I invested from bank, 100 crores, total 150 crores, I mixed and I did business, and I did a business turnover of 200 crores. I did a business turnover of 200 crore. Do you remember the story? This is the limit. Deposit of 25 crore or more. Where did I deposit with Akshay Kumar? Now he gave me 50 crore. I invested it. That is my paid up share capital. So paid up share capital of 50 crore or more. And outstanding loan borrowing of 100 crore or more. And a turnover of 200 crore or more. Sir, outstanding loan borrowing is not 100 crore or more. It is more than 100 crore. Everywhere else there is more than equal to, more than equal to, more than equal to. For outstanding loan there is just more than. Equal to is not there. And if ICAI has to ask question, here only ICAI will ask. That outstanding loan is 100 crore. Is internal audit applicable? Not applicable. What are you trying to test? But not applicable, sir. So limit again, come on, deposit 25 crore or more. Are you able to remember? Deposit 25 crore or more, turnover, paid up share capital 50 crore or more, loan more than 100 crores, and turnover more than equal to 200 crore. This is for public company. But for private company, out of the 4 limits, only last 2 limits are there. That is loan of 100, more than 100 crore, and turnover of more than equal to 200 crore. Can you hear me, guys? Guys, can you hear me? Are you with me? Yes, sir. Sir, this is your whole provision of section 138. One last time, tell me the limits and I'll let you take a break. What is the limit for internal audit? Internal audit is applicable to every company which is a listed company or unlisted public company having more than 100 crore. Last, turnover of 200. In case of private company, outstanding loan deposit more than 100 crore or turnover more than equal to 200 crore. Sir, this is your full chapter of accounts of companies. Sir, were you able to remember this? Guys, did you understand? Thank you so much, guys. Did you understand? Alright, guys. Guys, Audit and Auditors, a chapter which is very, very frequently asked and very easy to score, and relatively a small chapter. We should be able to finish this in the next 1 hour. Sir, Audit and Auditors starts from section number come on, section 139 and goes on till section number 148. Sir, section number 139. Sir, section number 139 talks about appointment of auditor. 140 talks about removal and resignation of auditor. 141 talks about powers and duties of auditors. 141 talks about what? Qualification of auditor. These 3 are the most important section of this chapter. Apart from that, 142 which talks about remuneration of auditor. 143 power and duties of auditor. 144 prohibited services for auditor. 145 auditor to sign the audit report. 146 auditor to attend the general meeting. 147 punishment. 148 cost audit. Sir, it is like a story. You appoint, remove, then qualification, remuneration, power, prohibited service, signature, AGM, punishments. Are you with me? Yes, sir. What is section number 139? Appointment of auditors. Guys, let me show you a table first. And after that table, we will move forward to the balance provision of this section. 139, let me make you revise from the table. Will you revise it from the table? Will you look at my screen and revise it from the table? A very short table, sir. 1 second. Hold on. Hold on. Audit and auditors. Sir, can you see my screen? Sir, this is how I'm going to make you revise so that it becomes very easy for you. This is the notes that we make in our regular batch. It gives a very organized picture of the chapter appointment of audit and auditors. For those students who don't have this notes, what you can do is you can make it along with the, now you cannot make it along with the live, but later on in recorded, you can pause and make it. Now put attention to understand the concept. Sir, what is section number 139 and revise along with me. By the end, you should be able to finish section 139. Sir, 139 is about appointment of auditor. Please listen to me very carefully. Sir, this is divided into broadly two parts. One is for normal company and the other one is for government company. For normal company also, sir, in each case, there are three questions. How will you appoint? Who will appoint first auditor? For how long? Who will appoint subsequent auditor? For how long? And what in case of casual vacancy? Three questions for each company. Sir, first for normal company. Who will appoint the first auditor, sir? That the first auditor will be appointed by board of director within 30 days of incorporation. But if the board of director fails, then the shareholders will appoint such auditor within 90 days by passing a resolution at the general meeting. Guys, are you with me? Yes, sir. Now this first auditor, till when will he continue to be the auditor? Till the next AGM, up to the first AGM. He will continue to be an auditor. Sir, can you repeat after me? Who will appoint? Board of director within. Can I zoom in? Okay. Can you see? Okay. Sir, first auditor, board of director will appoint within 30 days. Failure to appoint within 90 days, shareholder will appoint, and this will continue till the next AGM. So, first AGM. Sir, what about the subsequent auditor? Sir, the subsequent auditor we will discuss in detail. This is very frequently asked in exam, so listen to me very carefully. Sir, can you tell me how will subsequent auditor be appointed at the AGM? Sir, so it depends on whether the company has audit committee or not. Can you tell me which company is required to have audit committee? Guys, you should remember this, that audit committee, a listed public company or a company having paid up share capital of 10 crore or more, turnover of 100 crore or more, or outstanding loan debenture deposits of more than 50 crores will be required, of outstanding debenture deposits of more than 50 crores will be required to what have audit committee. Sir, sometimes do you think that how will I remember so many limits? Do you sometimes think that how will you remember so many limits? Sometimes there is paid up share capital 10 crore, sometimes there is paid up share capital 500 crores. In my YouTube, I've uploaded a 15 minutes video. In that 15 to 17 minutes video, if you see the ultimate solution book, in the ultimate solution book, go towards the end. There is a portion called best part of ultimate solution. In that, go to page number 16.4. In the page number 16.4, you will see that there are all the important limits are given in 4 pages. And these 4 pages are revised by me in that YouTube. Sir, that video is not in Hindi, not in English. Anyway, 100 crores, I will not say 100 crore. 100 crores, I'll say 100 crores only. So you can use that video to revise the limits, and in 15 to 17 minutes, you watch that 2-3 times. So maximum 1 hour, your problem will be solved. Okay. Now coming back, sir, what did I say? I was saying that turnover, listed company or paid up share capital 10 crore or more, turnover 100 crores or more, or outstanding loan more than 50 crore. Guys, these company will have to appoint audit committee. Guys, this company will have to appoint audit committee. Now tell me something, sir, after appointing audit committee, how will you appoint an auditor? What is the step? So the audit committee will make a recommendation to the board. On what basis, sir? Can anyone tell me? Audit committee will consider 3 things. What are those 3 things? The number 1, whether the auditor is qualified and experienced or not. Number 2, whether such qualification and experience is commensurate with the size of my business. And number 3, the cases of professional misconducts on such auditor. Are you able to recollect something of this sort? So after considering these things, look at the screen. Sir, this is the process. The audit committee will recommend a name to the board of director. What is that? What will he check, sir? MCQ. What is MCQ? Q, whether the qualification and experience. see whether such qualification and experience is commensurate with the size of the business, and M, whether there is any case of professional misconduct. After considering these things, he will make a recommendation to the board. If the board is okay with the recommendation, what will the board do? The board will recommend it to the member. The member will appoint such person by passing ordinary resolution, and this auditor will stay in the company till the 6th AGM. So for 5 years, so from first AGM to the 6th AGM. But what, sir, a question came in exam. What if board does not agree with the recommendation of the audit committee? In that case, sir, the board will write down the reason for disagreement and ask the audit committee to reconsider the recommendation. Reconsider the recommendation. Now, if the audit committee is willing to reconsider, then what will audit committee do? Remove name of PwC and give a new name, probably EY. And again the same loop. But what if audit committee refuses to reconsider? Sir, stay one step ahead of me. You will not be able to learn otherwise. Stay one step ahead of me. If the audit committee is not willing to reconsider, then the board of director will reject the audit committee's recommendation, reasons to be recorded in writing, and give its own recommendation to the members. Give its own recommendation to the members. Guys, are you with me? Did you understand what I just said? So this is what you have to do. This is how your subsequent auditor is appointed, and he will be here for a period of 5 years. That is till the 6th AGM. Now listen to me very carefully. Sir, what if there is a casual vacancy? Sir, what is casual vacancy? Sir, what is casual? I'm sure you know what is casual vacancy. What is casual vacancy? So basically, if you appointed an auditor for 5 years and in between, sometime his office got vacant. Why, sir? He died. His firm dissolved. Anything could have happened. So in that case, if there is a casual vacancy, who will appoint the auditor? Sir, that auditor will be appointed by the board within 30 days. Do you need to involve shareholders? No, sir. Now this new auditor, till when will he continue, sir? Let me ask you, sir, if an auditor was appointed for 5 years, okay, after 3 years he died, a new auditor came. The new auditor, will he stay for the balance 2 years or fresh 5 years? Balance 2 years or fresh 5 years? Then neither balance 2 years nor fresh 5 years, just till the next AGM. In the next AGM, you will properly appoint an auditor. So this auditor will be there till the next AGM. Now the question is, sir, do you need to involve shareholders? No. But in case if it is a case of resignation, in case of resignation, the board will appoint within 30 days. But after that, within 3 months, the board is going to take approval of the shareholder. The board is going to take approval of the shareholder by passing an ordinary resolution. Sir, this is the provision for what? This is the provision for normal company. Sir, what about government company? Very simple, sir. In government company, the first right to appoint auditor goes to C&AG. What is the full form of C&AG? Comptroller and Auditor General of India. Now listen to me very carefully. Sir, in case of a government company, the first right will go to what? C&AG. Now, sir, in case of government company, the C&AG will appoint within, first auditor within 60 days. If the C&AG fails, it will be appointed by the board of director within 30 days. If board also fails, then shareholder will appoint within 60 days, and this tenure will be till next AGM. Sir, what about subsequent auditor? Sir, subsequent, listen to me very carefully. In government company, auditor changes every year. So subsequent auditor at the start of financial year, within 180 days, who will appoint C&AG? If C&AG fails, remove C&AG. He is not even able to appoint within 180 days. Why are you relying on him? You will have to appoint within 180 days, and this auditor will continue till the next AGM. And sir, in case of casual vacancy, sir, the C&AG will fill within 30 days. If C&AG will fail, then the board will fill within the next 30 days. And the tenure will be till the next AGM. So for government company, the concept is very clear, sir. The auditor is going to be there only for 1 year till the next AGM. Who is going to appoint? Irrespective of whether C&AG appoints, board appoints, or shareholder appoints, he is going to be there only till the next AGM. Guys, are you with me? Guys, are you with me? Yes, sir. Sir, this is what this is your table which explains appointment. Please revise this. Look at the screen and revise this carefully, please. Please look at the screen and revise this carefully. This is very important for, it is very important for you to learn this. Okay. Okay, done, sir. Sir, what is the next point after the first auditor, second auditor, and casual vacancy? Now coming to the more important point, sir. I have organized this note very nicely. Listen to me very carefully. Sir, auditor, if he is getting appointed, before appointment he has to do certain things. After appointment he has to do certain things. What are the things that he has to do before appointment? Sir, before appointment he will have to give his written consent. He will have to give his written consent. And apart from that, very important, he will have to give a certificate before appointment, a certificate in which he will write down 4 things. That the 4 things are basically L, that he is with the L, he is with his appointment is within the limits as per the Companies Act. Just a side note, what is the limits of the Companies Act for appointment as an auditor? What is the limit? In how many companies can you become an auditor? 20. But in case of a firm, in firm also it is 20 for each partner. But you know there is a limit on how to count 20, right? You'll not count dormant company. You'll not count private company which has okay, we'll come to that. Don't worry, we'll come to that. So the point is, what is the point, sir? The point is that, beta, please listen to me. Sir, in certificates, you will have to write 4 things. Number 1, sir, limit, that the appointment is as per the, within the limit as per the Companies Act. Number 2, that he is eligible to be appointed. Number 3, that the eligible appointment is as per the terms as of this act. And last, that the list of proceedings disclosed is true and complete, that he has disclosed all the limits. So if I am becoming an auditor, I will take a certificate. In this I'll write, what will I write? You know, I'll write, let the proceedings begin. What will I write? I'll write, let the proceedings begin. What is L? That the appointment is within limit. What is E? I'm eligible for appointment. What is T? The terms of appointment. And proceedings, what is the proceedings? That the list of proceedings that I have given is true and complete. Once I give this 4 thing in certificate and a written consent, only then I'll be eligible for appointment. Now what after appointment, sir? This was before appointment. What after appointment? After appointment, the company will go to the ROC and inform in the form ADT1 within 15 days that बधाई हो हमारे घर ऑडिटर हुआ है. मतलब बधाई हो तुम्हारे घर ऑडिट, मतलब congratulations, we have an auditor in our house now. Sir, the in English it lost its joke, the joke completely got lost, but that's okay. Sir, what did I say? Auditor. What did I say? Auditor, once you appoint within 15 days. One thing in north and south, one thing is common. After one joke, the contact that boys, one boy and girl who are in relation, they'll give to each other. You laughed. It was very funny. That contact is there in north also, in south also, here also, there also, everywhere. That love is universal. This love, the love that you're, you know, the love where you know that I'm going to get married to this girl only, I'm going to get married to this boy only, then 2 months later, I don't think it is working anymore. And it's not you, it's me. This is the kind of love. But anyway, I just saw someone doing it here, so I just, it reminded me of north, not my time, it reminded me of north. Listen to me, sir, very carefully. On appointment of auditor, within 15 days of appointment of auditor, you will have to file ADT1. Similarly, today only you studied NFRA 1. NFRA, within 15 days of appointment, NFRA, you will have to file NFRA 1, where you state that who is going to be the auditor. After that, sir, listen to me very carefully. Sir, tenure, appointment, reappointment, very simple. Sir, you know all the provision, just quickly answer. For how long individual can be appointed as auditor? For 1 term of 5 consecutive years. What about firm? 2 terms of 5 consecutive years. Sir, listen to me. If I was appointed in a company, after 3 years I resigned, but immediately after resignation I realized, oh shit, I made a mistake. Then I went to the company and I said, please make me the auditor again. The company said that no, your term is expired. I said, oh, my term is for 5 years. How many years did I work? 3 years. Appoint me for the remaining 2 years. Can I be appointed for remaining 2 years? The answer is no, sir. 1 term of up to 5 years. If after 3 years I resign, my term is finished. Now if I go again, it is the second term, and second term is not allowed. Coming back, sir, individual 1 term of 5 consecutive years. Firm, 2 terms of 5. After that, what you have to do? Cooling period. Cooling period will be for a period of 3 years, in which 3 years. Cooling period will be for 5 years. And in cooling period, no auditor shall be associated with the company. No auditor shall be appointed or reappointed in that company. You will not be associated as an auditor. Now coming back, sir, there is what is this provision called? This provision is called rotation of auditor. So in a company, auditor cannot stay the same for more than 10 years. This provision is called rotation of auditor. Is it applicable to all the companies? If I open a small company, sir, small company, will I have to rotate the auditors? The answer is no, sir. Rotation provision is applicable to big companies like a company which is a listed company, a unlisted public company having paid up share capital of 10 crore or more, unlisted private company having paid up share capital of 50 crore or more, or any company is having borrowing of more than equal to 50 crore. So if you're a big company only, then rotation will apply. However, to OPC and small company, it will not apply. To OPC and small company, it will not apply. Can you repeat the limit once, please? Listed company, unlisted public company having paid up share capital of 10 crore or more, unlisted 50 crore or more, and all deposit borrowings or deposits more than equal to 50 crore. Interestingly, there is no problem here. All more than equal to, more than equal to, more than equal to. After this, sir, I told you the rotation. Individual 1 term of 5 years, firm 2 terms of 5. After this, sir, they will have to go for a cooling period in which, sir, after telling you this point, I'll give you 3 questions. If you answer these 3 questions, you are very smart. If you answer 2 out of 3, you are good. If you answer 1 out of 3, you are dumb. If you answer 0 out of 3, ask your friend to give you one. Huh? Okay. So if you get 0 out of 3, then ask your friend to give you one gali. What do you call gali in Tamil? Good language. Ask your words to call you very nicely. As a friendly way, he'll call you, then you will understand. Sir, please, 3 questions after this. Okay, ready? In cooling period, you should not be eligible for reappointment in the same company for 5 years. You'll not be eligible for reappointment in the same company for 5 years. My question is that I was auditor in Reliance for 5 years. After that, I decided I cannot become an auditor. So what I did was I became auditor of its subsidiary company. I became auditor of its subsidiary company. Is it allowed? Question 1. Is it allowed or not? I became auditor. Who are saying yes, yes? Please raise hand. Who are saying yes? Raise hand. Who are saying no? Okay. Second question. 50-50. Some people are not even saying, well, I will not participate only. I know that if I participate, I'll be dumb. Or 0. Why to play? Sir, second question. So I was auditor of Reliance for 5 years. Now law said that please don't be associated with Reliance. But I said, okay, I'll not become statutory auditor. I'll become internal auditor. Can I become internal auditor? Sir, question number 1 was what? Can I become statutory auditor of Reliance Jio, subsidiary company? The answer is yes. Question 2. Can I become internal auditor in Reliance only, not its subsidiary? In Reliance, can I become internal auditor? The answer is yes. Sir, I decided to become cost auditor of subsidiary company. Can I become cost auditor of subsidiary company? Not statutory auditor. I decided to become cost auditor of subsidiary company. Huh? Sir, cost auditor, sir, subsidiary company, sir. Yes, sir. The answer is no. Why, sir? Because you cannot become a cost auditor. Who can become a cost auditor? CMA in practice. Sir, your question is wrong. I know my brother is pursuing CA also, CMA also. He can become. No. You cannot have CA in practice and CMA in practice at the same time. Okay, sir. Then he has CMA in practice, sir. Then why is he reading this provision? This is for CA in practice. So this question is not relevant for him. So this is relevant for those who have CA in practice and they cannot become cost auditor. Are you with me? Yes, sir. After that, sir, coming to the next point. Very, very important question. That in the cooling off period. What is this cooling off period? For 5 years, you will not be appointed as an auditor. Sir, for individual, listen to me. Individual 5 years, he will be appointed as auditor. Then 5 years, he will have to take break. For firm, 5 years, they will be appointed. Then they will be reappointed for 5 years. And then they will have to take a break of 5 years. Then in this cooling off period of 5 years, there are some conditions for the carefully, please. Condition 1, sir. Sir, audit firm having common partners to the audit firm whose tenure just expired, ineligible for being appointed. What do you mean, sir? I'll tell you one thing, sir. For example, Shrestha is a CA firm. In Shrestha CA firm was doing audit of Reliance. Who was doing on behalf of Shrestha? Ram Harsha sir was doing audit on behalf of Shrestha. And he was doing audit of Reliance. Now, 10 years got finished. So after 10 years, can Shrestha be reappointed? No, sir. So what we did was, there was a firm called the Rankers Way. And the Rankers Way decided to become the auditor of Reliance. But sir, it turned out that Ram Harsha sir is a partner in the Rankers Way also. Now can rankers become auditors, sir? No, sir. We are trying to find independent person. We are trying to keep you away from Reliance. Why are you going so close to Reliance? So law said that if there are common partners, the other firm also will be disqualified for 5 years. Are you with me, sir? Yes, sir. Point number 2, listen to me very carefully. Sir, if we are all under the same network firm, what is same network firm? Sir, same network firm, for example, E and Y. Do you know what is E and Y? What? Ernst and Young. Sir, Ernst and Young is a brand name. Below Ernst and Young, there are a lot of firms. Now understand, one firm was doing the audit of Reliance. Now that firm tenure got over. Can other firm, which is of the same network firm of E and Y, can that other firm become auditor? No, sir. We are saying go away now. Why are you not going away? Sir, if you are under the same network firm, what is same network firm? Same network firm means same brand name, same trade name, or common control. Can you repeat these 3 things, sir? Same common control and same trade name. If that is the case, you are a same network firm and you will not be eligible to become an auditor. And the third and the most important point, sir, if a partner who is in charge of the audit firm and certifies financial statement retires the firm and joins another firm, it will also be ineligible for 5 years. So this third example is different. Listen to me very carefully. Assume there is an academy, X Academy. Okay. Now X Academy was doing audit of Reliance. X firm was doing audit of Reliance. Now in X firm, Shripal. In X firm, Mr. Shripal, CA Shripal was doing the audit and he was signing the financial statement. Now once the tenure was over, Shripal left that firm and came to my firm. And now my firm is doing audit of Reliance. Sir, can my firm continue to do audit of Reliance? The answer is no. Because the person who certified the financial statement has joined me. Sir, what is the difference between this point and first point? The first point that you said common partners, what is the difference? It's the same thing, na? Sir, in first point there are common partners. Ram Harsha sir is with that academy also, this academy also. But in third point, he left that firm and he joined this firm. In that case, he will not come alone. He will bring the disqualification also. Are you with me? Yes, sir. After that, coming to the next point, manner of rotation of auditor. Please listen to me very, very carefully. Sir, what is the manner of rotation of auditor? How will you rotate the auditor? Sir, basically, when you are rotating the auditor, so one auditor went away. Instead of him, you want to bring a new auditor. How will you bring the new auditor? Same thing, sir. Audit committee will have to consider MCQ and give a recommendation to the board. If the board is okay, board will place it in the general meeting. If board is not okay, board will ask the audit committee to reconsider. If the audit reconsiders, okay. If the audit committee disagrees to reconsider, then the board will reject their recommendation, write the reason for that, and give their fresh recommendation to the shareholders of the company. Are you with me? Yes, sir. Now, rotation of partners internally. Please listen to me very carefully. Sir, what is rotation of partners internally? Do you know? Do you know? What do you know? Are you giving exam or which exam are you giving? Foundation? Huh? CA. How many students it is their second attempt? Second or more, I mean. You should know, yaar. Please answer. You should know. At least you should know. And how many people first attempt? You should know. There is no reason why any student who has exam in the next 1 month should not know. Or in the next 6 months should not know. If you have studied audit or law, what is rotation of partner internally? It basically means that in Deloitte, for example, Deloitte, I am the partner. If in Deloitte, I am the partner. Now, I am doing audit of a company. Now, for example, if you are the shareholders of Deloitte, of Reliance. Now, you as a shareholder, what you can ask that, sir, up till now in the last 3 years, on behalf of Deloitte, Shubham sir was doing audit. Now we want to change, and on behalf of Deloitte, we want Ram Harsha sir to do audit. Both me and Ram Harsha sir, both are partners in Deloitte only. But did you change the firm? No. The firm is the same, but the partners are rotating internally. What will happen, sir? Sir, what will happen is, if one partner is doing fraud, no, probably when you change the partner, that other partner might stop the fraud. So the chances of fraud reduces. So audit rotation internally, who will ask? You will. You as in you are the shareholder. You can ask for 2 things. Either you can ask for joint auditor, that more than one auditor will do the audit, or you can say that in a firm only the partners will rotate internally. How will you ask for this thing, sir? By passing an ordinary resolution at the general meeting. By passing an ordinary resolution at the general meeting. And the last point, sir, an auditor firm, let's say for example a firm will continue for 5 years, then reappointed for 5 years. An individual will continue for 5 years. But imagine, sir, an auditor shall not be reappointed. An auditor will not be reappointed if he's not, an auditor may be reappointed only if he is not disqualified. He should not be disqualified. Number two, he has not expressed his unwillingness to continue. He should not have expressed his unwillingness in writing, and SR has not been passed, providing expressly that he shall not be appointed or appointing some other person. It means that after 5 years, sir, my firm can be reappointed only if, number one, I'm not disqualified. Number two, I have not expressed my unwillingness in writing. It means my consent is still there. And number three, SR has not been passed. That is, shareholders are not against me. If shareholder will say, please don't appoint Deloitte, or if shareholders will say, instead of Deloitte, appoint KPMG, then in that case, I will not be reappointed. So to get reappointed, what are the conditions? I should be qualified, my willingness should be there, and shareholders should be in my support. Are you with me? Do you understand these 3 points, sir? Sir, did you understand? This is your complete section number 139. Quickly take a glance, and then I'll explain you the rest. Madam, marathon, Mara is done, Thorn is left. Now you're coming to the session. हाँ हाँ मुड़ के देखो. हाँ, very good. Not a single girl turned, and not a single boy didn't turn. सर आपके तो मजे हैं, आपको तो मुड़ना भी नहीं पड़ता. To translate? No, why should I translate it? Listen to me very carefully, guys. Now you explain to Hindi to Tamil, Tamil to English, English to Telugu, everything you do. Guys, listen to me very carefully. Listen to me very carefully, guys. Listen to me, sir. Section number 140. Listen to me. Sir, section 139 done? Sir, what is section number 139? Appointment of auditor. Now coming to section number 140, removal and resignation of auditor. Sir, very interesting provision. When you read it from here, it is super easy, sir. What is resignation of auditor? Listen to me very carefully. Sir, I as an auditor, can I resign? Of course, sir, I can resign. So for resigning, I will have to send a notice to the company. The auditor will send a notice to the company that kal se main nahi aunga. From tomorrow onwards, I'll not come. From tomorrow onwards, I'll not come. Sir, you cannot send a notice like that. You're not a maid in their home that I'll not come. That is not how you can do. You'll have to serve a notice period. So notice will be for at least 30 days. At least 30 days notice period you will have to give. And then after resigning, within 30 days, what you will do? Within 30 days, you will have to give the reason for resignation. To whom? To the company also, to ROC also, and in case of government company, to C&AG. And this notice has to be given in a form called ADT3. This is mandatory. This is mandatory, sir. You will state the reasons for resignation. Sir, what if I didn't give the reasons for resignation? I said I don't want to disclose the reasons. Sir, you will have to. It is mandatory. If you fail to disclose the reasons, you will be penalized. So in case if the auditor fails to file ADT3, he'll be liable for a fine of 50,000 rupees or amount of remuneration whichever is lower. 50,000 or remuneration whichever is lower, and for every day 500 rupees per day up to 2 lakh rupees. So it is mandatory for you to file the ADT3, which is notice of resignation. Guys, what is ADT3? Basically, you have to state the reasons for resignation. If you know, if an auditor resigns from a company, the company's stock market is going to fall. Why? Because auditor resigning indicates fraud. So auditor has to give the reason very upfront so that the stock market stays calm. Otherwise, the stock market will think all bad things and the stock market will come down. Are you with me? Yes, sir. Sir, this is what your resignation. Resignation is very simple. You can resign, but after resigning, you will have to file ADT within 30 days. What about, sir? What about removal? Who can remove me? Who can remove me? Can you tell me who can remove me? For auditor, who can remove auditor? Sir, auditor can be removed by board also. Auditor can be removed by shareholders also. And auditor can be removed by tribunal also. Tribunal when in case of fraud or something. individually each and understand everything you understand. Sir, what is the usual process for removal if the board wants to remove? So the process is that the board will first have to pass a board resolution. Then after board resolution also you cannot remove. You will have to take approval of CG. You'll have to take approval of CG, central government's approval. So sir, central government's approval, you'll have to within 30 days, you'll have to apply in the form ADT2. So I'll pass a board resolution, then ADT2, I'll go to the central government. Now central government, what he'll do, he'll take his time and give us approval. After CG's approval, I will get 60 days to call for shareholders general meeting, and in that I'll pass SR and I'll remove the auditor. So can you tell me the process? Step 1. Step 2. Within 30 days of board approval, go to the central government, inform ADT2. Step 3, central government will take its time and approve. Step 4, within 60 days of shareholder of CG's approval, call for a general meeting and remove them by passing a special resolution. Guys, are you with me? Yes, sir. After that, guys, listen to me. This is the process where board is removing you. What if shareholders want to remove you, sir? Sir, this question came in exam also, sir, 2 attempts ago. What if shareholders want to remove you? Sir, shareholder will have to send a special notice. What is special notice? Section 115 of the management chapter. Sir, section 115 special notice says that if special notice are required in 2 cases. Section number 140, section number 169. What is section 140? Removal of auditor. What is section 169? Removal of director. Sir, in special notice, what will happen? A group of shareholders, group as in how much? Sir, having minimum 1% of voting power or 5 lakh rupees of paid up. You should remember these things. What do you call gadhe in Tamil? Donkeys in Tamil. What do you call donkeys in Tamil? Cuddle. Huh? Donkeys. So, English batch, no? 100% English. Sir, donkeys, you should remember section 115. You'll not remember 115's limit. What are you doing, boss? Sir, section 115, 1% of voting power or 5 lakh rupees of paid up share capital. 5 lakh rupees of paid up share capital. Then you will have to send a notice to the company. So that notice will be sent at least 14 days before. There are 2 ways. If you don't remember, turn your pages, go to 115, read and then speak. Otherwise, what? You will sit like this and see me. What will happen? Sir, 115 special notice, you have to send at least 14 days. The one person will comment, I guess there is no one in sir's class. Okay, listen to me. Sir, so 115 special notice at least 14 days before the general meeting and maximum 3 months before the general meeting. So not earlier than 3 months before the general meeting, but at least 14 days before the general meeting, a special notice has to be received at the registered office of the company. Now listen to the process after that, sir. For example, can 5 students randomly stand up in the class? For your own engagement, 5 students, come on please. Randomly. Okay. Whosoever stand ups, first 5 will get 70 plus in law. Okay, bus, done. Done. Took me less than 10 seconds, man. Okay, 1, 2, 3, 4, 5. Okay. So this 5 people wants to remove auditor. Who is the auditor, sir? Ram Harsha, sir. Okay, Ram Harsha sir is the auditor. No. Let's say one Mr. X is the auditor. They want to remove the auditor. What is the process, sir? Sir, they will have to spend a special notice to the company. Now, if they come to the company that I want to remove auditor, what will I ask? Are you a big shareholder? They'll say, yes, sir. We have either 5 lakh rupees of paid up share capital or 1% of the voting power. I said, okay. You should come to me at least 14 days before the general meeting. Did you come 14 days before? He said, yes, sir. But not earlier than 3 months. I checked time again. Not earlier than 3 months, sir. Now, after that, what will the company do? I, as a company, I got to know Shripal is my auditor. Shripal, come here, please. Please come here. Do you mind? Shripal is the auditor. Sir, Shripal is the auditor. Please come here. Now, Shripal, I am the company. These people told me that we want to remove the auditor Shripal. So I took that notice and I went to Shripal. I said, Shripal, a notice has come. The shareholders want to remove you. Now, if you want to give any representation, if you want to speak anything, you tell me. Now, Shripal will start writing his letter, sir. He'll start saying that, why are you removing me? You should not remove me. You are misunderstanding, whatever he wants to write. Now, what I'll do is, I'll take representation from him, whatever he has to say. Now, you people don't know what is going on, right? Now, what I'll do, I'll send a notice to all the shareholders saying, shareholders, listen to me. Few of the eligible shareholders had sent a special notice for removing Shripal. And on that, Shripal has given his representation also. You kindly read it. Why? because in the next few days there is general meeting. All of you will have to come, and then you will decide whether we remove Shripal or not. Now Shripal gave his representation, written representation. Now after that, what will happen, sir? 7 days later, general meeting will be happen. All of you sit down. All of you sit down. Sir, special general meeting came. Now the proposal is, the shareholders have sent a special notice to remove Shripal. I had sent you the written representation. Now, Shripal, do you want to speak anything? Shripal will give his oral representation also, because orally it is easy to convince. After that, I'll ask you all to vote. If you vote and if you pass SR, means you are convinced that he should be removed, he should be removed. But if you don't pass SR, he will not be removed. Do you understand the process, sir? But what happened, I'll tell you. Shripal already knew that he has done some mistakes and he is going to be removed. But he had problem with his ex who is in the classroom. So what he did was, he in the representation, he started writing all things about her ex, ki she is very problematic, very disturbing, because of her I am going in trauma. Everything he started writing. Sir, is it relevant? No. He is misusing his power. What was his power? His power is to make a written representation, and he is misusing his power. So in that case, what can I do? Sir, in that case, I can avoid sending it to you. Can I say no, I'll not send it to you? No, sir. Law has made the director responsible that whatever representation comes, you send. But sir, I don't want to send it, so I'll have to go to the CG or tribunal, and I'll have to tell them, see, he is misusing his position. Then CG will say, okay, don't send his written representation. Don't send his written representation, and then I'll not send. But myself, I cannot decide whether I have to send or not. I'll have to go to CG or tribunal. Are you with me? Yes, sir. One question should come in your mind, that there are two representations. One is written, one is oral. This provision that you said about CG or tribunal, this is only for written. Question. What if he comes in oral and takes the mic and starts saying, sir? Then you are only mad, na? After looking at the written representation, if you are giving oral representation, then you deserve to listen to all these things. So basically, when you know that he is doing these things in written representation, you will not give him oral representation, right? Are you with me? Yes, sir. Thank you, Shripal. Please sit. Please sit. Look at the process here, sir. Look at the process. There's shareholders, those 5 people who stood up, 1% voting power, 5 lakh paid up share capital to the company, special notice. Company will go to the auditor. Auditor will have 2 rights: oral representation, written representation. Oral representation where, sir? At the general meeting. Written representation, the auditor may request this to forward to the shareholder. Then if the company forwards to the shareholder, great. The written representation, if I could not forward to the shareholder, why could I not forward, sir? He gave 1 day before the meeting, sir. How will I send it to you? In that case, you will read this out at the general meeting. So basically, I'll read this loud at the general meeting that, guys, I could not send you his written representation. He had written this thing. And along with that, he will get the right of oral representation. Guys, are you with me? Yes, sir. Now, after that, what? After this, the process is not written here, but you will call for a general meeting. You will pass SR. If SR is passed, he will be removed. Are you with me? Yes, sir. Now, any aggrieved person, what do you mean by aggrieved person? Aggrieved person means affected person may apply to the NCLT. You'll not go to CG, I'm sorry, you'll go to NCLT. And if tribunal is satisfied that written representation is abused, misused, he will say that need not send the written representation. Guys, did you understand the concept? This is how shareholders are removing you. And the last one, sir, tribunal can remove you. When will tribunal remove you, sir? For tribunal to remove you, there has to be some case of fraud, minor or major. Now, what is the case, sir? Sir, the tribunal may suo motu. It means on its own motion, or on an application by CG or any person. If the tribunal is tribunal is satisfied that auditor is acting in fraudulent manner or colluded with the management in the fraud. So either he's doing fraud or he's helping in fraud. So if it is a case of fraud, then tribunal will act. Sir, what will the tribunal do? Tribunal will change the auditor? No, sir. Tribunal will not interfere so easily. Tribunal will not change. Tribunal will ask the company that you change the auditor. I will not change. So tribunal may by order direct the company to change the auditor. What happens, sir? The tribunal may. So now on for next 5-7 sections, what we will do after completing each section, so we are going to clap everyone, so that those who are, they will realize, oh, one section over, opportunity to board the train now. Okay, some people may use it as an opportunity also, that now if I start sleeping, I can sleep till the next clap. It's like snooze button. Each clap is like snooze button also. But coming back, listen to me very carefully, sir. tribunal, what happened? Tribunal either suo motu or on application by anyone. If he is satisfied that auditor is either acting in a fraudulent manner or colluded in fraud, then he will ask the company that you change the auditor. I am not going to do it. But sir, if it is a serious fraud means if central government comes to the tribunal and says, boss, it is very urgent, then in that case, what the tribunal will do? Tribunal will send an order immediately that your current auditor is not going to work anymore, and a new auditor will be appointed by CG and not the company. For example, sir, for example, Kingfisher fraud. In that case, you cannot sit that Kingfisher, you change the auditor. Or Satyam scam. In Satyam scam, auditor was a problem. So you cannot sit and say, okay, auditor, you only change. I will change immediately. So what is the last case, sir? Sir, if an application is made by CG and NCLT is satisfied that change is required, then in that case, within 15 days of such application, tribunal to order, auditor shall not function anymore, and CG to appoint new auditor. Within 15 days of such application, he'll say, auditor, you will not work anymore, and CG will bring a new auditor. This is what, sir, more serious fraud. This one was, the earlier one was a little light action, that company you only change, but here we are only removing the auditor. But listen to me, but when NCLT makes such order, as in if you removed an auditor, that auditor will not be eligible for 5 years and will be liable for fraud under 447. Will be liable for fraud. Who, sir? Auditor. Sir, this is important for exam. If in Satyam scam, if tribunal removed PwC and appointed KPMG, PwC will be disqualified for 5 years automatically and also will be liable for fraud under 447. Guys, are you with me? This is your end of section number 140. A good big section, sir. Clap. Louder. Okay. This is what section number 140. Sir, take a quick glance, then we'll move to 141. The last biggest section of this. After that, it's manageable. हाँ बोल किशन, क्या बोल रहा था? Done, sir. Sir, done. Sir, coming to the next section, which is section number 141. The most important section of your whole Companies Act. If there is the most important section, then that is 135. CSR. That is most important. That's what I'm saying. But after that, if there is any section, then that is 141. Okay. Sir, what is section 141? Sir, 141 talks about eligibility and qualification of auditor. Sir, this is the only section where I ask you to remember the subsection, clause and subclause also, because you are going to be a CA, you are going to be an auditor, you need to remember these clauses. This is the time that you will remember along with me. Very easy, sir. Sir, subsection 1, who can become an auditor? Sir, any individual who is a CA as per CA Act. So basically a CA in practice, or a firm in which majority are CA in practice. Majority, we are not asking for all the members, but all majority should be CA in practice. But in case of firm, who will sign, sir? In case of firm, only CAs will sign. In case of firm, only CAs will sign. Now, sir, that was subsection 2 basically. Now the subsection 3 is disqualification. Sir, which people are disqualified from becoming an auditor? Section 141 subsection 3 says that the following person shall be disqualified. Who is disqualified? The following section shall be disqualified. Sir, following person. Sir, kaun se person? Which person? Can you tell me? This is how many person? Sir, following person shall be disqualified. Number 1, Body corporate. Number 2, officer or employee of the company. What is number 2? Officer or employee of the company. Number 3, partner or employee of the officer or employee of the company. The number 1, body corporate. That is number 1. Let's say clause A. Clause B, officer or employee of the company. Clause C, partner or employee of the officer or employee of the company. So basically company, okay. Subclause D, sorry, clause D. Listen to me very carefully. What is clause D? Sir, any person, a person shall be disqualified if he or his relative or his partner holds any security in cash or so. What is cash or so? Company, associate, subsidiary holding or subsidiary of holding. What did I say? Company, associate. So if I hold any security, not only me, if my relative or any of my partner holds any securities in that cash or so, not only company, all the group companies, sir, then in that case I will be disqualified. But there is a minor exception, sir, that my relative, what is the definition of relative, sir? Relative means spouse, father, mother, brother, sister, son, daughter, daughter's husband, son's wife, son's husband, daughter, no, son's wife, daughter. You have to take care of the generation also, na? So son's wife and daughter's husband. Then stepfather, stepmother, stepbrother, stepsister, stepson. Stepdaughter is not covered. So these are the definition of relative. Now tell me something, please, sir. For relative, we have given a small exception that my relative can hold shares in the company. How much shares, sir? Up to a face value of rupees 1 lakh. So exact 1 lakh rupees also you hold, not a problem. Up to 1 lakh is allowed. Above 1 lakh is not allowed. Sir, can I hold? No. Can my partner hold? No. Can my relative hold? Yes. How much? Up to 1 value. Sir, face value or market value? Face value. Are you okay? Yes, sir. This is subclause 1. What is subclause 2, sir? Me, my relative or partner shall not be indebted to cash or so for amount exceeding 5 lakh. Exactly 5 lakh if you're indebted, no problem. More than 5, you're not listening to me. This will come in exam. Exact 5 lakh you're indebted, not a problem, sir. More than 5 lakh, it is a problem. And third, me, my relative or partner should not have given guarantee or security exceeding 1 lakh rupees to cash or so. So up to 1 lakh rupees of security in case of relative is okay. Up to 1 lakh rupees of indebtedness is okay. Up to 1 lakh rupees of guarantee security is okay. More than is problem. Exact 1 lakh, exact 5 lakh is all okay. Guys, are you with me? Yes, sir. Clause number E, listen to me very carefully. Sir, if a person or his firm, if a person or firm has a business relation with cash or so or associate of holding, you see cash, so, AOH. If there is a business relation, then you cannot be qualified as a direct auditor. But what is not covered in business relations, sir? Any transaction which is done in arm's length price or any transaction which is of professional service. In that case, it will not be considered as business relation. What will not be considered business relation? Transaction done in arm's length price and transaction which are professional services. Are you with me? Yes, sir. Point number F. Sir, any person whose relative is a director or key managerial person in the company, such person will be disqualified. What did I say, sir? Any person whose relative is a director or key manager in the company, that person will be disqualified. I'll give you a simple example, sir. Sir, if there is a company called Reliance. In Reliance, there is a director called Mukesh Ambani, correct? Now, for example, Mukesh Ambani's son's name is Akash Ambani, okay? Question is, let's assume that Akash Ambani is not a director of Reliance. Let's assume. Who is the only director? Mukesh Ambani. My question is, will you let Akash Ambani become Reliance auditor? My question is auditor independent? Is Akash Ambani independent? No, sir. His relative is a director in the company. So he is also an influential position. So he should not be allowed. Similarly, any person whose relative is a director or key managerial person in the company will not be allowed. Sir, there was a question in exam. Sir, a person has a relative who is a storekeeper in the company, who is a warehouse keeper in the company. Can that person become auditor? Warehouse keeper, smaller position. He should not be a director or key managerial person. Are you understanding the objective, sir? Yes, sir. After that, G, listen to me very carefully. Sir, if a person who is in full-time employee or holds appointment of more than 20 companies, then you should not be in full-time employee and you should not be appointed in more than 20 companies. What is the limit, sir? 20 companies. For firm, that 20 companies is for, in case of firm, the 20 companies is for every person who will say will get 70 plus in law. You have to say each partner, okay? because I want you to get 70 plus in law. So you have to answer each partner. I'll fill in the blanks. Okay. Every firm, in case of firm, the maximum limit shall be 20 for or 20 clients for. Wonderful. I'm so proud of you. Those who didn't say null, donkey. Donkey, listen to me. Sir, you cannot be in whole time employment. You don't mind, na? Are you getting offended? Should be. You are getting offended? Where is the. Listen to me. Getting offended? Huh? But I didn't call you donkey. Why are you taking it personally? But you're taking personally. Then why are you getting offended? Donkey. Listen to me, guys. Guys, section number, listen to me very carefully, sir. Section number. So basically, you should not be in whole time employment, and you should not be holding, it should not be an auditor of more than 20 companies. Sir, when you're calculating the limit of 20, listen to me very carefully. There are 4 companies that you'll exclude. OPC, small company, dormant company, and a private company paid up share capital less than 100 crore. So basically, please listen to me very carefully. 20 companies is the limit. OPC, small company, dormant company, and private company which has paid up share capital less than 100 crore, which is almost 95% of private companies, sir. These companies will not be included. So this is a very important question. Point number G. Sir, let me recollect till here, then we will go to H. Sir, what is point number 1? You should not be a body corporate. Sir, can LLP become an auditor? Yes. Body corporate, but not an LLP. Number 2, officer or employee of the company. Number 3, partner or employee of the officer or employee of the company. Number D, clause 1, 2, 3, subclause 1 to 3. Clause 1, a person whose relative or partner does not hold any security in cash or so, but relative can hold security in company up to a face value of 1 lakh. Exact is also allowed. Number 2, acha, let me add a point here, sir. I'll add it at the end. Number 2, subclause 2, what is subclause 2? Any person, relative or partner should not be indebted to cash or so exceeding 5 lakh. And should not have given guarantee or security exceeding 1 lakh. Clause E, he should not have any business relation with the person, or firm should not have any business relation with cash, so or AOH. But business relation will not include transactions in arm length price. And number 2, professional services that you are rendered. Sir, point number F. What is point number F? The person whose relative is a director or key managerial person in the company, such person shall be disqualified. G. Sir, you should not be in full-time employment, or you should not hold more than 20 companies. Sir, for partnership firm, the limit is for each partner, and the exceptions are OPC, small company, dormant company, private company having paid up share capital of 10 crore, less than 10 crore. Exact 10 crore, you'll be counted. 100 crore, 100. Exact 100 crore, you'll be counted. More, less than 100 crore, you will not be counted. Point number 8, sir. Sir, if you're a person who is convicted of offense involving fraud, then in that case you will be disqualified for 10 years from the date of conviction. The date on which order was passed, from that 10 years you will be disqualified. Are you with me, sir? Yes, sir. And the last one, guys, listen to me very carefully. If a person renders services which is prohibited under 144 to the company or subsidiary or holding, associate is not covered, cash is not covered. In cash, A is not covered. If you are providing a service mentioned under 144 to company, subsidiary or holding, you will be disqualified. So you cannot provide these services. Sir, but what if I got appointed as auditor, and after getting appointed, I attracted these disqualification? What will happen, sir? Sir, if after getting appointed, disqualification happens, there will be casual vacancy. There will be casual vacancy, and your office will be vacated immediately. And then board will have to appoint within 30 days. But if government company, CAG will appoint 30 days, or else board will appoint within next 30 days. Guys, are you with me? Are you getting the interlinking? Yes, sir. Sir, your office will be vacated immediately. What did I say? Office will be vacated immediately. Any exception, sir? Any exception? Sir, if your relative holds up to 1 lakh of face value of security, but sometimes if your relative's shareholding gets exceeded, you will get a corrective action of 60 days. In 60 days, you have the time to request your relatives to bring down their shareholding. If they bring down the shareholding, you will not be disqualified. But if they do not bring down the shareholding, then in that case, you will be disqualified. Guys, are you with me? Guys, are you understanding the concepts? Yes, sir. Sir, this is your section 141. Before I let you see for section 141, let me also relate one more section to this, which is 144. What is 144? Sir, prohibited service. Prohibited service, as in these services are something which an auditor cannot give. To whom? To the company, or to the subsidiary, or to the holding. Can you give to the associate company? comfortably, no problem. But otherwise, you cannot give the following services to company, subsidiary or holding directly or indirectly. What is indirectly, sir? If I cannot give that service, I asked my brother to give that service. That is indirect service. So you cannot give such service directly or indirectly. Which service, sir? Which service? Tell me. Anyone? Let's as a class together. Let's see if we can collate. Yes, sir. Investment advisory service, internal audit, actuary service, accounting and bookkeeping, banking service, banking and investment advisory, management service, bookkeeping हो गया. Others, wonderful. Others, one, he said one, and that was others. Wonderful. You are very well prepared for May 27. Sir, what are the services? Let me say. So the first one, accounting and bookkeeping service. Accounting and bookkeeping services. It's a bookkeeping services. Accounting and bookkeeping services. Number 2, internal audit. Number 3, designing and implementation of financial system. Designing and implementation of financial system. Sir, actuary services. Banking and investment advisory services. Banking and investment advisory services. Rendering of outsourced financial service. Okay, let it be closed, no problem. Rendering of outsourced financial service. Sir, management consultancy service and such other services as may be provided. As may be the same since start. Check. We are back. Thank you. Can you start this one, please? Okay, guys. All good? Okay. I was saying, guys, listen to me very carefully. I was talking about the kiss a BF home. Huh? Making me repeat such a weird thing again and again, the internet. Sir, something to a BF home. Home. Read like this only. Let's discuss the points. Number 1, bookkeeping, accounting and bookkeeping services. I, internal audit. S, designing and implementation of financial information system. A, actuary services. B, banking and investment advisory services. F, rendering of outsourced financial services. M, management. And O, other services as may be prescribed. These are the services that you cannot give as an auditor to the holding company, subsidiary company, or that company directly or indirectly. Can you give such services to associate company? Yes, sir. So number 2, sir, can you give GST audit service to your company? I am a statutory audit in Reliance. Can I do GST audit for Reliance? Yes, sir. There is no objection. Can I do tax audit for Reliance? Yes, sir. No. Can I do cost audit for Reliance? Thank you so much, sir. These are the prohibitions. Section number 141. Kindly revise and then we will move forward. Look at 141 first and then 144 and then we will move forward. Okay. Isn't? Guys, give me 2 minutes, please. Guys, check. Take a break for 5-10 minutes. 5 minutes at least. We need to set up, some problem is coming. Give us 5 minutes. Okay? Take a break. Check. Check. Okay. Let's see, guys, if this works for some time. Yeah, I think this works. At least let's try to finish the chapter. Okay. If it stops in between, we will be prepared. Okay, not a problem. All right. Guys, where were we? We were in section number 144. What is 144? Prohibition of restricted services. Services which cannot be given by the auditor to the company or its subsidiary company or holding company. Did you go through section 141 and 144? Did you go through section 141? Subsection 1, 2, 3, 3A to H. There are multiple clauses and sub clauses. You will have to remember at least till clause. Just remember one clause D and subclause 1, 2, 3. Subclause 1 is for security, 2 is for indebtedness, and 3 is for guarantee. Guys, are you with me? Yes, sir. This is section number 141. Now coming to section number 142. What is 142? Sir, 142 talks about remuneration of the Auditor. Sir, how will you decide the remuneration of the auditor? Sir, generally remuneration will be decided by the shareholder at the general meeting of the company. But in case of first auditor, because shareholders will not be appointing, therefore in that case remuneration will be decided by the board of director. Now listen to me very carefully, sir. What gets included in the remuneration? So sir, whatever food expense that you charge, hotel expense, stay expense, traveling expense, all those becomes a part of the remuneration. But sir, if you are paying anything for any other professional service which is being rendered, what are you doing? You are paying for other professional services. In that case that will not be included. So remuneration includes expenses for such audit and facilities, but remuneration excludes remuneration paid for any other services provided by him, like internal audit, GST audit, tax audit. These things will not be considered as a remuneration of the auditor under the company's audit. It will not be considered as company's audit remuneration. It will be considered as tax audit remuneration. Guys, are you with me? Are you understanding? Yes, sir. After that, 143 we will do towards the end. 144 is done. What is 145? 145 says auditor will sign the audit statement. Guys, auditor will sign the auditor's report, and if there is any qualification, observation or comment on any financial transaction which has adverse effect on the functioning of the company, then he will read it out before the general meeting and it will be open for inspection. What did I say? Sir, if there is any financial transaction which has adverse effect on the company, what do I mean? It means that, for example, company has incurred major losses. That financial transaction, if the auditor sees it, the auditor will state his qualification, observation or comments. So basically comments or auditor, and that comments will be kept read out before the general meeting and will be open to inspection. Guys, are you with me? It will be open for inspection as well. Now coming to 146. The auditor has to attend annual general meeting. That's why if you remember section 101, send notice of AGM, you send notice to mad people. Mad people? M, members. A, auditors. D, director. Sir, auditor, why do you send? Because auditor has to attend the annual general meeting. If the auditor cannot attend himself, he will send someone on his behalf. Sir, does the auditor has right to vote? No, sir. But does the auditor get to speak? Sir, only in matters which relates to financial statement. He does not get to speak. He has only the right to be heard. That is right to speak on such business which relates to him, but he does not have any right to vote. Are you with me? Yes, sir. After that, section 147, very important, sir. Sir, punishment. In section 139 to 146, you will see not a single punishment is given. Now, directly what it is going to say, if you have contravened with this section, company is going to face some punishment, auditor is going to face some punishment. Sir, if you contravene for section 139 to 146, then the company is liable to a fine of 25,000 to 5 lakh and officer in default 10,000 to 1 lakh. You don't have to remember this. But if the auditor contravenes 139, 144, 145, super important, sir. The only penalty that is important, if you ask me one penalty, sir, that is important, that is section 447, fraud. The second most important penalty is this one, sir, section 147, which says that if the auditor, listen to me very carefully, sir, if the auditor contravenes section 139, appointment, 144 provides prohibited service, or 145 does not sign the financial statement, in that case fine will be 25,000 to 5 lakh rupees or 4 times of remuneration, whichever is lower. What is the minimum fine? 25,000. Maximum 5 lakhs or 4 times of remuneration, whichever is lower. But if this was done intentionally, sir, knowingly, if it is done to deceive any shareholders, then the fine will be 50,000 to 25 lakhs or 8 times of remuneration, whichever is lower. You see, more or less the limit gets doubled. From 25,000 it became 50,000. From 5 lakh it became 25 lakh, or 8 times of remuneration, whichever is lower. And there will also be jail of up to 1 year if you are doing these things knowingly. If you are doing these things knowingly. Guys, are you with me? Are you listening to me? Sir, this is an ultimate penalty, and this is not enough. This is the fine that auditor will pay to the government. Now more what he'll have to do is, sir, auditor will have to return his fees also, and if anyone had incurred any losses, then the auditor is liable to compensate for that also. So it says, sir, auditor will refund the remuneration also and pay damages to the company. Auditor will pay damages to the companies or other people who have incurred losses. Guys, what are we reading? Section 148. What does section 148 say? Section 148 says that punishment. So for auditor specifically, 147 says about punishment. For auditor specifically, section 139, 144, 145. In these three sections, if the auditor contravenes, fine is 25,000 to 5 lakh or 4 times of remuneration, whichever is lower. But if it is done knowingly, there is a fine of 50,000 to 25 lakhs or 8 times of remuneration, whichever is lower, and jail up to 1 year. Are you with me, sir? Yes. 148, sir, cost audit is something which you don't have to read in so much of detail. The only thing that I'll tell you is not every company is required to do cost audit. Out of so many companies, there are some companies which are required to do maintain cost record. Out of those companies, also very selective companies have to do cost audit. Who does cost audit, sir? Cost auditor, who is basically CMA in practice. Sir, how is he appointed? Everything will be decided by the board. Everything will be decided by the board. Apart from that, sir, I think there is no such provision that we have to read here. I think more or less everything is same, and I think this is enough. Coming to section 143. Before I teach 143, kindly go through 147 once. 147 once. Yes, sir. Sir, let's go to the next section, which is section 143. I have a very small chart drawn for 143. Let me make you go through this chart. You can later consider taking 1 hour to draw this chart on your own, but this is going to be very easy for you. Section 143 is such a big section for all of you, but once you read from this chart, you will not feel anything at all. Sir, what is 143? Sir, 143 is powers and duties of auditor. Sir, what is your power as an auditor? So basically your power is to access books of accounts at all the times. You can require any information or explanation from the officers and access to the records not only of the company but of the subsidiary and the associate companies also. So basically you can access books of accounts, you can ask for information and explanation, you can access books of subsidiaries and associates. Sir, nothing that you should remember. But there is an important point. Sir, when auditor is going to audit, there are 6 items where we want him to do inquiry. There are 6 items where we want him to do inquiry. Number 1, sir, listen to me very carefully. Whether the loans and advances made by the company are properly secured and whether the terms are prejudicial to the company. Whether the loans and advances are properly secured and whether the terms are prejudicial to the company. Number 2, sir. Number 2, listen to me very carefully. Sir, whether the mere entries which are mere book entries, transactions which are mere book entries, such as revaluation entry, whether the transactions which are merely book entries, whether they are prejudicial to the company. Sir, coming to 4th point, whether the loans and advances are shown as deposit. Sir, look at me. There are 6 points. Will you remember along with me? First 2 points are related to loans and advances. Whether the loans and advances given are properly secured and whether the terms are prejudicial to the company. Number 2, whether the loans and advances are shown as deposit. What are the 2 points, sir? Tell me. Properly secured and prejudicial. Number 2, whether the loans and advances are shown as deposit. Number 3, transactions which are merely book entries, whether they are prejudicial to the company. Transactions which are merely book entries, such as revaluation entry. Number 4, personal expenses are charged to revenue account. Whether personal expenses have been charged to revenue account. These 2 are related to accounting entries. Can you tell me point 3 and 4? Point 3 was transaction. Do you have books with you? My donkeys, do you have books with you where you can do like this and see? Sir, transactions which are mere book entries, whether they are prejudicial. And number 4, whether personal expenses are charged to revenue account. Point number 5. Sir, listen to me very carefully. Where the assets being shares or securities of a company is sold, whether it is sold for a price less than purchase price. Where the assets being shares, debentures or securities of a company is sold, whether it is sold for a price lower than purchase price, which means, have you sold any shares or debentures for loss? If yes, tell me about it. But this provision is not applicable in case of investment company and banking company. We will not question this in case of investment company and banking company. And last, where the company says that shares are allotted for cash. Company says that shares are allotted for cash, whether cash is actually received. And if not, whether the books of accounts and balance sheet is correct, regular and not misleading. Sir, in your books of accounts, you have shown that we have issued equity share capital and we got cash. But you did not get cash. then in that case, can we even trust your books of accounts? Can we even trust your balance sheet? These are the 6 questions that you have to ask. I'll repeat, sir. Whether loans and advances are properly secured, and whether the terms are prejudicial. Number, whether the loans and advances are shown as deposit. Number 3, whether transactions which are merely book entries is represented as transactions, whether they are prejudicial. Number 4, whether personal expenses are charged to revenue account. Number 5, whether the assets being shares, debentures or securities of a company are sold at a price less than the purchase price, not applicable in case of investment company and banking company. And last, whether where the company has states that shares are issued for cash, whether cash is actually received, and if not, then whether the books of accounts and balance sheets are correct, regular and not misleading. Guys, are you with me? Guys, are you listening to me? This is section number 143, inquiry. Sir, after that, listen to me very carefully. A lot of things you will have to give in the report. This you don't have to study. I'm sure this you study in your audit report also. Audit also. Now coming to law part, in case of government company. Sir, in government company, who does audit? Can you tell me who does audit? Correct. In government company, audit is done by CAG. Audit is not done by CAG, sir. Audit is done by auditor, which is appointed by CAG. So how will it work, sir? Sir, CAG will give directions to the auditor. Sir, auditor will comply with those directions, and then auditor will report to the CAG that, sir, you had given this direction. This is how I complied with this, and this is the impact. So you see, sir, C and AG to appoint an auditor. C and AG will give a direction to the auditor. The auditor will follow C and AG's direction, action taken, and what is the impact that he will report to the C and AG. Now, after getting the report, listen to me very carefully. Sir, I am C and AG, and Shripal is my auditor. I asked him to go and do audit of ONGC. I told him do this, do this, do this. Now he did that. He came and gave me a report. After looking at the report, I thought that no, yeah, this is not enough. I need a supplementary audit. So C and AG can order supplementary audit. In that supplementary audit, either I'll send Shripal only, or I'll send someone else to go do the audit and give the supplementary audit report. So the main audit report, supplementary audit report, and the CAG's comment thereon, this will become the final audit report. Are you with me, guys? Are you with me? Sir, this supplementary audit happens of the financial statement. Supplementary audit of the financial statement. But similarly, sir, C and AG can do one more thing. What is that one more thing? So that one more thing is basically C and AG can also do test audit. What is test audit? Test audit happens for the books of accounts, which means C and AG can go to ONGC's office anytime and say, show me the books of accounts, and see whether they are preparing the books of accounts properly or not. So two audit, test audit and supplementary audit. Supplementary audit, see the provision, and test audit, see the provision. Read it from here. Okay. Test audit, C and AG may order test audit of the books of accounts. So you see, test audit is of books of accounts, and supplementary audit is of the financial statement. Guys, are you with me? Yes, sir. After this, sir, branch office. Sir, who will do audit of branch office? Very simple. Sir, either if the branch is in India, either the company auditor can do, or any person who is qualified in India can do. But if the branch is outside India, either the company auditor can do, or any person who is qualified outside India in that country can do branch audit. Now what will the branch auditor do, sir? Branch auditor will make a report and give it to the statutory auditor. Statutory auditor will deal with branch auditor's report in his own report. Guys, are you with me? Guys, are you with me? Yes, sir. After that, the last point, fraud. Sir, fraud provision is applicable to company's auditor also, cost auditor also, and secretarial auditor also. Sir, what is fraud reporting? Sir, section number 143.12. What is fraud reporting? Listen to me very, very, very carefully. Sit straight, sir. Everyone. Sir, fraud reporting. Sir, if the auditor during the course of his auditor came to know that the fraud is happening against the company, someone is doing fraud against the company, maybe the employee, maybe the management, someone is doing fraud against the company, then in that case, what will the auditor do? He will decide whether the fraud is less than 1 crore or more than 1 crore. Sir, if the amount is more than equal to 1 crore, means it is a big fraud, sir. If it is a big fraud, what you will do? Sir, the auditor will immediately report it to the audit committee and the board. Auditor will immediately report only if it is 1 crore or more, and ask the audit committee and board to give their response. Sir, when you say immediately, immediately means what? Within 2 days. Within 2 days. Now audit committee and board will give their response within 45 days. Sir, now if the response is coming, in that case, what you asked to the board or audit committee, what they replied, and your comment on that, this you will send to the CG. But if they did not reply, then you will say that, sir, I had sent this report to audit committee and board and they did not reply to my report. But anyway, after the end of 45 days, within 15 days, you will send to the CG. Sir, now how will you send it to the CG, sir? Sir, in CG, you will send it to the Secretary of Ministry of Corporate Affairs. Sir, big information, listen. It has to be sent via 2 modes simultaneously. One, you will send via registered post acknowledgement due, Rapido, RPAD, registered post acknowledgement due, or speed post. And simultaneously, you will have to send it via email also in the form ADT4. So that ADT4 will be signed by the auditor in the auditor's letterhead. Are you with me, guys? So basically, you will have to inform to the central government in case if it is a big fraud. Sir, what can you tell me? What if it is a small fraud? Sir, if it is a small fraud, then auditor will not inform to CG. Auditor will send a notice to the audit committee and board immediately to reply, stating the nature of fraud, amount involved, person involved. NAP, nature, amount, person. Now audit committee or the board, what they will do, they will report in their board report. They'll report in the board report under section 134. Sir, in the board report under section 134, listen to me very carefully. Sir, what will you report in the board report? So basically you will say the nature of fraud, the amount involved, the person involved if no action is taken, or what action have you taken. If you have removed those person, then you don't have to tell the name. You can just say that you have removed the concerned person. But if you did not take any action, you'll have to give the name of the person involved. So see this, sir. See this. If the audit committee or board, then the board will disclose in the board report what? The nature of fraud, amount involved, parties involved if remedial action not taken, or the remedial action. If you have taken action, you don't need to disclose the name. But if you have not taken action, you will have to disclose the name. Guys, are you with me? This is your section 143.12, and this is such a big section and big chapter, sir. But the moment you write it down and you read it from the notes, it becomes relatively easy to manage. And in the day of exam, you can easily revise this in 1 hour.
Alright guys, so what we are going to do right now is we are going to start the revision of the chapter, which is General Clause Act 1897. It is a very theoretical chapter. What I would request you is, the chapter will be revised from the notes that I have written on my screen. These notes are something that I'll share with you on the Telegram channel. The link for the Telegram channel, you will find it in the description. You use that Telegram channel link to revise from this particular from this PDF, and this is how much you have to revise. More than this, do not have to revise. You do not have to refer any material, not even my book. Only the things that is written in this book is more than enough. You can get a printout of this later on, and you can use it for your last minute revision. Guys, let's talk about General Clause Act, which was in 1897. It is going to take us approximately 50 minutes to revise from this particular chapter, from this particular notes. Okay, guys, now listen to me very carefully. So, what is General Clause Act? General Clause Act is something which was enacted on 11th March 1897. It is an old act to consolidate General Clause Act 1868 and General Clause Act 1887. So there were two General Clause Acts at that point in time. One was 1868 and the other one was 1887. 1887. To consolidate both these acts, what act did we make? We made a General Clause Act 1897. So what is the objective of this particular General Clause Act? So I say that the objective of this act will be to search, SURG. So what is this act? So to shorten the language of the central act, to shorten the language of the central act. Number two, to provide for uniformity by giving definitions of common terms, to provide for uniformity. R, to state explicitly certain convenient rules of interpretation, to state explicitly certain convenient rules of interpretation, and to guard against slips and oversight. G is to guard against slips and oversight. So what is surge basically? Surge is basically SURG. Please remember along with me, to shorten the language of law, to provide for uniformity by providing definitions. R, to provide for convenient rules of interpretation, and G, to guard against slips and oversight. This is the rule. This is a provision for General Clause Act. Sir, what is the applicability of General Clause Act? It applies to the whole of India. No, sir. There is no territorial extent of this act. There is no territorial applicability. It is applicable to central acts. Which central acts, sir? Central acts which is passed by the Act of Indian Parliament, Central Act which is an act of Dominion Legislature, and Central Act which is passed by the Governor General and Council. Governor General and Council. So let me remind you guys what used to happen. So if you look at this, currently at present we are independent. So we have company, we have the president, we have the parliament also. But before 1950, before the Constitution of India was made, but after independence, we had what? We had the Dominion Legislature. So the CA Act 1949 is a result of Dominion Legislature. And then before the independence, we used to have a Governor General in Council. So Indian Contract Act 1872 is made by the Britishers under the Governor General of Council. So whatever central act, whether it was passed here, whether it was passed here or whether it was passed here, all the acts will be covered under the Central Act, and to them GCA will be applicable. Sir, is GCA also applicable to the Constitution of India? Yes, sir. As per Article 367, it is also applicable to the Constitution of India. It is absolutely applicable to the Constitution of India. Now, sir, some basic understand that you have to understand. Sir, what is a preamble? You have to learn these language. You will have to write it in the exam. What is a preamble? Preamble expresses basically the scope, object, and purpose of the act. Scope, object, and purpose of the act. Preamble reveals the intention of the lawmaker. It is mainly used to reveal the intention. It is also used as an aid of interpretation in case if the provisions are ambiguous, that is unclear or vague. In case of ambiguity, it is used as an interpretation. However, remember that preamble can never override clear provision. It can never override clear provisions, and you have to remember these 4 points. Number one, it is the scope, object, and purpose. It states the intention. It can be used for interpretation when the provision is unclear or ambiguous. However, it can never override a clear provision. Guys, are you with me? Yes, sir. So what about definition? So definitions are usually given in section 2 of the act. Sometimes it is given in section 3 also. Like for General Clause Act, definition is given in section 3. Now listen to me very carefully. Sir, how is a word defined? Usually it is defined in that act only. So for example, in Companies Act, the word company is defined in the Companies Act only. Sometimes it is not defined in that act, but reference is given to the other act. For example, the word securities. The word securities is not defined in the Companies Act. Instead, you have referred it to the Securities Contract Regulation Act. And third one being, listen to me very carefully, if the definition is not given in that act, even if reference is not given to some other act, then you can come down to General Clause Act. You can come down to General Clause Act. Guys, are you with me? Guys, are you with me? Yes, sir. Now let's move to the next portion, sir. We have to remember certain definitions. We have to remember certain definitions. So please listen to me very, very carefully. One second. We have to remember certain definitions. So guys, listen to me very carefully. Certain definitions. Sir, what are the definitions that we have to remember? What are the definitions that we have to remember? Just wait for a second. Just wait for a second. Yes, sir. Sir, what are the some definitions that we have to remember, sir? You have to remember, sir, what is section number 1 preliminary? It says that the short title will be General Clause Act, not a big deal. Section 22 is repealed. Now come to section 3 definition. Sir, what is an act? If you see here, act is not capital act, it is small act. It is a small act. Act means with respect to any offense or with respect to any civil wrong, act includes a series of acts and also includes illegal omission. It includes a series of acts and also includes any illegal omission. Sir, what do you mean by affidavit? Listen to me very carefully. Affidavit will have the same meaning as that of the oath, as that of the swearing. Oath also means the same, swearing also means the same. What is affidavit? Affidavit includes affirmation or declaration by a person allowed by law to affirm or declare instead of swearing. Affirmation, what did I say? Affidavit includes affirmation or declaration by a person allowed by the law to affirm or declare instead of swearing. Oath also has the same definition. Swearing also has the same definition. Swearing includes affirmation or declaration by a person allowed to affirm or declare by law instead of swearing. So swearing does not include swearing. But guys, listen to me very carefully. Sir, what actually does affidavit means? Affidavit is a written statement confirmed by affirmation to be used as an evidence in the court or before any authority. It is used in the court before any authority. Sir, it is basically a written statement. It can be used as an evidence in the court or before any authority. That is what affidavit actually means. So this is the actual meaning. But affidavit also includes affirmation or declaration by any person allowed by law to affirm or declare. So what do you mean by commencement? Commencement means the date on which it comes into force. That is, it starts to have a legal effect. So there is a small case law related to commencement. That case law is State of Odisha versus Chandrasekhar Singh Bhoi. Chandrasekhar Singh Bhoi. In that case, it was said, sir, law comes into force only when it is brought into operation by the legislature or authority. Matlab, it comes into force only when it is brought into force. That is, you have to publish it in the official gazette. By coming to the next point, sir, document, very important definition. Listen to me very carefully. So the definition of document is super important. Listen to me very carefully. Document shall include any matter written, expressed, or described. By heart it with me. Any matter written, expressed, or described upon any substance by means of letter, figures, or marks. Letter, figures, or marks, which is intended to be used for recording of such matters. Which is intended to be used for the purpose of recording that matter. So basically, what is a document? Any matter written, expressed, or described upon any substance by the use of letter, figures, or marks intended to be used for recording any such matter will be considered as document. However, Indian currency note will not be considered as a document. This is an important definition, sir. Coming to the next definition, what is a financial year? Financial year means a year that starts from 1st of April and ends on 31st March. But sir, what is year? Is year as per Hindu calendar? No, sir. Year means an year record as per British calendar. Year means you have to always consider as per British calendar, that is January to December. Now, the next important question was what is an immovable property? Sir, immovable property, I have to tell you, immovable property means it includes immovable property shall include lands, benefit arising out of the lands, thing attached to the earth, anything fastened to things permanently attached to the earth. What did I say? Land, benefits arising out of land, things attached to the earth, things permanently fastened to anything attached to the earth. So these things are called as immovable property. Sir, are trees immovable? Yes, sir. Basically, is timber immovable? No, sir. A timber is cut. So basically, it is not immovable. Coming to the next point, sir. Soil for making bricks. Is soil immovable? Yes, sir. It is immovable property. Right to way of access road. Right to way to access roads will be considered as an immovable property. Yes. So right to drain water. No, that is not an immovable property. Access road rights is an immovable property, but right to drain water is not an immovable property. Why? I think water flows, no? So how can it be movable? It is movable. It is a nonsense logic that I recollected, sir. Sir, right to catch a fish, very important. Sir, this was a case law of Anand Behra versus State of Odisha. Can you repeat with me? Anand Behra versus State of Odisha, where the right to catch or carry a fish was told to be an immovable property. Why? Because, sir, the fish that you are catching, it is basically a benefit arising out of the land. So because it is a benefit arising of the land, it is a profit apprendre. It is a profit apprendre, and hence it is an immovable property. It is profit apprendre, and hence it is an immovable property. Then what is movable property, sir? Movable property means any property other than immovable property. So it includes debts, it includes security, it includes electricity, but these things are considered as your immovable property. Guys, are you with me? Guys, are you listening to me? Yes, sir. Now coming to the next definition, I will give you a PDF of this, but I want you to listen to me very carefully, sir. I'll give you a PDF of this in the Telegram right away, but I want you to listen to this very carefully. Sir, what do you mean by good faith? What do you mean by good faith? What is good faith? So good faith basically, as per General Clause Act, if you ask me, any act is said to be done in good faith if it is done with honesty, whether it is done negligently or not. So as per General Clause Act, if you ask me, General Clause Act says good faith means honesty. Whether you do it negligently or not, it does not matter. But if you ask me generally what it means, generally good faith means it should be honesty also, and it should not be done negligently. It should not be done negligently. So basically, honesty, whether it is done negligently or not. So the test of honesty is of intention and not negligence. If you do negligent, it is not a problem. So it is a question of fact and shall be decided on case-to-case basis. And the term good faith has been defined differently in different acts. Different acts have different definition, but the definition as per GCA shall not apply to the act which has their own definition. If you have a own definition of your own, then this definition will not apply. But what is this definition, sir? Where there is honesty, whether it is done negligently or not. But coming to the next point, sir, Maung Maung Pu versus Maung Si Maung. What is this case law? The case law is Maung Maung Pu versus Maung Si Maung. In this case law, what was decided? It was decided that court observed that as per Indian Contract Act, good faith is not defined. Good faith is not defined. However, as per General Clause Act, that definition does not apply to Indian Contract Act. General Clause Act definition does not apply to Indian Contract Act. So they applied the definition as per civil law understanding. That is common sense understanding. An act which is done without due care and attention is not good faith. They said that as per civil law, an act, if it is done without due care, you have to pay attention. If you do not pay attention, it will not be said to be in good faith. A man of ordinary prudence is expected to do it with proper care and inquiry. If you fail to provide proper care and inquiry, it will not be considered as good faith. And honest purchase made carelessly is not equal to good faith as to convey a good title. So as per Maung Maung Pu, they said that General Clause Act is wrong. They said that if you are doing honestly, that is good, but apart from that, you cannot be negligent. You have to exercise due care. If you are doing an honest act, but if you are careless, then in that case, it will not be considered as good title. It will not be considered as good title. So what is this whole point saying, sir? First of all, it is saying that as per General Clause Act, good faith means honesty, whether done negligently or not. Different acts have different definition of good faith. If an act specifically defines good faith, our provision will not be applicable. So whether it is done on good faith or not, it depends on case-to-case basis. That is what is said in the act. But now, when you go to the definition as per Maung Maung Pu versus Maung Si Maung, it says that Indian Contract Act did not define good faith. GCA definition cannot be applicable to Indian Contract Act. Why? Because as per civil understanding, an act which is done without due care or attention is not said to be done in good faith. So for an act, to convey good title, for you to get good title, what is important that it is done honestly also, and it is done with the due care also. Only then it will convey a good title. Guys, are you with me? Yes, sir. Coming to the next definition, government means both state government, central government. Imprisonment, listen to me very carefully. Imprisonment means as defined under Indian Penal Code. Now, as per Indian Penal Code, sir, imprisonment can be of two types. Sir, it can be simple also, rigorous also. Rigorous also means hard labor. So inside the jail, you will have to work a lot. So that is rigorous. Simple is basically you cannot work, you can just sleep. Okay. So simple and rigorous. Sir, now court will decide whether to give a simple or rigorous imprisonment. Court can decide whether to give a simple or rigorous imprisonment. Sir, what is official gadget? Sir, official gadget means basically either the gadget of India, the central government gadget, or the official gadget of a state. So for state also there is a different gadget. But what is the meaning of official gadget? Sir, a public journal and authorized legal documents published by Department of Publication MOHUA. What is MOHUA? Ministry of Housing and Urban Affairs. Ministry of Housing and Urban Affairs. So in the Ministry of Housing and Urban Affairs, there is a Department of Publication. That department, when they publish a journal or a legal document, that will be said to be in the official gadget. It is authentic, accurate, strictly as per the government policies. And this gadget is printed by the government of India, friends. It is also printed. But in today's time, it is not printed, sir. But earlier, it used to be printed by the government press. You have to remember, it is a public journal or an authorized legal document, which is published by the Ministry of Housing and Urban Affairs, MOHUA, 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 Ministry of Housing and Urban Affairs. Guys, are you with me? Yes, sir. Now, when I say person, person includes company, AOP, BOI, everything, everyone is included under person. Indian company, AOP, BOI, whether incorporated or not. Okay, guys. Now, coming to the next section, coming into operation of an act. Sir, when is an act said to be in operation? When do you say that an act is in operation? Sir, so basically, whenever you make an act, you specify a date. You specify a date. If a specific date is mentioned, then it comes into operation on that date. It comes into operation on that date. If specific date is not mentioned, then the date on which it is approved by the president or by the governor general in council. So if a date is given, then it will come. It will be effective from that date. If it is not given, then the date it receives the president assent. On that date, it will be considered to be coming into operation. Guys, are you with me? On that date, it will be said to be in operation. After that, let's move to the next point. So section number 6. So now point number 1. Some few notes. Listen to me very carefully. So if the government has made one act, okay, it is approved by the Lok Sabha, it is approved by the Rajya Sabha, it is also signed by the president. Government has not yet uploaded it in the official gadget. Government is keeping it with himself. He has not yet uploaded it in the official gadget. Is it okay, sir? Law says it is absolutely okay. Court cannot force the government to upload it on a particular date. Court cannot force the government. What court can do is maximum request the government, consider whether they want to upload it now or not. They cannot force the government to upload an act on a particular date. They can just request them that if you want, you can upload it on a particular date. So basically, when an act empowers government to bring it to operation. Who has the power? Government has the power. Then a court cannot issue a mandamus, as in a direction, compelling the government to bring it into operation. They cannot compel the government to bring it into operation on a particular day. However, if sufficient time is lapsed, as in a long time has happened, then court can request the government to consider the question as to whether when the same would begin to operate. They can ask the government to just consider that, guys, should you start that act, but they cannot force the government to upload that act. Number 2, so please understand that law is not applicable for a fraction of day. Law is not applicable for a fraction of day. It means that it cannot be applicable from midday. It can be applicable only from midnight, just like birthday, sir. If my birthday is on 5th February, when will you wish me? You'll wish me 4th February night, 12 o'clock you will wish me. That is 12 a.m. of 5th February. That is how act applies. Okay, the act is only applicable prospectively unless otherwise specified. Unless otherwise specified, then act is applicable prospectively. Okay, guys. Now, coming to the very important point, effect of repeal. Can an act be repealed? The answer is yes. But what will be the effect of repeal? You will have to remember along with me, guys. First of all, if you repeal the act, it cannot revive any older act that was not in force at the time of repeal. It cannot revive any older act. Number two, and any effect. Leave this point. Leave this point. Remember just 1, 2, 3, 4. 4 points. Okay. When an act and repeal. For example, repeal means what, sir? You remember Companies Act 1956 was repealed to bring Companies Act 2013. But however, if you remember, Companies Act 1956 repealed which act? 1913. Companies Act 1913. So 1913 was repealed to bring 1956. 1956 was repealed to bring 2013. Okay. Now listen to me very carefully, guys. When you repeal any particular act, what will not happen? First of all, it will not revive any older act. That is, 1913 will not come into picture. Number two, it shall not affect any rights, privilege, obligation, or liability under the repealed act. It shall not affect penalty or punishment under the repealed act. It shall not affect investigation, legal proceeding, or remedy under the repealed act. So, under the repealed act, your rights, privileges, liabilities, obligations, punishment, penalty, legal proceedings, remedy, investigation, none of these will be affected even if an act is repealed. So, for example, in 1956 Act, you made an offense, and now we got to know that you made an offense under the 1956 Act, and investigation can be made upon you. An investigation can be made upon you, and that is how you will have to pay. So, 4 points are: number one, it will not revive anything that was repealed. Number two, it will not affect the rights, privileges, liabilities, and obligations. Number three, it will not affect any punishment or penalty. It will not affect any investigation, legal proceeding, or remedy under the repealed law. Guys, are you with me? Guys, are you with me? Yes, sir. Now, when you talk about repeal, you study two important case laws along with that. Number one, Kolhapur Cane Sugar Works Limited versus Union of India. And number two, Navrangpura Gam Dharmada Milk Trust versus Ram Tuji Ram Maji. What did I say? The first case law, Kolhapur Cane Sugar Works Limited versus Union of India. Can you repeat with me? Kolhapur Cane Sugar Works Limited versus Union of India. In that, what was said, sir? Please listen to me. 2 points were said. Section 6 applies to repeal and not to omission. It applies to repeal and not to omission. Point number 2, it applies to repeal of act and not to repeal of rules. It applies to repeal of act and not to repeal of rules. It applies to repeal, not to omission. It applies to repeal of act, not to repeal of rules. That is Kolhapur Cane Sugar Works Limited, versus Union of India. What is the next case law? Navrangpura Gam Dharmada Milk Trust versus Ram Tuji Ram Maji. Ram Tuji Ram Maji. In that case law, what is said, sir? Two things. One, repeal is different from deletion. Repeal is different from deletion. Repeal means what? Complete obliteration as if the act never existed. It brings complete obliteration as if it never existed. Deletion is what? Deletion does not fully wipe out its existence. It does not fully wipe out its existence, but repeal brings about complete obliteration. Guys, are you with me? Guys, are you with me? So this is section 6. What is the case law? Navrangpura Gam Dharmada Milk Trust versus Ram Tuji Namra. If you see the word deletion, you write this case law. If you see the word omission, you write the Kolhapur Cane Sugar Works Limited case law. Kolhapur Cane Sugar Works Limited case law. Guys, are you with me? Sakshi Verma is saying fake live streaming. Oh my God, Sakshi Verma, how many people have cheated on you for you to think these kind of things that, oh, it might not be live. Sir must be have recorded it and sir is playing live probably. Huh, Sakshi Verma? How much doubts we have these days on students, right? On everyone, basically, on everyone. Anyway, personal choice. Listen to me very carefully, guys. Sir, one thing, Mahalakshmi said my voice is breaking. Is that true? Is that true? Is everything okay? Can you confirm before I move forward? Can you confirm once before I move forward? Is the voice okay completely? Yeah? Yes, it will be there in the channel even after the live is over. Yes. Sir, case law, can you repeat once? Yes, sir, absolutely. I will repeat once. Please listen to me very carefully, sir. What is the case law? There are two case law. Kolhapur Cane Sugar Works Limited versus Union of India. The second case law is Navrangpura Gam Dharmada Milk Trust versus Ramtuji Namaji. So what does the first case law? Kolhapur case law. What does it say? It says that point number one, so repeal is different from omission. Number two, this section 6 applies to repeal of act and not to repeal of rules. It will not apply to repeal of rules. Now coming to the next point, Navrangpura Gam Dharmada Milk Trust versus Ramtuji Ramaji. In that, it said that repeal is different from deletion. It says that repeal brings out complete obliteration as if the provision never existed, but deletion does not fully wipe out the provision. Does not fully wipe out the provision, as in it is not fully wiped out, sir. It is not fully wiped out. Guys, are you with me? Are you with me? Say yes or no. Yes or no. Yes, sir. Guys, now moving to the next point. What is the next point, sir? 6A, repeal of act making textual amendment. Listen to me very carefully. Sir, repeal of act making textual amendment. Please listen to me very carefully. Sir, not a very important provision, but let me tell you, where any act repeals any other act. For example, sir, one act repealed any other act. Let's say other act, which act is repealed? Let's say Finance Act 2017 is repealed. Such repeal shall not affect the continuance of any amendment or insertion made by the act so repeal. So which act did you repeal? Let's say you repealed Finance Act 2017, which comes in income tax. So if you repeal Finance Act 2017, let's say an amendment was made in the section 32, or let's say an insertion was made in section 285BA of the Income Tax Act. That amendment or insertion will not be affected. So even if you have removed Finance Act 2017, amendment that was made through that act or the insertion that was made through that act will still continue to apply. Will still continue to apply. Sir, section number 5, revival of the repealed act. Can you revive any repealed act? Sir, you cannot. It will never revive automatically. If you want to revive any repealed act, you will have to state the intention to do so. You will have to expressly write that with this, I am reviving the older act. It will never revive automatically. You will have to state the intention to do so. Sir, very important point number 8, instruction of a repeal reference to the repealed act. Listen to me very carefully. Sir, in Income Tax Act, if you go to Income Tax Act, there is a section called section 115JB in which you need book profits. In that act, if you go, sir, if you go to book profit, you will see that book profit as per Companies Act 1956. Companies Act 1956, you have to select book profit. Sir, does the Companies Act 1956 exist anymore? No, sir, it does not. But is the reference to Companies Act 1956 still there? Yes, sir, it is still there. So what do we do, sir? In that case, even if 1956 is written, but because 1956 is repealed, this reference to 1956 will be considered as a reference to Companies Act 2013. That is what this section is about. It says, where any central act repeals any other act. So Companies Act 2013 repealed 1956. Reference in any other act, which is Income Tax Act, provision so repealed shall be construed as reference to the provision so reenacted. Shall be construed as a reference to provision of 2013. Guys, are you with me? Guys, are you with me? Yes, sir. Now let's move to the last part of this chapter. These are some common sense things that you will understand. Okay. Sir, section number 9, computation of time. How will you compute time, sir? So if the law uses the word from, you will exclude the first day. But if the law uses the word to, you will include the last day. For example, sir, dividend shall be paid within 30 days from declaration. Within 30 days from declaration. For example, you declared it on 1st of January. So you exclude 1st of January and then you count 30 days. So the 30 days will end on 31st January. So when the law uses the word from, you exclude the first day. And when it uses the word, you include the last day. You include the last day. Next point, sir, computation of time. Sir, computation of time. How will you compute the time, sir? Very simple, sir. If you have to file any document to a court or any office on a certain day, if you have to file any document to a court or a document or any office on a certain day, and on that day, if the office is closed for any reason, then you can file it on the next day afterwards. You can file it on the next day afterwards whenever it is open. So if I have to file a document on 25th December, sir, that is Christmas. But in Christmas, that office is closed. So I can go on the next day afterwards, which is 26th. If it is not open on 26th, I can go on 27th. So if it is not open from 25th to 2nd of January, no problem, I can go on 3rd of January. It will be a valid document. So basically, if the office or court is closed on the last date, whenever it has to be filed, then you can go next day afterwards. You can go next day afterwards. Sir, how do you calculate distance? So distance is calculated on a straight line on a horizontal plane. Straight line on a horizontal plane. So duty to be taken pro rata. Please understand simple maths, sir. Sir, if law says that for 1 kg of rice, you will have to pay a tax of 100 rupees. Sir, how much tax will you pay for 0.5 kg of rice? Very clear, sir. You will have to pay 50 rupees. That is what duty is to be taken pro rata. What people used to fight is, if for 1 kg I have to pay 100 rupees, law does not say for 0.5 kg how much I should have paid. So if law is not saying for 0.5 how much I should pay, I will not pay. But this is wrong, sir. You will have to take duty on a pro rata basis. So wherever any act, any duty is to be taken, then like duty is leviable according to same rate on a greater or lesser quantity. On any greater or lesser quantity, like duty will be applicable. So duty has to be taken on a pro rata basis. Coming to the next very important point, gender and number. So where there is a masculine gender, it includes female, and when there is singular, it includes plural, and vice versa, and vice versa. But there are exceptions, sir. There are exceptions. For example, sir, if male descendant word is used, you cannot include females. Sir, if bullock word is used, you cannot include cows. Bullock word is written, you cannot include cows. But in general, if I speak, masculine gender includes female. Okay. After that, sir, you have to understand point number 15. Listen to me very carefully. Power to appoint includes power to appoint ex officio. So, for example, if I am given the power that I can appoint the chairperson of IPF, I can appoint the chairperson of an IPF, then I can either give a name for that chairperson. I can say that Mr. Amit will become the chairperson, or I can link this chairperson to any other office. This will be called as ex officio appointment. I can say that the MCA joint secretary will become the chairperson of IPF. So what I'm doing is I'm linking the seat of chairperson of IPF to the seat of Ministry of Corporate Affairs Joint Secretary. This is called as ex officio appointment. Can you do that? Yes, sir. Where the Act confers a power to appoint, such appointment may be made either by name or by virtue of office. You can either give the name or you can appoint it to with related to an office. Guys, are you understanding my point? Yes, sir. Next point 16. Heading is enough. Power to power to appoint includes power to suspend. If I can appoint you, I can dismiss you also. I can suspend you also. Power to appoint includes power to suspend or dismiss. Then the substitution of functionary. Listen to me very carefully, sir. Substitution. A law may simply mention that official title of the office to apply to whoever hold the office at that time. So, for example, if a provision is applicable to ROC, if a provision is applicable to ROC, if a provision is applicable to ROC, it means that whosoever is the ROC at that point in time, the provision will apply to him. If ROC is Mr. A, to Mr. A it will apply. But if ROC changed, now ROC is Mr. B, it will apply to Mr. B. Okay, so basically, sometimes a law may be applicable to an official title. And whosoever is holding that title at that point, the law will be applicable to him. Sir, successor, listen to me very carefully. Sir, if when law relates to an office that continues forever, it automatically covers its successor too. No need to rewrite law. Sir, for example, if there is a law that was made for the collector of the district, it is made for a collector. Now, if collector was Mr. X, now collector changed. Do you have to write the law again? No, sir. The law that was applicable to Mr. X will now apply to Mr. Y also. It will apply to the successor also. You do not have to rewrite the law. After that, sir, official, chief, and subordinate. Sir, if I tell you, if I tell you, Chief Commissioner of Income Tax and Commissioner of Income Tax, who is senior, sir? Chief Commissioner is senior. If the law applies to Chief Commissioner of Income Tax, and now, for example, if he is not available and Commissioner of Income Tax is working on his behalf, will the same law apply to him also? Yes, sir. If a law is applicable to the senior, it is also applicable to his subordinates or junior. Where the law applicable to the chief or superior, then it shall apply to the deputies or the subordinates also, performing duties in place of the superior. If you are performing in place of the superior. Now, sir, next point. Guys, construction of orders, please listen to me very carefully. Sir, if for example, Companies Act, there is a Companies Act, okay? Companies Act, under Companies Act, you made companies rules. In companies rule, if you used a word, BRIXYZ, you used a word. In the companies rule, you used a word. If you want to find the meaning of this word, where will you, oh, let's say you use the word significant beneficial owner. Where did you use this word? You use the words in the rules. Sir, where will you find the meaning of SBO? If it is used in the rules, you will find the meaning in the act. If it is given in the act, the same meaning that applies in the act will apply in the rules also. So basically, whereby an act, if any rules, notifications, order is issued, then words used in such rules notification shall have the same meaning as given in the act. Whatever meaning is given in the act, that same meaning will be used in the. So for example, sir, land acquisition rule uses the word collector. What is the meaning of collector? The same meaning that is given in the act. The same meaning that is given in the act. Guys, are you getting my point? Guys, are you getting my point? Sir, are you getting my point? All right. Sir, this is your section number 20. Now coming to section number 21, power to issue includes power to amend, vary or assign. So the heading itself is very clear. If you give me the power to issue rules, that means I have the power to amend the rules also, to vary the rules also, or withdraw the rules as in rescind the rules also. So where the act gives you a power to make notification rule, etc., it will include the power to add, amend, vary or rescind such rules also. Sir, if you give the power to appoint, it has the power to remove or suspend also. If you give the power to make, you can give the power to delete also. It is the same thing. Guys, now listen to me very carefully. Making of rules between passing and commencement of act. For example, sir, I'll give you a very simple example. Listen to me very carefully. Sir, for example, if an act received President's assent on 1st January 2027, if the act received precedent assent. But it was uploaded in the official gazette on 1st April 2027. It's been how much? 3 months, right? Now listen to me very carefully. Precedent assent was received on 27. It was uploaded in the official gazette on 1st April 2027. Now tell me something. When can you start making rules? Sir, you can start making rules anytime after it has been assented. After it has been passed, you can start making rules. But when will the rules start to be applicable? Sir, it will be applicable only after the act is applicable. The act is applicable only after it is uploaded in the official gazette. So you can start making it after the rule has been passed, but it will be applicable only after the act is applicable. So guys, if an act is passed but not yet in force, then the power to make rules may be exercised after its passing but before commencement. However, such rules shall take effect only from the date the act comes to force, that is only from the date of commencement. Only after the act commences, the rules can take effect, otherwise the rules will not be effective. Guys, are you with me? Are you with me? I just need 10 minutes more of yours. Just 10 more minutes and this chapter will be done too. Guys, publication for public comments. Very important, guys. If the act says that the central government can make rules, act says central government you can make rules. But the condition here is that, listen to me very carefully, sir, condition here is that you can make rules, but you will have to publish that rules first for public comments. You will have to publish that rules first for public comments. Can you do so, sir? Yes, sir. If the act asks you to do so, you will have to do it. How will you do so, sir? Where the act states that rules shall be made after previous publication, then what you have to do? First of all, the authority, let's say central government. The central government having power shall publish draft person likely to be affected. Person likely to be affected, you will have to publish the draft. Okay. Now, after that draft, you will have to give a notice specifying the date after which the draft will be taken into consideration. So you will give a deadline before which you will ask people to send their objections or you will ask them to send their suggestions. Now, after that, the authority will consider the objections or suggestions received from the people. Then it will publish such rule in the official gazette, and such uploading will be conclusive proof that the rule has been made. So what are the things that you will do, sir? First of all, you will publish it in the official. You will publish the draft. After that, you will give them a date by which they have to send their observation or comments. Then you will consider such observation or comment, and then finally you will upload it in the official gazette. Uploading in the official gazette will be conclusive proof that all the rules have been complied with. All the rules have been complied with. Sir, now let's say if I published the draft one, okay, draft one for your comments. Now you gave a lot of comments. Public gave a lot of comments based on which I made a draft two. Will I have to publish the draft two again? So law says it depends on the changes. If the changes are ancillary and not foreign, ancillary and not foreign means tiny changes. Tiny changes, not foreign changes, not big changes, tiny changes, then you don't have to republish. Otherwise, you will have to republish. So basically, sir, when the changes are ancillary and are not foreign to the subject matter, then it is not necessary to republish. But otherwise, you will have to republish. Otherwise, you will have to republish. Guys, are you with me? Are you with me? Yes, sir. Coming to the next section, continuation of orders issued under acts repealed and reenacted. Sir, if if Companies Act 1956 is repealed and instead of that Companies Act 2013 is brought into picture, the rules that are made under Companies Act 1956, will they continue to apply for Companies Act 2013? The rules made under 1956, will they apply for Companies Act 2013? The answer is yes. Until you make new rules for Companies Act 2013, the older rules will continue to apply. Just for example, sir, if I tell you, for example, let's say that Mines Act. So there is a Mines Act, okay? Let's say Mines Act 1950. Let's say, for example, now we made a new Mines Act 2020. New Mines Act 2020. Sir, some safety rules were given in this Mines Act. Safety rules were given in older Mine Act. Will they apply to the new act also? The answer is yes, sir. Till you make new safety rules, the older rule will apply. That is the point, sir. Continuation of orders or rules issued under the acts repealed and reenacted. When any act is repealed and reenacted, everything validly made under the old law, such as appointment, notification rules, will continue to operate under new law unless stated otherwise. Will continue to operate. There can be two types of changes. The new law. If the new law is substantially the same as the old law, for example, sir, Income Tax Act 1961 and Income Tax Act 2025, both the same. They're both more or less the same. In that case, the rules and everything will be valid. But if it was significantly different, for example, sir, GST Act. So you remember all the various act, VAT, excise, and these things got changed to GST. So it is a major revamp. Then in that case, older rules will not apply. Older rules will not apply. Guys, are you with me? Are you with me? Sir, the next concept, recovery of fines, listen to me. If there is any fine that you are not paying, then the General Clause Act says that it will be recovered as per Indian Penal Code and the Code of Criminal Procedure. Code of Criminal Procedure. Very simple, sir, not a big provision. Now, sir, section number 26 is important. Listen to me, section number 26 is very, very important. Guys, section number 26 is very, very important. Listen to me very, very carefully. Sir, 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 what is section number 26? It says that provision as to offense punishable under 2 or more acts. Sir, I'll explain you this to you. Sir, for example, let me take an example. For example, Sanjay Dutt. Sanjay Dutt, if you remember, was in the news for having possession of AK-47 gun. Now, when he was having a possession of AK-47 gun, there were two offense that he made. Number one, he had illegal possession of guns. He had illegal possession of guns. Number two, he was involved in terrorist activities. He was involved in terrorist activities. These are two different offenses. These are two different offenses. Now, for illegal weapons, sir, illegal weapons, imagine there is an Act 1 and there is an Act 2. Under both the acts, he is punishable. Under both the acts, he is punishable. Will he be punished under both the acts? The law says no, sir. Law says he can be prosecuted under both the acts. That is, he can be found guilty under both the acts, but he shall be punished only under one of the both acts. For the same offense, he cannot be punished under both the acts. He will be punishable under either one of the acts. He can be prosecuted against the same for under both the acts. But now listen to me very carefully, sir. These are two different offenses. For two different offense, there can be two different punishment. But for the same offense, there cannot be two punishments. Right now, for example, sir, let's say it was told that it was proven that at the end that he is not involved in terrorist activity. Let's say that if in the court it was proved that he is not involved in terrorist activity. So he was acquitted for two offense. He was acquitted for two offense. He was acquitted for two offense. Now tell me something. So if he was acquitted for two offense and for one offense he is not guilty, does it mean that he is not guilty for the other offense also? No, sir. If for one offense he is acquitted, doesn't mean that he cannot be convicted for the other offense. He can be convicted for the other offense. But for same offense, sir, you cannot be punished twice under the same for the same offense. You can be prosecuted twice, but you cannot be punished twice. So law says that, sir, when an action constitutes offense under two or more laws, then the offender shall be liable to be prosecuted and punished under either of those laws. He can be prosecuted and punished under either of those laws, but not be punished twice for the same offense. For the same offense, he cannot be punished twice. Sir, if you look at Supreme Court judgment, there is clarity that there is no bar on prosecution or conviction under two acts. He can be found guilty under two acts. There is only bar on punishment under two acts. That is, he will be punished under only one act. He can be guilty under two acts, but he will be punished only under one act. Okay. Now, guys, listen to me. Point number one. That there are two alternative charges in the same trial. For example, I said Sanjay Dutt case, he has two charges. One is a terrorist activity and one is illegal weapon having. And the fact that the fact that accused is acquitted of one of the charges will not bar his conviction in the other. So he had two cases, one terrorist, one illegal weapon. So the fact that he's acquitted of the one charge will not bar his conviction in the other charge. In the other charge, he can still be guilty. This was decided in the case law of MP versus VR Agnihotri. Can you repeat with me? MP versus VR Agnihotri. MP versus VR Agnihotri. So this revision video, I would request you to watch at least 3 times to get complete hold of this topic. At least 3 times, sir. So let's say it is finishing in 45 minutes. For 45 minutes, you can revise it 3 times. That will hardly take you 2 hours. And in that, you will be able to retain significant amount of things. Okay. Moving to the next point, guys, listen to me very carefully. The last section. Okay, that's the second point. Section 26 applies only in case of same offense. If the offense are distinct, section 26 does not apply. Same offense cannot be punished twice. Section 26 is applicable. Different offense, section 26 is not applicable. Coming to the last section for this chapter, listen to me very carefully, sir. Meaning of service by post. Listen to me very carefully. What is the meaning of service by post? So it says where any law requires any document to be served by post, the service shall be deemed to be affected by property. So, for example, everywhere you see deliver it by post, serve it by post. What do you mean by service by post? So, basically, wherever law says that you have to serve by post, the service shall be deemed to be affected by properly addressing, prepaying and posting it with registered post. 3 conditions. Sir, you have to properly give the address, you have to prepay it, and you have to send with registered post. So you have to remember PAR. You have to remember PAR. At PAR means it is prepaid. it is properly addressed, and it is sent with a registered post. If these three conditions are satisfied, then you will say that it is properly sent via post. But now, related to post, sir, there are three important case laws, and with this, that chapter finishes. There are three important case laws that you have to remember. Number one, United Commercial Bank versus Bhim Sen Makhija. Bhim Sen Makhija. Bhim Sen Makhija. What is the case law, sir? It says if a rule specifically requires registered post acknowledgement due, then you can sending it by registered post is not properly okay. Sir, for example, in law, it is clearly written that you have to send it by registered post acknowledgement due. Instead of registered post acknowledgement due, you chose to send it from a registered post. Then it is not okay. We will not allow you to do so. It is not a valid service. Where was it decided? In the case of Bhim Sen Makhija. Number two, sir, Jagdish Singh versus Nattu Singh. Jagdish Singh versus Nattu Singh. Jagdish Singh versus Nattu Singh. If a notice is sent by registered post is returned marking refused, deemed served. Sir, if someone sent me a legal notice, I took the notice and I wrote refused. It means I will not take the notice. Because even if you are writing refused, it is deemed to be served. Okay. Similarly, markings like not claimed, not met, all these things means deemed to be served. It is enough to prove service. This was decided in the case of Srimati Vandana Gulati versus Gurmeet Singh. That so this case law, the middle case law says that if you write refused, it is deemed to be served. But if you say things like not claimed, not met, then it is also enough to prove service that the notice was properly served. So if you are required to send by post, do three things: post it, address it properly, you prepay the post, and number three, you have to post it through registered post. If you do that, it will be deemed to be validly served. Did you understand, guys? What is speed post? Speed post is also not okay. If law says registered post acknowledgement due, so it means registered post acknowledgement due. Okay, guys. Okay, guys. All right, guys. That's it. That's it from my side. Before you leave, just listen to me for 2 minutes. Okay, guys. Guys, your exams are just a few time later, and I want you to realize that you have to understand that this exam is going to be a life changer for you. Sir, howsoever your law paper goes, it is going to decide how your tax paper goes. And the moment how your tax paper goes decides how your group 1 goes, and that will decide how your group 2 goes, and that overall decides how your CA inter goes. So based on that, your life is going to either change in a positive direction or a negative direction. So the point that I'm trying to tell you is, sir, the exam that you are giving right now is the biggest investment that you're going to make in your life. So make sure that at this point in time, no matter whatever time is left, you decide to give your 5000%. As in, you do not have time to get distracted. You do not have to time to finish your sleep. You do not have time to sit and eat. You have time for no emotions. You have no time for distraction. All the time that you have has to go into studying. There is no such thing called as beauty sleep, good food, healthy food, nothing. Do all those shits after your exam. Once you're done with your exam, once you have cleared your CA, do everything that you want to do at this point of time. You should be very hungry for your own success. And trust me, guys, it is not just you, but your parents, your teachers, and everyone around you who is rooting for your success. No one around you wants that you should fail. Maybe a few people, throw them out of your life. But at this point of time, it's you and your efforts that is going to drive the result. The question paper might come tough, the paper might come easy. These things are not in your control. It is absolutely out of your control. What is in your control is that you give your 500% and then you go to the exam hall confidently. You try to give your best. In those 3 hours of your exam, you write down whatever you know, everything that you know at the top notch speed, top notch handwriting, and the top notch quality. And when you do these things, and I promise you that you are going to stand in the 5% population of India when the intermediate results are out. You're going to see that happy faces in your parents' faces. You're going to see that happy face of your teachers, and you're going to feel that, yes, boss, I've done something in life. To see that successful in your results, to see that successful in yourself in the mirror, to see that successful in your parent eyes, you have to work very hard. It is not a few hours journey, it is not a few days journey, it is a whole journey of 9 months that is going to show tomorrow in your exam or in your next exam. And that is what is going to decide how you perform in your future. The point at this time is you have to give your best, nothing but the best. Nothing less than the best is acceptable. When you enter the exam hall, you have to tell yourself that I have given my 100%. I cannot do better than this. I've given my 100%. I cannot do better than this. And the moment this comes from inside, trust me, you're going to see that successful in your results. At this point, whosoever is looking at the lecture, viewing the lecture, I just want to tell you from the core of my heart, I want to bless you and tell you that you guys, everyone who is listening to this, you are going to pass this exam. Just keep going. Okay, keep showing up, keep going, give your best, and I know that you're going to pass this exam. Okay. Meanwhile, let me know in the comment that how did you like this marathon. I hope this video was helpful for you. Do make sure that you like this video. Since we have already reached the like target, I'll increase this a little bit and become a little greedy. Let's make it a target of 400. Help me achieve this target of 400 because your like is my appreciation. And now in the comment box for yourself, you're going to comment, sir, I will give my 200% in this exam. Please comment, sir, I will give my 200% in this exam. You have to comment it for yourself. You have to type it and feel it, sir. I will give my 200% in this exam, sir. I will make you proud. Okay, guys. If you understood, that's it from my side. I will see you in the next video. Until then, please take care. Share this video with your friends if this was really helpful for you. It will help me reach a broader audience and for them to reach the kind of quality that I promise you would have never studied before. I'm pretty sure the way you revised your management chapter, the way you revised your General Clause Act could be a little uncomfortable because you don't revise it a lot. For those who have revised management in advance, you would have felt the difference, right? So make sure that you share it with your student. One share will help me a good reach. So one person, I request you to just share it to one person, okay? And write down that you can watch this lecture and it will be very helpful to you. So we are going to start a chapter called Foreign Exchange Management Act 1999. This chapter came in 1999. So let me tell you this chapter has a weightage of 10 marks in your exam and it is a very easy chapter and easily manageable also. Okay. Now listen to me very carefully. Sir, why was FEMA Act brought into picture? FEMA Act was brought into picture because back in 1991 there was economic crisis. Our then finance minister Manmohan Singh decided that we need to do some reforms. We need to do some major reforms, and based on that reforms, they brought Foreign Exchange Management Act in 1999. Okay. After that, you don't have to read the purpose of this act. You just have to come straight and understand. You don't have to read the purpose of this act. You just have to come straight and understand what is forex regulation versus FEMA. Before FEMA, we used to have forex regulation. Sir, what is the difference between forex regulation and FEMA Act? Sir, Forex Regulation Act 1947. Then we had a Forex Regulation Act 1973, but now we have a Foreign Exchange Management Act. What is the difference? Sir, there are 5 differences I want you to remember along with me. Sir, this is the revision. I want you to remember things along with me. There is 5 difference between FERA and FEMA. Number 1, objective. Sir, in FERA, our objective was to conserve Forex. That we will not spend it, we will conserve it. But in FEMA, our objective is to promote and develop Forex. We will earn more and will spend more. That is our objective. So there is a change in objective. Objective was to conserve Forex. Now the objective is to promote and develop the Forex. Number 2, PRI, person resident in India. Sir, in case of FERA, the PRI was based on citizenship. If you are a citizen of India, you would be a person resident in India. But in FEMA, it is based on stay in India. It is based on stay in India, how much you stay in India. Number 3, sir, strictness, please understand. In FERA is earlier regulation. Foreign exchange transaction is prohibited unless permitted. That is, unless we allow you to do it, everything is no. But in FEMA, forex transaction is permitted unless restricted. Unless we stop you from doing that, everything is allowed. So we changed our mentality altogether. Number 4, mens rea, guilty mind. So what is mens rea? Basically try to understand. For example, mens rea is presumption of guilty mind. For example, when I was a kid, I was a very notorious person. I was a very, very naughty kid. Not naughty, I would say mischievous. Okay. Now listen to me. If I had a glass of water, okay, if I had a glass of water, and by mistake it fell from my hand. My mom used to tell me, you intentionally dropped it. It was not a mistake, you intentionally dropped it. Sir, this is presumption of guilty mind. It is wrong. You presume that I intentionally dropped it. You should presume that it got dropped by mistake. It got dropped by mistake. But if you think otherwise, you prove it. But mens rea means what? Presumption of guilty mind. In FERA, sir, they were very wrong. They used to take presumption of guilty mind. That if anyone is doing mistake, they have a guilty mind. But in FEMA, there is no presumption of mens rea. Mens rea is not presumed. Responsibility of the prosecution to prove. What is prosecution? Sir, the opponent party. they have the obligation to prove to us that you are guilty. So mens rea presumption is not taken. Fifth point, compounding of offense. Sir, what is compounding of offense? Something that we will study in LLP. But please understand, in case of FERA, compounding of offense was not allowed. But in FEMA, all the offenses are compoundable. All the offenses are compoundable. Are you with me? Yes, sir. What is this? Sir, this is your difference between FERA and FEMA. Can it be asked in your exam? Yes, sir, it can definitely be asked. What is FERA versus FEMA? Objective. Repeat along with me. It was to conserve forex, now is to promote and develop forex. Number two, person resident in India was based on citizenship, now it is based in stay in India. Number three, strictness. Foreign exchange transactions were prohibited unless permitted. Here it is permitted unless restricted. Number four, mens rea. What is mens rea? Guilty mind. In FERA, there was a presumption of mens rea, but in FEMA, there is no presumption of mens rea. Compounding of offense. In FERA, compounding of offense was not allowed. In FEMA, it is definitely allowed. So these are the 5 differences that we have to remember, sir. After that, we start certain important sections. Sir, section number 1, applicability. Wait, FEMA is applicable to whom? Sir, FEMA applies to whole of India. To whole India and also to branch office agency. When I say BOA, it is branch office agency outside India owned or controlled by a PRI. Outside India, owned or controlled by a PRI. Listen to me very carefully. Sir, what is a PRI? PRI is a person resident in India. If they have any branch office or agency outside India that which is owned and controlled by PRI, that will also be, then FEMA will also apply to that. Sir, we will understand a little bit later on once we understand person resident in India. Okay. Now, sir, section 2 talks about definition. Definition, straight away, we will first come to the most important definition, which is person resident in India and person resident outside India. Sir, I will first explain that most difficult section, which is person resident outside India. What do you mean by a person resident outside India? Person resident outside India means a person who is not a resident in India. Wow, sir, what a revision! What a revision, sir. Yes, person resident outside India means a person which is not a resident in India. But what is the meaning of person resident in India? Sir, such an important definition. You see, in my summary notes, I have given these references. If you look at these references, these are basically reference to the questions in the question bank, which is related to this definition. So along with the concepts, you can solve the questions also. Okay, now coming back, sir. What is the meaning of person resident in India? Listen to me very, very carefully. Sir, person resident in India means a person residing in India for more than 182 days. For more than 182 days during the course of the preceding financial year, but does not include person who has gone out of India or who stays outside India for employment, for business or vocation, or for any other purpose. In that circumstance, as would indicate intention to stay outside India for uncertain period. Eh? Okay. A person who has come to or stays in India in either case. These two people will not be included. However, if such person has come to or stays in India for any following purpose, he shall be considered as a PRI, irrespective of the number of days in the preceding previous year for employment, business, or intention to stay uncertain period. So let it be. I'll explain it to you. Listen to me. If you have a sample notes, if you have a rough notes, you can scribble it there. Scribble right along with me for better understanding. Sir, I am trying to explain what is the definition of a person resident in India. Okay, listen to me very carefully. Okay, so they say that if you want to become a person resident in India in the preceding financial year, you should have stayed for more than 182 days. Sir, I want you to observe here, it is more than 182 days. Guys, in Income Tax Act, you also study direct tax. In Income Tax Act, residential status is more than equal to. Here it is more than 182 days. Okay, there is no equal to. There is no equal to. Equal to is not there. After that, please understand, although you will become a person resident in India, there are exceptions. Sir, what are the exceptions? Sir, there are two exceptions. Sir, exception number one, if you go outside India. So in this year, you went outside India. Why did you go outside India? Sir, either for employment or for business or vocation, not vacation, not vacation, business or vocation, or for any other reason with an intent of uncertain period. Like we don't know for how many days you are going to stay. In these three cases, if you go outside India, then we will not consider you a PRI anymore. You will become a PROI. Sir, think logically, no. If a person is going outside India for employment, how is he resident of India anymore? Now he has become a resident outside India. He has become a resident outside India. Now coming to the other part, what if, and in the other case, if he comes to India in any other case. Like, for example, a foreign tourist, sir. For example, a foreign tourist, Elon Musk. Elon Musk came to India for 7 days of exploring India. Will we say he is a person resident in India? No, sir. Any person who comes to India normally will not be considered as a person resident in India. So basically, person resident in India is more than 182 days in the last year. But if you go outside India or if you're coming in India generally, so you'll not be considered as a PRI. But however, there is one more exception to this. There is one more exception to this. Exception. Except if a person comes to India for what? For employment, for business or vocation, or for uncertain period. If he comes to India for uncertain period, he will become a PRI. He will become a PRI. If he comes to India for uncertain period, he will become a PRI. I want you to keep writing these things along with me. This is also a scribble revision. This goat revision, the revision, why we call it as a goat revision is because there is a scribble revision also. So we will write down a lot of tiny things which is very important for you. So listen to me very carefully. Okay. Okay, guys. Are you with me? Yes. Okay. Now listen to me very carefully. Sir, you said this is the definition of PRI. So simple, let's keep it simple. PRI means a person who stays in India for more than 182 days. Number two, PRI does not include a person who goes outside India for these three reasons. Remember these three reasons. What are the three reasons, sir? The three reasons are employment, business or vocation, or for any uncertain period. Or he comes to India for in any other manner. In this case, he will not be a PRI. But if he goes outside, if he comes to India for business, employment, business, vocation, or uncertain period, he will become a PRI. Sir, I will explain this to you again with examples. Listen to me very carefully. Sir, example number one. I stayed in India. If you can write this down, very good. If not, that is also okay. But listen to me. Sir, example number one. In previous year 24-25, I stayed in India full year, 365 days I was here. What will be my residential status in 25-26? Sir, because this is a revision, I will move a little fast because I'm sure most of you already understand the concept. But for those who don't, you will have to wait and completely understand slowly. Okay. So 24-25, I stayed full year. So this year I will become a PRI, person resident in India. Sir, again, 24-25, I stayed for full year. Then, listen to me, in 25-26, on 1st of June 2025, I left India. On 1st of June 2025, I left India. Where did I go, sir? I left India and I went to US for employment. Sir, try to understand. Here, last year I was here for 365 days. But this year I went for employment. So please understand, from 1st April 25 to 1st June, I will be a person resident in India. But after that, when I go outside India for employment, I will become a person resident outside India. Yes, sir. Sir, in case of Income Tax Act, in Income Tax Act, your residential status is for full year. Your residential status is for full year. But in case of this particular act, listen to me very carefully. For let's say you ask Ram Harsha, sir. You ask Ram Harsha, sir. Sir, what is the can residential status be changed in between the year? No, sir. It is for full previous year 24-25, right? But in this case, your residential status for the first 3 months is PRI and for the rest 9 months is PROI because you left India for employment. Or if you go outside India for business or vocation, etc. Number three, sir. Sir, same question. In 24-25, I stayed here for full year. But this year, 1st of June 25, I left India for higher education. I went outside for higher education. Sir, if you go outside India for higher education, listen to me very carefully. Sir, RBI had issued a circular that if you go for higher education, you usually will end up doing job there and you'll not come back to India. So even if you're going for higher education, it will be treated as if you're going for employment only. And that is why you will be a PRI here and then you will become a PROI. Are you with me? Sir, are you with me till here? Yes, sir. Continuing the examples, listen to me very carefully. So previous year 24-25, I was here for three. I was not here. I was not here. For the first time in 25-26, I came to India on 1st of June 2025. Okay. On 1st of this will be 2 months, huh? The first one will be 2 months and 10 months. 1st June, huh? So 2 months PRI, 10 months PRY. I think I said 3 months and 9 months. It will be 2 months and 10 months. Guys, in this case, listen to me very carefully. For the first time, I came to India and I came here for employment. Sir, listen to me very carefully. For the last year, I was not in India. I came to India for the first time in my life and I came here for employment. Then in that case, Raja, listen to me very carefully. Sir, you will be a PROI last year, of course. You will be a PROI at the start also. But the day you came in India for employment, you will become a PRI. But sir, 1 second. To become a PRI, in my preceding previous year, I should have stayed for 182 days now. I said, no, boss. In this particular case, it is not applicable. If you are coming to India for employment, business, or vocation, or for uncertain period, then in that case, you staying here for more than 182 days in the preceding year is not relevant. You directly come and you stay here, not a problem, and you will become a PRI. Once you become a PRI, the provision of this chapter will apply to you. The provision of this chapter will apply to you. So this is more or less the definition of PRI for in case of an individual. See, PRI definition that we just studied, the definition that we just studied was for individual. So this is what we studied for individual. Now let's come to any artificial person. Sir, artificial person as in company, branch, office, agency. So very simple, sir. This is also very interesting. Listen to me. Dosto, guys, hello, guys. Sir, if there is a company, how can it become a PRI? Sir, if it is incorporated in India, then it will become a PRI. No questions asked, it will become a PRI. But listen to me, this company must have some branch, office, or agency in India. Sir, what is branch, office, or agency? Sir, any showroom you have, it is a branch. Any office you have, sir, any branch, office, or agency that you have in India, even if it is owned or controlled, even if it is owned or controlled by a PROI as in outsider. If the branch, office, or agency is in India, because it is in India, this branch, office, or agency will become a PRI. Sir, what am I saying? A company which is incorporated in India is a PRI. A branch, office, or agency which is in India, owned or controlled by anyone, it will be a PRI. Similarly, sir, listen to me very carefully. Sir, a branch, office, or agency outside India, which is or controlled, by a PRI, will also be a PRI. What do you mean, sir? I'll tell you an example. Sir, Tata Motors. Can you tell me Tata Motors is a PRI or a PROI? Sir, Tata Motors is a company which is incorporated in India, so it is a PRI. Sir, Tata Motors controls a branch which is in US. Branch which is in US. That branch is outside India, sir, US. Now tell me whether that US branch will be a PRI or a PROI. Sir, any branch or office or agency outside India owned or controlled by a person resident in India will be considered as a person resident in India. So it will be a PRI. It will be a PRI. I'll ask you an exam question, sir. Sir, there's a company which is in Singapore. Okay, company which is in Singapore. It has a branch which is in India. Sir, the company owns a branch in Dubai. And that branch in Dubai is controlled by by this Indian branch. This branch in Dubai is controlled by this Indian branch. So company in Singapore has a branch in India, has a branch in Dubai. Can you tell me the residential status of this company, this branch, and this branch? Can you tell me the residential status of these people? Yes, please. Sir, the company outside India in Singapore is a person resident outside India. But the branch which is in India, because it is in India, it will become a person resident in India. What about this Dubai branch, sir? Sir, although it is owned by a PROI, but it is controlled by a PRI. Any branch outside India which is owned or controlled by a PRI will be considered as a PRI too. So, although owned by Singapore branch, it is controlled by Indian branch, and hence it is a PRI. This is your complete definition of PRI, sir. This is something which you must have written in the notes. But all these things that I just told you is written here. Here, everything that I just told you is written here. Everything, all the examples that I gave you is all written here. Okay. But sir, whenever you talk about a person resident in India or person resident outside India, you first have to understand what is the definition of a person. So the definition of a person is similar to what you study in your direct tax. What is the definition of person in direct tax, sir? Person includes an individual, HUF, company, firm, association of person, body of individual, and every artificial juridical person. Same, sir. Individual HUF, firm, company, artificial juridical person, association of person, and body of individuals. But apart from that, one more thing is also considered as a person, and it is agency, officer, branch. What I call as branch, officer, agency, owned or controlled by such person. What is the difference? The difference is generally, for example, guys, Tata Motors has an office in Mumbai. Okay. Now they have a branch in Delhi. They have a branch in Delhi or branch in Chennai. Now listen to me very carefully. They have a branch in Chennai. Now listen to me very carefully, guys. Tata Motors has a branch, is from Mumbai. It has a branch in Chennai. Please try to understand. Usually these are not two person. We will say this is only one person. Person is Tata Motor. But for FEMA, this is one person, this is other person. Branch is also a separate person for the purpose of FEMA. In other act, it is not. It is not the same case in other acts. Okay. Are you with me? Are you with me? Yes, sir. So this is your point. Now coming to the next point, section number 2, definitions. Are you with me? Sir, we have some other definitions left, but did you understand person resident in India and person resident outside India? Did you understand? Yes? Sure. Okay, sir. Guys, this is a revision. Please understand this is not for those people who have not studied FEMA earlier. You need to have studied FEMA properly once. Only then you can revise it this fast. Because once we study FEMA, we spend 10 to 12 hours to understand each and every provision. In our regular classes that we take, it takes 10 to 12 hours to understand each and everything beautifully. Only then we can summarize it in one and a half an hour. Okay? Okay, guys. So definition, listen to me very carefully. Authorized person. Sir, what is authorized person? Law says that any foreign exchange transaction that you do, you have to do it through authorized person. But sir, who is authorized person? Authorized person is basically authorized dealers, money changers, offshore banking unit, and any other person authorized under section 10. So there are 4 people. Authorized dealer. Sir, when I say authorized dealer, I mean the banks. When I say money changer, what is money changer, sir? For example, when you go to airport, if at all you go to airport, there are a lot of counters where you can exchange rupees, you can get dollars. So those are money changers. Offshore banking unit means what? Sir, SBI has a branch in Dubai. Branch in Dubai. That Dubai branch is offshore banking unit. And the last one, other person authorized under section 10. So authorized person means what? Authorized dealer, money changer, offshore banking unit, or any other person authorized under section 10. Sir, what is foreign currency? Wonderful definition. Means any currency other than Indian currency. Foreign currency means any currency where there is no photo of Mahatma Gandhi ji. Foreign currency means any currency where there is no photo of Mahatma Gandhi ji, Indian currency. So basically when we say Indian currency, it means coins also, it means notes also, everything will become Indian currency. Now coming to the next point, what is foreign exchange, sir? You said Foreign Exchange Management Act. So foreign exchange management, what do we manage in foreign exchange, sir? Do we just manage the do we just manage the foreign exchange means what? Foreign currency? No, sir. Foreign exchange is a very broader word. Sir, foreign exchange means foreign currency and it includes any deposits, credits, or balance payable in any foreign currency. Sir, if for example, if a company Reliance Industry has deposited, there is a bank called JP Morgan. Where, sir? In USA. Okay. If Reliance has Reliance has deposited rupees 1 crore in that particular bank, this deposit will also be considered as foreign exchange. So it is not just the rupees that you have, it is not just the money that you have, it is deposits also, it is credits also, and balance payable in any foreign currency. All these things are foreign exchange. Try to remember along with me, sir. Deposits, credits, or any balance payable in foreign currency. Next one, any draft. What is draft? Demand draft. TC, traveler's check. Traveler's check. What is traveler's check, sir? Sir, in like 20 years ago, 25 years ago, if you want to visit multiple countries, like you want to go to Japan, then China, then UK, and everything. So you don't have to convert the currencies every time. You can just go to the authorized person. You can take a traveler's check. The traveler's check is useful in Japan also, China also, UK also. So basically, traveler's check is also a foreign currency. Sir, LOC, letter of credit, BOE, bills of exchange, drawn in Indian currency but payable in foreign currency. It is usually payable in foreign currency. And the same thing which is payable in Indian currency. So draft, demand draft, traveler's check, letter of credit, bills of exchange, which is payable in foreign currency or Indian currency, or deposits, credits, or balance payable, everything will be considered as a foreign exchange. So try to remember, sir, can it be asked in your exam? Yes, sir. What is foreign exchange? Foreign exchange means foreign currency and includes deposits, credits, or balance payable in any foreign currency, draft, traveler's check, bills of exchange, and letter of credit payable in foreign currency or payable in Indian currency. After that, sir, what is foreign security? Sir, what is foreign security? What is meant by security? Security means in the form of stock, shares, bonds, debentures, or any instrument. These things are called as security. But what is foreign about this security? Sir, foreign security means it is denominated in foreign currency. For example, sir, if I ask you, I want to purchase Netflix shares. Can I purchase Netflix shares? Yes, sir. If you ask me for how much rupees will we get Netflix shares, I'll say no, you'll not get Netflix for rupees. You'll get Netflix for dollars. Reliance you can get for rupees, but Netflix you will get for dollars. Okay, so basically, foreign security means securities, as in shares, bonds, debentures, anything which is denominated in foreign currency. Which is denominated in foreign currency. Are you with me? Yes, sir. And it includes securities denominated in foreign currency, but redemption on returns payable in Indian currency. What do you mean, sir? I'll tell you. Sir, Infosys is a company which is listed in US also. It is listed in US also. So the share price is $100, for example. But you know, when they give you dividends, they give you dividends in rupees. That's okay, sir. When it is, if it is a preference shares, if it is redeemed, when it is redeemed in rupees. So, sir, even if the redemption or even if the returns are in Indian currency, but if it is denominated in foreign currency, it will become a foreign security. So, when anyone says what is foreign security, the key word is it is denominated in foreign currency. Okay, it is denominated in other currency and not in INR. Okay, moving to the next two most important definitions, sir. Very important definition. In fact, this was recently even asked in your exam. Current account transaction. Listen to me very carefully, sir. If you want, you can scribble along with me, sir. What is capital account transaction? You can scribble along with me, sir. What is capital account transaction, guys? You either scribble along with me or pay attention. Capital account transaction means a transaction which alters alters the following position. It alters the assets or liability, including contingent liability of a PRI outside India. It changes the position of my asset or liability outside India for a PRI, or it alters the position of asset or liability in India of a PROI. It changes the position of asset or liability in India for a PROI. So for a PRI, as in person resident in India, it changes asset liability outside India. For a person resident outside India, it changes asset liability in India. Such transaction will be considered as a capital account transaction. Also note that for a person resident in India, even if contingent liability changes, it becomes a capital account transaction. Sir, can you give me an example? I'll give you an example. For example, guys, I purchased an I from a US manufacturer. I purchased one asset. Okay, I purchased one asset and I said that I'll pay the money after 1 year. I'll pay $1 million after 1 year. So I did a transaction where I purchased an asset and I said I'll pay you after 1 year. Sir, in this case, when I did this transaction, my liability changed outside India. My liability before this transaction, my liability was zero. Now I have a liability of $1 million. So this transaction is a capital account transaction. But sir, I'll tell you something. There was a US manufacturer. I purchased assets and I paid cash. Today itself, I paid the money and I brought the asset. Is it a capital account transaction? The answer is no. Because sir, the asset that I have purchased, I have already brought it to India. That asset is not in US. And second thing, I don't even have to pay. The money is already paid. So the transaction is settled. So this is not a capital account transaction. Capital account transaction is when you have it creates asset or liability outside India. Now the third one, sir, if there is an US manufacturer and I purchased an asset from him and I said I'll pay you after 3 months, I'll pay you $1 million. Tell me, sir, is it a capital account transaction? Tell me. Sir, yes, this is similar to the first one. But the only difference is the answer is no. It is a current account transaction. What the hell, sir? What is current account transaction? Current account transaction means any transaction other than capital account transaction. Sir, this is a capital account transaction. No, my liability is getting created. No. But sir, this is a short term. You see, this is a short term credit facility. This is a kind of short term credit facility. It is not a long term liability. It is a short term credit facility. So law has clearly said that if it is a short credit facility, we will call it as a current account transaction. So basically, capital account transaction means a transaction which alters the position of asset or liability in India for a PROI or outside India for a PRI. Come again, in India for a PROI or outside India for a PRI. Okay, now listen to me very carefully, guys. Please, guys. Hello, sir. Will you listen to me very carefully? Yes, sir. Sir, what is a current account transaction? Any transaction, any transaction other than capital account transaction. Okay. I want you to open a book and keep writing these things. The more you write, the more attention you can pay to what I'm telling you. Okay. So current account transaction means any transaction other than the capital account transaction. Guys, now listen to me very carefully. Current account transaction, they have clearly said that without prejudice to the generality of the foregoing, as in without prejudice to the generality of the foregoing, as in whatever we have written, the general provision that we made, without hurting it, without harming it. There are four things that we want to say is a current account transaction. What are the four things, sir? They said, look at the notes. They said, sir, payment with respect to foreign trades. If I purchase something and I made the payment, current account transaction. Sir, short-term banking and credit facility in ordinary course of business, very important. Short-term. Sir, what do you mean by short-term? Sir, they have not explained what is short-term, but let's assume it is less than 6 months for our purpose. So if it is less than 6 months, short-term banking and credit facility in ordinary course of business will be considered as a current account transaction. So if you're taking short-term credit, although it creates a liability, but still a current account transaction. Number two, payment of interest on loan and as net income from investment. I'll tell you this. Understand, sir. I took a loan from JP Morgan of $1 million. I said I'll pay it after 1 year. Is it a current account transaction or a capital account transaction? Sir, this is a capital account transaction because it creates a liability. But when I pay the interest on this loan, this interest will be a current account transaction. Similarly, sir, I invested in shares of Netflix. It created an asset outside India. So this is a this is a capital account transaction. But when Netflix will pay me dividend, it will be a current account transaction. Okay, so you can simply think, sir, anything that goes to P&L is a current account transaction. Anything that goes to balance sheet is a capital account transaction. This is the general concept that you can build. Okay. After that, sir, remittance of living expenses. Any living expenses that you're remitting for parents, spouse, children, etc., all foreign exchange management. After that, expenses with respect to foreign travel, education, or medical. These things are also current account transaction. So, sir, living expense, Medicare expense, education expense, travel expense, everything is a current account transaction. But any asset or liability kind of thing is a capital account transaction. So this is a complete detail of the definitions. We have given it a good amount of time. I hope you have understood it. I hope you have understood it. For those who are watching recorded, pause the lecture, take a deep breath, try to see what you understand, try to see which part did you find it difficult, read it again, close it, and then move forward with me. But you are not going to get up before you finish this revision in one go. This revision, you can keep listening to this revision multiple times, and that is how you will build a lot of confidence. You'll build a lot of confidence. Are you with me? Guys, are you with me? Yes, sure. Okay, okay, guys. Okay, guys. Next, let's move forward. Please keep listening to me. Sir, now let's move to the next part of this section. Sir, section number 3. Sir, section number 3 says that dealing in foreign exchange. What does it say? It says that no person shall read whatever I tell you, read that much only. No person shall deal in foreign exchange or foreign security to any person other than an authorized person. Sir, you will not deal in any forex exchange other than through authorized person. I'll explain everything. Number 2, no person shall make any payment to or for the credit of a PROI. Okay, sir. No person shall receive any payment from PROI otherwise than through an AP. Okay, sir. No person shall enter into financial transaction in India as a consideration for acquisition of asset outside India. Okay, so there are 4 things that we asked you not to do. You cannot do these 4 things. I said, what 4 things? Number 1, you will not deal in foreign exchange. You will not deal in foreign exchange otherwise through an authorized person. Sir, what is dealing in forex exchange? I'll give you a simple example. Sir, you have to let me introduce you to one of my brother. My brother, there is a brother. I have a brother called Rishabh. Rishabh stays in UK, which is London, UK, London. Okay, he is a PROI. He is a PROI, but he is basically from India, sir. He's born and brought up in India, but he shifted to UK now, London. Now listen to me very carefully, please, guys. Please, please, please. Guys. Now, for example, Rishabh came to India to see his parents. He came to India to meet his parents. Okay. Now, guys, listen to me very carefully. In India, he went to Pizza Hut to have a pizza. He went to Pizza Hut to have a pizza. Then after eating pizza, he decided to pay in dollar. Can he pay in dollar? No, sir. He cannot pay in dollar. He is a for if he wants to deal in forex exchange, he will have to deal through authorized person. So via bank, he can make the payment, but he cannot directly pay dollars. In India, he cannot deal in foreign exchange like this. Number two, no person shall make any payment to or for the credit of a PROI. What is the meaning of credit of a PROI? Sir, so when Rishabh was in India, no, he had taken a life insurance policy LIC. Now, after he moved to London, he had to pay the life insurance policy premium. He said, "What? I'll first convert dollar to rupees and then I'll make payment. I don't want to do this." So his dad who is in India, he said, "Don't worry, Rishabh, I'll pay it for you." And he paid rupees 15,000 rupees to the LIC. Law said that no, you cannot do that. You cannot make any payment to the credit of a PROI. Why, sir? When you do this thing, we lose our foreign exchange. Ideally, that 15,000 rupees should come from US to India. But because you did this transaction, we lost it. That is why you are not allowed to do this. Number three, you shall not receive any payment from a PROI otherwise than through an authorized person. If I were to receive some money from Rishabh Bhaiya, I will take it through the bank. I will not take it directly. And moreover, listen to me very carefully. When you take it through an authorized person, so that authorized person, listen to me very carefully. So that authorized person will give you an inward remittance certificate. That bank will give you an inward remittance certificate. Only when you have that inward remittance, it will be assumed that you have taken it via bank. But for a transaction, if there is no inward remittance certificate, law will think that you have not done it through an authorized person. So basically, whenever you receive any payment, there has to be an inward remittance. I've showed you inward remittance in the class. Okay. Number four, sir, they shall not enter into a financial transaction as a consideration for acquisition of asset outside India. So, for example, I cannot say to Rishabh Bhaiya that Rishabh Bhaiya, you buy a property for me in London, and here I will make a financial transaction. Here I'll make a financial transaction. That is, I'll pay on your behalf in India. I cannot say that Rishabh Bhaiya, in India, I'll pay 2 crore rupees to your dad. You buy a property for me in London. No, you cannot do such transaction. It is a Hawala transaction, sir. Hawala transaction. You cannot do such transaction. It is not allowed. It is not allowed. Did you understand, sir? So you cannot deal in any foreign exchange. You cannot make any payment to credit of PROI. You cannot receive any payment from PROI otherwise through an AP. When you receive through an AP, you get an inward remittance certificate. If you don't get an inward remittance certificate, it will be presumed that you have received the money from a person other than authorized person. So basically, you have not complied with the law. And number four, you will not enter into a financial transaction in India as a consideration for acquisition of asset outside India. Okay, did you understand? That's it, sir. Come to section number four. So section number four says that except as provided in this act, except as provided in this act, like whatever we tell in this act, that you can do. Apart from that, no PRI shall acquire, hold, own, possess, or transfer. You cannot acquire, you cannot hold, you cannot own, you cannot possess, or you cannot transfer any foreign exchange, any foreign security, or any immovable property situated outside India. Any immovable property situated outside India, you cannot take it. Sir, only that, only what we allow that you can do from, but apart from that, if you want to buy foreign exchange, foreign security, or immovable property outside India, you cannot do it except as allowed in this act, except as provided in this act. So basically, we are saying that, boss, whatever we are telling you in this act, only that much investment you can do. Apart from that, you cannot do anything. Apart from that, you cannot do anything. Are you with me? Yes, sir. Now, coming to the two most beautiful and important part of this chapter. Two most very important and very beautiful part of this chapter. But before I move forward, I need to know that whether you are understanding it. For those students who are watching recorded, so these kind of revisions takes a lot of effort, and I'm trying to make it in 100% English so that it can be beneficial for you. But if it is actually helping you, before I make more revisions, you will have to motivate me by telling me in the comment that whether it is helpful for you. How helpful it is for you, you let me know, because your appreciation is my motivation. And I think we can also understand it from the amount of likes that we get. I'll keep a very minimum target of this video, a like of 200 likes. 200. Will you help me achieve that? Minimum like of 200. And in the comment, you will let me know, sir, whether these things are helpful. I keep reading your comments. And if I find that, yes, it is very beautiful and it is helping the students a lot, I'll make more and more such revisions for you. Okay. Are you with me? Yes. Yes, guys. Okay. Now let's move forward. Please listen to me very carefully. Sir, like section number 5 and section number 6 are the only two sections that we have to study. But sir, you have to be very, very careful when you study this along with me. What is the flow of section number 5 and section 6? Listen to me. Sir, section number 5 and section number 6. Section number 5 talks about current account transaction. Section number 6 talks about capital account transaction. Sir, I'll tell you a normal rule, okay? The normal rule is that current account transaction is permitted unless prohibited. Unless we say no to do it, unless we prohibit you, it is all permitted. But capital account transaction is prohibited unless permitted. In capital account transaction, we have kept a little control, but capital account transaction is prohibited unless permitted. So you need to remember these two things. Current account transaction is completely allowed unless we stop you from doing that. But capital account transaction is allowed only that much as we permit. Apart from that, it is prohibited. Now, coming to the current account transaction, sir, listen to me very carefully. Current account transaction is easy to do. If you want to go to the authorized person to draw forex, draw or sell forex. If you want to purchase foreign exchange or you want to sell foreign exchange, you can easily do it if it is a current account transaction. But again, please understand, sir, central government was given power to put some prohibition. If central government wants, central government can put some prohibitions. And central government has used that power and made a rule called current FEMA, made a rule called Foreign Exchange Management, Current Account Transaction Rules 2000. Foreign Exchange Management, Current Account Transaction Rules. They have made a rules in which there is basically three schedules. Schedule 1, Schedule 2, Schedule 3. You need to understand Schedule 1, Schedule 2, Schedule 3. Sir, Schedule 1 talks about transactions which are prohibited. That is, you cannot do it. Schedule 2 talks about transactions which require CG's approval. And Schedule 3 talks about transaction which is which is allowed up to a certain limit. And beyond that limit, you will have to take RBI approval. So second one is you have to take CG's approval, and the third one is you will have to take RBI's approval. Third one is you will have to take RBI's approval. There are three provisions, sir. Schedule 1, Schedule 2, Schedule 3. Are you with me? Yes or no? Schedule 1 is prohibited, Schedule 2 is CG's approval, Schedule 3 is limit. Okay, there is a limit. Now, this is the base, sir. Now, try to understand. We'll read it from the book. Please come to the book and listen to me very carefully. Sir, it says that any person may sell or draw foreign exchange to or from an authorized person if such sale or draw is a current account transaction. Sir, if you want to sell foreign exchange or you want to draw foreign exchange from the authorized person, why for a current account transaction? Then we said it is doable. It is allowed. But sir, central government may impose restrictions on current account transaction. But central government will not do it alone, sir. Central government will do it in consultation with RBI. Will consult RBI and put such restriction. Now, using that rule, sir, using that power, central government has made this rule called Foreign Exchange Management, Current Account Transactions Rules. Look at the word rules 2000. Look at the amount of questions that we have from this concept, sir. Look at the amount of questions that we have from this concept. I'll give you a FEMA master question, sir. I'll give you a FEMA master question. Let me show you. Let me show you. I have prepared a FEMA master question. So this is the no. This is different. This is different. I have prepared a FEMA master question. I think I don't have it here. I don't know if I have it here. One second. I think it's not here. But I'll show you a FEMA master question, sir. In that master question, in 3 pages, in 3 pages I have summarized all these questions. Okay, when will you get that FEMA master question, sir? You'll get it in the description. You will find the link of my Telegram channel. There you will find this master question. Okay, so make sure that you solve that FEMA master question after this revision. Okay, now listen to me very carefully, sir. What is Schedule 1? What is Schedule 2? Schedule 1, sir, Schedule 1 talks about transactions which is prohibited. So there are 8 transactions which you don't have to understand with me right now because we do it in the class. Now you have to revise it along with me, retain along with me. Sir, there are some current account transactions which are prohibited. What are those current account transactions? Number one, remittance out of lottery winnings. Sir, in India, if you won some lottery, you cannot take that money outside India. Number two, remittance of income from racing or riding or any other hobby. Sir, if you won horse racing income, horse riding income, those money also you cannot remit. So lottery income, horse racing, horse riding. Number three, remittance for purchase of lottery tickets, band magazines, football pools, or sweepstakes. If you want to take money from India to USA, for example, and if you want to purchase lottery tickets, football pools. Sir, what are football pools? Football pools are a way of gambling in football. Sweepstakes also gamble. Band magazines. Sir, band mags. Array, not those magazines. Banned magazines means there are certain magazines which are banned in India. We will not allow you to purchase that. So you cannot use money for this gambling, betting, and everything. No, boss. Okay. Next, sir, for payment of commission. Commission on what? Commission on export made towards equity investment in joint venture or wholly owned subsidiary abroad of Indian companies. So basically, if you are doing any export, you cannot make payment of commission on that export made towards equity investment in joint venture or wholly owned subsidiary. After that, remittance of dividend by any company to which dividend balancing applies. Any company to whom dividend balancing applies, they cannot remit dividend. Number two, number six, payment of commission on export under rupee state credit route. Sir, there is something called as rupee state credit route. Can you repeat along with me? Rupee state credit route. Sir, in that route, when you export something, you cannot pay commission on that, except commission up to 10% of invoice value on export of tea and tobacco. On export of tea and tobacco, you cannot basically on export of tea and tobacco. Yeah. Sir, when you export tea and tobacco, listen to me very carefully. Sir, up to 10% of the invoice value on export of tea and tobacco. Guys, come on, 6 points again. First 3 points are lottery winnings cannot be remitted. Horse racing riding income cannot be remitted. You cannot remit any money for purchase of lottery, football pools, sweepstakes, or any other banned magazines. These are three things. Then there are 2 points on commission. You cannot pay commission on export towards equity investment in joint venture or wholly owned subsidiary. Number two, you cannot pay commission on export under rupee state credit route. But there is one exception. If you're exporting under rupee state credit route, then you can pay commission of up to 10% on export of tea and tobacco. On export of tea and tobacco. Tea and tobacco in Hindi, we call it chai sutta. Tea tobacco, chai sutta. In that, you can pay commission of up to 10%. Okay. After that, if there is company to whom dividend balancing applies, they cannot remit dividend. Number six, payment related to callback services. There cannot be any payment related to callback services and remittance of interest income on funds held in NR special rupee account scheme. NR special rupee account scheme. In that scheme, if you earn any interest income, that interest income cannot be remitted. That interest income cannot be remitted. Are you with me, guys? Yes or no, sir? Yes or no, sir? Yes or no, sir? Yes. Sure. Sir, did you understand? Yes. This is your schedule one. These are the transactions which is prohibited. Sir, after remembering like this, now try to write down on in short. How do you write it? Number one, sir, lottery. Number two, racing or riding of horses. Number three, purchase of lottery tickets, etc. After that, there was commission on export. The first export was export commission on export towards equity investment in joint venture or wholly owned subsidiary. Number two, commission on export under rupee state credit route. Sir, do you need to remember the whole sentence? No, sir. You just need to remember that this particular sentence is written in Schedule 1 of Foreign Exchange Management Current Account Transaction Rules 2000. That is what you need to remember. After that, sir, dividend by a company to which dividend balancing applies, payment related to callback services, and interest income in NR special rupee account. In these three cases, 8 cases, you are prohibited from paying your what? From remitting foreign exchange. You cannot send foreign exchange outside India. Number two, sir, Schedule 2. I told you Schedule 2 talks about transaction for which central government's approval is required. So, transactions which require prior approval of government of India to process foreign exchange. Number one, sir, cultural tours. Listen to me. Listen and try to understand. Sir, cultural tours. If you want to perform some cultural tours outside India, you can definitely go and do it, but you will have to take approval of Ministry of HRD, Ministry of Human Resource Development. Nothing else. Ministry of Human Resource Development. Okay. Number two, if you want to do advertisement in foreign print media, who are you? You are a state government or it's PSU. You are a state government or a public sector undertaking of a state government. If you want to do advertisement in foreign print media and it exceeds $10,000, so let me take example of each also so that you can understand cultural tips. Sir, for example, if Odisha people want to go and perform Bharatnatyam or Kathak in USA, you'll have to take approval. Okay. Number two, sir, if the Tamil Nadu government wants to do some advertisement in US, and that advertisement costs more than $10,000, they will have to take approval of Ministry of Finance. They'll have to take approval of Ministry of Finance. But sir, if that advertisement is for three purpose, then approval is not required. What are the three purpose? Number one, to promote tourism, bring foreign investment, and for international bidding. Tourism, foreign investment, and bidding. It is bid. It is bidding, investments, and tourism. If you are doing it for these three purposes, then approval is not required. But other than that, if you are doing advertisement in foreign print media and it exceeds $10,000, and this is for state government and PSU, then you will have to take approval of Ministry of Finance. Number three, this 3-4 points are not so important, sir. Sir, remittance of freight of vessels chartered by PSU. If you are bringing a vessel and you are paying the freight, then you will have to take approval of Ministry of Surface Transport. Similarly, sir, if you're importing something through the ocean transport on a CIF basis, what is CIF basis? CIF is basically cost plus insurance plus freight. In that case, you will have to again take approval of Ministry of Surface Transport. Okay. Sir, what is multimodal transport operators? Listen to me very carefully. Sir, multimodal transport operators like Blue Dart. Blue Dart brings something via air, then land, then water. If there is multimodal transport operators and they want to make some payment to their agents, then they will have to take a registration certificate. Registration certificate. So these three things are related to something freight or vessels. So if you're paying freight, Ministry of Surface Transport, bringing something through ocean transport, CIF basis, cost insurance freight basis, then your Ministry of Surface Transport and multimodal transport operators, in that case, you will have to take registration certificate. Okay. After that, next one is important, sir. Remittance of hiring charges of transponder. So transponder is a device. Transponder is a device that you take for either for TV channels or for internet service providing. Earlier, you used to take transponder. So when you are paying the hiring charges, you will have to take approval of the respective ministry. You don't have to remember the name of the ministry, but if you want to, for TV channels, the ministry is Ministry of Information and Broadcasting. You can remember like this: TV channels basically broadcast. And for internet service provider, it is Ministry of Communication and Information Technology. It is communication. Okay. Now, after that, sir, remittance of container detention charges. If you had to pay container detention charges, if someone detained your containers as in ships, if it were detained, then you'll have to take approval of Ministry of Surface Transport. After that, sir, the next 2 points are very important. Listen to me very carefully, guys. Sir, this one is super important. Remittance of prize money or sponsorship of sports activity by a person other than international, national, state level sports body if amount is more than $10,000. Sir, what are you doing? There are 4 conditions. Number one, you are paying prize money or you are paying sponsorship. Okay. Who are you? You are a person who is not a sports body. Sports body, as in, sir, for example, BCCI is a sports body. Sir, if you are an international level, national level, or state level sports body, then it is fine. But if a person other than sports body is paying prize money or sponsorship for any sports activity, and that amount exceeds $1 lakh, then in that case, you will have to take approval of Ministry of Human Resource Development. You'll have to take approval of Ministry of Human Resource Development. Sir, prize money or sponsorship money of sports activity. Sir, I'll tell you for example. For example, Neeta Ambani. Neeta Ambani in Mumbai Indians, there is a player, for example, let's say, I don't know, do you know any foreign players who's in Mumbai Indians? Like any foreign international players who play with Mumbai Indians? Any player, sir, Mr. X. Now, Neeta Ambani decided to give $2 lakh to that player because he performed very well. You'll have to take approval of Ministry of Human Resource Development. Why are you wasting our dollars? Why are you wasting our money? Don't waste our money. You will have to take approval because it exceeds $1 lakh and you are not some sport body. But if BCCI decides to make the payment, they'll not have to take approvals. And the last one, remittance of membership. Remittance of membership of P&I club. What is P&I club? Protection and Indemnity Club. Protection and Indemnity Club. So if you remit any membership amount of that, then in that case, you will have to take Ministry of Finance. Ministry of Finance approval. So basically, these are the approvals of CGs that you will have to take, sir. Multiple approvals of CGE that you will have to take. Okay. Okay. Aditya is asking, sir, this is pre-recorded. No, I'm taking live along with you right now. It is not pre-recorded. Okay. 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 Alright, guys. So basically, Schedule 2 talks about transactions which requires approval of CG. I can assure you this kind of summary notes, it is impossible to get anywhere. At present, there is no book other than this in the market which can give you this level of summary for this concepts. Okay. Now coming to the next point, listen to me very carefully, please, guys. Hello. Sir, what is Schedule 3? Hello, 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 hello. Sir, what does Schedule 3 talk about? Listen to me very carefully. Sir, Schedule 3 says that, hello. Sir, Schedule 3 says that if you are an individual, Schedule 3 says that transactions which in excess of the limit require prior approval of RBI. Very simple, sir. Before reading, I'll give you good context. Context is Schedule 3 talks about two people. One is individual, okay, and one is other than individual. Okay. For individual, we have made it very clear, sir. For individual, there is a limit of $2,50,000, 2,50,000 per annum. If you ask me how much is $2,250,000, sir, it is approximately 2 crore rupees. If you take it at the rate of 80, it is 2 crore rupees. But $2,50,000 per annum is the limit in which you can do current account transaction, such as your sir traveling, medical, education, your immigration, everything you can do in that 2,50,000 rupees. But if you want to spend more than 2,50,000 rupees, you will have to take approval of RBI. You'll have to take approval of RBI. This is the basic provision, sir. Now, generally, so what is the provision? The provision says that you have a limit of $2,50,000 only per annum in which you can do private visit to any country. You can gift or donate your wish. You can go outside India for employment. You can take emigration. Emigration means completely shifting to a new country. Sir, you can have close relatives abroad. You can travel for business or whatever. You can have medical treatment or you can do studies abroad or any other current account transaction. Whatever you want to do, you do. But the limit is $2,50,000. Beyond $2,50,000, you'll have to take approval of RBI. But then we said that there are two exceptions. There are two exceptions. What is the provision? The provision is 2,50,000 you can spend. Beyond that, you'll take RBI approval. But there are two exceptions. Number one, sir, if you are going for emigration outside India, or if you are going for medical treatment outside India, or if you are going to for studies abroad, in these three cases, please understand, for emigration, I might need $400,000, $400,000. Why, sir? Because the country of emigration is deciding that. For example, I want to move to Canada. So Canada is deciding that I'll have to pay how much. So for medical, the hospital will decide how much I have to pay. For studies, the university will decide how much I have to pay. So sir, if I go to the bank to authorized person and I show the certificate from these people, then I might not require RBI approval even if the limit exceeds 2,50,000. So for example, if I have to go to Canada and I have to pay $400,000, so I will take a certificate from that particular country that I have to pay four lakh, $4 lakh, and then I'll go to the authorized person. Authorized person will give me $400K without approval of RBI. There are only three exceptions: immigration, medical studies. Immigration, medical studies. Immigration, medical studies. Are you with me? Yes, sir. The other exception is that, listen to me. There is a concept of a person who is a PRI but not permanently resident. What do you mean, sir? PRI but not permanently resident. What do you mean? Guys, it means that, guys, what does it mean? It means that PRI but not permanently resident means, listen to me very carefully. Sir, PRI but not permanently resident means, I'll give you an example. For example, my Rishabh Bhaiya, who is in London, he came to India. He came to India for job. Listen to me very carefully. He came to India for a job. Now, when he came to India for a job, he is having a salary of $500K per annum. Now, sir, what would he want to do? he would want to send the whole salary to his family, which is still in London, correct? But if you say no, 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 you will have to send only 250K. Above that, you will require RBI approval. No, sir, this is not fair. This is not fair. Although he is a person resident in India, but he's here very shortly, sir. He'll be here for 2 years or max 3 years. So in this case, he is a PRI, but he is not a permanently resident in India. So he has come to India for a temporary job. In that case, what will you do, sir? If he has come to India for a temporary job, in that case, hello, listen to me very carefully. In that case, he is allowed to remit his net salary. The limit is not 250K. The limit is net salary. What is net salary? Sir, salary less taxes, less PF, etc. Provident fund, etc. So whatever savings he have. So for example, he got 500K. Sir, 100K he paid as taxes. The remaining 400K he can remit without RBI's approval. Okay. So I said, sir, generally the limit is 2,50,000. Beyond that, RBI approval is required. But in two cases, RBI approval will not be required, even if the limit exceeds 2,50,000. Immigration, medical treatment, or studies abroad. If you furnish the certificate from particular university, hospital, or country of immigration, we will allow you without RBI approval. And number two, if you are a PRI but not permanently resident. Sir, how do you define PRI but not permanently resident? It means a person who has come to India for employment but is not going to stay here for more than 3 years. The employment is less 3 or less than 3 years. Are you with me? Sir, are you with me? Yes. Did you understand? Yes, sir. Sir, this is your whole schedule 3 individual part. I explained you everything that is written here. So you see, for provided for DGH is immigration, medical treatment, and for education, individual may avail foreign exchange more than 2,50,000 if it is so required by country, medical institution, or university, respectively. If required, you can spend it. And number two, sir, in case of a PRI but not permanently resident in India, he can make a remittance up to his net salary, that is after deduction of TDS and PF. What is PRI but not permanently resident? Sir, he has a PRI who has come for employment, but it is not more than 3 years. It is not more than 3 years. He is a PRI but not permanently resident. Are you with me? Sir, are you with me? Yes. Yes. Okay, sir. Moving on to the next beautiful part. Guys, guys. This revision may be a little heavy for you, but yeah, that is the beauty of it. This is almost done. Once you are done with Schedule 3, once you do current capital account transaction a little bit, the chapter is over. It will hardly take us 20-25 minutes more. But that's it. The more number of times you listen to this video, the more beautifully you have a hold on this topic. At least 4 to 5 times you have to listen to this revision. Okay. Now, guys, next portion. Please listen to me very carefully. Facilities for person other than individual. So for individual, I told you there is a limit of $250,000. But for other than individual, sir, there are 4 different cases. You have to remember these 4 different cases. Number one, sir, first one is, for example, if you are a company and the company wants to give a donation for creation of chairs outside India or contribution to funds. That's it. If you want to give donation for creation of chairs outside India or contribution to any funds, in that case, limit the limit is 1% of forex earning in the last 3 financial year or $5 million, whichever is lower. This is the limit. So the limit is 1% of forex earning of last 3 years. So they have not written average, sir. They have not written average. If they would have written average, it means you would have taken average, but they have not written average. So average is not written. So basically 1% of you will take aggregate. So last 3 years forex earnings or $5 million, whichever is lower, will be the limit. If up to that amount you give donation, it's fine. If you give donation beyond that amount, you will have to take RBI approval. This is the limit for donation for creation of chairs. Remember along with me, 1% of the forex earnings of the last 3 financial years or $5 million, whichever is lower. Point number two. If you sold any flats or plots in India, any commission to agent abroad for sale of flats or plots in India, you are giving a commission outside India to a person for sale of flat in India. So the limit is $25,000 or 5% of inward remittance, whichever is higher. 5% of inward remittance, whatever money came, or $25,000, whichever is higher. To this amount, no approval. Beyond this amount, RBI approval. Sir, if you're taking any consultancy, if the consultancy is related to infrastructure, then $10 million. If the consultancy is other than infrastructure, $1 million is the limit. Beyond that, RBI approval. And the last one, pre-incorporation expense. If you are reimbursing any pre-incorporation expense, the limit is 5% of investment brought into India or 100K, whichever is higher. 100K, whichever is higher, and beyond that, RBI approval. So you see, there are four limits. I'll summarize it for you, sir. What are the four limits? I'll summarize it for you. There are four limits. Look at the screen. Sir, if you want to donate outside India, it is 1% of your forex earning or $5 million, whichever is lower. But for other, if you are, for example, what was the second one? If you are paying any commission, it is 5% of inward remittance or $25,000, whichever is higher. Sir, if you are talking about consultancy, for infrastructure, it is $10 million. For other, it is $1 million. Okay. And when you talk about pre-incorporation expense, sir, 5% of investment that you brought into India or $100K, whichever is higher. This is how you figure out the limit. To these limits, no approval. Beyond this limit, RBI's approval will be required. Okay. This is for whom, sir? This is for artificial person, not for individual, other than individuals. But understand, for these people, $250,000 limit is not relevant. For these people, $250,000 is not relevant. 250,000 was relevant only for individuals. Now understand a few more things, sir. These things can be asked in your MCQs. Sir, again, let me tell you what was Schedule 1. Schedule 1 is you cannot do it. It is absolutely prohibited. Schedule 2 is you can do it, but you require CG approval. And Schedule 3 is basically you can do it up to a limit. Beyond limit, RBI's approval. Now listen to me very carefully. Sir, it says that approval of a transaction under Schedule 2 or 3 will not be required. There is no requirement of approval if remittance is through a resident foreign currency account, RFC account, or through EEFC account, exchange under foreign currency account, except for remittance of membership of P&I club or Schedule 2, payment of commission or pre-incorporation expense. Payment of pre-incorporation expense and everything. Listen to me very carefully, sir. I'll explain it here. Listen to me. Sir, you remember Schedule 2, which requires CG approval. Schedule 3, beyond limit, requires RBI's approval. But we said approval is not applicable if you're paying through RFC account. What is RFC account? Resident foreign currency account. Or you're paying through EEFC account. Exchange earners foreign currency account. Okay, EEFC account. But guys, in EEFC account also there is an exception. What is the exception? Sir, the exception is that even if you pay through EEFC account, in Schedule 2, you will have to take approval for P&I club. And in Schedule 3, you will have to take approval for paying commission or pre-incorporation expense. For these things, even if you pay it via EEFC account, you will have to take approval. But sir, there is no exception in case of RFC. In RFC, whatever payment you make, you don't have to take any approval. But for exchange earner foreign currency account, for example, I want to conduct a cultural tour. If I pay through exchange earner foreign currency account, no approval is required. But if I pay for P&I club membership, then approval will be required. Okay, sir, we understand this very beautifully in the class, but now also I'm trying to make charts for you so that you get a complete grip. Try to understand. Okay, now the last point, sir. Sir, if a person is on visit abroad, he's roaming around in, for example, Thailand, and he can incur expenditure stated in Schedule 3. Schedule 3 as in the travel, gifts, donation, everything, if he incurs it through international credit card to the extent of limit. So basically, even if you're exceeding limits of $250,000 to the limit of international credit card, you can easily spend. There is no restriction. These are the 2 points, and these are the 2 exceptions. And with this, your current account transaction comes to an end. Okay, take a deep breath. Sir, what about capital account transaction? Sir, capital account transaction means any transaction which alters the position of asset or liability, including contingent liability outside India for a PRI, or contingent asset or liability in India for a PROI. So for a PRI, it alters asset or liability outside India. For a PROI, it alters asset or liability in India. Okay, then in that case, it becomes a capital account transaction. Guys, in capital account transaction, we have given power to RBI also, and we have given power to CG also. Sir, capital account transaction, I can divide into two parts. One is debt instruments, the other one is equity instruments. Okay. Sir, RBI can put restrictions on debt instruments, and central government can put restrictions on equity instruments. RBI can put restrictions on debt instruments. Sir, it is written that RBI, in consultation with CG, shall classify classes of capital account transaction involving debt instrument which is permissible and put conditions on them. Similarly, central government can, in consultation, put limitations on non-debt instruments as an equity instrument. So basically, for debt instruments, they have given the power to RBI, but for equity instrument, they have given power to RBI, but to CG, but they'll consult each other. RBI will give in consultation with CG, CG will give in consultation with RBI. They'll consult each other, but they have divided powers. Now listen to me very carefully. Sir, RBI can put restrictions on debt instruments, but there are two transactions on which no restrictions can be put. There are two transactions on which RBI or CG shall not impose restrictions. Number one, payment due on account of amortization of loan or repayment of loan. Sir, for example, I took loan from JP Morgan. It is a capital account transaction. Now I am repaying that amount. That is also capital account transaction. When I have to repay that amount, I went to the bank. I said, "Bank, give me dollars. I have to repay to JP Morgan." Bank said, "No, no, no, no. There is a restriction." No, sir, you cannot put any restriction on repayment or amortization of loan. No, 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 no. Number two, depreciation of direct investment in ordinary course of business. Sir, please try to understand. These are the two transactions on which restrictions cannot be put. What are these two transactions? Number one, payment with respect to amortization of loan or repayment of loan. You cannot restrict that. And number two, depreciation of direct investment in ordinary course of business. Depreciation of direct investment in the ordinary course of business. There can be no restriction on this. You have to remember this, sir. C23, it has asked me your exam. There can be no restriction on payment due on account of amortization of loan or repayment of loan. And number two, depreciation of direct investment in ordinary course of business. Okay. Okay. Okay, sir. Now coming to point number 4 and point number 5. This is basically section 6 subsection 4 and section 6 subsection 5. What does section 6.4 says, sir? Please listen to me very carefully. We are talking about capital account transaction. It says that any PRI, imagine I am a PRI, imagine we are a PRI. You are also PRI. Sir, a PRI may hold, own, transfer or invest. Hold, own, transfer or invest in any foreign currency, foreign security or immovable property outside India. Wow. You can invest in a for immovable property outside India, provided that it was acquired, held or owned when he was a PROI or inherited from a PROI. Let's just put time to understand this. Sir, it is saying that if there is a PRI, who is a PRI, sir? I am a PRI. Sir, if PRI, the question is whether PRI, as in myself, Shubham Singhal, can I hold foreign exchange? As in, can I have dollars? Can I have foreign security? Like, can I invest in the shares of Netflix? And can I have immovable property outside India? Can I have a property in Dubai? Can I have a property in Dubai? I'm sure Ram Harsha sir must be having a property in Dubai also. You let me know in the comment whether he has one. Okay. But I think he has a property in Dubai. Okay. So, for example, if I want to invest in a property in Dubai, can I do it? Law says that, sir, we will allow you only under two circumstances. Number one, if it was acquired when you are a PROI. Okay, so you are saying new investment cannot be done. You are saying that if I was a PROI, like for example, in 2010, 2011, I was a PROI of Dubai. I stayed in Dubai. And that is when I invested in a property in Dubai. And later on, I became a PRI. So law says you can continue, no problem. And number two, if it was inherited from a PROI. So for example, if my dad had a property in Dubai, he bought it when he was a PRY, but later on he gave it to me. I inherited that property. Then also it is fine. So either it should be acquired when you are a PRY or it is inherited when you are from a PRY. Only then you can hold it. Means what you are trying to say, sir? Sitting here in India, I cannot have a property outside India. Looks like that's what you're saying, but that's not true. We said that for now, only if you acquired when you were a PROI or when you inherited from a PROI, it will be okay. I'll give you examples, sir. For example, Rishabh Bhaiya. Sir, Rishabh Bhaiya had been in UK for 20 years. He is in UK for the last 20 years. Now he wants to come to India. My question is, sir, in 20 years of UK, he had a lot of properties in India, in UK. Will he have to sell that property or can he continue to have it? Sir, he can continue to have it because he had acquired it when he was a PRY. Number two, sir, what about the foreign currency accounts? He must be having one bank account with JP Morgan. In that bank account, there must be some pounds also. There must be some pounds also, some money also. What about that money, sir? We said, no problem. You can continue to have that foreign currency account. We have no problem, guys. Whatever you had when you were a PROI, we are not saying you get rid of everything. No, no, you can continue to hold that as it is. We have no problem at all. And one more thing, very importantly, sir, after coming to India in the year 2026-27, what did Rishabh Bhaiya think? Rishabh Bhaiya thought that was in London. I have a building. That building is of one lakh pound. That building is of 1 lakh pound. Let me sell this building and let me buy a new property in UK. Let me buy a new property in UK. New property in UK. Sir, if he wants to buy a new property in UK using the money which he already has in UK, trust me, RBI approval will not be required. RBI's approval will be required only when you are taking money outside India. But if I already had some income in UK, if I already had some money in my bank account, if I already had this income, if I had money in my bank account, I had some rental income, sir. I had some rental income also from this property. Using all that income, if I buy a new property, RBI's approval will not be required because I'm not taking any new money outside India. I'm using the money which is there outside India to purchase a property outside India, not something which should bother RBI. Okay, please come here. Sir, there are 4 RBI clarifications. Remember the Rishabh Bhaiya's example that I gave you. Only that will help. Okay. Are you getting my point? Huh? Listen to me. Sir, Rishabh Bhaiya's example, any foreign currency account, when he was a PROI, he can continue that even after he becomes a PRI. Number two, sir, any income from employment, business, vocation outside India when he was a PROI, or from investment when he was a PROI, or from gift or inheritance will all continue. Sir, if I had a property and from that I am getting rental income, I will still continue to get rental income. No one can stop me. Number three, forex held outside India, acquired through inheritance. You can drop number three, read number four. Very important. Sir, a person resident in India, as in Rishabh Bhaiya after coming to India, may freely utilize eligible asset abroad or income or sale proceeds therefrom after they return to India for making a fresh investment abroad without RBI's approval. So, if you have an asset outside India, so the income that is coming from that asset or the sale proceed of that asset, you can use it to purchase, make a new investment, and you will not require approval of RBI, provided that cost of investment is made completely out of eligible assets. You are not taking new money outside India. Whatever is there outside India, from that only you are making a new investment. So we don't have any problem. We will allow it. We don't have any problem. We will allow it. Are you with me? Yes, sir. Yes, sir. Next point, guys. Sir, a PR, the section that the thing that you read in 6.4. See, there are 3 questions based on that. Now 6.5 is a mirror image. It is from the PROI's point of view. PROI may hold Indian currency, Indian security, or immovable property in India, provided it was acquired when he was a PRI or inherited from a PRI. So what we studied for PRI, no, that is the same here for PROI. So PROI can have any property or investment in India if it was acquired when he was a PRI or if it is inherited from a PRI. Only then he can continue to hold it, not a problem. Okay. Okay, sir. Now, to give this chapter a closure, there's just 1.5 page left. Listen to me very carefully, sir. Now you have to study 3 things, not Disney Hotstar. You have to study 3 things. So now you are going to study something called as foreign exchange management, permissible capital account transaction, regulations 2000. For capital account transaction, you're going to study permissible capital account transaction regulations 2000. For rules for current account transactions, sir, you studied foreign exchange management, current account transaction rules 2000. Sir, look at the difference in the name. Sir, this is very important. I told you one thing. Current account transaction is freely permissible unless prohibited. But capital account transaction is prohibited unless permitted. So we have to make a regulations to permit capital account transaction. Okay, but in current account transaction, we had made schedule 1 which spoke about prohibitions. There is a difference, sir. You need to remember this name. In exam, you will get marks only if you write schedule 1 of foreign exchange schedule 1 of foreign exchange management, permissible capital account transaction regulations 2000. Only then you will get marks, otherwise you'll not get marks. So please be very careful, sir. Guys, hello. Sir, schedule 1 talks about transactions which were permissible for PRI. Schedule 2 talks about transactions which are permissible for PROI. But in this, sir, there is a regulation 4. This regulation 4 is something which talks about prohibition. Listen to me. Sir, regulation 4 is very clear, and regulation 4 says that for a PROI, there are certain transactions in India that we will never allow. For a PROI, there are certain transactions in India which we will never allow. Sir, you cannot invest in chit fund business of India. You cannot invest in a Nidhi company. You cannot invest in chit fund. You cannot invest in Nidhi company. Sir, you cannot investment in agricultural activities. You read this. Sir, you cannot invest in the business of chit fund, Nidhi company, agricultural or plantation activities. Sir, real estate business. We don't want you in real estate business also. We don't want you to for construction of farmhouses. And we don't want you for trading in TDR. Sir, what is TDR? Sir, TDR is transferable. TDR is transferable development rights. Transferable development rights. We don't want you to do trading in TDR, sir. This is super important, sir. It will come in your exam, sir. It will come in your exam, sir. Please listen to me very carefully. It is definitely going to come in your exam. Please listen to me, sir. Chit fund business, Nidhi company, agricultural or plantation activities, real estate business, construction of farmhouse, and trading in TDR. Trading in TDRs. Please understand these are the things where you cannot invest. Remember along with me, such chit fund and Nidhi company is one and the same thing. After that, agriculture and plantation is something that India can take care of itself. Sir, after that, real estate and farmhouse is one thing, and then you can say transferable TDRs. TDRs. Okay, so these are the points that you need to remember. In this, you cannot invest. But sir, you cannot invest in real estate business also. We said you cannot invest in real estate business, sure. But real estate business has some exceptions. As in, these things are not real estate business. What things, sir? Real estate business does not include development of township, construction of residential or commercial premises, roads or bridges, and registered REITs. REITs is Real Estate Investment Trust. So basically, a PROI cannot invest in real estate business, but a PROI can invest in development of township. He can invest in construction of residential premises, or in REITs. He can invest in these things because these things are not real estate business. So if a person wants to come and invest in township, he can do it. So what is he not allowed to do, sir? So basically, he's not allowed to do trading in real estate. Like if you're buying property, selling property, buying property, selling property, you are prohibited from doing that. Okay. So a PROI cannot do these things. But sir, similarly, we have one restriction from PRI also. Sir, a PRI as in Indian people. We said Indian people kindly don't do any transaction with North Korea. Democratic People's Republic of Korea. Is he North Korea? When I see him, I remember the word momos. I don't know why. But anyway, sorry. Sir, I said North Korea. North Korea. Democratic People's Republic of Korea, North Korea. Just a little to enlighten the mood, to lighten up the mood, sir. Nothing serious, okay? So you cannot make investment in North Korea. We said stay away from the people of North Korea. You are not allowed to deal with the North Korea people. Who? Indians. PRI. Okay. So this is very important, sir. Prohibition for PRI. But apart from that, what are the things which is permitted for a PR? What are the things which are permitted? Guys, you don't have to remember the schedule. Just read along with me once. Sir, for example, tomorrow, if you have some money and you want to invest outside India, what are the things where you can invest? This schedule will tell you that. Schedule 1 says that You can invest in any foreign securities. You can purchase shares of any companies outside India. You can take foreign currency loans if you want. You can have any immovable property outside India. Sir, you can give guarantees for outsiders. You can give guarantees also. Sir, you can take loans and overdrafts. You can give loans and overdrafts. You can take loans, you can give loans. You can have a foreign currency account. If you have a foreign currency account, that is also fine. You can have a foreign currency account outside India. Sir, you can take an insurance policy outside India. And you can take derivative transactions also outside India. So you can do these things. You can invest in foreign companies. You can invest in securities. You can invest in derivatives. You can invest in immovable property. You can have foreign currency account. You can give loans. You can take loans. You can give guarantees. You can take insurance policies. You can do these things. But guys, please note. And what about PROI? Sir? PROI can also do similar things in India. So they can make investment in India. That's it. Don't read ahead. They can make investments in India. They can have immovable properties in India. They can give guarantees in India. They can take deposits from India. They can give deposits in India. They can have foreign currency account in India, and they can undertake derivative contract. These are the things that they can do. But but see, they cannot come to India and take insurance. Insurance is something that they cannot take in India. We can go outside India and take insurance policy, but they cannot come to India and take insurance because insurance is a risky business. Sir. We don't want that India is paying to outsiders. So we said outsiders cannot come and take insurance in India. Sir, this is your schedule 2. Schedule 1 says what are the things that Indian can do outside India. Schedule 2 says that what are the things that outsiders can do in India. You don't have to remember this, just remember it casually. But, sir, is there a limit? Is there a limit to how much I can invest outside India? Law said the limit is same $250,000. $250,000. Sir, so what are you saying? Sir, you are saying that for Schedule 3 of current account transaction, there was a limit of 250,000. For Schedule 1 of capital account transaction, there is a limit of 250,000. So you are saying total there is a limit of 500K. So you are saying total limit of 500K. So the answer is no. The total limit is only 250K. It is not each. The total limit is only 250K. So the current account transactions also that is allowed, and the capital account transactions also that is allowed. Per annum, you can do up to $250,000 only. So for example, if I buy an immovable property of $200K, and if I want to go to travel, which is a current account transaction, and I want to spend $60K, for example, the limit got exceeded, sir, and I'll have to take RBI's approval. The limit is together in aggregate. You see, the limit is withdrawal of foreign exchange as per Schedule 3 of current account transaction shall also be subsumed within the above limit. Subsumed within the above limit means the Schedule 1 of capital account transaction and Schedule 3 of current account transaction together will be $250,000. And the last line for this chapter, sir, provided that no part of forex of $250,000 shall be remitted to non-cooperative countries and territories. Non-cooperative countries, NCCTs. NCCTs is non-cooperative countries and territories, which is notified by FATF, Finance Action Task Force. Sir, in India, we have someone called as Financial Action Task Force. If they notify some country as non-cooperative, for example, Pakistan, it is a non-cooperative country. So you cannot ever invest there. It is restricted. It is prohibited. You cannot invest there. Sir, this is your lump sum comprehensive revision of your chapter.
Go. Sir, we are going to start the revision of the chapter called Limited Liability Partnership Act worth 10 marks. Please listen to me very carefully. Sir, exactly those points that are relevant for exam. Sir, there are 4 schedules in this particular act. The 4 schedules are about, number 1, rights of a partner in LLP in the absence of a formal agreement. Ideally, there should be an LLP agreement, but if there is no LLP agreement, what will be the rights and duties is given in the first schedule. Sir, the second schedule, third schedule, fourth schedule talks about conversion to LLP. If you're a firm, how will you convert to LLP? If you're an unlisted private company, how will you convert to an LLP? If you're an unlisted public company, how will you convert yourself to an LLP? Where is it given in the schedules? Coming to the next point, sir. Sir, why do you need an LLP? Because it is an alternative corporate structure. Sir, it has all the benefits of the companies. It has all the benefits of the companies, and at the same time, it can be less regulated like the firms. It can be less regulated like the firms. Now listen to me very carefully, guys. Sir, it fills the void between traditional unlimited liability partnership and structured limited liability partnership. There was a gap. partnership firm was extreme, company was also extreme. To fill that gap, we invented what? We came up with the solution of this particular the LLP provision. Now guys, listen to me very carefully. Sir, in case of LLP, what is the good news? Is it unlimited liability? No sir, the liability of the partners is limited, but listen to me very carefully. Sir, in case of LLP, a firm is bound by the act of the partner. A partner is bound by the act of the firm, but a partner is not responsible for the act of other partners. Come on guys, come on. A partner is not responsible for the act of the other partners. Are you with me? Yes sir. After that, sir, characteristic of an LLP agreement, let's discuss once. Sir, what are the characteristics of an LLP agreement? It is a body corporate. That is, it can hold property in its name, it can be sued, and it is a legal entity. Sir, it has perpetual succession. That is, it keeps going on. Separate legal entity. So the partners are different and LLP is different. This was not the case in partnership firm. In partnership firm, there was no separate legal entity, but in this case, there is a separate legal entity. Mutual agency. What is mutual agency? Sir, firm is responsible for the act of partner, but a partner is not responsible for the act of other partner. Sir, there is an LLP agreement. Sir, is LLP agreement mandatory? Sir, in theory, they say that it is not mandatory, but it is mandatory, no sir. Because if there is no LLP agreement, Schedule 1 applies. Schedule 1 applies. So anyway, LLP agreement is mandatory. What is common seal, sir? Similar to company, LLPs can also have common seal. Sir, there is limited liability. Sir, business for profit only, very important. A company can be for not for profit, but LLP only has to be for profit. It cannot be without profit. Compromise and arrangement we will read. These are the things that we will read. Sir, mutual agency or partners are agent of LLP. No one partner can bind the other partner. Sir, you are an agent of the LLP. You can bind the LLP, but you cannot bind any other partner. Sir, limited liability. Listen to me very carefully. Sir, what is the liability of the partner? It will be limited to the agreed contribution in LLP. But such contribution may be tangible or intangible. So whatever you have promised, only that much is your liability. You are not liable beyond that. Are you with me? Yes, sir. Sir, now coming to some basic definitions in the LLP Act. Sir, what is address? When you talk about address of the partners, what will be the address? Sir, if your partner is an individual, then his usual residential address. Whatever is the residential address, that will be the address. But if your partner is a body corporate, then the registered office will be the address. Then the registered office will be the address. Number 2, sir, very important, body corporate. Sir, what is the meaning of body corporate in the LLP Act? Body corporate means a company or LLP registered under this act, LLP incorporated outside India, or a company incorporated outside India. So it involves everything. Indian company, outside India company, Indian LLP, outside India LLP. But it does not include what? A sole corporation, cooperative society, or any other body corporate notified by the CG. Sir, can you tell me the 3 exceptions? Number 1. A corporation, sole, a cooperative society, and any other body corporate notified by the CG. Come on guys, after that. Sir, can you tell me what is the definition of financial year? Sir, generally financial year is 1st April to 31st March. But if a company is incorporated on or after 1st October. You're studying LLP Act, guys. It is not Companies Act, LLP Act. If a company is incorporated after 30th September, that is on or after 1st October, then the financial year will end next year. I'll give you a simple example, sir. Sir, if a company is incorporated, let's say 1st October 2026. Tell me, in Companies Act, when will the financial year end? In LLP Act, when will the financial year end? In Companies Act, the financial year will end on 31st March 27. But in LLP Act, the company financial year will end on 31st March 28. Guys, are you with me? Guys, are you with me? Yes, sir. Sir, now let's talk about 1st January 2027. When will the financial year act end in case of LLP and company? For company, it will end on 31st March 28. Sir, Companies Act, simple rule. If it started this year, it will end next year. So what started in 2027 has to end in 2028. What about LLP, sir? In LLP, in this case, it will be same 31st March 2028. Are you with me? Yes, sir. After that, coming to the next point, sir, what is a foreign LLP? Means an LLP which is incorporated registered outside India, having a place of business in India. After that, sir, small LLP, very important. Sir, do you remember small company? Section 2 clause? Small company, 2 clause? What? 85, sir. Small companies 2 clause 85. Similarly, small LLP, sir, small company was paid up share capital not exceeding 4 crores and turnover not exceeding 40 crore. Here, sir, instead of paid up share capital, you will look at contribution and you will look at turnover. So small LLP means an LLP having contribution less than equal to 25 lakhs and turnover less than equal to 40 lakhs. The turnover will be as per statement of accounts and solvency. Turnover will be as per statements of account and solvency. Are you with me? Yes, sir. After that, coming to the next point, sir. Indian Partnership Act will not apply. You please stop applying Indian Partnership Act to LLP unless otherwise specified. Indian Partnership Act will not apply. Sir, you remember how I told you we have to go speed for the first 35-40 sections? That we have to keep up, sir. Sir, let's talk about partners. Sir, how many partners will be there in an LLP? Sir, in LLP, individual can also be partner, body corporate can also be partner. But who cannot be partner, sir? Sir, individual and body corporate can be partner, but a person who has been declared to be of unsound mind by competent court. Sir, if someone was going in the road and you called him, hey, pagal, unsound mind, is he disqualified, sir? No, sir. You calling him a pagal will not disqualify him. He has to be of unsound mind declared by competent court. Number 2, he is an undischarged insolvent. Number 3, he has applied to be adjudicated as an insolvent and his application is pending. His application is pending. So he has made application, that application is pending. In that case, whether he has an undischarged insolvent or whether application is pending, in both cases he will be disqualified. So find only good people, sir. Don't find this insolvent people or unsound mind people. After that, sir, question is, can HUF become a member? Sir, only individual can become a member and body corporate can. Is HUF a body corporate? No, sir. Indian company, foreign company. Indian LLP, foreign LLP. So HUF is not a body corporate. Are you with me? Yes, sir. So HUF cannot become a member cannot become a partner. Sir, can one LLP become partner in another LLP? How, sir? Body corporate can become partner in LLP and LLP is a body corporate. Therefore, one LLP can become partner in another LLP. Sir, what is the minimum number of partners? Sir, the minimum number of partners is 2 and there is no limit on the maximum numbers. However, sir, listen to me very carefully. If the number of member reduces below 2 and that single partner carries on for more than 6 months, then he will attract personal liability similar to section 3A. We skipped 3A today. In today's marathon, we skipped 3A. After 3, we jumped to 4. Sir, what is 3A? If you continue your business for 3 months with reduced number of members, then 6 months with reduced number of members, then such reduced number of members shall be personally liable. Guys, are you with me? Yes, sir. What is section number 7? Designated partner. Sir, every LLP shall have at least 2 designated partner, out of which one should be resident. And only individuals can become designated partners. Body corporate cannot. Sir, I have a question. Can two body corporate form an LLP? Can two body corporate form an LLP? Yes, sir. 2 partners can form an LLP. But what about designated partner? Sir, those body corporate will have to appoint a kind of representative who will act as a designated partner and then they can continue as an LLP. Now the question is, sir, individuals and one should be resident. What do you mean by resident? Resident means residing in India for at least 120 days, similar to resident in the case of OPC. In OPC also it was 120 days. Sir, what if all partners are body corporate? We discussed. Now if you fail to appoint 2 designated partner, then what will happen, sir? Then you will have to pay 10,000 rupees plus 100 rupees per day up to a maximum of 1 lakh, or LLP will have to pay 50 or for LLP and 50,000 for every partner. Partner will pay 50,000 and LLP will pay 10,000 plus 100 rupees up to a maximum of 1 lakh. Sir, penalties are important, sir. But more than penalty, what is important? Days are important. Okay. So for LLP, 10,000 plus 100 plus day up to a maximum of 2 lakhs. For every partner, 50,000 rupees. Now, sir, 50,000 rupees they will give country or what, sir? Like split wise, they'll split between everyone or what? Sir, per person 50,000. This is not your trip expenditure that you'll split between everyone. Sir, per person 50,000 rupees. Sir, if incorporation document, listen to me very carefully, how will you find the designated partner? Sir, either it will be specified in the incorporation document. If incorporation document specifies who are to be designated partner, such partner shall be designated partner. Or state that each of the partner of the firm will be designated partner. Every partner shall be DP. What do it? Look at me. Sir, in the incorporation document, you will clearly say who is designated partner. If you say, then that person is designated partner. If you do not mention, every person will be designated partner. Every person will be designated partner. Guys, are you with me? Yes, sir. Sir, keep listening to me. Every partner appointed as DP shall have give prior consent. Thereafter, LLP shall file the particulars of such DP with ROC within 30 days of appointment. So appointment of DP also needs prior consent, and then you will have to inform to ROC within 30 days. And if there is a failure, 50,000, the DP will pay 25,000 and LLP will pay 5,000, 100 rupees per day, maximum 50,000. This penalty is not that important, but that's okay, sir. So for DP, the designated partner, you need to have a DPIN. What did I say? DPIN. You have DPIN or DIN. Either is okay. DIN is director identification number. DPIN is designated partner identification number. Guys, listen to me very carefully. Every company shall have, every LLP shall have designated partner. How many? 2. Both of them should be individual. Both of them should be individual. And one of them should be resident. Resident means more than equal to 120. How will you know who is designated? How will you know who is designated partner? Incorporation document will tell you. If they don't tell you, all the people will be considered as designated partners. Sir, what is the liability of a designated partner? Why do we need written consent of a designated partner? Because DP shall be responsible for doing all the acts of the LLP. Any returns, any statements, all responsibility of DP, and liable to all penalties imposed on the LLP. Whatever penalties are coming on LLP, who will be liable? Designated partner will be liable. So section number 9, listen to me very carefully. Changes in the DP in case of vacancy. Changes in the designated partner in case of vacancy. Sir, what is the changes in designated partner? Sir, if the designated partner died, or if there is any change, then in that case, sir, if LLP may appoint within 30 days of the vacancy due to any reason. Now, if at any time there is no DP, if there is no DP or one DP, every partner will be deemed to be as a designated partner. So if there is no DP, all the partners will be responsible and every partner will be a DP. But within how many days will you fill the vacancy? 30 days. Let's try to focus on the dates and the timelines. Within how many days will you have to fill? 30 days you will have to fill the casual vacancy, otherwise there is a penalty. I told you, I gave you a clarity on whether you need to remember penalty or not. Okay, if you are lucky, you'll be still unlucky. Okay, penalties. Now listen to me very carefully. Sir, incorporation of a company, very basic point. Nothing extraordinary. Sir, how to incorporate a company? Basically, if incorporation document, basically there has to be 2 or more subscribers to carry on lawful business with a view to earn profit. What should be your intent to earn profit? It cannot be for not for profit. And there has to be at least 2 or more subscribers. And along with incorporation document, you will have to give a statement that you have complied with all the rules, and the statement has to be given by advocate, CS, CMA engaged in formation, and by one of the subscribers. Sir, are you with me? Related to incorporation. And third, you have to file with the ROC of the in which the state registered office is proposed to be situated. So if I want registered office to be in Chennai, I'll file with the ROC Chennai. So you know that ROC for company and LLP is same. ROC for LLP and company are the same. Sir, are you with me? You have to make an incorporation document, 2 or more subscriber, and then you have to give the declaration that you have complied with everything, and then you have to go to the ROC. Sir, what will you write in the incorporation document? Read it out loud, please. 5 things. What childish things are names of LLP, proposed business address, and the partner name and address of the partners and the DP, and any other information. Now, very important point, sir. If you are making false statement, you see here CS had to give a statement and subscriber had to give a statement that I have complied with everything. If you give a false statement knowing it to be false, or you does not believe it to be true, he shall be liable for jail up to 2 years and fine 10,000 to 5 lakh. You'll be liable for fine 10,000 to 5 lakh and jail up to 2 years. Now please remember that NPO cannot be made for a not for profit, sorry, LLP cannot be made for a not-for-profit motive. It has to be always a profit motive. Sir, section 12, incorporation by registration. Sir, in section number 11, you gave all these documents to ROC. Now, what ROC will do? ROC will verify the documents and register and issue a certificate of incorporation to a LLP. Sir, when you receive that certificate, then that is the date when you will be said to be incorporated. Within 14 days, he will register and give the LLP a certificate of incorporation. Sir, such certificate, anyone cannot issue. It has to be issued by ROC properly. It shall be signed by the ROC and authenticated by the official seal. It should be conclusive evidence that all the provisions have been complied with. All the provisions have been complied with. Guys, are you with me? Sir, these things are written in a very crisp manner. These things are written in a very, very crisp manner. Sir, statement delivered under section 11. Sufficient evidence of compliance with this. Sir, this is not relevant. Listen to me. What was the process? You made an incorporation document. Are you listening? 100%. Are you okay? Sir, what is the process? Listen to me. Just last 1 hour and you'll be very happy after this. But just put efforts to learn it. Otherwise, at the end, you'll be like, what did I learn? Oh, I have to study so much. So just 1 hour and you'll be happy for the whole night that you had a very productive day. Listen to me very carefully, sir. What did I say? I said that incorporation document you will submit to ROC. ROC will get 14 days. This will come in exam. How many days? 14 days to reply back. ROC will register it, give you a certificate of incorporation, and such certificate will be a conclusive evidence that all the provision has been complied with and no one can question your incorporation. Sir, what is the registered office of the LLP? Do we have to read all the same provision as Companies Act? No, sir, very easy. Every LLP will have a registered office, sir, and if there is a change in registered office, file a notice with ROC in the prescribed manner. The manner is not included in our syllabus, so we don't have to worry about it, and there is a penalty. Coming to the next section, sir, effect of registration. Sir, what if I'm registered? I'll become a body corporate. So I'll become a body corporate. I can sue or be sued. I can acquire properties in my name, and I can have a common seal just like a company. That is the effect of registration. Again, a childish thing, sir. Now coming to the next point, company. So coming to the next point, section number 15, name. Guys, listen to me very carefully. Very similar to what we studied in incorporation chapter. Sir, every LLP shall have a suffix called LLP or limited liability partnership. Either short form or full form you can have. Now, sir, no LLP shall have a registered with a name which in the opinion of CG is undesirable or identical to the name of any existing LLP or company or registered trademark. Sir, Companies Act did not care about name of LLPs, but LLP is saying that your name should not be identical to the name of any existing LLP, existing company or any registered trademark, and it should not be undesirable in the opinion of central. So IOU, O they have not written, it should not be identical to the name of any existing LLP, existing company or registered trademark. It should not be undesirable in the opinion of the central government. After that, sir, listen to me very carefully. Here. Section 16, reservation of name. Can I get my name reserved? Yes, sir. Sir, you will have to apply to ROC with the proposed name. And which form will you apply, sir? You will use the form run LLP. There you used to use the form run. Here you will use the form run LLP. And if the ROC is satisfied that it is not identical or undesirable, it will reserve for straight 3 months. There it was 20 days or 60 days. Sir, when I say there, I mean section 4. In section 4 memorandum, you studied name clause. There it was 20 days for new companies, 60 days for existing companies. Here it is straight 3 months. Doesn't matter whether you are a new LLP or a existing LLP. Sir, after that, what did I say? Probably the only notes where you will find reference of Companies Act provision also, that in section 4 you will get 20 days or 60 days. Sir, why do I have to keep praising my notes so much? Because you here are not used to these notes, so I have to first tell you its importance, only later for you to go and tell it to other students. If I don't tell it to first few bunch of students, how will it get spread to other students? So in North, I don't have to tell students the importance of this notes because they have used it, tested, tried, and students are using that. But here I have to tell you that you'll not find a single notes, not in India, where you'll find reference to Companies Act. This only happens when the teacher himself sits to make the notes without the help of any team, that I will write each and every word. So you will have to understand that these notes are basically our anchors notes in your hand, which you crave for. Okay, maybe I get an anchors note so that I don't have to make those notes by myself. That is this notes. Okay, coming back, sir, where were we? Section number 16, which talks about reservation of name. Sir, section 17, rectification of name, you know it completely. This is similar to section 16 of the Companies Act. Whether due to inadvertence or otherwise, where the name of an LLP is identical to or too closely resemble to the name of any existing LLP, existing company or registered trademark, then the CG may, what was written in Companies Act, suo motu or on an application by registered proprietor of the trademark. Here the CG cannot take action suo motu. He has to wait for an application by the registered proprietor, and if that application comes within 3 years, then he can take the same action that will, listen to me, that he will order the LLP to change the name within 3 months. Sir, by passing SR, you have to change the name within 3 months by passing OR. In LLP you will pass OR. In LLP you will pass OR. In LLP, the CG will order that you change your name within 3 months. If the LLP changes its name, then within 15 days it will inform to the ROC. But if the LLP fails to change the name, CG will allot a new name and ask the ROC to give a fresh certificate of incorporation. After that, if it wants to change the name, it can comfortably change the name, not a problem. Sir, so here the only difference is, unlike section 16, CG cannot take suo motu action here. In section 16, CG could take suo motu action, but here suo motu cannot be done. So what can be done? When can you ask to change the name? Only on application by registered proprietor of the trademark. Did you understand? Yes, sir. Coming to section number 22, eligibility of the partners. Listen to me very carefully, sir. Partners. When are the partners eligible? Sir, on incorporation, everyone who have subscribed to the document shall become the partners of the LLP as per the LLP agreement. The relationships of partners. They are going to tell about the boyfriend and girlfriend of partner. Relationships of partner. So they are going to say that a partner is an agent of the firm and can bind the firm, the LLP, but partner cannot bind any other partner. So listen to me, the mutual rights and duties shall be governed by the LLP agreement between partners and LLP. Now, LLP agreement and any changes shall be filed with the ROC. Any agreement in writing between LLP and subscribers before incorporation, sir, very important point. Listen to me carefully, sir. Myself, Shripal and Satvik. What beautiful names here. Satvik, myself, Shripal and Satvik. Listen to me very carefully. 3 of us made an understanding that, boss, let's form an LLP. So Satvik said, sir, let's form an LLP, but what will happen, sir? Let's first of all set our understanding that you will get 40%, he will get 30%, I'll get 30%, and let's set all the understanding, sir. I said, okay, let's make an agreement. Now after that, sir, we went to incorporate a company and our LLP, and our LLP got incorporated. Now my question is, after incorporation, the agreement that we prepared before incorporation, will this agreement be valid? So this agreement will be valid only if it is ratified by all the partners. Even if one partner steps back, it will not be valid. So the question is, any agreement in writing between LLP and subscribers before incorporation shall be valid only if ratified by all the partners upon incorporation. Guys, are you with me? Upon incorporation, you have to ratify it. In the absence of agreement, you will follow the first schedule. In the absence of agreement, you will follow the first schedule. Are you with me? Guys, everyone, we finished section number 23. Please clap for yourself. Huge round of applause. For those who are sleepy, you can put your face between and clap. Whatever you like. Okay. No, I noticed that you didn't clap last time also. You're studying, but are you genuinely studying? Okay, very good. When is your attempt? First attempt? Okay, very good. What was your score in foundation? 249. 49 marks extra. Come on, listen to me very carefully, guys. Sir, section number 23. Good. You are studying. No problem. I just asked. I just wanted to know. Sir, section number 23 is what? Section number 23 is how you have relation between the partners. Sir, section number 24 onwards, it is a little important. Sir, you see why is it important? In the besides it, you can also see as question mark reference. Sir, cessation of partnership interest. Don't ask me to repeat. I might fumble. Of partnership interest. You say what is it? Whatever it is, that is of partnership interest. Okay, now listen to me very carefully, sir. Sir, you are a partner. You are a partner in a LLP. Now, will your partnership someday come to an end, sir? Yes, someday it will come to an end. What are the things that will happen when you cease to be a partner of an LLP? So number one, a person may cease to be a partner in accordance with LLP agreement with other partners, or in the absence of agreement by giving a notice for more than equal to 30 days. Sir, if as per LLP agreement you can cease, or otherwise you can just give a resignation notice, and that notice has to be at least 30 days, and you can say that I don't want to continue. Now, sir, listen to me. This is manual as in where you decided when the partnership will get over. But there is automatic seizure also, sir. A person shall cease to be partner in case if death of the partner, or the LLP is dissolved, or declared to be of unsound mind, or adjudged as an insolvent, or declared as an insolvent. So basically, if you died, as in the partner died, or the LLP dissolved, or the partner became unsound mind, or the partner became insolvent, in that case you will cease to be a partner. So what is the difference between point 1 and 2.2, sir? Point 1 is manual, I am resigning. Point 2 is automatic, he's dying. Are you getting my point? He's dying, or the firm is getting dissolved. Now listen to me very carefully, sir. Very important point 3, 4 and 5. Where a person has ceased to be a partner in the LLP, the former partner is to be regarded still as partner unless the person has noticed that former partner has ceased, or notice that former partner has ceased is delivered to ROC. What do you mean, sir? Can anyone explain? Can anyone explain? For some people, when you do this, when I ask, can anyone explain me, like, yes, sir, yes, Shripal. No, you tell me louder. Third point, yes. Perfect, sir. Listen to me. What's your good name, sir? Can you stand up for a minute? The Pranav. Let's take example of Pranav. Guys, listen to me very carefully. Pranav is what? Pranav is a partner. Pranav is a partner with me, Shripal, with me, Shripal and Satvik. Listen to me very carefully. 3 and 4 of us are partners. Now what happened? Pranav is not a partner anymore. Could be any reason, sir. Unsound mind, or he resigned, whatever. He's not a partner. But now what? We know he's not a partner. But you, for example, he used to do business with you daily. He used to purchase goods from you, and goods on behalf of LLP. Now every month he used to go buy 1 crore worth of goods, and then you used to come to LLP and LLP used to pay. Now today he's not a partner anymore. You have to be informed. You have to be officially informed. What happened today? He resigned. He's not a partner anymore. After 5 days he came to you and he purchased the goods and he ran away with the goods. Now you came to me saying that LLP, pay the money. I'll say, I'll not pay the money. Why should I pay? He was not even a partner. He resigned from our firm. Your money will not be lost. I will be bound. Why, sir? Because if he is not a partner, I will have to either intimate it to you or deliver it to the ROC. If I did neither of the things, then he is still a partner and I will still be liable. Are you with me, sir? Yes, Pranav. Thank you so much, sir. What is it? Where a person has ceased to be a partner of LLP, the former partner, as in that person is to be regarded as still being a partner unless the person has noticed that former partner has ceased. That person means the person who is dealing with that person should be knowing or notice has been given to the ROC. Are you with me? Yes, sir. Cessation of partner does not discharge a partner of the obligation incurred while being a partner. So you are not a partner this year, but were you partner until last year? Yes. So for all the problems of last year, you will also be liable. Next point, sir. Point number 5. Where a partner of an LLP ceases to be a partner, the former partner or a person entitled to his share, very important, in the case of death or insolvency, shall be entitled to receive, number 1, actual partnership contribution and right to share in accumulated profit. So there was a partner, Mr. X. Mr. X died, or Mr. X became insolvent. Will he continue to be a partner? Why? On death or insolvency, you cease to be a partner. Now you cannot continue to be a partner. Now what will happen to your share in the LLP? So it will get transferred to your legal representative. What will get transferred, sir? Sir, the original contribution that you gave and your share in the accumulated profit. Whatever share you have in the accumulated profit, that will get transferred to whom? To the legal representative. But listen to me very carefully. Only the capital contribution and the profit share. What will the legal representative not get? Right to participate in the management of the LLP. He cannot enter into the business of the LLP. He can just ask for the profit and get lost. Are you with me? Yes, sir. So point number 6, former partner or entitled person shall not have any right to interfere in the management of the company. You cannot interfere in the management of the company. If you come to the LLP tomorrow, management of the LLP, if you come to LLP tomorrow and you say, please show me the books of accounts, I can throw you away. You are not eligible to see the books of accounts. You are only eligible to the capital contribution and the accumulated profit. Are you with me? Are you with me? Yes, sir. Let's move forward, sir. Section number 25. What is section number 25? Registration of changes in partner. Sir, very important questions were asked on this, sir. What is section number 25? Number 1. Partner shall inform any change in the name or address within 15 days of such change. So, for example, if a change is made on 1st January, partner has to inform within 15 days. Okay. Now, an LLP, second point, a LLP shall file a notice with the ROC within 30 days in case where a person becomes or ceases to be a partner and there is any change in the name or address. Sir, 2 things were informed to LLP. Number 1, if there is any change in the name or address. Number 2, if any person ceases to be a partner. This LLP has to go ahead and inform it to ROC within 30 days. Guys, are you with me? Guys, are you with me? Now listen to me very carefully. Sir, you might think that this 30 days is from when? So for example, a partner, the name of a partner changed. The paid name of a partner changed. Sir, how can name change? Name change, surname can change. After getting married, for example. Sir, if your name changed, now it changed on when? 1st of January. You informed the LLP by 15th of January. You informed the LLP by 15th of January. The LLP informed to ROC on 5th February. Is this valid? Is this valid? Why not? Sir, what is the provision? The provision is that if there is any change in name or address, you will have to inform within 15 days. Did you do that? Yes, sir. And after that, the LLP will have to inform the ROC within 30 days. Did you do that? No, sir. Sir, absolutely no. Sir, 30 days is from the date of change. 30 days is from the date of change. So you can write down here 30 days from change. From such change. So you will have to inform to ROC within 30 days of such change. So in this case, you will have to inform by 30th January and you are late. You'll have to inform by 30th January and you are late. Now coming to the next point, sir. Sir, such notice filed with ROC shall be in prescribed manner, signed by designated partner, etc., etc., and there will be a penalty. Sir, let me repeat. Why am I taking time here? Because this will come in your exam. This was asked in one of the descriptive questions of ICI. Sir, case study based question. Listen to me. Whenever there is a change in name or address, you inform within 15 days. And then it will be informed by the LLP to the ROC within 30 days of such change. Within 30 days of such change. Not within 30 days of intimation of change. It is within 30 days of such change. Coming to the last point, sir. Sir, former partners, listen to me. Former partners may file the above notice with ROC if he has reasonable cause to believe that LLP may not file such notice. So if Pranav resigned from my partnership, I should go and inform to the ROC. But if I did not go and inform to the ROC, Pranav may go directly to the ROC because he has a reasonable cause to believe that LLP may not file such notice. Guys, are you with me? Guys, are you with me? Yes, sir. If no confirmation is given by LLP within 15 days, ROC shall register the same. Sir, listen to me very carefully. Pranav, what did Pranav do? He resigned from LLP. He had to give notice to LLP. LLP had to give notice to ROC within 30 days. If LLP did not give a notice to ROC, Pranav can give a notice to ROC. ROC will go and seek confirmation from LLP, saying, LLP, listen to me. Pranav is saying that he is not a partner anymore. Please confirm. LLP has to reply within 15 days. If LLP does not reply within 15 days, it will be deemed that partner is not, Pranav is not a partner anymore, and that provision will end. Guys, are you with me? Guys, are you with me? Yes, sir. Very small provisions. You keep listening to these things again and again. Keep imagining these things again and again. Only then you will have clarity in your life, sir. What is section number 26? Partners as agent. Partners are agent for LLP, but not agent of any other partners. Are we clear, sir? Yes. Extent of liability of LLP, very important. Sir, LLP, will LLP be bound for the acts of the partner? Will LLP be bound? Sir, provided I am acting within my power. If I'm acting within my authority, then LLP will be liable. But if I'm acting outside my authority, neither will the LLP be liable nor the other partners will be liable. Are you with me? Yes, sir. LLP is not bound by the partners if such partners has no authority, or the person knows that he has no authority or does not believe him to be an authority. Sir, for example, I'll tell you, very simple, sir. In my company, there is one staff, sir. In my company, there is one staff. He went to the printer, books printer, and gave books printing order of 1 crore rupees. Okay. Sir, what should the printer have done? He should have called me. Why, sir? Because he has no reason to believe that he is a partner, or no reason to believe that he has authority. Now he should have called me. Now, knowing that he does not have authority, he made that books print out of 1 crore rupees. Am I responsible to pay? No, sir. I would have been responsible if he had authority. So basically, LLP is not bound if such partner has no authority, or the person knows that he has no authority or does not believe him to be a partner. Are you with me? Yes, sir. Point number 2, LLP is liable to any person for wrongful act or omission in the ordinary course of business. If you do any wrongful act to the partner, then the LLP will be liable. The obligation of LLP is solely obligation of LLP. This is like my business is my business and none of your business. Like that only they have written obligation of LLP shall be solely obligation of LLP. It means that it will not be obligation of the partners. The liability of the LLP shall be met out of the property of LLP. It's a very basic thing, sir. What is the point that you need to focus here? The point that you need to focus is LLP will not be liable if partner is acting outside authority. Only if the partner is acting in authority, the LLP shall be liable. Are you with me? Sir, section number 28, please read. Please read section number 28 by yourself, please. Sir, he is not personally liable for by reason of being a partner. Just because he is a partner, he will not be personally liable. What will be the liable? A partner shall be personally liable for his own wrongful act or omission, but not for the act of any other person. Guys, any other partner. Are you with me? He will be liable for his own act and not for anyone else's act. Sir, section number 29, holding out. What is holding out, sir? Can anyone tell me what is partnership by holding out? Partnership by estoppel. Estoppel, you have heard? Pretending. Sir, if you are not the partner of the LLP, but you are pretending to be a partner, and because of that pretension someone gave a loan to the LLP, then you as a partner will be liable for that loan. Sir, did you understand what I'm saying? For example, listen to me. I was sitting in this academy. I was sitting in the office of sir. I was sitting in the office of sir. Now a bank, SBI, came to meet this academy for loan. Now I didn't deny. I was sitting in the director's cabin. So what did that bank guy assume? That I am also a partner. Now I had already taken loan from that bank in my other academy. So the bank said, "Oh sir, you are also here." I didn't say yes or no. Then he was like, "Okay sir, okay, then we will approve this loan," and he approved a loan of 1 crore rupees. Now for that 1 crore rupees loan, am I a partner of LLP? Generally no. But for that 1 crore, I'll also have to pay because I'm a partner by holding out. I pretended to be partner, or I didn't deny partnership, so I'll have to be responsible. Sir, when any person by word spoken, written, or by conduct, either the word spoken or written or conduct, represents himself or knowingly represents himself as a partner of LLP, such person is liable to any person who has on the faith of such representation given credit to the LLP. Faith of such representation, believing that I am a partner, he gave a credit to LLP, then I will be responsible. Sir, is the LLP responsible? LLP is definitely responsible, no? Because loan came to whom? Loan didn't come to me, loan came to LLP. So LLP is definitely responsible, but I am also responsible. Sir, where after a partner's death, the business is continued in the same name, shall not by itself make his LR or his estate liable for the act of the LLP done after. Sir, partner by estoppel means partners by holding out, partners by pretending. Now the problem is, sir, have you ever been to Lonavala? In Lonavala, there is something which is very famous, Magan Lal's Chikki. Magan Lal is gone quite early, he's not there. But the name is still Magan Lal's Chikki. So it looks like Magan Lal is making this Chikki, or after Magan Lal, you made Chikki from him, whatever. But Magan Lal's Chikki, imagine that was an LLP. So Magan Lal's Chikki LLP Looks like Magan Lal is still a partner. You can't say it's a partner by holding out. If tomorrow that LLP is liable, you can't go and chase Magan Lal's son saying that boss, you are also partnership by holding out. No. If a former partner has died, but the LLP is continued in his name, that will not make the partner or his son liable. They will not be liable. Sir, what is written? Where after a partner's death, the business is continued in the same LLP shall not by itself make his LR or his estate liable for any act of the LLP done after his death. Are you with me, guys? Guys, are you with me? 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 Okay, listen to me very carefully, guys. Guys. Sir, section number 30. We are closer to the most important part. Just 2-3 more sections, then we have to look at the bigger section. Sir, what is section number 30? Unlimited liability in case of fraud. Not a problem, sir. It says that where an act by an LLP or its partner is with an intent to defraud anyone, the liability of the LLP and responsible partner shall be unlimited. So basically, if you are doing fraud, your liability will be unlimited. However, when the act is done by the partner, then the limited liability of the LLP will be liability of partner unless partner has acted without authority. Which means that, sir, if Shripal is a partner, we had given him some authority. Within authority, if he did fraud, then he will be liable, I will also be liable. But if it was outside authority, then I will not be liable. Are you clear, sir? Yes, sir. What is the punishment? Jail up to 5 years and fine 50,000 to 5 lakh rupees. Okay. Sir, third point, where an LLP or partner or employee has conducted business in fraudulent manner, he shall be liable to compensate to the person who suffered losses. Sir, in case of fraud, always remember that you will go to jail, you'll pay fine, but also if anyone has suffered losses, you will have to compensate them for the losses. Guys, are you with me? Yes, sir. Coming to section number 31, I want you to read this first and then I'll explain. Read this very quickly, section 31, whistleblowing, and then I'll explain. The very simple provision of whistleblowing. What is whistleblowing, sir? Very basic provision. What is whistleblowing, sir? Basically, you use to save yourself, you throw someone down the rail. Okay, someone else, maybe your friend, maybe your relative, anyone, you throw someone down the rail. What does it say, sir? It says that the court or tribunal may reduce or waive the penalty against a partner or employee if it is satisfied that he has provided useful information during investigation, or when information given by him leads to LLP or any partner being convicted. So basically he gave useful information, or because of him the partner got convicted because of his statement or something, then his liability can be reduced or completely waived. Now what they are saying is no partner or employee can be discharged, suspended, demoted, threatened or harassed. You cannot threaten them merely because he provided information to the court. You cannot say that I'll demote you because, merely because he provided information to the court. But I notice very interesting thing here, they have not written kill. They have not said no for killing. They have just said don't discharge him, don't suspend him, don't demote him, don't threaten him, don't harass him. Kill him. That's okay. Or if you want to kill him, don't just kill him because he provided information. Find more reasons to kill him. Don't just kill him merely because he provided information to the court. Are you with me? Yes, sir. So basically a person can reduce or waive his own penalty provided he gives some information to the court which is useful for the court or tribunal. Guys, are you with me? Yes, sir. Sir, what is contribution? Sir, how do you contribute to an LLP? Sir, I'll go and give my knowledge, sir. No. Although contribution can be tangible or intangible also, it can be movable or immovable property also, you can contribute in any form, not a problem. Whatever is the monetary value of the contribution, that will be accounted in the books of accounts. If you give a land, the land will be valued and that value will be taken in the books of accounts. Sir, section 33, obligation to contribute. Sir, how much do I contribute to my LLP? Sir, I will contribute as much as I have stated in the LLP agreement. But sir, what I did, when SBI came for loan, listen to me, when SBI came for loan, there were 3 partners, ABC. All of them said we will contribute 1 crore, 1 crore, 1 crore. On this basis, they took a loan from SBI of 3 crore rupees. Okay. After SBI gave the loan, we changed our LLP agreement and we said, Arey, it was not 1 crore, sorry, it was just 10 lakhs, 10 lakhs, 10 lakhs. We changed our contribution. We changed our LLP agreement. Sir, can you do this change? Sir, you can do this change, but if SBI wants, SBI can force you to bring your original contribution of 1 crore. Because on the basis of this original contribution, he had given the loan. If you would have shown 10 lakh rupees initially, SBI would have given 30 lakhs. But because you showed original contribution to be 1 crore, you will be liable for 1 crore. Now read the second line, sir. A creditor may enforce partners to contribute as per the original obligation if he extends credit by relying on such original obligation as per the LLP agreement. He extended credit of 3 crores relying on the original contribution of 1 crore. So now he can force you to bring 1 crore rupees into the LLP. Guys, are you with me? Are you with me? Yes, sir. Sir, financial disclosure, very, very important. There are just two things that you need to remember. Sir, one is annual return, one is statement of accounts and solvency. What did I say? One is annual return, one is statement of account and solvency. Please listen to me very carefully. Sir, you will have to prepare your books of accounts. So the books of accounts will be on cash or accrual basis. Sir, in Companies Act, the only option was accrual. Here it is cash or accrual basis, but double entry system. Where will you keep it? You will keep it at the register office. So let's talk about SAS. What is SAS? Statement of accounts and solvency. Sir, in that case, every LLP will prepare a statement within 6 months from the end of the financial year, signed by all the designated partner and filed with the ROC. Signed by all the designated partner and filed with the ROC. Sir, you will file when? Sir, you will have to file within 6 months from the end of financial year. Please remember this. After that, sir, accounts will be audited also, and then, sir, you will have to pay penalty also. In case of any contravention, you will have to pay penalty. You know my love towards penalty, right? You know how much I love penalty now, right? Let's move forward. Sir, one was account statement of account and solvency within 6 months. Now coming to annual return. Sir, you will file annual return within how much time? Sir, annual return will have to be filed within 60 days from the close of financial year. Sir, listen to me very carefully. SAS was 6 months. Annual return is 60 days. Don't get confused with Companies Act. Companies Act was annual return was 60 days from the date of the AGM. And financial statement was 30 days from the date of the AGM. Here the dates are from the close of the financial year. SAS will be 6 months from the close of financial year, and this will be 60 days from the close of the financial year. After that, sir, inspection of document by registrar. If ROC wants, they can come anytime and inspect all the basic documents. Sir, section 37 is penalty for false statement. Sir, there was penalty for false statement somewhere else also, sir. You remember section 11 incorporation document? You had to give a statement that everything is complying with the act. If there you make a false statement, you are liable. Now here, sir, if in any return or statement, a person makes a statement which is false, knowing it to be false, or omits any material fact, the jail will be 2 years and fine will be 1 lakh to 5 lakhs. Sir, I want you to turn the pages. Go to section 11. What is the penalty for false statement there, and what is the penalty for false statement here? Please compare. Tell me what is the penalty in section number 11. 10,000 to 5 lakhs and jail would be 2 years. Here jail is 2 years, but the fine is 1 lakh to 5 lakh. So more or less any penalty you remember, sir, you just write down. And I'll give you a very nice clue, sir. When you don't remember whether it is 10,000 or 1 lakh, always write down penalty like this. Don't give commas. Because what if he makes, the answer is 1 lakh, you wrote 10,000 and he made a counting mistake. And he said, this is 1 lakh. It can happen. If you write like this, it is easily readable. If you write 10,000, it is very easily readable. So when you don't know penalty, you always write this much to this much. Don't count the zero yourself also. You also don't count. So he will. So like this you do extra zero. So if he says 6 0, 1 2 3 4 5 6, there is a 6 0 also. So that is how you go. Now you have to leave it on luck, sir. Something you'll have to leave on luck also. But don't count the number of zeros yourself with the hope that I didn't count. You should also not count. If I would have counted, you should have counted, but I didn't count, you also don't count. Okay, are we clear, sir? Listen to me, sir. Section number 38. Hello, sir. Power to registrar to obtain information. Very simple, sir. If ROC wants to ask for any information from you, they'll send you a notice and you will have to reply. Sir, this is one important point. Can registrar ask for information from the former partners? You remember Pranav is not a partner anymore, but he was a partner last year. ROC needs something related to last year. Can ROC ask to Pranav directly? The answer is yes. If the ROC is asking to former partner specifically, they will have to reply. So, sir, it says that the ROC may require any person, including former partner also, to answer any question or supply any details in writing. Failure to provide will attract a fine. Are you with me, sir? Yes, sir. Section 39, compounding of offense. Sir, can you tell me what is compounding of offense? What is compounding of offense? Tell me. Sir, very simple, sir. Sir, compounding basically relates to prosecution. What is prosecution? Sir, in order to explain this concept to you, let me explain a few words to you in revision video. Sir, what is prosecution? Prosecution is a case on you. For example, let me tell you. For example, Shripal had a AK-47 gun in his house. Okay, Shripal had a AK-47 gun in his house, and at the same time there was a terrorist attack in India. For example, now, sir, it was Shripal was accused. What did I say? Accused that he's involved in the terrorist attack. Sir, is he proven guilty? No, he's accused. Now what will happen? Prosecution will start. in prosecution, he will take his lawyer and the government will bring their lawyer and they will fight. Prosecution dates. And at the end, either he will be acquitted or he will be convicted. What did I say, sir? Acquitted or convicted? He was accused. Now he will be acquitted or convicted. Convicted means proven guilty. Acquitted means released. So now listen to me. If he is convicted, he'll have to pay some jail and he'll have to pay some fine, pay some jail. He'll have to pay some fine and he'll have to go to the jail. Are yes or no? Yes or no? Now, sir, what he is saying is, sir, this prosecution will take 5-7 years, sir. He's saying to whom? He's saying to the central government. He's saying, sir, prosecution will take 5-7 years. After 5-7 years, if I'm found guilty, you will take a penalty of 10 lakh rupees. The minimum penalty is 5 lakh, maximum penalty is 10 lakh. Maximum you will take 10 lakh. What I'm saying is, sir, today take 10 lakh rupees, today take 15 lakh rupees, sir, let me go. What is your benefit in this, sir? You will also not have to bring a lawyer. You will also not have to waste 7 years. I will also save 7 years. So what you're trying to do is, you are trying to get rid of the prosecution by paying extra fine. By paying extra. It is win-win for you also and central government also. Sir, in this case, is compounding allowed in case of LLP? The answer is yes. In LLP, compounding is allowed. What is the provision, sir? I want you to read with me. Number 1. Sir, who will help with the compounding? Regional director. Sir, what is the process? Sir, now, I think from this point onwards, it is important that we shift to our notes. It is important that we shift to our notes for your better understanding. Sir, hello, hello, देखो, sir, listen to me. Sir, what is compounding of offense? Please listen to me very carefully. Sir, compounding of offense says very simple. If an LLP want to compound offense, compounding means what? I don't want prosecution, take extra money. So this person from LLP will go to the ROC saying, sir, please imagine, okay? Imagine. LLP going to ROC saying, sir, please compounding. I want to do compounding, sir. Sir, ROC will consider the case, take his application, give its own comments and then go to regional director. Who can compound? Regional director can. Now the regional director may need some information from the person. So regional director will ask for all the information that it needs and then it will put a fine on this person. Fine how much? Fine up to the maximum amount charged for that offense. For example, if the fine is minimum 50,000, maximum 5 lakh. So how much fine can the regional director put? Maximum 5 lakh rupees. And then intimate it within 7 days to the ROC. That ROC, let's do compounding, give me a fine of 5 lakh rupees. Okay. Now, this is what regional director will do. If compounding is done, regional director said, okay, we'll do compounding. What will happen to the prosecution, sir? If it was not initiated, then it will not be initiated. But if it was already initiated, as in there was already a case going on, then ROC will go to that court and inform that compounding is done and then the court will discharge the case. So basically your prosecution if started will be stopped. Who will stop? ROC will go. You don't have to go. But sir, here what we do is, what problem we create is, this person applied for compounding, went to ROC. ROC went to regional director. When regional director came asking for information, he is not replying only. You see how arrogant. He went to ROC, please compounding kar do. Please help me with compounding. ROC went to regional director. When regional director is coming for information, he's not responding. Look at the ego, man. What will happen, sir, now? If ROC is not, if during compounding, the regional director asked for inquiry and LLP has to provide such document. If there is a failure, the maximum fine will be doubled. So instead of 5 lakh, you'll have to pay 10 lakh. Why? Because you're not informing not giving the necessary material. And see, boss, we didn't come to you. You came to us that please do compounding. And now when we are asking for documents, you're not giving. What fun are you making of us? So basically your fine will be doubled. Now, sir, let me tell you something. There is a concept of first offense, second offense. What is first offense, second offense? Sir, first offense is if for example, I did not file my income tax return for the first time. This is my first offense. But again, within 3 years, I did the same offense. That is, I did not file my income tax return. It is called as second offense. Sir, in second offense, I'll tell you very interesting thing. Usually there is fine and usually there is jail, right? Jail will remain the same, but fine will get doubled. Fine will get doubled for second offense. So basically, sir, what is first offense? The offense that you did for first time. What is second offense? If within 3 years you did it again. Sir, what if I did it after 3 years? It will be considered as first offense again. It will be considered as first offense again. Guys, are you with me? Yes, sir. Sir, can you do compounding for first offense? Yes, sir. First time you made a mistake, can you go for compounding? Yes, sir. You made that again mistake again within 3 years. Can you go for compounding? The answer is no. For second offense is not compoundable. But sir, if I made that mistake after 3 years, Arey Baba, it is first offense. You go for compounding. You are also mad. Law is also mad. Both of you do dinka chika. Okay. If it is a second offense, you can go for what? You cannot go for compounding. Are you with me? If the same offense is done after 3 years, it will be deemed to be a first offense. I hope your concepts are clear, sir. I want you to go through your notes or this thing once. For section number, this compounding of offense, very quickly go through your notes, please. Shh. Guys, 15, 20, 25 minutes more, just 25 minutes more. Please go through. Sir, whatever you have heard till now or you didn't hear, it's not a problem. If the last 20 minutes you're not listening, no, you're not going to make anything out of this marathon, because now probably you're going to learn compromise arrangement, which you have never learned properly before. So please quickly learn compounding, and I know these notes are very helpful for you. This video is going to be on YouTube. Kindly stop and make these notes with your own handwriting. See, I'm scrolling it. Once you stop, if you stop once compounding of offense and you start copying from here, you can just pause and copy paste. In your language, you can read and slowly you can copy paste. This will be okay. Okay, please write, please read quickly. Compounding. I'm giving you 30 seconds. Done. Guys, simple compounding. I hope your concepts are clear. Guys, next point, partners transferable interest. Sir, if I am in a partner in LLP, and sir, what's your good name? Piyush. Piyush. Sorry, I thought donkey. Sorry, don't get offended. Huh? Are you offended? With Piyush or donkey? With Piyush, you're offended. I asked, what are you offended with saying Piyush? Okay, Piyush, no problem. So Piyush, now listen to me very carefully. Sir, I am a partner in LLP. Now Piyush came to me. Piyush, guys, 20 minutes. Okay, 20 minutes. Save your energy. Okay. Sir, Piyush came to me and Piyush said that, sir, please transfer your interest in the LLP. You please transfer it to me. I want to buy your interest. I said, okay, I can transfer. What can I transfer, sir? Again, I can transfer my capital contribution. I can transfer my share in the partnership for LLP. But what I cannot share, I cannot transfer right to management. I cannot transfer my rights to access the books of accounts. Even if I sell my shares to him, he can get the profit, but he cannot get what? He cannot get right to the management. He cannot get right to access the books of accounts. So if a partner transfers to the person, he can transfer share of P&L and right to receive distribution. But it shall not by itself entitle the transferee to participate in management or access information of the LLP transaction. That person cannot access the LLP. He will just get the money from outside. He cannot come inside unless the other partners want him to come. Unless the other partners want him to come. Just because I transferred my shares to him doesn't mean that now he can go and sit in the company. He will just get the rights in capital contribution and the rights in the profit of the company. Are you with me, sir? Yes, sir. Coming to the next point, effect of registration and conversion. Very basic point. Sir, a firm can be converted to LLP, a private company can be converted to LLP, and UPC can be converted to LLP. Sir, now when you're converting to LLP, what is the first thing that you do, sir? You follow the schedule. Whatever is written in the schedule, you follow. Sir, for example, earlier I was a firm. So I was under the control of ROF. Can you tell me what is ROF? Register of Firm, let's say Mumbai. Now I became a company. Which company? I became an LLP. So I'll come under the control of ROC. Which place? ROC, Mumbai only. Now the question is, now I became a firm. From a firm, I became a LLP. What do I do now, sir? First of all, I'll go to the ROC. Which ROC? LLP one. LLP. ROC is for LLP, no? I'll go to ROC and I'll say that, ROC, I'm converting to LLP and I have satisfied all the condition. You kindly register me as an LLP. If the ROC considers that you have satisfied all the schedule, then documents are okay, he will register you. Now, once it is registered, you become an LLP. Now, after you become an LLP, you'll go to register a firm and you'll be like, what am I? Now I'm an LLP. So you'll go to the ROF and you will say register firm. Kindly remove my name from register firm because now I am an LLP. So after you get the LLP certificate, the LLP will go to the register of firm. Register of firm means the older one within 15 days to intimate about the conversion. That I'm not a firm anymore. I'm not a private company anymore. I'm not an unlisted public company anymore. Kindly register. Kindly remove my name. Now I am an LLP. Guys, are you with me? Yes, sir. So first thing is you comply with the schedule. Second thing is you go to the ROC. And then you get an LLP certificate and then you go and inform to the register of firm within 15 days. I'll give you a task for those who have their attempt later. See, you get the results of efforts that you put. Okay. I want you to put an effort slowly when you revise LLP next time. Now from the start only, start writing the number of days given in each section. So your table should look like something like this. Your section number, okay, number of days and provision. What is this number of days for? Wherever you see 30 days, write it down. 14 days, write it down. 15 days, write it down. So it will take you hardly 15 minutes. That 15 minutes will give you comfort for the days forever. What we as students, what we keep doing, we ask comfort from others. Sir, you taught, sir. Why am I not comfortable, sir? Sir, you made us write in class, sir. Why am I not comfortable? Sir, you made us write questions in the class. Why am I not comfortable? Because you are not doing anything now. Sir, you gave us summary of all the limits, sir. Why am I not comfortable in limits? Because I made that limits. So I am comfortable. You didn't make that limits. There are a lot of students. I'll tell you after some time. Let's finish this chapter first. Remind me in the last 15 minutes I have to talk to you, but let me finish some things first. Sir, effect of registration. Listen to me very carefully. Sir, there shall be a LLP by the name specified in certificate. Now there will be an LLP. Sir, what is the effect of registration means? I was a firm earlier, now I am an LLP. I was an unlisted company, I am an LLP. What will happen now? Now there is an LLP. Number two, all the assets and liabilities and interest will be transferred to LLP. And the older firm or company will stand deemed to be dissolved. Their name will be removed from the register of companies or register of firm. So they will be dissolved and all the assets and liabilities will be transferred to LLP as it is. Guys, are you with me? Are you with me? Yes, sir. So this thing that happened, no? All the assets transferred, all the liability transferred. So you see, there could be tax implication. So this tax implication of this particular thing, you will read in your CA final. See how CA course is related. When you convert from an unlisted public company, one person, to LLP other person, you are transferring assets from one person to other person. There should be capital gain. What will be the consequences that you will read in your CA final? That time you have to remember that, oh, this kind of conversion happens and you have to follow the schedule for this conversion. Are you with me? Yes, sir. Now coming to foreign LLP, what is foreign LLP? Such conditions as may be prescribed. Now for compromise arrangements, I want to give you 2 minutes. Very quickly, just read 60, 61, 62 from your notes and see if you can understand 10% also. If you understand that 10% now, I can build the remaining 90% on it. But if you understand zero now, I'll not be able to help. So read section 60, 61, 62, either from your class notes or from the summary notes, and then you give me go ahead and then I'll make you revise this. That's the last part. Everything is over after that. Guys done? Guys done? Hello, hello, guys done? Alright, perfect. Chalo. Listen to me, sir. Compromise, arrangement, amalgamation. Sir, section 60, 61, 62. Very simple. Sir, section 60 says that, hello, very briefly, the best understanding, listen, but anytime you read this, before you listen to this recording, always read first. Okay. Sir, 60 talks about compromise or arrangement. Compromise or arrangement could be LLP and its creditor or LLP and its partner. Whenever there is compromise or arrangement, there are certain things that you have to do. Only after you do that, compromise or arrangement will be approved. Once it is approved, section 61 says that tribunal can interfere. So while you are implementing such compromise or arrangement, tribunal can give you directions. And if tribunal thinks that even after giving direction, this compromise or arrangement cannot be implemented, tribunal will order that you better wind up. You better wind up. Now what is 62? 62 says that was compromise or arrangement, normally when you are doing, you do it as per section 60. But if in the compromise or arrangement there is an angle of amalgamation, it looks like you're doing amalgamation, that is why there is compromise arrangement, then in that case the tribunal will just say that everything will be same, but in the order that I give, I'll tell you 4-5 extra things. In the order I'll tell you 4-5 extra things. That is what section 62 is saying. So let's keep 62 aside, let's focus on section 61. What is the process? So section 60 says that if there is a compromise or arrangement of LLP, what happens that where C or A compromise or arrangement is proposed between LLP and its creditor or LLP and its partner, LLP and its creditor or LLP and its partner, then in that case someone has to go and apply to the tribunal. The first step, you can remember, first step is apply to the tribunal. So LLP, creditor, partner or liquidator, someone will apply to the tribunal and tribunal will order that a meeting be called, held and conducted. Sir, what is called, held and conducted? Sir, saying that today there will be a marathon at 10 o'clock is calling for the marathon. Giving you a room to come and sit is holding the marathon, and me coming and teaching will be conducting the marathon. You coming and sit, if you don't get a seat to come, we'll say that the marathon was not held. If you sit, everything is ready, but I come and I cannot teach because of my throat, then we say that the marathon was called, it was held, but it could not be conducted. Guys, are you with me? Yes, sir. Who will order the meeting? NCLT. First step is apply to NCLT. NCLT will order for a meeting. Now in meeting, what do you do, sir? All the creditors came. I said, hello, I cannot give you your money. For every 1 rupee, I'll give you 50 paisa. 1 rupee, I'll give you 50 paisa. Kindly approve the compromise. Kindly approve the compromise. In your case, I have to take a dual majority. Dual majority means I need approval of majority of the share creditors having 3/4 in value. I cannot just count majority. I cannot just count 3/4 in value. I have to take both. That there should be majority in numbers having 3/4 in value. After you give your consent, who gave your consent? Either the creditors or partners. Now I'll go back to the NCLT. So after this, I will go to the NCLT for sanction. And if the NCLT sanctions, then such compromise arrangement will be binding on all of us, everyone, like LLP, creditor, partner and liquidator, everyone will be bound. So first step is apply to tribunal. Second step is tribunal will call for the meeting. Third step is take approval, majority plus 3/4 in value. Fourth step is take NCLT's sanction. Fifth step is after NCLT approved, take that order of NCLT and file it with the ROC. Only after you file it with the ROC, such compromise or arrangement will be effective. Before you file to ROC, it will not be effective. Guys, are you with me? Yes, sir. Now, how will NCLT give approval, sir? Creditors will give approval, but what about NCLT? Sir, NCLT will take care of just two things. Number one, whether all the material facts including financial position is disclosed and whether the pendency of investigation is properly disclosed. If NCLT is satisfied that you have disclosed all the truth, then the NCLT will give order which you file with ROC. Only after you file with ROC it will take effect, otherwise it will not take effect and there is a penalty. Guys, are you with me? Guys, are you with me? Step 1. Step 1. Apply to tribunal. Step 2, tribunal will order for a meeting. Step 3, take approval of majority in numbers having 3/4 in value. Number 4, take sanction of the NCLT. Sir, what are the two things that NCLT needs to give sanction? Number 1, you have disclosed all material facts including latest financial position and pendency of litigations have been completely disclosed. After NCLT will give the sanction, it shall be binding on everyone. Last point, the order of tribunal shall be submitted with the ROC and it will take effect only after it is submitted to the ROC. Guys, are you with me? Yes, sir. Now, sir, listen to me. When someone has made an application to the NCLT, sir, all the other things will stay. There will be a stay on commencement or continuation of any suit. No one can file a new case upon me and no existing case will continue. Everything will be stayed. Why? There is a reason that we discuss later, but the reason is that, for example, if I'm telling NCLT that NCLT, in SBI's case, I'll be able to pay only 50 rupees for every 100 rupees. In whose case? SBI's case. Who will panic, sir? HDFC will panic. Who will panic? ICICI will panic. So they will start filing case on me. So we said that when SBI's application is made, no, all the cases will stay. No one can file a case on me and no one can continue any of the case. Guys, are you with me? Yes, sir. This is your section number 60. How easy it becomes to read from notes now. Section number 61, what does it say? Sir, these are the notes that we actually make in the class. Even for the English batch that I have, these are the same kind of notes that we made in the class, right? So these notes actually help you on the day before exam. Sir, what is section number 61? Now the power of NCLT to enforce C&A. NCLT approved a C&A. Now it is the power of NCLT to give directions. So the NCLT, it have the power to supervise. It has the power to supervise and give direction necessary for proper implementation. Now after that, if NCLT is satisfied that compromise or arrangement cannot be worked satisfactorily, it will either on its own motion or application by a concerned person order the winding up of the LLP. So first step is NCLT will give direction. It will supervise and give direction. But if it thinks that it won't work, then it will do what? It will order the winding up of the LLP. Are you with me, guys? Guys, are you with me? Yes, sir. Sir, this is your section number 61. 62. The last big section, apart from that everything is small, but we will finish till the end. What is section number 62, sir? 62 talks about provision for reconstruction of amalgamation. Now, sir, imagine this, the story that I'm telling you. Now you, imagine you are the creditors. You came to me, you applied to NCLT, step 1. When it came to NCLT, I saw very good, everything is good, but I saw there is a scheme of amalgamation in this. I saw there is amalgamation. What is amalgamation? Maybe two LLPs are coming together to form one LLP. Something of that sort. So when amalgamation happens, assets are transferred from one LLP to other. For example, A and B together they are coming to make C. What will happen? A's asset will be transferred to C, B's asset will be transferred to C. So I see there is an amalgamation. So I have to give some extra points in my order. So what it says is, when an application is made under section 60, same application, and it is shown that T&A has been proposed for reconstruction or amalgamation of two or more LLPs. So the compromise or arrangement is because of amalgamation. That I'm telling you, if LLP question is asked and ICI wants to ask CA interlevel, this is the only section that ICI will ask, 60, 61, 62. And I'm telling you, 75% of the crowd will not be able to touch it because they don't read it with this clarity or with this simplicity. Either for them this is a very complicated provision, or for them they cannot manage it. So you have to read it with simplicity, that you can write the provision that where an application is made under section 60 and it is shown that compromise or arrangement includes amalgamation, and under the scheme, the amalgamation scheme, what is happening? Whole of the undertaking property or liability is transferred to the other LLP. That in amalgamation, what happens? All the assets and liabilities are transferred. So that is apparent that undertaking properties and liabilities are transferred. In such case, tribunal will give order. After complying with section 60, he will comply with all the provisions. He will call for a meeting, majority plus 3/4 in value. Then he will give his order after considering whether you have disclosed all the material facts, whether there is any pending litigations. He will consider all the things, and then what he will do? He will give his order in which he will write 5 extra things. What are the 5 things? And number 1, transfer such UPL to the transferee. Transfer such undertaking, properties and liability to. So he will say, I am ordering that please transfer all the undertaking, properties and liabilities. Number 2, continuation of legal proceedings by the transferee. Sir, A and B merged to become what? C. Any case against A will be continued by C. Any case against B will be continued by C. So all the legal proceedings will continue. What is the first point? All the undertaking, properties and liabilities will be transferred. Number 2, all the legal proceedings will be continued. Number 3, sir, after A and B merged, they became C. Now what is the use of A and B anymore? So they will be dissolved. But will you do winding up, sir? Winding up is what? Selling assets and repaying liability. Will you do winding up? Arey, there is no asset or liability. Everything is transferred to the transferee company. So the transferor company will be dissolved without winding up. Point number 4, provision for dissenting partners. Sir, when this AB merger happens, you remember how many people approved? Majority numbers having 3/4 in value. It means some people disagreed also. What will you do about them? You will make a provision for dissenting person. And then such other incidental provision. These are the 5 things that you will include in your order. Sir, the summary for this I have made is low DT or law DT. What is low DT? Sir, L. L is basically all the legal proceedings will continue. O, such other provisions has it may deem fit. W, dissolution without winding up. T, DD, provision for dissenting shareholder. And T, transfer of undertaking, properties and liabilities to the transferee company. These are the 5 extra things that you will write in your order. Guys, are you with me? After that, sir, you will report it. No C&A shall be sanctioned unless. Now listen to me, sir. When A and B are amalgamating and becoming C, you know what is NCLT worried about? What if A LLP did some fraud, and to save himself from the fraud, they're dissolving that company and amalgamating with C? So what NCLT will do is, NCLT will make an application to ROC and ask ROC, go and check whether A and B are okay, whether they have done any fraud, whether they have done anything against public interest. So NCLT will receive a report from registrar that affairs of LLP have not been conducted in a manner prejudicial to public interest. Only after NCLT receives such a report, he will give an order for amalgamation. Otherwise, he will not let an amalgamation happen. Sir, my question is, do you understand what is charge on asset? What is charge on asset? Charge is basically if I took loan and pledged my property, it is called creating charge on asset. A Limited and A LLP and B LLP merged to form C LLP. Sir, A LLP had assets on which charge was created. Will it be transferred free of charge or along with the charge? Of course, it will be transferred with the charge. But if NCLT in its order wrote that this asset will be transferred free of charge, then NCLT will NCLT write like this? No, sir. But if at all NCLT wrote something, he must have thought, so in that case it will be transferred free of charge. When an order provides for transfer of undertaking property liability, such transfer shall be free of such charge if the order so directs. If the order clearly says it will be transferred free of charge, it will be transferred free of charge. But will the NCLT write in the order, sir? It will never write in the order. And the copy of order will be filed with ROC and there will be penalty. And section 62 is complied over and above 60. Means everything in section 60 will apply. In addition to that, 62 will apply. Guys, are you with me? Guys, are you with me? Did you understand? Is it relatively simplified? Is it relatively simplified? 60, 61, 62. Sir, chapter is almost over. Few sections. Sir, winding up. When will the LLP be wound up? Frequently asked question. 5 events, sir. Number 1, if the LLP decides to wind up themselves. Number 2, please remember these 5 points. If the LLP decides to wind up. Number 2, if the partners reduces below say 2 and you continue for more than 6 months. Number 3, if you are acting against the interest and sovereignty of India, LLP Act has acted against sovereignty and integrity of India, security of state or public order. Or if there is a default in filing SAS and annual return for 5 consecutive years. Sir, if I file statement of account and solvency but I did not file accounting annual return, will I be wound up? No. You have to default in both. You're not filing SAS also. You're not filing annual return also. Where? Are you sure? How do you know yours is new version? Is it? Okay, I'll check this. Okay, I'll check this. You check the comment of this video. I'll check this. Okay, I'll check this. They are saying that I have made it, or I'll check it once. Okay, but SAS and annual return, I think, sir, should be very strict. But okay, we will see. But 5 consecutive years, I'll confirm this. You'll have to check the comment. I'll pin the comment. Okay. After this, listen to me. So point number 5: if the tribunal thinks that it is just and equitable, the tribunal will wound you up. So there are 5 events. Number 1, if the LLP passes an order to be wound up. Number 2, if you are operating with reduced number for more than 6 months. Number 3, if you have acted against the sovereignty and integrity of India, security of public, etc. Number 4, if you have defaulted in filing financial statement as statement of account insolvency and annual return for 5 consecutive years. Number 5, if the tribunal thinks that it is just and equitable to wind up the company, the tribunal will wind you up. Guys, are you with me? Yes, sir. Now coming to business transaction. Sir, partners can do business transaction with LLP. Partners can give money to LLP and they can do business with LLP. Now, sir, listen to me very carefully. Enhanced punishment you need to know. I already told you, if you're doing an offense for the first time, the fine and jail will be normal. But if you do second offense, the jail will be same, but the fine will be double. So your fine will be twice for second offense and subsequent offense. Oh, for third offense, you will not make it thrice. For fourth offense, you will not make it 4 times. It will be double for second and subsequent offense. Guys, are you with me? Yes, sir. And the last portion of this part, come to this point, LLP versus partnership firm. Sir, something you have studied in your CA foundation. Sir, Regulating Act, read with me. Regulating Act for LLP, it is LLP Act. For this, it is Indian Partnership Act. Sir, in LLP is a body corporate? Yes, sir, but partnership firm is not. Sir, is LLP a separate legal entity? Yes, but partnership firm is not. Does LLP require registration? Mandatory, sir. But partnership firm? Your wish. Sir, in LLP there is perpetual succession? Yes, but in partnership there is not. Sir, in partnership, even if one partner resigns, the firm is dissolved. You know, right? If one partner is ceases or adds, the firm is dissolved. Sir, in LLP there is a suffix? Yes. In partnership, no suffix. In LLP there is liability is limited liability, but here partner's liability is unlimited. Mutual agency, sir. In partnership firm, a partner is liable for the act of the other partner, but in LLP there is no such liability. The next point, designated partner. What is designated partner? Sir, designated partner, listen to me very carefully. Sir, designated partner, here there is concept of two designated partner, one resident. There is no such provision. Here you can get common seal, and partnerships you cannot get common seal. Here legal compliances are DPs are responsible, but there all the partners are responsible. Sleeping partners, they are not responsible. Working partners are responsible. Sir, annual filing, here you have to file two documents, SAS and annual return. There is no such requirement. Sir, foreign partnership, here it is allowed. Foreign LLP can be a partner. Here cannot be a partner. Here, sir, minor as a partner. Sir, in LLP, minor cannot be a partner, but in partnership firm, minor can be a partner for benefit. Guys, are you with me? Guys, are you with me? Yes, sir. Next point, sir. LLP and limited liability company. I want you to read with me. Number one, what is LLP? Regulating Act is LLP Act and Companies Act. Number two, partners and members. What difference? Sir, in partner, you see in that the payment who in LLP payment is made by partners, and in a limited liability company, the payment is made by members. Sir, internal governance governed by LLP agreement, governed by Companies Act. Sir, suffix here is also suffix, here is also suffix. Here the number of members, there is no maximum limit. That is very interesting. In private company, maximum limit is 200. In public company, there is no maximum limit. Sir, what is the liability to the agreed contribution? Here liability could be limited to the amount of shares. Sir, managed by DPs, managed by director. Minimum 2 designated partner. Here 3 directors in case of public company and 2 directors in case of private company. Guys, did you understand? Thank you so much, guys. Thank you so much. Did you understand, sir? Sir, as promised, in less than, I think, 1 hour 30 minutes, we finished our chapter LLP in depth with explanation of each and every concept 100%.